Hello all, welcome to BCCA. This is your IDT faculty, CA and CMA, Manati. There are n number of marathons already available on YouTube for final level as well. Why specifically this marathon? You can refer, you can rely. I'll answer it, then you can proceed with my marathon. So, yes, I agree, there are n number of marathons. Let's filter out how many of them are for exclusively CMA panel. Exclusively, they discussed from the CMA panel perspective instead of CA panel. Okay, we'll get only 3 4 now. Out of those 3 4 exclusive CMA final marathons, also, this marathon will stand out. This marathon will have that uniqueness definitely because when I'm taking this marathon, this is with an intention to help the CMA student by listening to this marathon to make sure that he'll definitely clear the exams. Considering those points only, this marathon, these classes were recorded. Okay, that is one thing. And I'll tell you another point also. But you could see me before going further itself. You could see the sorry, not this way, this way. Okay, you could see the poster there. What I kept there, sir. It's my guarantee. Watch this marathon. This will have 3 parts, sir. Part one, part two, part three. By watching these 3 marathons, it's damn easy to pass. Easily you can get 50, and along with my book marathon, if you prepare now, then it's easy for you to get that 60 plus as well. 60 plus as well. Sir, you could understand how much confidence I have. Otherwise, I'll not put that kind of sticker as well. It's my guarantee you're going to achieve this. Okay. Now, this marathon is in English, sir. But many students from either Andhra Pradesh or from Tamil Nadu or from Karnataka who are used to listen to the classes in their regional language, or even from the other states of India, maybe who are used to listen the classes in Hindi, might think like maybe English now I'll understand or not. Sir, you could watch this. English I used explained everything in English only, but the English which I use is simple English only. Even in below average student can understand this kind of English, and this will be very much enough for you. First thing. Second one, many students when choosing a marathon or when choosing a material or faculty will think of like whether problems are covered or not. Only theory has been discussed. Sir, here wherever it is required, considering composition scheme, time of supply, value of supply, ITC, then assessment chapter, then coming to customs, duty drawback, baggage, valuation, types of duty, wherever the problems part is important and wherever there are chances of asking problems, I have discussed it. So you could rely completely on this. Now, sir, what if I only listen to this marathon 3 parts and I refer your book? Can I attempt 128 marks now? No, I know I don't want to give you any false promise. You cannot attempt 128 marks, but trust me, you could easily attempt from 90 to 100 marks. 90 to 100 marks, along with material and 2 chapters, I'll say, sir, which were not covered in this marathon. One is exemptions chapter, and other two customs related 2 theory chapters are there. One is like customs trade facilitation measures and all. The second one is like manufacturing within the warehouse. That chapter is there. If you read those 2 chapters also along with this marathon, definitely you could attempt 105 to 110 marks in a paper. That's how this marathon has been designed. Okay, designed. So even for our easy reference, I'm using this word marathon, but this is something beyond marathon, because in marathon generally we'll explain within 15 to 18 hours. Will not drag concept, even if it is a tricky concept also. We'll try to somehow quick shortly finish it. But here I took time. If it is something usually student feels to understand it tricky now, I have taken my time, I have explained it clearly, I have inserted an example, I have inserted a problem there. So everything has been discussed and designed in a way which would be very much pleasant and convenient for you. Okay, so understand, it's my guarantee. And one thing, sir, in this marathon, if I didn't cover any chapters from GST now, okay, considering my experience and the paper trends, what I thought means those chapters are not, even though asking an exam, they are not asking regularly. So the weightage of those chapters is very less. Okay, the only chapter which I left, which is having a significant weightage, is exemptions chapter. So my personal suggestion, Along with this marathon, I'll give you my previous marathon video link also here. Go there and even watch the exemptions part as well. It would be complete. It's something like a full meals for you. Okay, South Indian, that full meals for you, but not that thali. Everything you'll get, even the at last the dessert also you'll get in this marathon. You will feel that comfortness from this marathon. Okay, trust me, trust BCCA. We are here to make you clear. Thank you all. Bye.
So IDT, we have two sections. One is GST and the other one is customs. In customs again we are having two parts, customs and FTP. So the total paper we are getting is for 128 marks. The total paper we are having is for 128 marks. Out of that we are having 30 marks MCQs. After leaving 30 marks MCQs, we are having 98 marks for descriptive. 98 marks for descriptive. How this 98 marks? Each question carries 14 marks. 7 into 14, it is 98 marks. So out of this, we need to write 5 into 14 marks questions will get 70 marks. So this is the paper pattern. So out of this, sir, generally, FTP will have one 14 marks question. FTP will have one 14 marks question out of this 98 marks. Customs will have one 14 marks question. Customs will have another one 14 marks question. So together we are having 28 marks, and there will be out of 15 MCQs, 4 MCQs will be getting from customs or FTP. So 4 into 2, it is another 8 marks. So from customs we are getting 36 marks only. It's not like from 128 marks, if you multiply 70 percentage and 30 percentage, it will not be equal. So they say it has like 30 percentage, but from customs generally we are getting how much? 36 marks only. Out of them 50 percentage weightage is going for FTP only. So we cannot leave FTP as a choice. And then the other part, the balance 5 questions, 5 into 14 marks is from GST only 70 marks. And then even in MCQs also we'll get around 10 to 11 MCQs into 2 marks. So 20 to 22 marks we'll be getting from GST. Okay. So then let me answer one more thing in the beginning itself. Sir, many things, sir, in IDT, at least 50 to 60 percentage of the syllabus which we discuss is not new for us, which is there already in the inter level only. Again, we are revising it once again here. But the problem is like student think like while looking at the question, he knows everything. After answering the paper also, generally they'll tell like I'll get 60s, 70s, but majority times they are ending up with somewhere in the range of 45 marks to 55 marks range only they are ending up. 55 also extreme only, sir. Majority are again in 40 to 50 marks range only they are having. So they'll expect 60s and 65s by looking at the paper. But the problem is like they'll be ending up with here only, unless if you have costed it. I mean, if you secure somewhere 60s and 70s in cost audit or in SPMBV, if you have score, then you can clear the group 4 easily. Otherwise, the problem with IDT, the paper looks like easy only because we have some questions and some MCQs which we could answer, but majority score in this range only. Okay, so what is the problem? Why we are getting stuck here only? The problem is, sir, institute asking us, I mean, institute expecting us to write provision or answer in somewhat standard way, not just relying on or not just writing the answer based on the concept we know. So for that we need much more number of times revision. That's what we can do. At least for the selected chapters. We cannot do the number of times revision for all the chapters which we are having. At least for the selected chapters, we should do number of times revision. Okay, I'll tell at last, once we are going to complete the batch, again I'll tell which questions or which areas we should revise number of times or which areas we should focus more. Then for us getting that 55 marks is easy. Sir, in IDT, if you get 55 plus, na, then your group 4 is going to be clear. IDT 55, CFR at least 45. These two, if it happen, na, then your group 4 cannot be stopped. Okay, if you are getting 60s in IDT and 50 in CFR, na, you can clear both groups as well, because group 4 you'll have 30 marks surplus. Cost audit, it's easy to get 70 plus. Okay, whoever clears both groups, generally they'll have cost audit 70 plus. SPM BV, they'll get around 60 plus. IDT in somewhere in 50s, CFR will always be somewhere in the range of 40s only. Okay, but Arun sir is coming, he'll take care of you at least to get that 50 marks. Okay, after IDT there will be CFR batch. Okay, after IDT, at least for 3 days, it will be free only. Okay, so he'll come at least for you to secure like that 40-50 marks. He'll cover the topics. Okay, so 70, 60, 50, 40, so like that. Okay, if you take these marks also little high, I mean if you push this to 60 and if you push this to 50, you'll have 30 marks surplus in group 4, which would help you to clear group 3. Okay, the problem when, I mean, if Ravi sir, like when he came to SFM classes, I think he might have said the same thing. You write only both groups. Okay, sir, what happened now? Like we are seeing so many face-to-face students now. The problem is like when you write only single group, group 4 you'll clear easily. You'll get stuck with group 3. The problem with group 3, every time, like there are people, there are students who are writing group 3 from 2 times, 3 times, 4 times. The problem is like they'll get 180, 190. That aggregate will not be enough. So to clear that aggregate problem, we should always write both groups only in CMA. Okay, then it would be easy for us. Okay, so now starting with the first chapter, so till afternoon we'll be completing only introduction and supply. So don't feel bored, because once we have that clarity regarding introduction and supply chapter, then we could speed up things. So first thing, whenever I start a batch, I need to tell you is two things, sir. First one is double taxation. We need to understand first what is called double taxation and what is called cascading. These two things we need to understand. So to understand double taxation and cascading, first we need to understand mechanism. So let's say there is a supplier, there is a recipient. If this supplier sold goods or services worth 1 lakh rupees, and on this there is an indirect tax at a rate of 18 percentage, let's say it is 18,000, the total it comes to how much? 1 lakh 18,000. Now see here, this recipient has to pay to the supplier how much? 1 lakh 18,000. Supplier sold goods worth 1 lakhs to the recipient. The value is 1 lakh, on the tax is 18,000. Total it came to 1 lakh 18,000. Now the recipient has to pay how much? 1 lakh 18,000. So out of this 1 lakh 18,000, supplier has to pay the 18,000 rupees tax which he collected to the government. So now if you understand here, the obligation to pay tax is with supplier. So it is the supplier's responsibility to pay tax, but the burden is on recipient. The tax burden is on whom? Recipient. Ultimately, recipient is the one who is paying tax. The money 18,000 which the supplier is paying, it is not going from his pocket. It is going from whose pocket, sir? Supplier's pocket only. So the burden is on recipient, obligation is on supplier. Okay. Let me tell you the accounting entry as well here. Sir, what is the general sales entry? Cash or bank debit to sales. Okay. Sir, here the supplier, how much money is getting? 1 lakh 18,000 is getting. So cash 1 lakh 18,000. To sales how much? To sales 1 lakh only, na? 18,000 we cannot recognize it as sales. The 18,000 is what? To GST payable. Sir, I'll connect this entry somewhere like when we are discussing aggregate turnover. We'll discuss afterwards the definition of aggregate turnover. When we discuss that definition, this entry will be impacting us like, okay. So to GST payable how much? 18,000. So that means point which I want to clear is like GST will not include in the sales value. By looking at the entry, we can understand that GST payable we cannot enter into the, we cannot include it into the sales value. We'll show that separately. Okay. Now, if this recipient is registered, whatever the purchase he made, it is nothing but what? His inward supply. On his inward supply, recipient can avail what? ITC. So the tax which was suffered or which was paid on your inward supply, you can avail it as what? ITC, input tax credit. So recipient who is registered here can avail ITC. How much he can avail as ITC? 18,000 he can avail as ITC. Now we'll look at the entry in recipient books as well. So what is the entry in recipient books? Ignore about ITC. Generally tell the purchase entry. Purchase to cash. So to cash how much, sir, here? 1,18,000 he paid na. So it is 1,18,000. But he'll recognize as purchase only how much? 1 lakh rupees. What about the other 18,000? He'll recognize it as ITC. So ITC we are debiting na. Sir, as per accounting rules, which can be debited? We have two accounting approaches. One is modern approach, one is the traditional approach. So don't confuse me with the traditional approach. Traditional approach, if you open something like real account, nominal account, you'll also get confused. So let us talk about modern approach only. When you are debiting something, either it should be our expense or it should be our asset. Okay. So ITC we are debiting here. Input tax credit we are calling it as, and we are debiting it as what? ITC account 1,000. So when we are debiting something, ITC is not our expense, because we have, what is the benefit with ITC, sir? This we are taking as a credit, and the ITC we can use it for setting off with the tax liability when you are having a subsequent sale. Whenever you are having an outward liability, the ITC which you have got can be used for set off with the outward liability. How can we call ITC as an asset? Means it will not generate future cash flows, but it will reduce our future cash outflows. So ITC is an asset. So that's why ITC account debit 18,000, purchase account debit 1 lakh, and to cash 1,18,000. So first these two things if you understand, then I can go to double taxation and cascading. Okay. So the obligation is generally with the supplier, whereas the burden will be with the recipient. Okay. We will not recognize the GST collected. The seller, if he collect the GST payable also, he will not recognize it as his sales. Okay. Recipient, whatever is the tax paid on his inward supplies or tax suffered on his inward supplies, he'll claim it as ITC. And the ITC can be used to discharge the tax payable on our outward supplies. Let's say, to give you for much more clarity regarding ITC, there is a registered person, sir. He has an inward, he has an outward. He purchased some goods and is selling the same goods. Let's say he purchased for 1 lakh. He is selling that for 1,20,000. So now this registered person, on his purchase 18% tax suffered, 18,000. So it is 1,18,000. So whenever he is having a inward supply, on this 18,000 tax is suffered, this 18,000 he can avail as ITC. Now on his outward 1,20,000 also there is 18% tax. 1,20,000 80 into 18 percentage, it would be 21,600. Okay. So total 1,41,600. But while paying this 21,600, he can adjust this 18,000 rupees as ITC. Effectively, he'll be paying tax as how much? 3,600 only. Effectively, he'll be paying as tax. This is the concept of ITC. On our inward surplus, whatever is the tax suffered, we can avail as ITC. And such ITC can be used to discharge the tax payable on our outward supplies. So remember one more thing. It can be used to discharge the tax payable only on our outward supplies. Fine. So we'll understand what is called double taxation and what is called cascading now. So let's say, look at this example. There is a manufacturer, there is a wholesaler, there is a retailer. So this manufacturer has cost of rupees 900. He has cost of producing a good 900. On this he is having markup or profit of rupees 100. Overall the selling price came to 1000 rupees. On that, sir, I'm not referring it as GST. We'll go further and then we'll talk about GST. Indirect tax at a rate of 10%. So overall, to selling price after adding indirect taxes, we got invoice price of 1100. Let us forget about ITC. There is we'll take this. I mean, we'll do this one considering there is no ITC. If there is no ITC, na, the invoice price is 1100. Then, if there is no ITC, then the cost to the wholesaler itself will be 1100 only. If he gets ITC, then he'll take the cost as 1000 and the other 100 he'll take it as ITC. But if there is no concept of ITC, then his cost will be how much? 1100. For that again he added his margin of rupees 100. Then his selling price came to how much? 1200. For that again he added IDT of 120. Then the overall selling price came to 1320. So now understand here. Here when he is levying tax on this 1200, 120 rupees, this 1200 how we arrived? Nothing but this 1200 is the sum of the 1100 which is from the previous stage and the 100 which was the addition in the current stage. Sir, this 1200 is the total of what? The 1100 which we are getting it from previous stage. And again if you go further to this 1100 breakup, 1000 which was already taxed in the previous stage, whereas the other 100 is nothing but the tax in the previous stage. So see here, for this 1200 we are writing here 1000 is nothing but previous stage selling price, 100 is previous stage tax, whereas the other 100 is current stage value addition, the new thing which we added in the current stage. If you are levying tax on the total 1200, you are again levying tax on the 1000 which was already taxed. You are levying tax on the 100 which is nothing but the tax itself. Only the value addition is 100 rupees. So if you are levying tax on the previous stage selling price which was already taxed, then that is called as what? Double taxation. If you are levying tax on tax to the extent of 100 rupees on which you are levying once again tax, that is called as cascading. Okay, double taxation, na, if the same amount getting taxed for multiple times, either in the current stage or in the coming stages, the same amount which was taxed is getting taxed once again, then that is called as what? Double taxation. The tax on tax itself. If there is tax on tax itself, then that is called as cascading. So see here, out of this 1200, 1100 is previous stage one. This 1100 includes 1000 which was already taxed and 100 is tax itself. So on 1000 if you levy tax once again, it is double taxation. On 100 if you are levying tax once again, it is called as cascading. Now go to the third stage as well. 1320 wholesaler sold and the retailer purchase price is 1320. And again he had a margin of 100 rupees. On 1420 now they are levying taxes. If they are levying tax on 1420, again if you see, okay, on 1420 if you are levying taxes, how this 1420 arrived, sir? This 1420 is nothing but previous stage 1320 and 100 is value addition. The 1320 already taxed there, 1200 tax and 120 is nothing but the tax. So again there is double taxation and cascading. So if there is no ITC, then there will be double taxation and cascading. So the only objective for introducing ITC is to eliminate double taxation and cascading. Sir, at many places when we are discussing about ITC, we'll say like in these situations you will not get ITC. In these situations ITC is not allowed. Majority cases why they are not giving ITC is like there will not be double taxation. If there is no double taxation, then the government is not ready to give us ITC. The point, the objective of giving ITC is to eliminate double taxation and cascading. So whenever government feels like there is no double taxation and cascading there, then they will not give us the ITC benefit. If the same value gets taxed at multiple places or multiple times, it's called double taxation. Cascading na tax on tax. Okay. So look at this example, the same example, but now what we are doing now, we are thinking like there is ITC. This example is just to demonstrate with ITC how we can eliminate double taxation and cascading. The same example, cost 900 rupees, profit 100 rupees, selling price 1000, indirect tax at rupees 100, and we are having invoice price of 1100. But since there is ITC, this 1100 is inward to the wholesaler. On inward supplies, whatever is the tax suffered, that can be availed as ITC. So on this inward, how much is the tax suffered? 100 rupees. This 100 can be availed as ITC by wholesaler. So the ITC he can avail is 100 rupees. So, sir, remember the entry again, purchase entry. What we wrote, purchases account to 1000, to cash 1100, whereas the other 100 we recognized as ITC. That's why we recognized here 100 as ITC. The cost is only 1000. On that he has value addition, wholesaler margin, nothing but this is 100. So now again they are levying tax at how much? 1100. On 1100 they levy tax on how much we got? 110. Sir, previously I said like we'll eliminate double taxation, cascading, nothing. The ITC can change everything. But if you look at here, the tax here it is 120. But now if you look at here, the tax here is how much? 110. I said so much, but the tax which got reduced is how much? Just 10 rupees. We'll understand, we'll think like that only. Even with ITC also, tax is reducing to an extent of only 10 rupees, but not, that is not the situation. See here, for paying 110 rupees, to pay this 110 rupees, you will not pay the total 110 rupees in cash, na. The outflow for you is not 110. What you will do to pay that 110 rupees, you will adjust your 100 rupees ITC. The effective cash outflow is only rupees 10 rupees. So that's why the tax which the government is really getting is extra 10 rupees only. Okay. In other way, sir, if you forget about ITC concept also, they're simply saying in such a way like, or to make it clear, let us talk it in income tax way. Whatever the tax you paid in the previous stage will be given as a rebate when you are paying tax in the subsequent stage. Let's say in first stage I paid 150 rupees as tax. In the second stage, when I purchased, I paid 150 rupees as tax. When I am selling, I need to pay 200 rupees as tax. Then I need not to pay the total 200 once again. Whatever I paid 150 initially, that would be given as rebate. So extra I am paying is how much? Only 50 rupees. But instead of the word rebate, they use the word called ITC. The 150 which we paid at the time of purchase will get reflected in our credit ledger. That will adjust when we are paying the taxes. Okay. So in this way, sir, ITC eliminates double taxation and cascading. Sir, why we need to focus so much now? ITC is the main bone, sir. Here for GST, the backbone is ITC only. So that's why. Next. Sir, indirect taxes now only GST na. No, indirect tax means there is GST, customs, FTP, all those things are there. So GST came when? GST came into force only on 1st July 2017. That means before 2017 there is no indirect tax. There are indirect taxes. There are indirect taxes from pre-independence as well, not post-independence, pre-independence also there are indirect taxes. Then till GST comes, what are the other taxes that were there? So that we'll discuss now. Before that, sir, the general definition, sir, we'll get again once we go to chart chapter. I'll explain you the real definition of intrastate and intrastate as well. But for the time being, layman explanation. Intrastate means when supplier and recipient are in same state or same union territory, we call it as intrastate. When we call it as interstate, when supplier and recipient are in two different states, two different union territories, or one state and one union territory, then we call it as what? Interstate. Fine. Taxes that were there prior to GST. When before GST introduced, the taxes that were there are central sales tax. Central sales tax is levied whenever there is interstate sale, and it would be collected by central government. Sir, understand here, maybe asked in MCQs, it would be collected by central government, but will be distributed to state only. Okay, then why can't say state itself will can collect? Na, the problem is interstate, not two states involved. Then those two states will have a fight regarding that who will be getting the taxes. That's why to reduce those disputes, central government came into picture, and central government will be collecting the CST. But the CST which the central government collected will be given back to the state only. Here there are two states. To which state it will give? It will give it to the origin state. It will give it to the origin state. Let's say from Tamil Nadu goods are sold to Andhra Pradesh. Which state is origin? Tamil Nadu is the origin. So on this transaction, CST will be levied, collected by central government, but the tax will be given back to Tamil Nadu state government only. First one. Next, second one, countervailing duty. Countervailing duty na CVD. Countervailing duty. This is nothing but we'll get in the customs. Equivalent of excise duty. On an imported article, not just the customs duty, equivalent of excise duty will also be levied. We'll understand once we go to the customs detailedly. On import equivalent to excess, which will be levied by central government and taken by central government only. Next, advertisement tax. This advertisement tax is levied on levied by state governments when we keep hoardings or when we advertise something on the newspapers. Sorry, when all these kind of taxes has become world, sir. Many of these taxes are eliminated or else have been discarded in the southern states. This advertisement tax, entry tax, those kind of taxes we'll see only in north states. Advertisement tax actually I didn't see in Andhra and Telangana, even not there in Tamil Nadu as well. But it used to be there in some other northern states. Advertisement tax will be levied on advertisements. Whenever you advertise something on that amount, they will be levying advertisement tax. State government. Then lottery tax. So lottery tax we can see in Kerala. Okay, I don't see in Chennai as well. In Andhra, we don't see lottery tickets, sir, actually. Nobody will buy and sell lottery tickets. But when you go to Kerala, there will be many stalls which they will be selling lottery tickets. Kerala visit చేశారండి ఎప్పుడన్నా? Did you went to Kerala? Okay, so I recently went like some 20 days back only. So there I saw for every 4 or 5 shops there will be one lottery. Just like as a mobile store it would be. So many lottery tickets and all. So in Kerala there will be lottery tax. They'll be selling lottery tickets. On lottery tickets they'll be levying lottery tax, which would be again collected by state government. And then luxury tax. On luxury goods they'll be levying luxury tax. Luxury goods, sir, luxury goods na high end model cars, cosmetics, these are called as luxury goods. Sir, understand here, luxury good if it is sold, CST will be there, interstate na, normal sale na VAT will be there. Since it is a luxury good, additionally there will be luxury tax as well. Then octroi tax. Octroi tax is nothing but called as entry tax. Whenever you want to allow goods from some other state to sell in your state. So this happened in Maharashtra because we know our business capital of India is Mumbai. So many people from other states used to come to Mumbai and sell their goods in Mumbai. Then the native Maharashtrians felt insecure, like many people are coming from other states and selling goods. So they feel like they are losing revenues like that. So then Maharashtra government said, like, I mean, to discourage people coming from other states, they started levying entry tax when a person from other state is coming to Maharashtra and selling goods. So entry tax or octroi tax is levied for allowing to sell goods from other state, which would be collected by state government. Then VAT. VAT is levied on intrastate sale. Entertainment tax. Entertainment tax is levied on movie tickets, concerts, and all. Sir, again, entertainment tax is levied by state government in some states. In some states, it is levied by local authorities. In Tamil Nadu, entertainment tax is levied by local authority. Okay. On movie tickets also, if you buy movie ticket, there will be on this. I mean, in Chennai, if you buy movie ticket, there will be entertainment tax on it. But in Andhra or in some other parts, there will not be entertainment tax. Why? Because entertainment tax levied by state government is merged into GST. Entertainment tax levied by local authorities is still continuing. That is the reason. Then excise duty. The reason for levying excise duty is manufacturing of goods. And service tax. The reason for levying service tax is for provision of services. Excise duty will go to central government, service tax will go to central government. Okay, and countervailing duty will go to central government. All the other indirect taxes revenues will go to state governments only. So to sum up, what are all the taxes now? C. Central sales tax and countervailing duty. A for advertisement tax. L for luxury tax as well as lottery tax. O for octroi tax. V for VAT. E for excise duty and entertainment tax. S for service tax. So these are the taxes that were there in indirect taxes prior to GST. But now all these taxes were subsumed or merged into GST except entertainment tax, which is levied by local authority. If the entertainment tax is levied by local authorities, it is still continuing. So see, manufacture of alcohol. On manufacture of alcohol, sir, on manufacture of a good, generally there will be central excise duty. But on alcohol, it will be state excise duty. So whatever is the revenue, either through manufacture or through sale, if it is related to alcohol, the whole revenue will go to state government only. So on manufacture of alcohol, states will levy state excise duty. It was not merged into GST. I mean, still there is state excise duty. On tobacco and tobacco products, there will be central excise duty. Central excise duty is merged into, subsumed into GST. But still, central government has retained the power exclusively to levy excise duty on tobacco products even after introducing the GST. So that means, sir, on tobacco, let's say tobacco value 1 lakh. On that, first we need to levy what? Excise duty. Let's say 10% is 10,000. It would come to 1.1 lakh. On this, we will be levying GST. Okay, let's say 28%. Okay, so you might feel like, sir, on tobacco there is excise duty, there is GST, and even they may levy other compensations as like taxes also. Is it not double taxation? Yes, there is double taxation. But who will question that? Okay, sir, if onion prices are increasing now, people will go on to the roads and they'll say like onion prices shall come down and చెప్పి ఏం చేస్తారు? I mean, what they'll do? They'll protest against the government. Who will protest for tobacco prices? Nobody will protest now. So that's why government will levy double taxation, triple taxation, whatever they want, they'll do. So that's why on tobacco there is excise duty as well as GST. Then on narcotic drugs and some Indian hemp. Okay, on these items, even though they are used for medical purposes, okay, state excise duty will be levied. It was merged into GST, but even state government also has retained the power to levy state excise duty on them. That means on those type of products, there will be GST as well as state excise duty as well. And next, coming to other goods, there will be only central excise duty, and which was merged to GST. I mean, let's say mobile manufacturing, camera manufacturing, laptop manufacturing, on them there used to be central excise duty. But now there is no central excise duty, it was merged into GST. Okay. Then the next point which we need to discuss is about federal structure. So federal structure na, sir, federal structure is one of the, sir, GST, to introduce GST, the thought of introducing GST has came in 2001. it came into force on 2017. So what happened all these 16 years? Now the problem is federal structure only for the GST. Federal structure is our strength. Indian strength is federal structure, but which is a hurdle for the GST introduction. So let me tell you what is called federal structure. Sir, we have three different layers of government. One is local authorities, I mean municipal corporations, village panchayats. That is one level. Then the second level is state governments. The third level is the central government. So we have three different layers of government: central government, state government, and local authorities. What federal structure says means all these three are independent. It's not like state government is dependent on central government. Okay, these three different type of governments can function on their own, can generate revenues on their own. So that's why Article 246 also says like it gives power separately to central government and state government through which they can generate revenues. Sir, what happens generally if state government is dependent on central government, then central government will simply transfer funds only to the states which were acting as per their instructions. Let's say Tamil Nadu is one state, it was never in ally with the central government. Majority times it was something uh, in opposition to that of central government. So then what central government will do, will not allocate properly the funds to the Tamil Nadu state government if the whole power is with the central government. But the federal structure, I mean when writing the constitution itself, they thought about it. That's why central government has no such kind of power. State government can generate their funds on their own. Central government has some percentage of discretionary funds. Only that can be used on their own. But the other things and all, state has the power to generate their own income and to spend their own income. It was given in the federal structure. Why it is linked to GST? Sir, previously there used to be multiple taxes like this. Out of these taxes, some are levied by central government and some are levied by state government. So the state government revenue used to go to state government directly. Central government revenue used to go to central government directly. But when they bring GST, GST is a single tax. GST is a single tax. The problem comes with who will be collecting this single tax. Let's say there's a meeting happening there. Central government initiated that meeting and all the state members also or the state governments also attended that particular meeting. What central is saying, me being an elder brother of all of you, I'll collect the GST on behalf of all and I'll distribute the GST. Will the states agree? Why? The same thing, simple thing. You all clear CMA, but when you're working, give my account number as salary account. So all your salary will get credited into my account. What is your name? Yogesh. So like let's say 3 months salary got credited into my account. Yogesh salary also. Okay. Then after 4th month, Yogesh came to me and said like, sir, I want 50,000. Give from my salary. I'm just asking then, why Yogesh? Why you want 50,000? If the money is with me now, I'll keep it safe. So Yogesh is saying like, sir, me and my girlfriend want to go on a trip. So I am saying I'm giving preachings now. Why girlfriend now? If you have girlfriend, then again afterwards you'll have some problems and all. I'm explaining, giving him all the preachings. What Yogesh will feel? Hey, it's my 50,000. For some, okay, just because you said it will be safe, I kept in your account. But now you are saying again, why girlfriend? Okay, he listened to that. Then in the 2nd month again, he came to me and asked like, so give me 1 lakh rupees from my salary. I need to buy a bike. Then again, I'm saying, why bike? You can go by bus na and all. If I say all these things, what he'll feel? The same thing happen. Central government has their state governments have their independence. They can spend their money as per their vision will. But now GST is collected by central government, states money going to central, and now central will exercise the control, which is against to the federal structure. What federal structure is saying like all these three different types of layers of government can function independently. But because of this GST, states cannot function independently. That's why states said like we don't want this kind of GST. Then again, the meeting got, they appointed some committees that time. Okay. Then the committees went to world tour. I mean, all the committees went to the world tour and they came and decided like, okay, we have another model now. This is nothing but called dual GST model. On every transaction, instead of single tax, they levy two taxes. One is CGST, one is SGST. The point is CGST revenue will go to central government, SGST revenue will go to the state government. So on a single transaction, they levy now two taxes. One is CGST, the other one is SGST. Okay, state governments agreed. Then again the problem came, sir. The other problem which they which they encountered is the other problem which they encountered is, let's say if the seller is in Tamil Nadu, buyer is in Andhra Pradesh. Seller is in Tamil Nadu, buyer is in Andhra Pradesh. Which transaction it is? Interstate. On that also, assume they are levying CGST and SGST. Let me write it here. Seller Andhra Pradesh, buyer Tamil Nadu. This seller supplied goods worth 2 lakh rupees. On this, they are levying CGST and SGST. CGST 9% now it came to 18,000. SGST also 18,000. So total it came to 2,36,000. Fine. Sir, out of this 18,000 central share na central government will take. Now coming to the state share, again states will have a problem. To which state it has to be given? Whether it has to be given to AP or it has to be given to Tamil Nadu. So for this problem, again between states there will be a fight, like what Andhra Pradesh will say, like we are having the seller, the goods origin is here, so that's why we are only great, we want the 18,000 rupees tax. Then what Tamil Nadu will say here, we are the buyers, if we don't buy goods, to whom we will sell? Okay, so then this argument will never end. Who is great now? Seller is great or buyer is great now? We cannot decide it. Both are mutual, like seller is great in some situations, buyer is great in some situations. So here there's a conflict between the states regarding this 18,000. So this dual GST model works only in certain cases. In certain cases, dual GST model will also don't work. So that's why they come up with a third option saying, like we'll divide the transactions into two types: intrastate, interstate. On intrastate, they levy CGST and SGST because the seller and buyer will remain in the okay. So when it is intrastate, there used to be CGST and there will be CGST and SGST. But the problem came with interstate. Why? Because in interstate, it's not just central and state government involved. There are two state governments involved. So there's a problem to which state the state government revenue has to be, the SGST has to be given. To solve this problem, again, they come up with a third model saying, like we have CGST and SGST on intrastate supplies, and we'll have IGST on interstate supply. So again the states started the same thing. So the problem to the state government itself is central government. Central government collecting taxes on behalf of them is their main problem, because once central collects all the taxes, then they'll not share it back to the state government. So they are again against to this model of IGST as well. Then central came forward and said, like I will distribute the revenues to the central and state government equally. If you don't believe me, we'll insert a provision in the constitution itself. So no government can act beyond constitution. So that's why in constitution itself they inserted a provision for this, stating like article 269A says, like the IGST, the tax on interstate supplies will be levied by central government, but it would be distributed between center and states equally. So since it is kept in constitution, even the government changes, central government or any other central government changes also, the coming new government can also change it because it was there in the constitution. So look at here, article 269A. So see, on intrastate supplies there is dual GST model, CGST and SGST will be levied. On interstate supplies, article 269A empowers the central government to levy and collect in tax on interstate supplies, which would be distributed between central and states equally. Okay, then So here the revenue related problems are sorted out. The revenue from GST will go to central and states equally. The benefit which state governments are getting now, previously on services, state government will not get any revenue, because on services there will be only service tax which will go to central. But now they are getting a share in service tax as well. I mean the revenue on services as well. Whereas the central government is also getting benefited in such a way, like on sale of goods, previously the whole tax revenue will go to state governments only. Now even central is also getting a share in that. So revenue wise there is no other problem. The problem now came with the power. Since it is a central law, everything is framed in under the central, I mean at a higher level. States will not have the power or control with respect to this law. I mean they are not even considered in the decision making. So now states are asking about power. We don't, I mean they don't only, I mean they not only want the revenue, they even want the control or power in the decision making as well. So that's why they came up with another body called as GST Council. So the decision making in GST will be carried out by GST Council. But as per Constitution, Council has no power to frame a law. Council has the power to take decision, but it has no power to frame a law. So that's why actually the final decision is council only. But for the sake of legality, it would be considered as recommendations. The recommendations which are given by council will be implemented by the central and state governments. So here the higher body is council. What? And this council consists of representatives of central government as well as state government. They collectively will take a decision. So that is the highest hierarchy wise. If you see hierarchy wise, highest is like GST Council. It will give recommendations. The recommendations given by them will be made as law by central and state governments. The law which was made by central and state governments will be implemented by CBSE, Central Board of Indirect Taxes and Customs, CBSE. So you understand the flow now? Council is the highest, okay, which will frame, I mean which will recommend how the law should be there or how the tax rate should be there, which would be made as law or made as rules by central and state governments. It would be implemented by CBSE, and while implementing, CBSE can take help of GSTN. GSTN is nothing but Goods and Service Tax Network. It's a tech support. The whole GST website is maintained by the GSTN. So coming to our material, sir. So now we'll go with the material. So this is a basic question, sir. Direct taxes versus indirect taxes. Okay. If this question is asked in exam, we need to check whether it is inter paper or final paper. So in inter level, this is important question only, but now nobody will ask. I mean, final level they'll not ask. But okay. Incidence of tax. I mean, ultimately direct tax will be on the taxpayer only. I mean, the burden is also on the taxpayer only. Whereas in indirect taxes, seller will pay tax, but it would be recovered from buyer. So that's why indirect taxes, the incidence is on the consumer basis. Why you levy income tax? Just because I mean, you are eating and sleeping. Will there be any income tax on you? No. Only when you are having any income, then you'll have income tax. Indirect tax is not on consumption. Okay, even you don't earn anything, you buy soap, you buy chocolate, or you buy dress, on all those things there will be indirect taxes. Shifting of tax burden. So my direct tax has to be paid by me only, whereas indirect taxes, me being a supplier, on me indirect tax is there, but I can recover it from my buyer. Nature. Direct taxes are progressive in nature. Progressive na, your income increases, your tax rate will also increases. When it comes to indirect taxes, they are regressive. Irrespective of rich, poor, everybody will be taxed at a constant rate. Next, direct tax ka example income tax. Indirect taxes na GST and custom duty. Administrative body. The whole direct taxes are administrated by CBDT, Central Board of Direct Taxes, whereas indirect taxes are administered by CBIC, Central Board of Indirect Taxes and Customs. Next, features of indirect taxes. Revenue source to the government. How indirect tax has become a major source of revenue? So previously, from King's era, there is direct taxes. Sir. Like during the King's period, I mean, even before the Britishers came into India, that time also there used to be direct taxes. Like If you're a businessman, 1/4 should be paid as taxes. If you're a farmer, 1/6 of your revenue has to be paid as taxes. Like that, the tax system used to be there even before the Britishers come to India. But then indirect tax is not a major source. But these days, indirect tax also has become a major source, and around 50% of the tax revenue is from indirect taxes only. So it is contributing major source of revenue to the government. First feature. Second one, regressive in nature. Regressive na what? Irrespective of whether you are rich and poor, you will be taxed at a same rate. Either rickshaw wala or Reliance wala, both has to pay tax at the same rate. Next, inflationary. Indirect taxes lead to a inflationary situation. What is called inflation? Inflation means what? Increase in prices is called as inflation. Sir, I can sell a good for 100 rupees if there is no indirect taxes. If there is indirect taxes, on that 100 rupees we need to levy tax. Let's say 10%. Now I'll sell it for only 110 rupees. So because of indirect taxes, the good which we can sell for 100 rupees has to be sold for now 110 rupees. So because of indirect taxes, there is a price increase which leads to inflation. So tax imposed on commodities and services will make a all-round price rise which leads to inflationary. Next, indirect taxes are not levied only on goods. They are levied on both goods and services. Next, shifting of burden. Sir, under indirect taxes, me being a supplier, actually the obligation to pay tax is on supplier, but he will always recover the taxes from his buyer. So the burden is getting shifted to the buyer. Next, higher tax base. Higher tax base na under indirect taxes, there are wide range of goods and services available to levy taxes, and very few exemptions are there. So that's why, since majority of products and services are covered with very less exemptions, there is a lot of scope for them to levy indirect taxes. Next, welfare. This is something interesting, sir. How indirect taxes leads to welfare na? On sin goods such as tobacco, alcohol, they levy high tax rates. Once they levy high tax rates, the prices of those goods will increase. When the price increases, then demand will decreases. So in such a way, the government is saying like the consumption of tobacco and alcohol will come down, which will leads to welfare of the society. Okay, understand, sir? On sin goods, they levy high taxes. Once they levy high taxes, the prices of those goods will increase. Once the price increases, the demand will come down, which leads to the welfare of the society. Next, background. GST came into force after making Constitution's 101st Amendment. GST came into force on 1st July 2017, whereas in Jammu and Kashmir, sir, it is on 8th July 2017. The whole India, it is on 1st July, whereas in Jammu and Kashmir, it came into force on 8th July 2017. Then it applicable to whole of India, including Jammu and Kashmir. Sir, GST, whatever the model we are using, it was not created by us from the scratch. We adopted Canadian GST model. The model which was followed in Canada, the dual GST model, we adopted that. India adopted Canadian GST model. Next one, sir. What is the need for GST in India? Before GST also, there are so many indirect taxes, such as these are the indirect taxes that were there prior to GST, sir. Central sales tax, countervailing duty, advertisement tax, luxury tax, lottery tax, octroi tax, VAT, excise duty, entertainment tax, service tax. These are the taxes which were there prior to GST. Why they need to bring once again GST? They can leave like that only, na? So that concept we are discussing. Need for GST in India. Deficiencies in the existing value added system have led to GST. There are problems in the existing system. That's why they need to bring GST. So GST is the cure for all the ills. Elevation also they only giving. GST is the medicine for all the problems which were there in the existing indirect tax regime. So understand the first point, sir. Need for GST. Sir, MRF company selling tires to Tata Motors as well as to an individual called Ram. This Tata Motors they'll buy tires. Generally they are into automobile industry, so they'll buy tires and fix it to their vehicles and they'll be selling them. Whereas Ram is a wholesaler of tires. He has a tire shop, he'll be selling tires. Ram, when he purchased tires, on 10 lakh rupees, there is excise duty and VAT. Assuming this is pre-GST, sir. There is excise duty and VAT. On 10 lakhs, excise duty 1 lakh, subtotal 11 lakhs. On that VAT, 1 lakh 10,000. Total it came to 12 lakh 10,000. Whereas Ram also purchased tires for 10 lakh rupees. On that excise duty 10%, 1 lakh. Total it came to 11 lakhs. On that again VAT levied at 10%, 1 lakh 10,000. So total it came to 12 lakh 10,000, 12 lakh 10,000. But if the recipient is Tata Motors, MRF is a manufacturer, Tata Motors is also a manufacturer. Since both of them are manufacturers, excise duty also availed as ITC, VAT also can be availed as ITC. Whereas for Ram, he is not a manufacturer, he is just a wholesaler. So for him, excise duty credit is not allowed, only VAT credit is allowed. Sir, why this kind of distinction? Excise duty is central government credit, VAT is state government credit. So if Tata Motors is a manufacturer, since again it has to pay excise duty, it can use excise duty credit. Whereas Ram, he is having only state levies. The central levy he cannot avail as ITC. Even if he avail, he cannot use it to discharge state levy. So that's why excise duty credit is not available to Ram. This was a problem in the pre-GST era. Because of this, what happens? To the extent of excise duty, this excise duty will be added into the cost. Once it is added into the cost, there will be double taxation and cascading. To remove this, a new kind of tax model has to be introduced, which will not have any differentiation between manufacturers and wholesalers. Everybody should get the credit. Okay, this is one problem. And the second problem, sir, CST paid, central sales tax paid on interstate sales is also not allowed as ITC. Let's say seller is in AP, recipient is in Tamil Nadu. On goods 1 lakh rupees, CST levied at 4%, 1 lakh 4,000. Whatever is the central sales tax paid, that will also be not given as ITC. So two problems are. One thing, excise duty equivalent ITC is not given to wholesalers and retailers, only to manufacturers it is given. Second problem, on interstate sales, CST is levied. Such CST cannot be availed as ITC by the recipients. Third point, sir, non-inclusion of several state levies into VAT. VAT is a state levy. Advertisement tax is a state levy. Luxury tax, entry tax, all those are state levies only. But on a car, let's say car value 90 lakhs. On this, there is luxury tax and there is VAT as well. Since both are state levies, they can merge these two now. If they merge these two and levy 20%, let's say, sir, luxury tax 10%, VAT 10%. Instead of levying them separately, if they include both of them, you could see how the price will get decreased. Sir, here, if they charge separately, we got the total value as how much? 1 crore 8 lakh 90,000. Let's say the both are merged, 90 lakhs, and they're levying 20% as tax. 20% na 18 lakhs. How much they are getting? Only 1 crore 8 lakhs. By levying taxes separately, there is a 90,000 difference. This can be avoided if all the state levies are merged into one tax, but they didn't did that. So that's why there is a problem with the existing regime. Third point is like non-inclusion of several state levies into VAT. Okay, there are so many state levies, but for all the state levies also there is no single kind of model. Different type of models are there. Next one, non-integration of VAT and service tax. Let's say there is a contractor who agreed to construct a building for 60 lakhs. He agreed to construct a building for 60 lakhs. For this 60, in the 60 lakhs only, he'll supply material as well. The cement, iron, sand, bricks, whatever required, he'll be sending that. And even he'll provide labor service as well. Now it includes, the contract for 60 lakhs includes both goods as well as service. Since goods is included, they are levying VAT. Since service is included, they are levying service tax also. On 60 lakhs, they are levying VAT as well as service tax, which has made, because of this there is double time taxation on those 60 lakhs. Considering it as good, they are levying one tax. Considering it as service, they are levying another tax. To eliminate this, they need a single tax model. The last one, sir, even for us also. Let's say me from Andhra, okay, cleared CA intra, CMA enter there, came for articleship in Chennai. When we are doing articleship here, we'll be having Tamil Nadu clients. So here what we'll be learning? Tamil Nadu VAT model we'll learn. Let's say afterwards, after qualifying, I went to Maharashtra and started my practice in Maharashtra. In Andhra, I might have learned one VAT law. In Tamil Nadu, I practiced another VAT law. But when I go to Maharashtra, there will be altogether another new VAT law. So for consultants also, it would be so tricky to learn all those VAT models, because in every state there is a different type of tax model. Even for companies and businesses also, let's say a company is having branches in 18 different states, then it has to follow with all the 18 VAT laws, state levies and all, it has to follow. The problem is like, let's say in Andhra Pradesh the due date is 10th, in Tamil Nadu 12th, Maharashtra 14th. If you consider all the 29 states, then every day is the due date. Okay, so it would be the problem. So to streamline that, there is a single tax model is needed. So these are the needs for introduction the GST. In the earlier regime, only manufacturers are eligible for availing ITC, whereas retailers and service providers are not eligible. Next, central sales tax paid on interstate is not eligible for taking the credit. Sales tax laws are different from one state to another, which leads to lot of confusion among the taxpayers. Non-inclusion of several state levies into VAT, such as luxury tax, entertainment tax, etc. Next, non-integration of VAT and service tax. So these are the need for GST in India. Next, constitutional provisions are, which we discussed only. Article 246. So generally, why government only has to levy tax? I don't know whether you have such kind of movie or not. In Telugu, there is a movie called Businessman, acted by Mahesh Babu. Okay, in that movie, what that hero will do now, generally, he introduces a tax called Surya tax. Whatever the transaction will happen in India, they have to pay 2% to him. So if they pay 2%, what he'll do now, he'll give protection to the public. I mean, to the business people. Like, no another rowdy or any other gang can come and ask for commissions from them. He will take care of all of them. Whatever business problem will come to them, then Surya will come and solve this problem. So for that, Surya will be getting 2%. So me being inspired by that, I'll also introduce Manidip tax. On every transaction, let's say if I also say like, pay me 3%, I'll give whatever the protection you want. So, but you need to pay 3% on every transaction, whether it is small or big, and every transaction 3% has to be paid to me. Sir, if everybody puts such kind of thing, that is nothing but called as mafia. Mafia will do the same thing, but government also doing the same thing only, because if it is kept in constitution and the power comes from constitution, then it is tax. Without constitutional backup, if you do the same thing, then we call it as mafia. Then the government will enforce army on us, just like as in KGF. Okay, so for that only, government also collecting taxes for that reason only, no? Okay, then Surya Bhai is doing wonders now. Yes, initially Surya Bhai will do like that only in the movie also. But after some point of time, so after Surya's son will come. He will become Hitler. Then he'll do dictatorship and all will come. So that's why government generally puts like, no other body can collect taxes, only government can collect taxes. That power comes from where? Article 246. So to levy GST or to frame laws with respect to GST, there is a separate article introduced called as Article 246A. Article 246A gives the power to central and state governments to frame laws with respect to GST. Then Article 269A, it says like, on interstate supplies, tax will be levied by central government, but it would be distributed between central and states equally. Then they defined even GSTs are here. Since we are referring so much regarding GST now, so the GST is defined in Constitution, Article 366. What is called GST? GST is a tax. when this tax is levied. GST is a tax levied on supply of goods, services, or both. GST is a tax levied on supply of goods, services, or both, except alcoholic liquor for human consumption. If it is alcohol, there is no right to levy tax. Sir, why on alcohol no GST now? States are not ready to share their revenue with the central. If alcohol is also brought under the coverage of GST, then whatever the tax levied on alcohol, half will go to central. States are not ready for that. So that's why alcohol is not into the coverage of GST. Next, Article 279A. Article 279A empowers the President to constitute GST Council. So Council consists of Union Finance Minister, who will act as chairperson. State Finance Minister from every state finance minister will be the member of council. If not finance minister, any other minister can also be the member of council. And again, from central only, union minister of state for finance or taxation, nothing but he is deputy finance minister from central. Central finance minister and central deputy finance minister both will be there. And from state, either finance minister or any other representative minister will be the members of council. So to take a decision in council, 3/4 of the members should be in favor. Sir, it's not head count. If it is head count, now always states will only win, because from center only 2 persons. From state there are 28 people will be there. So that's why it's not head count. They have votings. Like for central government, the vote share is equivalent of 1/3. Even though there are only 2 members, their voting is, the vote power has 33.33 percentage. Whereas states altogether they are having 66.67 percentage. Quorum. To call it as a valid meeting, 50 percentage of the total members should be present. Okay. Sir, one point which I need to mention here. In India, there are 28 states. How many? 28. Okay, don't get confused with 29. It's only 28 states. Once Telangana is given, it became 29 states. But afterwards, Jammu and Kashmir has been divided into 2 union territories. So one state was removed from state list. So that's why there are only 28 states. And there are 8 union territories. Sir, previously there used to be 7 union territories. Afterwards, Jammu and Kashmir has been divided into 2 union territories. Then it would be 9 now. What happened means, Daman and Diu, Dadra and Nagar Haveli, previously there used to, they are like 2 separate union territories. But now they are merged. And they are only 1 union territory. Daman and Diu, Dadra and Nagar Haveli. Okay. So let me tell you all the 8 union territories. Andaman Nicobar Islands, Lakshadweep, Puducherry, Delhi, Chandigarh, Jammu and Kashmir, Ladakh, Daman and Diu, Dadra and Nagar Haveli. So there are 28 states and 8 union territories. Out of these 8 union territories, there are 3 union territories which are actually union territories, but they functions like state. Puducherry, Delhi, and Jammu and Kashmir. Okay, if you can see, Jammu and Kashmir recently the elections got over. Congress, formed the government there in Jammu and Kashmir. Then in Delhi, Delhi CM Kejriwal. Puducherry also acts as a separate state. Technically, these are union territories, but the functions like states. So, if it is a general knowledge question, we can say like there are only 28 states. But for the purpose of GST, these 3 union territories, since they functions like state, those 3 are also treated as states only. That means in council there are 31 states. State finance ministers representing 31 states will be there. 28 actual states, 3 which are not actually states, they are union territories, but they functions like state. So total 31 plus from central 2. Overall there will be 33 members in the council. Out of them, a minimum of 50 members should be present to call it as a valid meeting. Okay. Functions of council. Council will give recommendations on tax rates, exemptions, threshold limits, the tax rate, whether it has to be increased or decreased, which are related to which products exemptions has to be given. Threshold limits now, the registration limit 20 lakhs, 40 lakhs, those composition scheme limits 150 lakhs or 75 lakhs. So those limits are called as threshold limits. And then recommendation on petroleum products from which the petroleum products can be brought into GST. Sir, petroleum products currently not under the scope of GST. Why they are not under the scope of GST means, currently on petroleum products, let's say on diesel, petrol, whatever it is, around 100 to 110 percentage of taxes are there on petroleum products. But once they brought it into GST, the maximum tax they can levy is only 40%. So that means the revenues will fall down drastically. For that, the state and central governments are currently not ready. But in future, they are they are thinking of bringing petroleum products also into GST coverage, at least in the future, but not now. So that's why they said like they will be brought into the GST, but only when council decides. Council are nothing but all the states and central together will decide when petroleum products has to be brought into GST. And even to make recommendations on principles of levy. Principles of levy na FCM or RCM. Sir, FCM na usual thing. Seller will pay taxes to the government collected from buyer. RCM na buyer will only pay the taxes to the government. Then that is called as RCM. So those principles. Then to make recommendations on taxes surcharge which has to be subsumed into GST. We already discussed central sales tax, advertisement tax, luxury tax. Which taxes has to be subsumed into GST also decided by the council. Sir, this concept of GST we know already. GST is a value added tax. Value added tax na at every stage the tax paid will be given as ITC. Once it is given as ITC, we are in the subsequent stages will not tax the whole amount. Will tax only the value addition only. The one which was taxed previously will be allowed for set off by way of ITC. Let's say, sir, I purchased for 100, I'm selling it for 120. That means 100 already taxed. So whatever is the tax on 100, I'll claim as ITC. Subsequently, when I'm selling for 120, I'll levy tax on 120. But I'll adjust the tax which I paid on 100 rupees. So effectively, I'm paying tax only on the value addition of 20 rupees. So GST is a value added tax. It offers continuous chain of tax credits. So the ITC is not given only to manufacturers or only to wholesalers. It was given to everyone. So the ITC flows from manufacturer to retailer without any differentiation. Next, supplier at each stage is allowed to avail the credit which can be adjusted with the outward liability. That means the burden is only on the end consumer, not on the business people. Value added on goods and services alone is taxable, hence there is no tax on tax. Since only value added is getting taxed, there is no cascading effect. And GST is a destination based tax which is against to the previous taxes. Previously, the taxes used to be origin based. I mean, a seller from Tamil Nadu sells to buyer in Maharashtra. Seller Tamil Nadu, buyer in Maharashtra. Interstate sale, CST will be levied, but the CST revenue will be given to Tamil Nadu only, which is the origin. But now it is destination based tax. A seller from Tamil Nadu sold goods to Maharashtra, IGST will be levied. Out of IGST, half will be taken by central government, whereas the other half has to be given to state. To which state? Not to Tamil Nadu, it will be given to Maharashtra because the destination is in Maharashtra. Framework of GST, dual GST. On every transaction, two taxes will be levied called as CGST and SGST. For that examples only. Then seamless flow of credit. The revenue of interstate sale does not accrue to the exporting state, so it will be passed on to the state and all. That is. So before break, sir, let me discuss this common portal thing. Then we'll go for break. GSTN. Sir, what is the need for GSTN here is central promise like a constitution provision will be kept for sharing the revenues between central and state. Article 269. Then for decision making, they said like council will be introduced so that council will only take the decision making. Still, even after doing all those things, state governments have still doubts on central government. Are they simply making promises or will they do it actually or not? So that kind of doubt is still there with the central government. Further, to clarify all those, central said like even the revenue distributions will also not be in the hands of central government. For revenue distributions on a timely manner, they'll create a separate body called GSTN. So the timely settlement of revenues will also be carried out by GSTN. I mean, to make the system transparent. So state governments always will have a negative vibe on the central government. So central has to clear all their aspects. Then only GST can function smoothly. So that's why for decision making, everybody involved, council. For revenue settlement, constitution has given the powers. Now for timely settlement, they introduced what? GSTN. So GSTN is a Section 8 company. Section 8 na non-profit organization. But actually GSTN is not created as per Companies Act 2013. It was created as per Companies Act 1956. So as per that provisions, it is Section 25. As per 1956 company law, Section 25 is nothing but non-profit organizations only. So GSTN, a separate company is created, which main objective is to settle the revenues between central and states on a timely manner. So a common portal was required to act as a clearing house for settlement of credits, ITC, as well as revenue between central and state. A common GST system. Along with this search, this GSTN will also maintain a website and also maintain the software and hardware needed. Okay. So if we want to interact with GST related officers or CBIC or any other officer, in between we and the officers, the linkage is nothing but the GST system. Not only between we and the officers, even with the government also. For all the stakeholders, whoever are related with the GST, for all the stakeholders, this GSTN, the website they maintain, is acting as a linkage. So a common GST system provide linkage to all the stakeholders. It maintains a website called gst.gov.in, a company incorporated as per provisions of Section 8. So what are its functions? It facilitates registration. So for registering under GST, sir, whether you know or not, let's say if we want PF registration, for an organization, if we want PF registration, it was not automated even now. So for PF registrations, you need to go to PF office. But for GST, we need not to go to GST officers or the state officers or commercial taxes departments. We need not to go like that. We can register ourselves within the website. We'll fill the application from the website REG01. From there, all the documents will be submitted. Verification will be made. So GSTN does not grant registration. It facilitates registration. So there is a difference here. Granting of registration is made by CBIC. It just facilitates. Okay, it reduces our effort and it reduces our time. Instead of not going to GST office, we can directly apply it through our website or through the portal. So it facilitates registration. First one. Next, whatever the return we file, the information we provide, it would be shared with the central and state governments. Next, settlement and computation of IGST. Fourth one, whatever the tax we pay, let's say when I'm paying taxes, in my account 20,000 got deducted, but whereas GST's website is not reflecting that. This happens with even Amazon, Zomato, or whatever the purchase you do. Whatever the amount which gets deducted from our account should be reflected in the merchant account also. Na? That matching will be made by GSTN. The amount deducted from the taxpayer's account shall be matched by reflecting it in the GST website as well. Next, providing various MIS reports. MIS na Management Information System reports. Let's say council is looking to reduce the tax rates on iron from 18% to 12%. The council is looking to reduce tax rates on iron from 18% to 12%. So they cannot take decision blindly once they get a thought. So they need to do so much of background study. If they reduce at 6%, how much revenue loss they are going to get? How many beneficiaries are there? How much direct benefit is there? How much indirect benefit is there? All those they need to study. For that, they need lot of information. All that information is with the GSTN. So GSTN will not dump the whole data. It will provide reports in a meaningful way. Summarize and provide it in a meaningful way. That is called as Management Information System reports. So provide various MIS reports to central and state government. And next, it provide analysis on taxpayers profile. So now either income tax or indirect taxes, whatever the systems they are using, they are having this AI capacity also. So AI na previously, sir, 30 years, 20 years back, the scrutiny used to be taken on random sampling. But now the scrutiny will be taken on a clear analysis of a profile by with the targeted trends. Let's say the system itself will calculate like from the past 5 years. In September month, I'm reporting my sales as somewhere around 5 to 6 lakhs from the past 5 years. But this year I reported as only 1,50,000. Then automatically the system will triggers me. Like this fellow from past 5 years in this month he is showing 5 lakhs. But now in this year he suddenly showed it as 1.5 lakhs. So it's a red flag on me. So then the department will send a notice to me to explain. So then I may say like there are floods on that particular month, so I cannot do business. That will happen. Otherwise, the government always doubts me like whether I'm suppressing my sales or else escaping from tax payments and all. So these kind of scrutinies will be directly picked by the system itself. For that, they'll be analyzing the taxpayer's profile on a continuous basis. Next, running the matching engine. Running the matching engine now, sir, if I purchase 10 lakh rupees worth goods, I cannot claim the relevant ITC. I purchased 10 lakhs, but nobody believes my word. If my seller says like I sold 10 lakh rupees to so and so person, that only will be believed. So how the system works now? The seller has to file GSTR1. I mean, he reports his sales. Based on that sales, my purchase will get automatically reflects. Okay, so my inwards will not be reflected as per my data. My inwards will be reflected as per the GSTR1 which is filed by seller. So that matching has to be made. When a seller files return, from the seller return, the corresponding data will be matched with the buyer's profile. So that is called as running the matching engine. So these are the functions of GSTN. Okay. Sir, actually, out of the first chapter, GSTN concept is very important, sir. Why? Because, sir, if you look at the institute book, first chapter actually it consists of basic, supply, charge, exemptions. All these were given as module 1 only in the institute book. Okay. But when covering this basics part, they'll not include GSTN part in the basics. There's a last module in GST that covers specifically about GSTN. So, I mean, GSTN related concepts are given in our institute material as a separate module. So, there are high chances of asking a question from GSTN considering the other topics. So, that's why there are only 3 questions from GSTN, sir. One is like, what is GSTN and what are its functions? Second one is like, vision, mission of GSTN. Third one is like, advantages of GSTN. Sir, you could see mission of GSTN is asked in June 2023. Exam question only, mission of GSTN. Whereas advantages of GSTN it was not asked in exam, but it was there in mock test papers. Okay. So coming to vision of GSTN. So what is the ultimate vision, sir? Because GSTN is a company. It's a Section 8 company. It has a vision as well as a mission. So coming to vision and mission, vision is a long-term objective which they want to achieve in some 20 years, 30 years vision. Mission comparatively short term, which they want to achieve in the coming 3 years or 4 years. Okay, but the mission should also be aligned along with the vision. So what is the vision? To become trusted national information utility. Okay, across the country, it should be the trusted information source which provides reliable, efficient and robust. Okay, reliable, efficient, I mean quality data which could be trusted in a faster way. Such IT and information has to be given. That is the vision of GST, and it should act as a backbone for the smooth functioning of GST. That is their vision. The vision is like to become a trusted national source of information which provide trusted, quality, and providing data in a faster way. Okay, and it should act as a backbone for the smooth functioning of GST, and even it leverage the entire nation as one market with minimal indirect compliance cost. Sir, if this vision happens, then it reduces our scope. When compliance cost and compliances are getting easy, then who will come to consultants like us? Okay, but the ultimate objective is like that one only. So like they'll make much more user friendly options to file returns, to pay tax payments and all. So with that they'll reduce compliance cost. Compliance cost means what, sir? Nothing but the cost they spend on us. If a client pay some fees to us, that is nothing but for fulfilling his compliances, GST compliance or tax compliance. Their objective, or I mean their long term objective is like to make the whole indirect taxes as one market and to reduce the compliance cost. This is the vision. So 2 points are vision. One is like it has to become a nationwide trusted information source and provide quality and trusted and providing data in a faster way, and in such a way it acts as the backbone for functioning of GST. The second vision is like it wants to reduce the compliance cost and to leverage the whole nation as one particular market. Next, mission of GST. Sir, mission should be in line with the vision. Okay, mission cannot deviate from vision. So vision is long term objective. For that long term, the short term steps are nothing but called as vision mission. So it provide common and IT infrastructure between central government and state government and other stakeholders instead of having multiple websites. So previously for VAT there is one website, for excise duty one website, service tax one website. So instead of having different infrastructures, one common shared IT infrastructure will be provided. Next, it provide facilities like registration, return, tax payment, all these services. So if all these services are provided through one particular website only or one particular software only, automatically it will reduce the compliance cost. Next, it collaborate with GSPs. GSPs now goods and service tax suvidha providers, sir. These are nothing but certain notified tech companies, IT companies, TCS, Infosys, such kind of tech companies. I mean GST will collaborate with such kind of tech companies and ask them to develop softwares which should be capable with GST functioning. Okay, so once such kind of softwares are introduced, then the return filing for the taxpayer will be easy. So like let's say in SAP, if there is such kind of options, because every sale data, I mean every sale transaction will be captured in the SAP system, SAP software which they use. If in the SAP itself there is an option like if it could extract the whole sales which would be, I mean in a format where the GST or one is required, so then it will reduce their compliance cost. So like that they'll be collaborating with the GSPs to roll out GST applications. Sir, in income tax also, maybe wherever you work, we'll have this softwares like compute tax and all. So like first we'll do, like when we are filing a return for individual example, we'll do first Excel statement. We'll do his P&L balance sheet and we'll put the statement in Excel. Then we'll be having some filing software. We'll fill the data in the filing software. Through filing software, we'll connect it to the income tax website. The same way, these GSPs will develop applications like that filing softwares only. So these softwares will be linked with the taxpayers software so that the GST data would be extracted directly from that site and it will be directly uploaded into the GST website without the help of consultants and all. So which reduces their compliance cost. Next, they provide efficient backend services to department and state and central government services. So nothing but this is for national, providing trusted information. So to do backend activities by central and state government, nothing but for various decision makings, the GSTN will be providing the data which could be trusted. Next, develop taxpayer profiling utility, sir. This is not unity, it is utility. develop taxpayer profiling utility for central and state government tax administration. I mean, it's not just create a profile for us. For every user who is registered under the website, a profile will be created. In that profile, our whole trends will be there. Like from the past 5 years, if you are filing data from past 5 years, it will be there. So there is a recent notification also which said like GSTN maintains past 5 years track of our records. Beyond 5 years, if they are maintaining, like there is volume, I mean high volumes of data is getting stored there. They cannot, I mean the system cannot analyze all those things. So that's why they are maintaining 5 years of data in the system. Okay, so by that system they could create a profile and they could create and develop trends related to every user. So such kind of taxpayer profiling utility is there for administration, and then they'll assist authorities in improving compliance and transparency. So all these mission points are in line with the vision only. Either they are helping to provide quality data to the government or reducing compliance cost. Those are the ultimate objectives by through these missions. Next, advantages of GSTN. Through what are the advantages of GSTN? Sir, these advantages are given from the taxpayer point of view. So for us, what is the advantage of GSTN? So the advantage is like whenever we are having any problem with the tax payment system or any software related issues, we could lodge a complaint, and for that complaint a ticket number will be given. We could lodge a complaint, and then they provide required information and helping to reach faster resolution. So after lodging complaint, we'll get a ticket number. There we should provide. So same as like Zomato will have help option. What you'll do, let's say you ordered a biryani, but you are saying like you didn't got chicken piece. So you'll go to the help option there. So he'll ask you to explain the reason. You said like I ordered biryani, but in that chicken is not there, insects are there. So it will ask for what next? It will ask you to put some photos of it. The same way, you'll lodge a complaint and you'll provide the required information for helping each other. I mean, for helping and to make a faster resolution. After that, what you'll get, an executive will get connected to you. He'll explain you. Okay, once he's convinced, then he'll say like he'll initiate refund he'll initiate refund. That's the general Zomato, Swiggy related, complaint related. But what happens here? You lodge a complaint, for your ticket number is raised, you provided information, then you could check whenever you want what is the progress. So that means the person from GSTN will look at the issue. If he want any further data, he'll put it as comment, needed extra information. Then you will go and check the status. If he asks for further information, you will provide the other information as well. And even there will be relevant FAQs also. Instead of raising a complaint for everything, there will be frequently asked questions also. So these are the advantages of GSTN. So whenever you want to, you have any issue with the software, you can lodge a complaint. For the complaint, they'll raise a ticket number. So in that complaint box only, or in that complaint related page only, you can upload the data which you want to provide them. Afterwards, whenever you want, you can go and open the ticket number and you could check the status. Once the ticket is closed, the resolution comments will also be there itself. You could check, I mean, ultimately to sort out what you have to do will also be there itself. The last one, there will be even FAQs also. Instead of raising complaint for everything, you can even refer to FAQs. These are the advantages of GSTN. Then GSPs. As I already said, sir, GSPs are nothing but the certain notified IT companies. They will develop softwares or applications which will have the GST functionalities. Okay. GSTN has selected certain IT and financial technology companies to be called as GST Suvidha providers. They develop applications to be used by taxpayers for interacting with GSTN. So nothing but they'll act as bridge. They'll act as GSPs will act as bridge between taxpayers and GSTN. Whatever is the difference of, so GSTN asking some kind of data, but whereas your business, you are maintaining the records in manually. So these softwares will help you to file the returns in an effective way. So those are called as GSPs and ASPs. Next, compensation cess. Why compensation cess? Na? What is the need for introducing compensation cess? Sir, already we have CGST, SGST. If it is union territory, we'll have UTGST. and then we have even IGST. Now the problem is like, let's say Tamil Nadu. In Tamil Nadu, 100 units are produced pre-GST, post-GST. There are 100 units produced in Tamil Nadu. Out of them, sir, previously, I mean before GST, 70 units were consumed within Tamil Nadu, whereas 30 units were sold outside Tamil Nadu. Even after GST also same thing happening. 70 units were consumed within Tamil Nadu, whereas the other 30 units they were sending outside Tamil Nadu. Now understand the issue here, sir. Before GST, there used to be central sales tax since it is an interstate transaction. Sir, on 70 units, since it is intrastate transaction only, the total revenue will go to Tamil Nadu. But whereas on 30 units, since they are being sold outside India, which is an interstate transaction, on these also, previous taxes or origin based taxes, the total revenue will go to Tamil Nadu only. So if they sell 100 units within Telangana, within Tamil Nadu or outside Tamil Nadu, the total revenue used to go to Tamil Nadu only. But after GST, on 70 units which are intrastate, 70 rupees, let's say on every unit 1 rupee revenue they are getting. 70 rupees will go to Tamil Nadu. But with respect to the 30 units which were sold to other states, interstate, IGST will be levied. IGST 50% will be taken by central government, whereas the other 50 will be given to state government which is having destination state. I mean, this 30 rupees revenue will not go to Tamil Nadu. This will go to some other state. So previously they used to get 100 rupees as revenue, but now they are getting how much? 30 rupees only as, 70 rupees only as revenue, because the other 30 goods are sold to other states. That revenue will go to the destination state, not to the origin state. So because of this, there is a problem for the states, especially Gujarat, Tamil Nadu, West Bengal, Maharashtra. There are 5-6 states which produce more than that they consume. They produce more than that they consume. So since they produce more, previously they used to get more revenue, but now it is consumption based tax. So they'll get revenue equivalent to their consumption only. So because of that, certain states lose revenue. So that's why the state saying like, we don't want GST. Because of GST, we lose revenues. Then central government came forward and said like, whatever the revenue loss you suffer, such revenue loss will be compensated by central government. Okay, they made a promise that they'll compensate to the state governments. But for that, central government has no revenue. Whatever the funds they have, already they were distributed for different purposes. But now to fulfill this promise, they don't have money. So again, we are only the scapegoats now. On us again, there is a different tax called as compensation cess. CGST, SGST on intrastate, IGST on interstate. Now again a new tax is levied called as what? Compensation cess, irrespective of intrastate or interstate. Compensation cess will be levied by central government, and that money which they generate through compensation cess will be used to compensate the revenue loss to the state government. It will be in force for a period of first 9 years. Initially it was said as 5 years, then again it extended for another 4 years. So compensation cess will be in force for first 9 years. So compensation cess is leviable on intrastate and interstate supplies with a view to provide compensation to the state for the loss of revenue arising on account of implementation of GST. It is levied on specified luxury products as well as demerit goods. It is levied for the first 9 years. Sir, compensation cess is not levied on every good. It is levied only on luxury goods and certain demerit. Demerit goods which are not necessary for the common man to fulfill his daily needs. Pan masala, tobacco, cars, these are not the basic needs. So that's why on them compensation cess will be levied. Next, what are called petroleum products now? High speed diesel oil, petroleum crude, high speed diesel oil, crude petroleum, motor spirit, aviation turbine fuel, natural gas, alcoholic liquor for human alcohol is altogether different, sir. Petroleum products are these. At many places it will come. H na high speed diesel oil, P for petroleum crude, M for motor spirit, A for aviation turbine fuel, and N for natural gas. The code to remember is HP man. And then there is alcoholic liquor for human consumption also. So HP man plus alcoholic liquor for human consumption. All these together, these goods are not currently under the coverage of GST. These are even called as non-taxable supplies. Non-taxable supplies. Because currently either central and state government has no power to levy tax on these products. So that's why they are called as non-taxable supplies. Petroleum products and alcoholic liquor for human consumption. So this we discussed, sir, taxes subsumed by GST. Then before going into the last topic, let us discuss again about ITC. Sir, there is a registered person. If this registered person, whenever he have inward supplies, on those inward supplies, the tax he suffered will be given as what? ITC. And the ITC he'll be using it to discharge tax on his outward supplies. Right here. But the point is, he'll not have one particular tax here. Sir, let's say if the inward is made from within the state, then he might have ITC as CGST and SGST. If it is an interstate, then he'll have ITC of IGST. If there is compensation cess also levied, then he'll have credit of compensation cess also. So the ITC which he'll have is not one particular ITC, he'll have 4 different types of ITC: CGST, SGST, IGST and compensation cess. And even on outwards also, the tax which would be levied is also of 4 types: IGST, CGST, SGST and even cess. So we need to understand now what are the rules for setting off the credit with the tax payable. Is it one to one, one to many? How the credit can be adjusted with the tax payables? Fine. Yogesh kada? Huh? Okay. Yogesh. Yogesh recently married, sir. Okay. This side is wife. This side is mother. Wife, his mother. Yogesh has some 1 lakh rupees with him. Account balance. Wife has some 50,000. Even Yogesh mother also has some 50,000. So all the three together went for shopping. Newly married, so he took both of them for shopping. So now Yogesh liked one shirt or pant, so he did shopping for some 10,000. First he paid his bill. Still how much he is having, sir? Balance of 90,000. His wife shopped for around 70,000. His mother also did shopping for 70,000. Yogesh is having only how much? 90,000. So now he is having ethical dilemma. Ethical dilemma, deciding between right and right is called as ethical dilemma. So now with this 90,000, if we pay to mother's bill, then wife will get angry. Okay, if we pay the 90,000 to her wife, then mother will get hurt. So he is in a drastic position, like to whom the money has to be spent. First thing, sir, you could say like, sir, they have their own money. First of all, they could use their money. Something like wife can use her 50,000, mother can use her 50,000. The balance, Yogesh, if we pay, it would be enough. Then why this fellow has to go for shopping? They both can go now. He's there for to pay the bill only. So first if he went so what Yogesh has to do? First he has to pay their bills. But the problem is like the money which he is having is not enough to pay both their bills. So the point is like, if Yogesh is like a smart guy, what he can do? There are multiple possibilities, sir. Yogesh can give, I am having only 90,000 rupees. I'll give you both of you half of the other amount you can pay yourself. Or else he can convince his mother, like she newly married, she'll get hurt something he can say, and he'll pay 90,000 out of 90,000. 70,000 she could pay, he could pay to wife. Balance 20,000 can be given to mother. That is other option. Or else he can convince his wife and pay it to the mother. All those options are available with him. That is their family problem. But the point is, one thing which we need to remember is like Yogesh only have to first pay his money. Yogesh will use the money for first Yogesh. Whatever the balance is there, that should be used either for his mother or his wife. Only Yogesh money got completely exhausted, then they use their own money. If Yogesh is having 90,000, then they don't use their money. If Yogesh already distributed this 45,000 to both of them, then Yogesh has nothing here. So then they start using their money. So two rules I am saying, sir, here. First rule is like Yogesh money should be used for Yogesh only first. Then the second thing is like Yogesh can use his money for his wife or his mother in any way, in any ratio, in any proportion he want. But the third point is like his wife or his mother will not use their own money unless until Yogesh money is completely used. He should use his total balance which is available with him, then only they start using their money. Okay, two rules done. Third rule, sir. One day Yogesh is not available. He went for audit outstation. Then Yogesh mother and wife only available, so they both went for shopping. I don't know whether it is there in Tamil serials or not. In Telugu serials, it will happen always. For no reason, they both will fight. Okay, so in every serial, okay, either in some serials she will be the villain, in some serials he'll be the villain. Okay, this fellow will go. Sometimes in some episodes he'll be mother side, in some episodes he'll be on the daughter-in-law side. Okay, so now they both went for shopping, mother and wife. So now what they have to do, since they both will have fights generally, that's why only this is M, this is W, opposite. Okay, so let's say Yogesh wife liked for 60,000 rupees worth goods, but she has only 50,000. So mother, she has 50,000, but she selected only for 40,000. So that means she has surplus of 10,000, na? But she will not give it to daughter-in-law. Why? We don't know. Because of serials. Because of serials only. So they don't. They are having that something like they are having such kind of disputes from ages. So which will not get sorted out. So leave that point. Next, coming to third point, sir. Yogesh has 50,000 only with him, but he need to, he did shopping for somewhere around 1 lakh rupees. So whatever the 50,000 he has, he used it. Then he need to pay another how much? 50,000. Now Yogesh mother is having 50,000. Yogesh wife is also having another 50,000. So now both of them want Yogesh. Okay, obviously they love Yogesh, that's why. But Yogesh mother is not ready to give to Yogesh wife. Same way Yogesh wife is also not ready to give to Yogesh mother. But both of them are ready to give to Yogesh. Now the conflict is like from whom he should take first. Where Yogesh is having surplus money, he should treat both of them as equal, or else in any way he want. But if Yogesh is in a situation where he want to take money from his mother or wife, then from whom first he should take? Now first he should take from his mother, then he should take from his wife. Okay, if the money taken from his mother is not enough, then he should take it from his wife. So now we'll link it to the GST, sir. Yogesh is nothing but IGST, wife na SGST, mother is CGST. So let's say I'm having IGST credit of 1 lakh, CGST credit of SGST credit of 50,000 and SGST credit of 50,000. These are the credit balances which I am having. Now let's say I wanted to pay IGST liability of 10,000. What I can do? Since I am having IGST credit of 1 lakh, first I can use it for IGST payable. So how much I am having balance? 90,000. This balance 90,000 can be used for payment of CGST or even SGST. There is no ratios and proportions or priorities. It can be used in any way they want. Let's say CGST the liability is 70,000, whereas SGST the liability is only 30,000. So now tell me, sir, out of this 90,000, first to whom you utilize? Sir, there is no standard rule, sir, but when solving problems, how will adjust credits now? Whichever, out of CGST and SGST, which having lower credits will get a major share in IGST. Sir, if you see, Here CGST credit is 50,000, but the liability is only 30,000. That means CGST liability is enough for CGST credit is enough for CGST liability. But whereas SGST liability is not sufficient to discharge SGST liability. So what we'll do now, generally we'll give major share to the SGST. So what I'll do now, sir, even if you do half of also in this example, it will not change anything. But in general, when we are solving problems, we'll give major share to the CGST or SGST, which has high tax payables. So coming to the point here, 90,000. So what I'll do now, I'll adjust total 70,000 here. The answer will not change, sir. So I'll adjust the total 70,000 of IGST here, and the balance 20,000 I'll adjust here. Now how much is the tax payable, sir, here? Only 10,000 only, na? That I'll adjust with CGST, it would be 10,000. Sir, I'll take examples, don't worry. First we are understanding the basic concept only. Then after adjusting 70,000, here the tax payable is 0. Here there is 10,000 tax payable. That 10,000 will adjust with CGST liability. So the point which I want to say is like first thing, IGST credit has to be first used to discharge IGST liability. IGST credit has to be first used to discharge IGST liability. After that, if any surplus is there, that surplus can be used to discharge CGST liability or SGST liability in any ratio, in any proportion, in any order. There is no particular order in that. Next, first point is done. Coming to second point, unless until IGST credit is completely used, I mean if this 90,000 or 1 lakh is completely used, till that point of time we cannot start using CGST credit or SGST credit. Unless until IGST and IGST credit is completely used, we cannot start using CGST credit and SGST credit. Second point. Then third one, CGST credit can never be adjusted with SGST. SGST credit can never be adjusted with CGST liability. Third rule. Fourth one, where IGST credit is not sufficient to discharge IGST liability. I mean IGST payable is 1 lakh, whereas IGST credit is only 30,000. How much we need to pay extra? 70,000. So where IGST credit is not enough to discharge IGST liability, then we can take CGST credit or SGST credit. But the priority, first we should adjust what? CGST credit, then only SGST credit. Okay, let me write it as like rules. First one, IGST liability, CGST liability, SGST liability. IGST credit, it should be first used with what, sir? IGST liability, then with CGST liability or SGST liability. So priority C, IGST credit with IGST liability, then with CGST credit or SGST liability. So next one, unless until IGST credit completely utilized, unless until IGST credit completely used, cannot start using CGST credit and SGST credit. Then coming to CGST credit, CGST credit has to be first used with CGST liability, then with IGST liability, but never with SGST. Then third, SGST credit, SGST credit has to be first used with SGST liability, then with IGST liability, but never with CGST liability. Okay, so if you look at here, for IGST we can use IGST credit, CGST credit and even SGST credit, but first we should use IGST credit. If that is not enough, then we can use CGST credit. Afterwards we can use SGST credit. Okay, so you understood now. Sir, whenever there is this kind of problem, how the problem will be framed na? Like they'll give example of a registered person, and this registered person will have some inward supplies and will have some outward supplies. We need to calculate his ITC from inward supplies, and we need to calculate liability from his outward supplies. Then we need to adjust the ITC with the tax liability, and finally we need to find out the tax payable in cash. So after adjusting ITC, whatever is the balance liability, that balance liability has to be discharged through cash ledger. Okay, so this kind of sums will be solving in 3 steps. Step 1, we'll take a particular person's related inward supplies and we'll find out the total ITC available. Step 2, we'll find out the total outward liability on him. On outward supplies, whatever is the liability applicable on him, that we'll be calculating. Step 3, we'll adjust the ITC with the tax payable. Okay, for this we are having certain examples, sir. Let me show them. Okay, sir, we solve this question. Let's read this. Aquila Electronics has the following. Aquila Electronics has the following inward and outwards for the month of August. Compute her GST liability. We are having inwards and we are having outwards. First one, see, B2B, business to business, sir. Here in GST sense, B2B na registered to registered, where a registered person sells goods to registered person, then we call it as B2B. Intrastate 6% and 6%. That is how much? 5 lakhs. And there is a purchase from unregistered person. You need to understand, when we purchase goods from unregistered person, he will not levy tax. Since he cannot levy tax, we will also not get any ITC. Then there is a plant and machinery which we purchased for 18%. Plant and machinery is capital good. Sir, in GST, if it is your inward supply, you can avail ITC. That inward may be capital good or a normal good. You don't bother about that. If it is your inward, if it is coming into your business, you can avail it as ITC. So on plant and machinery also you can avail ITC. Next, lawyer service. You availed a lawyer service. On service also, whatever is the tax paid, if it is your inward, you can avail ITC. Then he is having outward. Some B2B sales within the state, intrastate, interstate, and is having some B2C sales file. I mean, to registered persons he is selling, to unregistered persons also he is selling. Sir, understand here. When I am having purchase from unregistered person, I cannot avail ITC. But I need to pay tax even if I sell to a unregistered person as well. Okay. And is having balance of ITC as well. IGST credit, CGST credit, and SGST credit. We need to solve this solution. Solve this question. For that, we'll have 3 steps. Before this, you need to understand RCM related point also. Because in this question, there is RCM also. Supplier supplied goods services worth 1 lakh rupees to the recipient. On this, let's say 18% tax, 18,000. If it is RCM transaction, recipient will pay only 1 lakh rupees to the supplier. Tax amount recipient will not pay to the supplier. Recipient will only pay directly 18,000 rupees to the government. In FCM, forward charge mechanism transaction, recipient will pay total 1,18,000 to the supplier. The obligation to pay tax is with the supplier. Whereas in RCM transaction, the obligation to pay tax to the government is with what? Recipient only. So here obligation is with recipient, whereas even burden, sir, who is having burden? Burden is also with the recipient. Both obligation and burden is with the recipient. Sir, when we are starting the class initially, I took the same kind of example, but their obligation is with the supplier, burden is with the recipient. So my question is, in this case, can recipient avail ITC? Who is paying tax here? Recipient only. Can he avail ITC? He can avail ITC. So don't bother about FCM or RCM. You just think of whether it is inward or not. Whether recipient is getting goods and services or not. Yes, he is getting. It is an inward to him. We need not to bother about who is paying the taxes. It is an inward to him, so he can avail ITC. So how much, sir? 18,000 he can avail as ITC. So what happens now? If there is an RCM transaction in the question, while calculating ITC, will include that. While paying tax also will include that, because on if there is an RCM kind of transaction, he need to pay tax and he can even avail ITC. So while calculating ITC also will include that. While paying tax also we shall include that. First point. Second point, sir. The liability which we are paying under RCM, na, this 18,000 always has to be paid in cash only. The RCM liability shall always be discharged in cash only. RCM liabilities can never be paid using ITC. Always they shall be paid using cash ledger balance only. You cannot use credit. Why? Because, sir, the point of giving ITC is to what? Eliminate double taxation. Whatever the tax we paid in prior stage will be given for set off in the next stage. But if you are paying tax on RCM, na, this itself is the prior stage. Sir, in general, when you are paying tax, na, the tax is on our outward supplies. But when it comes to RCM, the tax we are paying is not on our outward supply, it is on our inward supply. So this itself is the prior stage. This is the first stage. So we cannot use ITC. The tax paid on prior stage can be availed for set off in the subsequent stages, which we call it as ITC. But if you are paying taxes under RCM, that is the tax on prior stage only. So for paying taxes under RCM, so remember as a thumb rule also, no problem. RCM taxes shall always be paid through cash only. You can never adjust ITC for payment of RCM liabilities, only for FCM liabilities. For that reason, while calculating liabilities, we should differentiate FCM liability, RCM liability. So now we'll look at the answers are here. Sir, question he has, there are inwards, there are outwards, and there is opening balance of ITC as well. I mean the previous months which was carried forwarded to the current month. So look at the problem how they are solved. Computation of ITC available. First, particulars IGST, CGST, SGST. Opening balance of ITC. How much given? 75, 40, 40. That they have taken. 75,000, 40,000, 40,000. Then B2B intrastate. This is the purchase. B2B intrastate. Intrastate na which tax, sir? CGST and SGST. So 6% CGST and 6% SGST. So like they levied 30,000 and 30,000. Next, purchase of plant and machinery. Even capital good also we can avail ITC. But from unregistered person we cannot avail. That's why it was not included here. Purchase of plant and machinery. 12 lakhs into 18% interest rate. So that's why. Which tax, sir? IGST. So 2,16,000. Next, lawyer service. Lawyer service now how much? 5 lakhs. Sir, for your information, it was given as RCM. Even RCM transaction also, it is our inward only. So we can avail what? ITC. So 5 lakhs into 18%, how much? 19,000. So first we took opening balance. Then out of all the inwards, we whichever are eligible to get ITC, those transactions we took and we included the amounts in the respective columns. So the total ITC available is 3,81,000, 70,000 and 70,000. This is step 1. So step 1 is nothing but computation of total ITC available. We'll take opening credit if any. Then on the inwards given, we'll calculate the ITC. Then we'll go to step 2. Step 2 is nothing but on outwards, we'll find out the tax liability. Sir, but remember in this question we have on outwards we are having liability and there is even an RCM liability as well. Because on lawyer service the tax has to be paid under RCM. One part only we did, like we availed ITC, but tax computation we not yet did. So tax computation if you see, RCM liability, lawyer service, 90,000. How 90,000? 5 lakhs into 18%, we got 90,000. Sir, RCM liability has to be shown separately. We cannot total FCM and RCM liabilities together because RCM liability shall always be discharged in cash. Whereas for FCM we can adjust ITC. For that reason they have to be shown separately. So RCM liability B2B, B2B, B2C. We have 3. On B2B intra, 10 lakhs into 6% plus 6%. 60,000 CGST, 60,000 SGST. And B2B, 12 lakhs into 12% interstate. IGST, 1,44,000. Then B2C intra, 6 lakhs into 6% and 6%. 36,000 and 36,000. So RCM they kept separately and FCM 1,44,000, 96,000 and even 96,000. Now the third step is take FCM liability 1,44,000, 96, 96. For that we need to adjust the ITC. So see here. FCM liability 1,44,96,96. IGST. The whole IGST itself is enough, sir. Because unless until IGST is completely used, we cannot start using CGST grade or SGST grade. So IGST we are having 3,81,000. The total liability itself is not 3,81,000. So IGST grade itself is enough to discharge all the liabilities. Clear? Purinjida? Okay. Okay, I'll show you one more question for you, sir. You need to solve this. Okay. So first line, nothing is there. Shivani Motors registered under GST as the following inwards and outward computer GST payable. Okay. So don't do calculator practice. Take your notes. Try this. All the three steps, sir. Step 1, compute the total ITC available. Step 2, compute the total liability. Step 3, adjust the input tax credit with the liability and find out the tax payable in cash. So first you will be taking opening balances. Check. Okay, 75,000, 30,000, 30,000. IGST, CGST, SGST. Then we have a purchase of plant and machinery, which is interstate, 12 lakhs. So interstate now 12 lakhs into 18% IGST. How much it would be? 16,000 IGST. Then we have a lawyer service, which is RCM. Even RCM also we can avail ITC. So for the time being, we are calculating ITC 3 lakhs into 18%, which is 54,000. Then there is a purchase from unregistered person, on which we cannot avail ITC. Then there is an intrastate purchase. Intrastate na CGST and SGST 15 lakhs into 9% and 9%, 1 lakh 35, 1 lakh 35. So the total ITC available is 3,45,000, 3,45,000. Opening, plant and machinery, lawyer service 3,45,000. Then we are having CGST 1,65,000, SGST 1,65,000. So come to step 2. Solve the step 2 also. So step 2, on outwards, sir, we are having 3 outwards and 1 RCM liability, on which we need to calculate liability. RCM liability na 3 lakhs into 18%, 54,000 IGST. That we will be writing first. RCM liability 54,000, we showed it separately because it has to be paid through what? Cash. Now coming to FCM liabilities. Okay, RCM liability we shown separately 54,000. Now coming to FCM liabilities, how many liabilities we have? How many outwards we have? 3. First one, B2B intrastate 15 lakhs, 9% and 9%, 9% CGST and 9% SGST. How much, sir? 1,35,000, 1,35,000. Then we are having an interstate as well. Interstate how much? 10 lakhs into 18%, 1,80,000. Then we are having 15 lakhs outward, which is intra, 6% and 6%, 90,000 and 90,000. So overall the liabilities are, excluding RCM, 1,80,000, 2,25,000 and 2,25,000. Now we took this FCM liability 1,80,000. Step 3, sir. Computation of tax payable in cash. Step 1 is computation of ITC available. Step 2, computation of tax liability. Step 3, computation of tax payable in cash. 1,80,000, 2,25,000, 2,25,000. From that, first we adjusted IGST credit. How much IGST credit we are having? 3,45,000. 3,45,000, 1,80,000 we adjusted here, and the balance we adjusted half of to CGST and SGST, because in this question the CGST credits and CGST liability, SGST credit and SGST liability are equal only, same only. So we'll adjust half of. Okay, sir, ultimately there is no rule how we can adjust IGST credit with CGST and SGST. We can do it in any ratio, any proportion, but our ultimate aim is like to make the least cash outflow. Our ultimate objective is like to get an answer in which way there will be least cash outflow. Sir, in this option, let's say the total balance you can adjust with CGST. Instead of doing it half of, you could adjust the total amount with the CGST. But if you do it in such a way, you will be ending up with paying tax some amount for even SGST. The cash outflow will be higher than compared to this option. So there are multiple options here, but the option which you select should ultimately result least cash outflow. So for that reason only we did half of here. Then CGST credit adjusted with CGST balance. SGST credit also balance adjusted with SGST. Even after tax payables also we are having 22,500 CGST credit, 22,500 SGST credit. But this we cannot adjust with RCM liability. So RCM liability separately we need to pay in cash. Whereas the balance that can be carried forward to next month is IGST 0, CGST 22,500 and SGST also 22,500. Okay, so this is only nothing but the total apportionment of ITC rules. At last, sir, to close first chapter, we are having benefits of GST. What they are saying now, GST is a win-win situation for the entire country. So in the entire country, everybody wins because of GST. So they are saying like there are, even for government also there are benefits from GST, even for the taxpayers also there are benefits from GST. It brings benefits to all the stakeholders. First one, boost to Make in India initiative. I mean the Make in India initiative will get much more strengthened because of GST. How? Because of GST, the double taxation and cascading issues were tackled in much more better way than compared to the previous taxes. Since they were tackled in a much more better way, the cost of goods will come down. Once the cost of goods will come down, then the price will also get reduced. So our goods will also have a fair chance in the international market to get more orders. So our goods prices will also be competitive, attractive in the international market. So we'll be getting more export orders from other countries. So GST will give major boost to Make in India initiative by making goods and services produced in India more competitive, nothing but cheaper. If we produce goods at a competitive price, we'll get more orders. So then we'll produce more, which is nothing but boosting the Make in India initiative. Next one, increase government revenue. How could GST increase government revenue? Na? The scope is much more widened compared to the previous taxes, excise duty, VAT. In GST, the scope is much more broadened. I mean, many other taxpayers are also coming into the system. One thing. Second one, even the system is designed in a such a way by using IT that the instances of tax avoidances got reduced. I mean, there will not be any revenue leakages. Since the revenue leakages will get will be encountered, so they'll not have any tax leakages. So they'll have better revenues. GST will increase the government revenue by widening tax base and improving tax compliances. Third one, elimination of double taxation. Sir, in GST there are no multiple taxes. Previously there used to be excise duty, VAT, service tax. So multiple taxes na, multiple levies. Because of multiple levies there used to be double taxation. But now in GST all those taxes are subsumed and they made it as single tax, single system actually. So since they made it as a single system, double taxation can be avoided. GST has subdued most of the indirect taxes, which made doing businesses easier. Will also tackle the highly disputed area of double taxation as both goods and services. Next, creation of unified national market. What does it mean? Across India, we follow now common systems and common rules. One thing. Next, previously, when you buy goods from other state, you will not get ITC. But now there is no such kind of problem. From wherever you want, you can buy goods, you will get ITC. So there are no regional barriers now. You can buy goods from Assam also, you can buy goods from Arunachal Pradesh also, you'll get ITC. Previously that was not there. So now the regional barriers has been removed and we have integrated the whole economy at national level. You could buy from any person, you could sell to any person without bothering of whether you will get credit or not. That is one thing. And second one, across India there are uniform structure of due dates, tax rates and provisions, which has made whole India as a single market with common tax rates and procedures all over the country, remove economic barriers and creates a way for integrating the economy at national level. And even cascading also has been mitigated. Set off of prior stage taxes. Since ITC is given here, the prior stage taxes will be eligible for set off. So there is no tax on tax. So these are the benefits of GST. Okay, with this we completed first chapter, sir. This para technically not required. It will not be there in first chapter. But when we go to second chapter, we'll start with supply. The section number of supply is section 7 of CGST Act. So generally we'll have a question like what happened to the first 6 sections. So the first 6 sections are these only. First section, section 1, it talks about applicability of CGST Act. CGST Act came into force on 1st July 2017, applicable to whole of India including Jammu and Kashmir. That's what section 1. Section 2 consists of definitions. So there will be so many definitions, sir. Definitions we'll discuss whenever they are required. Next, section 3. Section 3 talks about officers under this act. 3, 4, 5, 6. Sir, these 4 sections actually not related to learn conceptually anything. Just it's about the officers and how they function, back end related only. So who are the officers? The hierarchy of officers, sir. There will be principal chief commissioner, PCC, beneath him chief commissioner, principal commissioner, commissioner, additional commissioner, joint commissioner, deputy commissioner, assistant commissioner, at last any other officers. So this is the hierarchy of officers which will be there in the CBIC. Then who will appoint these officers? Generally board na CBIC will appoint these officers, or CBIC can even authorize any other officer to appoint them. Okay. Next, what are their powers? Their powers na section 5 will say like, sir, powers of these officers are like those powers which were mentioned separately under sections of this act. They don't mention any specific powers under section 5. Section 5 simply says like, under the provisions of this act at different places, what are the powers mentioned? Those are only the powers of these officers. They didn't talk anything separately. Next, section 6, authorization of officers. Authorizations na, so the same kind of officers will be there even in SGST also. These are central officers. There are same kind of officers even under the state level commercial taxes department also. Now, for a particular person, since CGST and SGST applicable, does both the officers have to come and inspect our books or has to audit our books? Na? Not required. If CGST officer performs any activity, he has authorization of CGST officer as well. That means even though he is an SGST officer, he can verify SGST related accounts as well as CGST related as well also. So that authorization has been given by section 6. Okay. The same way, if CGST officer is verifying anything, he will not only look after CGST, he will even look after SGST. That authorization is getting from where? Section 6. So 3, 4, 5, 6 are not relevant for exams. Just to know, 3 is about the hierarchy of officers or the officers who will be there in the GST. 4 is about who will appoint those officers. 5 is about their powers. And 6, 1, authorization. I mean, the functions of CGST officer can be exercised by SGST officer. Even the powers of SGST officer can be exercised by CGST officer. That is the authorization. So with this we completed first chapter. Okay. So now I'm going into supply, sir. In supply, first we need to understand about good. What is called good? Good means every kind of movable property. If it is movable, then it can be called as what? Good. If it is movable, then it can be called as good. Then are we movable or not? You, me, movable or not? Movable only. To be called as goods? No. Then the second part is property. Just because it is movable, we cannot call it as good. It should be movable plus it should be a property. So property na in general lifeless, which doesn't have life, but it can be moved from one place to another. Then they are called as goods. Example, computer, chairs, fans, AC, all these are movable. Then they are called as goods. And it has two parts, sir. It has inclusions as well as exclusions. Exclusions and inclusions. It specifically excludes money. So money is movable. Sir, money means it's a piece of paper which is having tangibility. So it can be called as what? I mean, it is part of goods only, but it has been specifically excluded from the definition of goods. So money is not a good. Second one, sir, securities. Money and securities are excluded. What are called securities? Shares, bonds, debentures, even options, futures, so all the derivatives in simple. Okay, shares, bonds, debentures, derivatives, all these are called as what? Securities. So good excludes money and securities. Sir, if I buy and sell Reliance share, will there be any GST? No, it's a share. If I buy and sell Nifty 50 options or futures, there will not be any GST because it is not a good itself. First to call, sir, understand the flow. First it should be either good and service, then it should be supply, then we'll talk about whether GST will be levied or not. First of all, it doesn't even meet the definition of good, securities and all, so there is no GST at all. So every kind of movable property, it excludes money and securities, whereas it includes growing crops, grass and things attached to land. Growing crops, grass and things attached to land, but which are agreed to be separated before supply. Agreed to be separated before supply. So that means, sir, I purchased a mango farm only for crop related. Sir, when mango crop will come? Summer only, na? So now I went to a mango farm which was there in 20 acres. I purchased that farm for the next year crop alone. Okay, I'm not buying the land, I'm just buying the crop. So now I am paying the landlord or the farm, I mean the owner of the farm, 10 lakh rupees, and I'm buying the mango crop. When the crop will come, the crop will come in the summer. But once I want to take the ownership or the possession of those goods will be separated from the plants. No, so that's why growing crops, grass or things, even though they are attached to land, they are called as goods, but by the time of supply they could be separated from land. Did you watch the Pushpa movie? Pushpa. So okay, so I went to Pushpa Raj and I ordered some 5 tons of red sandal. 5 tons of red sandal. So okay, I ordered 5 tons of red sandal. So red sandal na, like those big red sandal trees are there na. So he sold me some 5 or 6 trees to me. So if I want to take them, at that point of time those will be separated from land. So when they are agreed to be separated before supply, by the time of supply they will be separated from land, so they'll become movable. Generally tree movable, na, tree cannot walk and dance, no. So tree is fixed at one place only, but we could separate it from the land before making supply or before making sale. So it can be called as what? Good. Either grass or crop or anything which is attached to the land, if it is agreed to be separated before making supply without disturbing the usage of that particular item. Sir, when you are buying red sandal, you are buying it for you are buying it to use as furniture or for any other wooden to for this, what we call this, windows, doors, for that only we'll be buying them, na? So for that purposes it can be used even after separating. But when it comes to a building also attached to land, if it is separated, we cannot use that building. Generally it will get disturbed and we cannot use it in the way which has to be used. So in such cases it cannot be called as good. Good means every kind of movable property, excludes money, securities, includes growing crops, grass and things attached to the land which were agreed to be separated before making the supply. So okay, just because you can separate, you cannot call it as gold. You need to separate, and even after separation also that thing shall not be disturbed. Only if such thing is happening, then you can call it as good. The next definition is service, sir. Service means much more simple thing, sir. Anything other than, service has no boundary, sir. Service means anything other than good, money, security. If it is not good, if it is not money, if it is not security, then it is always called as what? Service. Sir, this building, is it good? Why it is not good? Not mobile, it's not good. Is it money? Is it security? Then immobile properties are covered by the definition of service here. Okay, even though we cannot digest it, how can immobile property be called as service? But as per the definition, anything If it is not good, if it is not money, if it is not security, then it is called as what? Service. So all the immovable properties are covered by the definition of service. Next, conversion of money in one form to another. Let's say I have dollars, I want rupees. Dollar is also money, rupee is also money. But for conversion of money in one currency to another currency, one form to another, one form now, I'm having 500 rupees notes. I want rupees, 10 rupees notes. So I'm converting the 500 rupee note money into 10 rupees notes. This is also called as currency. Or even I'm converting from cash to demand draft kind of. So when we go to bank and ask for a DD, the bank will ask for some commission. Okay, so conversion of money in one currency to another, one denomination to another, one form to another. For this conversion, if any separate consideration is charged, for conversion of dollar to rupee, there will be some margin for the bank. Sir, SFM, you might have learned this. Converting money from foreign currency, Indian currency to foreign currency, bank will charge some commission to the extent of some such commission. And for conversion of money in one denomination to another or one form to another, bank DD charges, check issue charges, those kind of charges which we levy for converting one form to another is also called as service. Sir, here we are not calling money as service. We are calling the process of conversion as service. Okay, dollar is not good, rupee is also not good or service, but the process of converting dollar into rupees for taking a separate consideration is called as service. Second one. Third one, security is not a service, but how can we buy and sell shares? Can we buy on our own shares and can we sell on our own shares? We cannot do that, sir. Sir, I can do that by opening a demat account. Now you are not knowing the whole process actually. Whenever you open a demat account, even though you are buying on your own, but the order will be placed by you on behalf, order will be placed by the stockbroker on behalf of you. So the buying and selling of shares, securities, options, futures is actually carried out by the stockbroker on behalf of us. So the stockbroker is buying and selling on behalf of us. So he is facilitating or arranging the transaction in securities. For that, he will be getting some commission, 0.1, 0.001 percentage. Such amount is also called as service. So service definition 3 points, sir. Service means anything other than good, money and securities. Even conversion of money into if any separate consideration is charged for conversion of money in one form to another, it is also called as service. Third one, arranging or facilitating a transaction in securities is also called as service. So HDFC Bank gave 50 lakh rupees loan to Suresh. Now Suresh, after 2 years, he paid 50 lakhs plus 10 lakhs interest. Okay, sir, in this particular example, HDFC gave 50 lakh rupees money to Suresh and is giving money only back to HDFC. But the interest whichever is there not to the extent of interest 10 lakh rupees, it is called as what? Service, financial service. Whether it is taxable or not, secondary. But for now, it will fit into the definition of service. So interest charged, commission charged, all these will come under the definition of service. Service means anything other than good, money and securities, but includes use of money or conversion by any other mode from one form, currency or denomination to another form for which a separate consideration is charged. It even includes facilitating or arranging transaction in securities. Then come to the definition of works contract, sir. Just read it once and tell me whatever you understand. Works contract. Sir, he'll be telling so much like construction, fabrication, other that and all not required. Understand? Works contract means a contract related to immovable property, not mobile, only related to immovable property. And such contract involves both supply of good and service. Let's say I agreed to construct a building for 1 crore. So if I agreed to construct a building for 1 crore, in that 1 crore only, I need to provide cement, iron, bricks, tiles, paint, everything, goods. And even I only have to supply the labor as well. So I am providing both good as well as service. So works contract means it's a contract related to immovable property and involves supply of both good and service. Either it should be construction or reconstruction, repair work, fabrication, so anything, whatever the name they call. Construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, commission of any immobile property. So, sir, they'll not ask it as a definition. For us, we should understand some meaning related to works contract. It's a contract related to immobile property, involves both good and service. Then, distinct persons. Sir, even though we said till now GST is a single tax, but the registration is not single registration across the India. In every state, wherever you are having businesses or business, you need to register separately under GST. Let's say I'm having business in AP as well as Tamil Nadu. Then I should have two registrations. One is in AP and the other one is Tamil Nadu. Now, since I'm having two registrations, both these registrations has to be treated as two different persons, even though both are linked with my PAN only. Sir, if you see, I have only one PAN. This is also my branch. Tamil Nadu is also my branch only. But for the sake of GST, we need to treat both these registrations as two different persons. That concept is only called as distinct persons. Now the second point is, even though we are having branches within the state, within Tamil Nadu only, you are having multiple branches. Okay, one is in Chennai, one is in another place, Vellore, something. So you are having different branches within the same state. Then it is optional for you to go for multiple registrations. But you went for multiple registration. Within Chennai only you have 3 registrations. Then even though within the state also, if you are having a separate registration, then both these registrations has to be treated as two different persons. That concept is only called as distinct person. When a person linked with a PAN is having multiple registrations which are linked with the same PAN, then each of such registration has to be treated as a different person from that of other. That concept is only called as distinct person. A person required to obtain more than one registration in a state, or a person who has obtained registration in more than one state, then each of such registration to be treated as what? Distinct persons. Next, who is called a taxable person? A taxable person is a person who is registered or liable to register. You are already registered, taxable person only. You not yet registered, but you are the necessity to register. Necessity to register, your turnover exceeded 40 lakhs. Your turnover exceeded 40 lakhs, but still you didn't apply for registration. Even though you didn't apply for registration, since your turnover exceeded threshold, you are called as taxable person. Then consideration, sir. Consideration. Consideration means any amount paid or agreed to be made. Consideration means any payment made or agreed to be made is called consideration. Sir, don't tell the basic contract act definition. What is called consideration means something in written. That and all childhood days. Now you are grown up now. So you need to say consideration means any payment made or agreed to be paid. It should be in money or even in otherwise. It could be in money or even in otherwise. I mean, what they want to say here is consideration can be in monetary form or even in non-monetary form. Let's say CSK for Dhoni, for the services of Dhoni, CSK is paying 10 crores in money, and they are even giving a villa in Chennai. So what they are doing, they are paying consideration in money as well as non-monetary form. So even the amount which they paid in non-monetary can also be called as what? Consideration only, whether in money or otherwise, in relation to supply of goods, services, or both. Dhoni providing service only to CSK, and the amount may be paid by recipient or by any other person. 4 points, sir. Consideration can be paid or agreed to be paid. I mean cash sale covered, credit sale also covered. Paid or agreed to be paid. Next one, it could be in money or otherwise. I mean in barter system or even in a regular transaction. In regular transaction, we'll get money as consideration. In barter exchange transactions, other than money form, we'll get. In such case also, it is called as what? Consideration only. Third one, it could be related to supply of goods, services, or both. Let's say for buying and selling of shares also, we'll get money. Let's say I sold Reliance share for 3000 rupees. What I'll get is money only. But that cannot be called as consideration here, because to call it as consideration, the one we trading should be related to either good or service. Next, the consideration may be paid by recipient or even by any other person. Let's say, sir, I am selling laptops. Okay, the state government said like, for every laptop sold to school child who are studying in government schools, state government said like, we'll pay 50%, student will pay 50%. The laptop is 50,000, so 25,000 is paid by student, 25,000 is paid by government. So we need not to worry who is paying the consideration. If it is paid by recipient or by any other person, it will be treated as what? Consideration only. But the next point says like, however, it shall not include any subsidy given by a central government or a state government. In the previous example, since the other 25,000 is paid by state government, no, so we shall not include it in the definition of consideration. So out of 50,000 which I got, 25,000 is paid by state government, which is called as subsidy. So the consideration to be treated as only 25,000. Let me write it here, sir. Lenovo company selling laptops. So these laptops, for this laptop, actual cost is 50,000. Out of this, student pays 25,000. This is case 1. Whereas the state government is paying another 25,000. Whereas in another case, student pays 25,000, whereas an NGO pays another 25,000. Okay. When state government is paying certain part of the amount on behalf of the actual user, then this is called as what? Subsidy. Subsidy given by central and state government shall only exclude. If they are given by other persons, we are not required to exclude that. So here, actually the seller is getting 50,000, 25 from student, 25 from government. But the point here says like, consideration shall exclude the subsidies given by central and state government. Consideration shall exclude. So see here, shall not include any subsidy given by central and state government. So we should exclude that. So that's why this is not included. Only this 25,000 will be treated as consideration. Whereas in this case, student paid 25,000, whereas the other 25,000 is paid by whom? NGO. It was not central government or state government. So we need not to exclude that. In this case, the consideration is 50,000. Whereas in this case, the consideration is only 25,000. Okay. Then related persons, sir. The definition of related persons. Related persons, na, if they are members of same family. Family definition will be in the first page. I mean, before page, sir. You can come back here. Spouse, children of the person, parents, grandparents, brothers and sisters. Family, na, spouse and children. Next, parents, brothers and sister, grandparents. But who will be treated as parents now? Parents, grandparents, and brothers and sisters will be treated as family only when they are wholly or mainly dependent. Sir, here family we need to divide. Micro family. Family means all of these things. Within that micro family, na, spouse and children. Only spouse and children are part of family, irrespective of whether they are dependent or not. Whereas when it comes to parents, grandparents, brothers and sisters, they are part of family only when they are dependent. Let's say my brother already works as some engineer. Okay. Then as per GST, he is not part of my family. If my brother is dependent on me, let's say he's studying some 6th standard or 7th standard, he's dependent on me, then he is part of my family. Otherwise, he's not part of my family. Even parents also, if they are working on their own, if they are dependent, then they are not part of my family. So related person are members of same family. If they are officers and directors of one another business, there are two companies, sir, A Limited, B Limited. In A Limited, B is director. In B Limited, A is director. So both are acting as directors or officers of each other's business. So then A and B are business. A Limited and B Limited are also called as what? Related persons, because the same people acting as officers and directors of each persons. They are legally recognized partners. Legally recognized partners. Sir, understand the meaning of legally recognized. In a partnership firm, the partners are related persons only when the firm has a deed executed. If no deed is executed, then they are not legally partners. So only when the deed is executed, then they are called as legally recognized partners. Then such persons are employer and employee. Next, a third person having more than 25% voting power. Greater than 25% voting power is held by any person, then both of them are called as related persons. If it can control, then obviously they are related persons. Sir, you might have a question like, sir, for exercising control, definitely it should be more than 50%. Na? If in previous point only they said greater than 25%, they are related persons. Then obviously control will come more than 50% only. Na? Sir, in some cases, even with 19%, 18% shareholding also, a person can control the other entities. I mean, control the whole organization. Then they are called as what? Related persons. Let's say, for example, let me tell you. Sir, in A Limited, A has only 15% stake, whereas the other B, C, D, E, F, G, like that there are total 50 members. Each one will have 2%, 3%, like that only. All these 50 members are friends and family of A only. Okay. Now, even though A shareholding is with less than 25%, but all the others are listening to whatever A will say. Okay, these are nothing but these people does not involve into the day-to-day business of A Limited also. They just invested some 10 lakhs, 15 lakhs on the name of A. They'll have 2%, 3% like that shareholding only. So, even though in this case A has less than 25%, he could control the company. So, A and A Limited will be called as what? Related persons only. So, it need not to be more than 50% always to control an entity. In certain cases, even less than 10%, 5%, less than 20% also they can exercise control. If they are exercising control, then they are called as what? Related persons. Next, if a third person can directly controls other, let's say A Limited controls both B and C. A controls both B and C. Then B and C are also called as related persons. Sir, nothing but here they are saying holding subsidiary, holding associate, sub-subsidiaries, joint ventures, all the group of companies which will come under the business combinations. In CFR, there is a chapter called business combinations. There, holding subsidiary, holding associates, then joint ventures, those relationships will come. All of them are treated as what? Related persons only. Next, one of them is acting as a sole agent or distributor of others. So, if I manufacture a product and all of my goods are distributed by one particular person only, then me and such person are called as related persons only. So, these are the definitions, are important definitions from supply. You can take lunch break. Post lunch break, we'll continue with the supply. So to continue with the topic, okay. So to continue with supply under section 7. So section 7 has three subsections: section 7 subsection 1, 7 subsection 1a, and 7 subsection 2. In 7 subsection 1, we decides when can a transaction be called as supply under different situations, under which situations or scenarios we can call a transaction as supply is discussed under 7 subsection 1. So it explains us when we can ultimately call it as a supply, when a transaction can be ultimately called as supply. Then under 7 subsection 1a, once it is decided under 7.1 as supply, then under 1a we'll find out whether it is supply of good or service. We'll find out whether it is a supply of good or supply of service. Then ultimately, after when it comes to 7 subsection 2, even though it is categorized as supply as per 7 subsection 1, it was categorized as good or service as under 7 subsection 1 clause A. But 7 subsection 2 gives a negative list. If something is mentioned in this negative list, then it is not a supply, even it satisfies 7 subsection 1 criteria or 7 subsection 1a criteria. Okay, so in 7 subsection 1, we'll decide about various scenarios when we can call a transaction as supply. Finally, we decide it as supply. Afterwards, 7 subsection 1 class A further categorize it as whether it is supply of good or supply of service. Even after such categorization also, if something is covered by 7 subsection 2 negative list, then it need not to be treated as neither supply of good nor supply of service. So first our discussion is with respect to 7 subsection 1. So 7 subsection 1 consists of 3 categories. I mean, again, under this also there are 4 subsections under 7 subsection 1. 7 subsection 1 clause A, clause A, clause B and clause C. 7 subsection 1 clause A, clause AA, clause B and clause C. Sir, the general one, 7 subsection 1 says like supply includes. Sir, whenever any provision, if they are explaining it by way of includes instead of means, if they are using the word includes, then then the lawmaker is like, sir, if the definition is like means, then they want to close the definition by giving a boundary, like they want to circle it. If they cannot circle it, if they cannot explain it clearly, then they use the word includes. Includes na generally they'll give examples kind of only. So supply means exactly what we cannot say. Supply includes, when we are saying, we are giving examples of what is called as supply. Supply includes sale, transfer, barter, sale, transfer, barter, exchange, license, lease, rental, disposal. Sale, transfer, barter, exchange, license, lease, rental, disposal. Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal. Sale na normal transaction only, sir. Buying, we pay money and we'll be giving goods. Transfer also the same thing only. Then why two words na? In certain state level VAT acts previously, in some acts they use the word sale, in some acts they use the word transfer. Other than that, there is no much difference between sale and transfer. Next, barter. Barter na, there is an exchange of goods and services which will become exact consideration for them. Sir, in barter system, let's say if I give rice, he'll be giving me, if I give paddy, he'll be giving me wheat, or he will be giving me sugar. So whatever the amount of sugar or the rice I give will become exact consideration for them. No money is involved at all. Then that is called as barter. Whereas in an exchange transaction, let's say we'll exchange our old mobiles for a new mobile. What happens generally? We'll give away our old mobile. Then we'll be getting the new mobile. Along with the old mobile, we'll be paying some amount of money. So in exchange, along with good, money also involved. Whereas in barter, no money involved. The good or service which we give will become exact consideration for the good and service which we get. No money is involved. Then license. License na 2G license, 3G license, the telecom operating spectrum license, mining license, toll license. So those kind of license is nothing but a permission given to do a kind of activity or to kind of service. Then lease. The difference between lease and rental na, Sir, we'll use these words interchangeably. Generally, we call like property taken on rent or property taken on lease. Both the words we'll use. But as per definition, lease is long term, rent is comparatively short term. Then disposal. Sir, here disposal, the word is used under 7 subsection 1 clause A as well as under 7 subsection 1 clause C also. There is a word called disposal. So here the word meaning disposal is when you are closing a shop or when you are selling your assets, not the stock. Let's say, sir, a garment store generally sell the garments. But what if it is selling the racks where it keep the garments also? So they call it as disposal. So generally, if you look at our P&L, when we sell stock, we'll recognize it as sales. But when we sell some furniture kind of things, then we'll not take it to P&L. We'll adjust it with the asset only. But as per GST, selling furniture is also sale only. My business is not selling furniture, my business is selling garments only. But if I sell furniture, that is also a sale which amounts to supply only. So that's why they included it in the word disposal. General stock, if you are selling, it is sale. If you are selling your fixed assets or any other furniture kind of assets which were not usually which is not usually your stock, then that is called as what? Disposal. So say supply includes sale, transfer, barter, exchange, license, lease, rental, disposal. This activity should be carried out by a taxable person. Okay, who is called taxable person? A person who is registered under GST or who has the liability to register under GST is called as taxable person. So supply includes these activities carried out by a taxable person, and it should be in relation to goods, services, or both. I mean, the sale transfer should be carrying out with respect to good or service or both. Okay, and it should be for a consideration, and in the course or furtherance of business. Let's say in my house there is a old air conditioner which was not working properly. Now sir, I'm a chartered accountant, cost accountant, and I'm having a registration, GST registration. So that means I'm a taxable person only. I'm selling AC, which is sale, and AC is a good. And by selling that old AC, I got 2000 rupees, which is consideration only. But what missing here is, it is not in the course or furtherance of business, because I'm selling AC which was used at my residence, not my office AC. If the AC is used in my office, then it will be called as in the course or furtherance of business. So on that we can levy GST, or we can call it as supply. But if our personal assets are being sold which were not related to business, then we cannot call it as supply. So supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried out by a taxable person for a consideration related to goods, services, or both in the course or furtherance of business. In the course or furtherance of business. So if all the 5 conditions are satisfied, it is called as supply. So whatever the transaction you see, it will fit into this definition. BCCA taking classes to you for consideration. So okay, sale of service. Next, taxable person, BCCA registered taxable person. It is a service, taking classes. Consideration, you paid some amount, consideration, and the business of BCCA itself is taking classes. So it fit into the definition of supply. Any example you can give? I mean, 90% they'll fit, 90 not 90, 99% of the usual transactions which we see will fit into this definition. Let's say you booked a flight ticket to go to somewhere. They are selling ticket, sale. Taxable person, airline registered taxable person. Goods and service, transportation is a service. For a consideration, we are paying amount, and it is in the course or furtherance of business. Airline business itself is to transport you from one place to another. So it is a supply. So supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried out by a taxable person relation to goods, services, or both for a consideration in the course or furtherance of business. Okay, then I'll come afterwards, sir, to 7 subsection 1 clause A. Now we'll discuss about 7 subsection 1 clause B. What does it say? Means import of service. Import of service for a consideration. Import of service for a consideration is called as what? Supply. Irrespective of whether it is in the course or furtherance of business. Irrespective of business. in the course or furtherance or not, if it is an import of service, it can be called as what? Supply. So what is called import of service? To call it as import of service, the supplier, location of supplier, the supplier should be outside India, whereas the recipient should be in India, and the place of supply of such service shall also be in India. Place of supply is nothing but destination, sir. So the place of supply of service should be in India, recipient should be in India, supplier alone shall be outside India. So then it is called as what? Import of service. So import of service for a consideration is amounts to supply irrespective of in the course or furtherance of business. Yogesh found, okay, is learning Korean language. Is a fan of BTS. No. Okay, you like a Korean girl, she loves BTS. Fine. Okay. So, but to talk with that Korean girl, he is having some communication problems. So that's why he is learning Korean. Okay. So he appointed a Korean tutor. So, okay, this Korean tutor will teach Korean to Yogesh. Okay. So he is learning Korean language. For that, Yogesh is paying some 5,000. Okay, I'm not mentioning the currency. Okay, let's say dollars. Dollar na heavy no. Okay, we'll make budget friendly. $500. This also heavy, but he can do at least for girl he can do. Okay, so he spent $500 for learning Korean language. So tutor outside India, supplier outside India, recipient Yogesh in India, place of supply is also in India. So it is an import of service. For a consideration, yes, there is $500, but it is not for the business of Yogesh. It's not for the business of Yogesh. Sir, understand? Sir, do we need to check whether it is in the course or furtherance of business from supplier perspective or recipient perspective? Nante? In general, we'll check from supplier perspective only. But here, supplier is Korean tutor. His business itself is taking classes with respect to Korean. But the point is, here, whenever there is import of service, RCM applicable. If it is RCM, then we'll look from recipient perspective. If it is FCM, then we'll look from supplier perspective. Since it is RCM, we need to look it from Yogesh perspective. So he is taking Korean classes which were not related to his business. His business is something else. He is not taking these Korean classes for his business purpose. But there is consideration involved. Since consideration is involved, import of a service for consideration is supply, irrespective of whether it is in the course or furtherance of business. So it amounts to what? Supply only. But there comes an exemption here, sir. Let me show you the exemption as well. So see this page number 2.5. You'll find the exemption here. Supplier of service 2.5. You'll find the exemption, sir. Supplier of service 2.5 on the top itself you'll find. Okay. Supplier of service na Korean tutor. Located in non-taxable territory. Taxable territory na the territory to which GST is applicable. India. Korea is obviously non-taxable territory. From there is an import of service. Yes, there is import of service taking those classes. Recipient, if it is central government, state government, union territory, local authority or government agency, or if recipient is a charitable entity. Third one, or if the recipient is individual and the service obtained is other than for business purpose, then that is exempted. So now come back to the Yogesh example. He took Korean classes. He is not government. He is not charitable entity, but he is what? He is an individual. And the service he obtained is other than for business purpose. So it is exempted only. So first thing, sir, it is supply. But after becoming supply, then it became exempted. So understand, the first stage is like identifying good and service. Second stage is to identify whether it is supply or not. After identifying it as supply, then we'll decide whether it is taxable or exempted. So in first case, Yogesh taking those classes from Korean tutor is a supply because there is consideration. But after becoming supply, will it be taxable? No, it is not taxable because it is exempted. Okay. Sir, here this exemption says like, however, this exemption is not applicable to OIDR service. So you'll find OIDR definition in place of supply chapter or even in import and exports chapter. So, but I'll explain now itself what is called OIDR. OIDR full form na online information data access and retrieval services. Online information database access and retrieval services. Retrieval service. These are called as what? OIDR services. So what does it mean? The delivery of such service is mediated through IT. Delivery of such service is mediated through IT. IT na information technology. Second one, it is highly automated. Such services are highly automated. The third point, sir, it is impossible to provide without IT. Okay, the such kind of service itself is not there or no existence at all if there is no impossible without IT. Okay, example Netflix. So Netflix, the services provided by Netflix. What Netflix usually provides us, will pay subscription, then it will provide content for us. The content is nothing but online. Yes, we are connected only to online. We could access the information or retrieve. We could download the information. Sir, here information, a movie can also be called as what? Information only, data form. So such service is provided through IT only. When we are having a mobile, with that we are connecting it with a electronic network, then we can take that service, and it is highly automated. How it is automated na? So when I want to watch a movie in Netflix, there is nobody in Netflix office sitting there and putting that kind, I mean, and inserting the CD which I want, CD or cassette which I want. Okay, it is highly automated. The software will only take care of whatever the movie I click, that will get played. So highly automated. Third one, it is impossible without IT. If there is no internet, we didn't even think of the service kind like OTT platforms and all, social media platforms, OTT platforms, YouTube, the gaming apps, PUBG, Free Fire, those kind of games. All these are called as what? Online information data access retrieval services. Looking at the business, sir, the cloud computing services, SAP, Oracle, any other cloud computing services, video editing softwares, online photo editing softwares, all these are called as what? OIDR services only. So the exemption which we discussed is not applicable to OIDR services. So listen once again. Import of service for a consideration is supply, irrespective of whether it is in the course or furtherance of business or not. However, we need to check once again the exemptions. When we check the exemption, there is an exemption like where it is an import of service from a supplier in non-taxable territory and the importer is government, charitable entity or an individual other than for business purpose, then that service is exempted. However, such exemption is not applicable to OIDR service. What is called OIDR service na? The delivery of such service is mediated through IT, and the service providing, I mean the service delivery is highly automated, and it is impossible to think of such service without IT. So can we think of Free Fire, PUBG, these kind of games without IT? Or can we think of social media without internet and technology? So, and we can't even think of this cloud computing, I mean Google Photos, Google Drive. Okay, only with data we can store or we can back up our data there. So all these services are possible only with the help of IT. So those kind of services are called as OIDR. So exemption is not applicable to OIDR. Next, 7 subsection 1 clause C. So what 7 subsection 1 clause C says na, transactions which are treated as supply even though there is no consideration. There is no consideration, but still they can be called as what? Supply. So where these transactions are mentioned na, these transactions are listed out in schedule 1. These transactions are listed out in annexure to the CGST Act, which is nothing but schedule 1. So schedule 1 consists of transactions. Schedule 1 consists of transactions which are treated as supply even though without consideration. These supplies are also called as deemed supplies. Deemed supplies na supplies, but which are treated as supply even though there is no consideration. So there are 4 points here, sir. First one, principal, there is an agent, there is a customer. Principal, there is an agent, there is a customer. Principal sent goods to agent and no consideration has been paid by agent to principal. No consideration paid by agent to principal. Principal just sent his goods to agent. Then whenever a customer comes, agent will deliver those goods or will send goods to that customer. Now the point is, whether the activity which was happened between principal and agent amounts to supply or not is the question. The goods moved from principal to agent. For the goods which was sent by principal to agent, initially there is no consideration. The consideration may come once the agent further subsequently sells them to the customer. But at the time when the goods was sent to principal, sent to customer by sent to agent by the principal, there is no consideration. Can we call it as supply even though there is no consideration? Nah. So for that, they given a clarification, sir. The clarification says like, to decide whether the activity between principal and agent is supply or not, we need to further check how invoice has been raised. How invoice has been raised. Let's say in this case, sir, principal directly raised invoice in the name of customer. Principal directly raised invoice in the name of customer. Let us take it as case 1. Principal sent goods to agent. Whenever a customer comes, agent displays those goods and he handed over the goods to customer, whatever the good he select. But when the invoice has to be raised, invoice will be raised only by the principal only. So this is something like, my head office, okay, me being the principal who is located in Chennai, will send some goods to my agent who is located in a remote place in Tamil Nadu only. Now a customer will go to the agent and he'll ask for goods. So the agent will show the goods to customer. But whenever he needs to raise a bill, agent will not raise any bill on his name. He'll calls me and he'll ask me to raise a bill. So I'll raise a bill and give it to the customer. So in such scenarios, agent is not exercising any power to him. He's just acting as a storekeeper. When someone comes, he displays the goods. When invoice has to be raised, he'll call back to the principal. Principal will only raise the invoice on the name of customer. If this is the case, then we shall ignore simply the relationship or the activity between principal and agent. There is no supply between principal and agent. However, if it happens like, principal sent goods to agent, agent again displays those goods to customer, and if customer wants to buy, he'll send the goods to customer. But what happening? Principal raises invoice in the name of agent. Agent subsequently raises invoice in the name of customer. If there are two invoices involved, that means instead of directly invoice being raised by principal to customer, if agent is raising invoice in the name of customer, then agent and customer, it is supply only. Between principal and agent, there is no consideration. But still, even though there is no consideration, invoice raised na, so it has to be also treated as what? Supply only. So between principal and agent, whether it has to be treated as supply or not, we can decide only with the help of what? Invoice. If invoice is directly raised in the name of customer, then the supply is only between principal and customer. So we can ignore between principal and agent and customer also. Where there are two invoices involved. That means from principal to agent and agent to customer. Between principal and agent it is supply, agent and customer also it is supply. Sir, agent and customer there is consideration, so no problem with it. But between principal and agent, even though there is no consideration, if there is consideration, supply. No consideration also, still it has to be treated as what? Supply only. That's what the first point of schedule 1 says. Like any activity in relation to goods, sorry, in relation to transfer of goods between principal and agent amounts to supply. However, the deciding factor is invoice. If invoice is raised in the name of agent, then between principal and agent it will be treated as supply. Otherwise, ignore. First point, sir. Second one, interstate transfer of goods and services between distinct persons and related person. Interstate transfer of goods and services between distinct persons and related persons. So let's say I have two branches. One is in Chennai, Tamil Nadu. The other one is in Tirupati, which is in AP. I have two car showrooms. Okay, in both the places, what I'm having is a car showroom. So now a customer came to Tirupati branch and he asked for a car. Okay, but that model or that particular variant is not available in that Tirupati showroom. So what I'll do, I asked the Chennai branch people whether that variant is available or not. They said like that variant is available. Okay, now will I ask the team to transfer the vehicle to Tirupati branch or else I leave the customer? Customer ne వదిలేస్తామా? So do we leave the customer or else we'll ask to transfer the good from one branch to another? Majorly we'll ask our branch people only to transfer the goods from one branch to another instead of losing the customer. So from Chennai branch the car has been transferred to Tirupati. So now if you see, there is an interstate transfer of good or service between distinct persons or related persons. So when a person is having multiple branches and each of them are registered but they are linked with the same PAN, then they are called as what? Distinct persons or related persons. In this case that only happened. This branch also owned by me, this branch also owned by me. Both these branches are linked with my PAN only. So these two are distinct persons. But from Chennai branch to Tirupati branch there is a stock transfer. And this stock transfer does not have any consideration. Why no consideration? Both are my branches only. So I simply said like, because customer came now, so I simply said like transfer two cars from this branch to that branch. So this interstate movement of goods from one branch to another still amounts to supply even though there is no consideration. So now the question is why? Why it has to be treated as supply when it was shifted from one branch to another branch? Sir, understand, when the car was initially purchased, they thought the destination is what? Chennai. So the tax revenue went to Tamil Nadu government. But now ultimately this car was transferred to which branch? Tirupati branch. That means the destination is AP. The tax revenue has to go to which state? Andhra Pradesh. But if you don't recognize this movement as supply, the revenue will get stuck with Tamil Nadu only. It will not get transferred to Andhra Pradesh. So that's why what they will do, even though there is no consideration, they'll recognize it as supply. So if it is recognized as supply, then there will be again tax. Whatever initially paid will be recognized as ITC, that will be adjusted here. Now, since destination is Tirupati, that all the tax revenues will be distributed or will be transferred by GSTN from Tamil Nadu government to Andhra Pradesh government. So to make the destination based tax principle work, this kind of conditions has to be kept. So that's why they inserted this point, where there is interstate movement of goods services between related persons or distinct persons, even though there is no consideration, still it amounts to supply. If there is no this kind of rule, then the credit or the taxes will get blocked with Tamil Nadu only. Destination based principle will not work. That's why they did this. Okay, second one. Third one, Sir, here there is an exclusion, sir. There is a proviso for this second point. The proviso is what? Proviso means, okay, the proviso explanation is like, sir, employer and employee are related persons only. As per the definition of related persons, employer and employee are related persons. So now, an employer given gift to employee. An employer given gift to employee. Sir, employer generally pays salary for the services provided by employee. Employer generally pay salary. Whether salary is supply or not, na, if you come back further, if you come back little bit, sir, if you could see section 7 says like there are three parts: 7 subsection 1, 7 subsection 1a, and 7 subsection 2. What 7 subsection 2 says means, if any item which is covered by 7 subsection 2, it is not a supply. So employer employee relationship is one thing which is covered here. So salary is not covered under the definition of supply. So on salary we cannot levy GST. That salary no employer pays freely, na. Employee providing services, for that employer is paying salary, but that is not covered under the supply definition. Okay, but in addition to salary, employer is paying, is giving a gift, and this gift is not covered by contract of employment. When offer letter is given to you, in that offer letter they didn't mention anything about this gift, so this is not part of salary. In addition to salary, he is giving a gift to employee. Sir, let's say the common tradition in India nowadays is like, whenever Diwali comes, na, the employer is generally giving some gift or sweet packets to the employee. Will they mention that also in offer letter? Okay, on Diwali we'll give, okay, Kaju Burfi. Okay, like that. Will they mention in the offer letter itself? They'll not mention, na? So that is which, that is something which is given beyond the salary. So there is a gift which is given by employer to the employee. Sir, here what we are saying, if there is any interstate transfer of goods service between distinct persons or related person, it amounts to supply. So that means employer giving a sweet packet to employee will also amounts to supply by reading at that provision, because there is a state transfer of good service between related persons. To exclude this, actually this was something with an intention to escape from taxability only. So where an employer gives gift to employee, it is not a supply where the aggregate value of gift given in a financial year, aggregate value of gift given in a financial year is less than or equal to 50,000. That is not a supply. Okay, let's say for every festival employer gives 10,000 worth gift. There are only 4 festivals in a year. 10,000 into 4, what is the aggregate value given? 40,000 only, which is less than 50,000. It need not to be treated as supply. Whereas let's say, I'm changing the example, sir, now. Let's say the gift value is 15,000 and he given such kind of gifts for 4 festivals in a year. 15,000 into 4, how much it is becoming? 60,000, which is more than 50,000. So the total value has to be treated as supply, not the excess one. The total 60,000 has to be treated as supply. So to put it, where employer gives any gift to employee, where the aggregate value of gift received in a gift given in a financial year is within 50,000 for each employee, then it is not a supply. If it exceeds, then the whole value has to be treated as supply. Third one, sir. Permanent transfer or disposal of business assets. Permanent transfer or disposal of business assets on which ITC claimed. Permanent transfer or disposal of business assets on which ITC claimed. Let's say, okay, I'll take it. What is your name? I forgot. Oh, Nidarshana. Okay, Nidarshana started an electronic store. For her store, she purchased 10 TVs. 10 TVs she purchased. Nidarshana Electronics is a registered person For that reason, for our business, she purchased 10 TVs. On 10 TVs, whatever is the GST component, she availed as ITC as well. Sir, why ITC is given? ITC is given the first starting of the subject itself. I said ITC is given to eliminate double taxation and to eliminate cascading. They'll give ITC only when there is double taxation and cascading. So now, out of this 10 TVs, sir, okay, what is your name? Lavanya, right? Okay. On Lavanya marriage, out of this 10 TVs, 1 TV given as gift. 1 TV given as gift. Okay. Then Yogesh. Okay, Yogesh, no marriage and all. He's single only. Fine. Okay. Yogesh went and asked, okay, to give 1 TV as gift to me also. But Nidarshana said, for you, why TV and all? I'll not give you. I have to do business. So then next day, he theft 2 TVs. Theft. Then 1 TV she donated to a orphanage. So total 4 TVs are out of, okay. The other 6 TVs only she sold. Okay, not even 6 TVs also. 1 TV she transferred to her house for personal use. Only the other 5 TVs she sold. Okay, business went bankrupt also. That is second thing. Now coming back to our example, out of 10 TVs, 1 TV she gifted, 2 TVs theft, 1 TV donated. The other 1 TV she would taken for personal consumption. Sir, all these 5 now come under the permanent transfer only. Let's say for example, she gifted 1 TV to Lavanya. Okay, now they are good friends now, so she gifted. Afterwards, after 2 years, they had a fight. Then if Nidarshana says like, give back my TV, na, she cannot ask that. Na. So once given, it was gone. So permanent transfer. Yogesh, na, anyhow, he'll not tell. I only came with black mask and all, did that chori and all, so he'll not tell, no. So that's why this also permanent transfer only. Donation also permanent transfer. Personal consumption, I mean, she transferred to her home. That also permanent transfer. But already she availed ITC. Actually, if you go back, I mean, if you connect it with ITC chapter, what ITC chapter says, na, if any of these things are happening, you cannot take ITC itself in the beginning. But first you don't know. So that's why you availed ITC. After availing ITC, you gifted or you donated or there is a theft happened. Then what to do? Then what to do? No, they are saying like, consider it as supply even though there is no consideration. They are asking us to take it as supply even there is a theft, even there is a donation. So what happens? Whatever is the ITC you availed will get reversed now because you will adjust with the liability. So all this, I mean, this provision is inserted only with an intention to not give you ITC, because in these cases there is no double taxation. Sir, she gifted. If she gifted, there is no sale, there is no again taxation. If there is theft, there is no further point of taxation. But she already got the benefit of ITC. ITC will be given only when there is double taxation. Since there is double taxation point missing, na, they don't want to give ITC, but you already availed ITC, so they want you to reverse the ITC. So how they are asking you to reverse the ITC? Instead of directly reversing the ITC, assume these transactions also as supply. If you assume these as supply, you need to pay tax. If to pay tax, the ITC you availed will be used. So automatically the ITC will get reversed. So that's the point here. Permanent transfer or disposal of business assets on which ITC availed also amounts to supply. The last one, sir, import. There is an import of service. There is an import of service. No consideration. There is an import of service for no consideration. Still it amounts to supply where it is from a related person and in the course or furtherance of business. in the course or furtherance of business. So let's say, let me take an example here. Okay, tell me now whose example will take? Your only or else? Huh? Shankar example will take. Okay. Shankar is looking decent only. We'll take decent example. Shankar in India. Shankar wife is in Japan. He married here only. She went on employment purpose to Japan. It's not like he married Japanese. Okay, Shankar wife. Okay, so Shankar is into some. He's running some supermarket. See, he thought of like it would be better if he have a separate application for that, so that the customers can order with through the app and he can deliver them. So his wife is a software engineer. So wife developed a software or an application and given to Shankar. So there is an import of service because the supplier is outside India, recipient is in India, and the place of supply also is in India. So developed an application and given it to Shankar. Now we'll see. Shankar wife and Shankar related persons only. And the service is in the course or furtherance of business. Generally, if she provided such kind of application to an outsider, she'll get some 3 lakhs or 4 lakhs as consideration. But husband, nothing he paid. No consideration. Even though no consideration, if it is an import of service, if it is from a registered person and it in the courts or furtherance of business, it has to be treated as what? Supply only. So import of service without consideration also. If it is received from a related person and it is to be used in the course or furtherance of business, so this application he'll be using for his business only, na? Current business or for expansion of business only he is using. So it has to be treated as what? Service. Sir, we got import 2 times. So now we'll merge both of them and we'll discuss. Whenever there is an import of service, we'll decide, we'll check first whether there is consideration or not. If there is consideration, it is supply as per 7 subsection 1 clause B. If there is no consideration, then we'll further check whether it is from a related person. If it is from related person, again we'll check whether it is in the course or furtherance of business. If both the conditions are satisfied, then again it is a supply. Okay. Now come back to the next point. Okay. Back to Yogesh, Korean tutor. Yogesh. Okay. Korean tutor teaching Korean to Yogesh for free. No consideration at all. Okay, for free. Why Yogesh is learning this one now? He wants to start a Korean restaurant. Okay. So he want to get that feel of Korea, he want his servers and the staff also to talk in Korean only. So not only the Korean menu, even the people or the staff also have to talk in Korean. So that's why he's learning the Korean language. So now this service which he is availing is for the course or furtherance of business only, without consideration. But the tutor, Korean tutor and Yogesh are not related. So now see here. Is there an import of service? Yes, from Korean he is getting an import of service. Second one, with consideration or without consideration? Without consideration. Third one, in the course or furtherance of business? Yes, in the course or furtherance of business. But the point which is missing here is they are not related persons. So it is not a supply. If it is like this tutor is nothing but Yogesh wife, then it amounts to supply. If they are not related persons, then it is not a supply. Okay. With this, we completed schedule 1, sir. Schedule 1, there are 4 transactions, sir. First one, principal and agent. Second one, between distinct persons and related persons. Third one, sir, permanent transfer or disposal of business assets on which ITC is claimed. Fourth one, import of service without consideration can be called as supply. They should be related persons and it should be in the course or furtherance of business. So now the last one under 7 subsection 1, sir. 7 subsection 1 AA. 7 subsection 1 clause AA. So what does it mean? Na? So there is a apartments here, sir. This is a gated community. This is a gated community. In this there are total 2000 flats. For this 2000 flats they have an association as well. AOP. They are having an association. What this association will do, from the flat members, it will correct every month some maintenance fee or membership fee. With that maintenance or membership fee, the association will be providing them backup, power backup services, lift maintenance, water, electricity backup. So those kind of services will be provided by the AOP to the members. Okay. So now coming back to 7 subsection 1 clause A. AOP, sorry, in as per GST definitions and all, they said like AOP and its members are different, but there are certain case laws under different contexts where they decided like AOP and members are one and the same. Okay, there is something called principle of mutuality. Sir, why they'll form as a association? If they buy something individually, they need to pay more price. If they form as a group, then they have the collective bargaining power and they'll get the goods at a lesser price. For that reason, they may form as a group. So in such cases, there is a principle of mutuality concept. So the group and the members are treated as one and the same. Okay, the members cannot be separated from AOP. There are such kind of case laws which were given. Okay, this is the background before understanding this concept. So now there are members in this association, sir. Okay, during Diwali time, what these members thought now, when we buy crackers individually, we need to pay so much. So what these members thought now, for every flat owner will consider 2000 rupees as the money, will pool the money and will buy the crackers in bulk so that they'll get more crackers. So every member, okay, so now association went directly to Shivakasi. Okay, in Shivakasi there are cracker traders. From their association will got a load of crackers. So Shivakasi selling to AOP is a supply only. Okay, for that AOP paid 40 lakh rupees also, it is a supply. Now what AOP is doing now, AOP distributing all the crackers to each of their members. So they distributed to members, for that members paid each either their share of contribution or their share of expense. They given, each member has given 2000. So how this is the transaction it happened. Now the point is, between Shivakasi and AOP it is a supply, no doubt about it. The question which came is like whether AOP distributing these crackers to members and from each member collecting 2000 amounts to supply or not. This is the point. Sir, this was treated as supply from the beginning also, but in between one particular state high court has ruled this kind of situation in a different way, stating like AOP and members are one and the same. Members are formed as a group and purchased the goods for collective bargaining only. So members and AOP need not to be treated as two different persons. They need to be treated as one person only. Like that, the particular decision has been ruled, has been given, which says about the principle of mutuality. Firm and partners, AOP and members are treated as one and the same. But what GST said, na, the very next financial year, sir, they inserted 7 subsection 1 clause A and saying like principle of mutuality will not apply here. Even AOP distributing to members as a share and collecting their share of expense also amounts to supply only. So this part is also treated as what? Supply only. Okay. So to reverse the court decision, they made it clear by inserting a new clause in the supply definition. So now 7 subsection 1 clause A made it clear. Association, even though collecting their share of expense also, it amounts to what? Supply only. We need not to treat firm and partners, AOP and members as one and the same. They have to be treated as different persons only. So then 7 subsection 1 clause A. What this part? We already decided what is called supply, sir, completely. 7 subsection 1 clause A talks about 5 conditions. Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried out by a taxable person for a consideration. That is 7.1. Then 7 subsection 1 clause A. Then clause B is about import of service for a consideration. Clause C is about schedule 1. So we completed the discussion of supply, when we can treat a transaction as supply. Now we are into 7 subsection 1 clause A, which says like, if it is already a supply, how to identify it as supply of good or supply of service. So even though this table looks big, but understand in simple, whenever the possession ownership is transferred, it is supply of good. When you buy a mobile, will you get the ownership of mobile or only possession? Ownership. So it is what? Supply of goods. You know, Zoom cars, one app is there. Zoom cars. Okay, if you take a car from Zoom cars, will you get the ownership or only possession? Or else, like if you went to a library and took a book, ownership you will get, a possession you will get. Only possession you will get. If only possession is you got and ownership is not transferred, it amounts to supply of service. Okay, if you take a bike on rent, a car on rent, what you are getting is only possession. You are not getting ownership. It is called as what? Supply of service. When you get ownership, it has to be treated as supply of good. Now it comes, this is about tangibles. When we talk about intangibles, in intangibles, these softwares and all, okay, these softwares and all, even if you get ownership or not, generally it has to be treated as supply of service only. Whereas if this software is loaded into a pen drive, hard disk, something kind of a tangible nature. Previously, sir, these songs and all they used to sell by loading into a cassette. Okay, song is an intangible asset only, but once it was kept into a tape record, a tape, okay, it has some tangible item. It has to be treated as good. And even if you maybe in your childhood you might have seen CDs. Some movies will be loaded into the CD and the CD will be sold. Movie is intangible, but the moment it was kept into a CD, paper, hard disk or pen drive, it has the tangible nature. So it has to be treated as what? Good. But nowadays songs, movies, all these softwares we are directly downloading. So in this present situation, we can call every intangible as a supply of service only. Goods practically not relevant. But if in exam they ask something like, if they were kept in a media and sold, either hard disk, pen drive, CD, diskette, okay, this kind of tangible things, if they keep and sold, then it is called as good. Next one, rent is a supply of service, lease is a supply of service, development of software is a supply of service. Then there comes the composite supplies. Composite supply na, two or more goods and services are involved. Let's say works contract. Works contract. In works contract means what? Works contract is a contract related to immovable property and it involves both supply of good as well as supply of service. Now finally how it has to be treated? Either as good or service. This schedule 2 of 7 subsection 1A clears that works contract always has to be treated as supply of service. Supply of service. Then restaurants. Restaurant provide food as well as ambience. Restaurant provide food as well as ambience. Which is main? But technically speaking, sir, food will be available in our house also. All the groceries, everything will be there. Or else you can order through Zomato as well, Swiggy as well. Why you are going to restaurant then? Only for what? Ambience, to experience it in a different way only we are going to there. So how the 7 subsection 1A has categorized it as means, restaurants or these eating joints supplying food will also be treated as what? Supply of service only. Okay. Then comes the negative list, 7 subsection 2. Transactions which are treated as neither supply of good nor supply of service. If something is mentioned here, it is neither supply of good nor even supply of service. There is a list here, sir. First one, funeral, burial, crematorium services, including transportation of the deceased. So the government worried, like, if someone says like even GST will not leave after death, they're worried about such statement, and they simply said like, on funeral, burial, cremation, mortuary services, there will not be any GST because it is not even treated as supply of good or supply of service. First one. Next, sale of land and building. Sir, we need to understand it little detail. Sir, land always negative list only. If it is land, it is always in negative list. I mean, land need not to be treated as supply of good or even supply of service. But on land, there is a building also constructed. On land, there is a building also constructed. So now, see here, this building consists of 20 flats. The completion of this building is made on 10th October 2024. This building got completed. Before 10th October only, 18 flats related advance already given. Advance or full amount, either consideration either fully or partly. Instead of advance, consideration fully or partly has given with respect to these 18 flats. Before 10th October only they have given the consideration either fully or partly, whereas 2 flats remain unsold. For them, not even a single rupee also they received as consideration. Now what the provision is saying means, by the date of completion, if you receive either partly or wholly consideration, it has to be treated as supply only. So regarding these 18 flats, it is supply only and it is treated as supply of service. Whereas for the 2 flats for which no consideration is received by the time of completion, I mean the entire consideration is received after completion only. If these 2 flats are sold also, the consideration will be received after 10th October only. Before 10th October, nothing is received. So these are covered by negative list. So negative list covers the buildings for which the consideration is entirely received after completion. If the consideration is received either wholly or partly before completion, it is a supply only and treated as supply of service. This is second one. Third one, actionable claims. Actionable claims, na, these lottery tickets, negotiable instruments, these are lottery tickets. Sir, actionable claim, to explain what is called actionable claim. Actionable claim is nothing but a piece of paper, but with that paper, you have the right to demand to pay some amount. Let's say I'm having a promissory note. With the promissory note, whoever written the or whoever signed the promissory note, I can go to that person and I demand him to pay the money which was owed. The same thing with the check. If someone has given the check, with the check I can go to him and I can demand him to pay the money. Demand draft, bill of exchange, bills of exchange. All these negotiable instruments give the same kind of power. With the one who is holding that one, to the presenter, I mean the holder of the instrument can ask the one who prepared the bill to demand, I mean to pay the money and all. Now coming to the point here, sir, all the bills of exchange are need not to be, I mean, are, sir, lottery ticket is a bills of exchange. Sorry, lottery ticket is a actionable claim. Bills of exchange is a actionable claim. Check, DD, all these are treated as what? Actionable claims only. The problem is, actionable claims are part of good, but on check, DD, bills of exchange, we cannot levy GST. That's why under 7 subsection 2 they are saying like, lottery ticket sale you can levy GST, no problem, But bills of exchange, check, demand draft, all these are, even though they are covered by the definition of actionable claim, these are not treated as supply. That's why they are mentioned under 7 subsection 2. See here, actionable claims other than specified. Specified actionable claims are part of goods only, on them GST is leviable. Betting, casinos, horse racing, lottery, online money gaming, all these are part of lottery tickets only, or part of actionable claims only, but on them there will be GST. Next, MPs and MLAs will perform functions. For those functions, they will be getting some salary, but the salary they will get is not taxable because they were covered by the negative list. The functions performed by MPs and MLAs. Next, employee providing services to employer. I mean, salary is also covered by the negative list. The fifth point talks about salary, sir. Salary is also covered by what? Negative list. Next, sixth one, the services, judiciary services, services provided by Supreme Court, court, or any tribunal are also not a supply. So 7 points, sir. To remember these 7 points which we discussed, sorry, 6 points. Claims. F is about funeral, burial, not that claims. F for funeral, burial, crematorium services. L for land and building. Building when it is excluded, where the entire consideration is received after completion. Next, A for actionable claims other than specified. If they are specified actionable claims, not covered by 7 subsection 2. Next, MPs, MLAs performing their functions. Next, E for employer employee related services. Next, S for Supreme Court, High Court, or any other tribunal judiciary services are covered by yes. So next one, sir, supply of goods from a place in non-taxable territory to another place in the non-taxable territory without entering goods into India. So the point here is, sir, from US, a person in India buys goods from US and send directly those goods to Malaysia. So Malaysia is also a non-taxable territory, US is also a non-taxable territory. The goods was supplied by a person from US to Malaysia without these goods entering into taxable territory, then it is not a supply, because the goods nowhere entered into India or came into the taxable territory. This is one point. See here, supply of goods from place in non-taxable territory to another place in the non-taxable territory without such goods entering into India. Next, sir, little bit of customs I am explaining here. Once the goods are imported into India, the goods can be removed for home consumption. Home consumption are nothing but pay the applicable duties and clear the goods. On paying applicable duties, if you clear the goods, that is nothing but called as home consumption. Whereas you have another option also, you could postpone the payment of duty. Postpone payment till that point of time. You could keep your goods in a warehouse. So this process is called as warehousing. So where you kept the goods in warehouse and the goods were sold within the warehouse. Let's say I imported the goods, but I don't want them now itself, I want after 2 to 3 months. Then why I brought now itself? You might ask me, like, why I brought now itself? I can bring those goods after 2-3 months now to save shipping cost. Even though I need 1000 kgs only even though I need only 50 tons right now, I brought 150 tons now itself because to save shipping cost. That's why I paid 50 tons related customs duty and removed the goods for home consumption. Whereas the other 100 tons I need them after 3 months only. So that's why I kept them in the warehouse, and the payment of customs duty is postponed till 3 months. Now, in the meanwhile, I found a customer who is paying me at a price which is more than I bought. So I sold the goods which were kept in the warehouse. Now the question is it amounts to supply? unless until the goods cross the customs barriers, it will not be form part of the local goods. So since they were still within the customs control only now, when the goods were kept in the warehouse, that does not amounts to supply. Only after clearance of goods for home consumption, if they get sold subsequently, then it amounts to supply. Since by the time we are selling, the goods were still under the control of customs only, so it need not be treated as supply. So look at the point here, sir, where the supply of warehoused goods to any person before clearance for home consumption. So the goods were sold when they are in the warehouse. So what happens generally when we warehouse the goods, we need to execute a bond. Why bond? Na? On subsequent removal, you will be executing a declaration stating like I'll pay duty at the time of clearance. Okay, only on exercising the bond, that payment of duty will be postponed. So now you are selling the goods to some other person within the warehouse. So instead of your bond, the new bond, I mean, the buyer who has purchased the goods, he will execute the new bond, whereas your bond will be removed or your bond will be given back to you. So, in such cases, it is called as bond to bond transfer in the warehouse. In such case, also, it is not treated as a supply. And the third case, sir, if this is India, Indian territorial waters extends up to 12 nautical miles, whereas Indian exclusive economic zones, I mean, India has the right to do economic activities up to 200 nautical miles. Beyond exclusive economic zone, the sea is treated as beyond exclusive economic zone, the sea is treated as high seas. Beyond exclusive economic zone, whatever the sea is, this is called high seas. These are nothing but international waters. In this water, everybody will have equal rights. Okay, in the high seas, everybody will have equal rights. So to understand the point, sir, up to 12 nautical miles, it is called as territorial waters. Up to 200 nautical miles, it is exclusive economic zone. Beyond 200 nautical miles, the sea is called as what? High seas. So now I purchased the goods from Australia. So actually the goods are coming in the vessel on my name only. But within the high seas, when the goods are in the midway of transport or midway of, when the goods are yet to come, during the high seas I found a new buyer and the goods were sold by me to the other person. Sir, understand, when the goods were in the high seas, the sale transaction has been happened. Since the goods not yet entered India, it also not to be treated as supply. So I told to 3 points or no. From non-taxable territory to non-taxable territory, if there is any sale, not a supply. Second one, within the warehouse, if the goods are sold before payment of customs duty, within the warehouse only there is a sale of goods. It is also not a supply. Third one, sir, after supply also. Then the third one, sir, after, when the goods are being imported and those goods were sold before they enter into exclusive economic zones, I mean within the high seas, if any sale is happened, that also not to be treated as supply. So see here, sir, these 3 points. High seas sale, that means supply of goods by consignor by way of title, transfer of title. The goods have been dispatched from port of origin and located outside India, but before clearance for home consumption. This is supply of warehoused goods to any person, nothing but bond to bond transfer. And the first one is supply of goods from a non-taxable territory to another non-taxable territory. This is not supply. So with this we completed section 7. So 7 has total 3 points, sir. 7 subsection 1, 7 1a, 7 subsection 2. In 7 subsection 1, we identified different situations where we can call it as supply. In 7 subsection 1a, we decided whether it is supply of good or supply of service. Finally, 7 subsection 2 talks about negative list. I mean, even though it has all the necessities to call it as supply, if it is mentioned under 7 subsection 2, it is not a supply. Let's say, sir, funeral, burial, crematorium service. It is a service, sale of service. There is a consideration, okay, and the activity is carried out by a taxable person and his business itself is carrying out. Let's say a person who is running a mortuary one, or else if he is having a he do cremation services. So his business itself is such kind of service. He is a taxable person. He is providing a service for a consideration. In general, it is a supply. But since it is mentioned under 7 subsection 2, nothing but schedule 3, it need not to be treated as a supply. Okay. So now we are into section 8, sir. Composite and mixed supply, very important. See, means a supply made by a taxable person. Composite supply is a supply made by taxable person. It comprises of two or more taxable supply of goods and services or both, which are naturally bundled. It comprises of two or more taxable supplies of goods, services or both, which are naturally bundled and supplied in conjunction with each other in the course of furtherance of business. Out of them, one of is a principal supply. When two or more goods and services, let's say BCCA is selling classes along with class and books. Along with the content, it is selling even the books. So a service and a good book, both are supplying in conjointly. Okay, can we call it as composite supply or not? Now for that we need to understand whether they are naturally bundled or not. Okay, how to identify whether they are naturally bundled or not? They could be identified based on these points. First one is the perception of the consumer. Does a student expecting the classes separately or along with book? Okay, that decides whether it is a composite or mixed supply. Let's say when we buy a mobile, do we expect charger or not? We expect. So then mobile and charger are composite supply only, naturally bundled. When we buy an AC, do we expect installation or not? Yes, we expect installation. So then installation service and AC are composite and naturally bundled only. So first thing is like the perception, how customer is expecting them, whether he is expecting them as a bundle or he is expecting them as a separate service. That decides whether they are naturally bundled or not. First one. Second one, how the suppliers are doing such kind of transactions. Does majority of suppliers will do them as a bundle or not? It's not just because you did, we cannot call it as naturally bundled. How the majority of supplier deal with such kind of transactions. So nowadays, okay, in even now majority suppliers will will provide charger along with the mobiles. But whereas around some 30 to 40% of the mobile manufacturers now discontinued giving charges along with the mobile. Maybe after 3 years, giving charger along with mobile may not be dealt by majority of suppliers. In such case, it may not be naturally bundled. But for the current scenarios, it is still even now naturally bundled. Next, how nature of various services, whether they are connected with each other or not, that decides. Then how the pricing is given. Are there any separate prices for the individual goods available in the packet, or a consolidated price is given? That decides whether they are naturally bundled or not. How they are advertised, how they are available, can they function separately or not, how they are connected with each other. These are the common indicators to decide whether it is naturally bundled or not. Okay, so to identify whether it is a composite supply or not, there should be two or more taxable goods and services or both, and they are naturally bundled and supplied in conjunction with each other in the normal course of business. And out of that bundle, one can be identified as a principal supply. What is called principal supply? Out of the total bundle, whichever is having predominant nature is called as principal supply. When you buy mobile, you will get along with mobile a charger, back pouch and a SIM ejector. Out of them, which is the main thing? Mobile. So mobile is the principal supply. You purchased a TV, LED TV. For that, they are providing delivery as well as installation. TV cost 25,000, delivery cost 1,000, installation cost 2,000. So overall 28,000. Out of this, whichever is predominant, which is predominant? TV. Okay, so that thing we should observe. So to call it as composite supply, there should be two or more taxable goods and services or both, and there should be naturally bundled in conjunction with each other in the normal course of business, and out of them one should be a principal supply. Then it is called as composite supply. Then what is called mixed supply? Two or more individual supply of goods, services or combination of thereof, made in conjunction with each other by a taxable person for a single price where such supply does not constitute a composite supply. So to mixed supply definition also almost same, sir. There are two or more taxable goods and services, okay, supplied as a bundle or in combination of thereof, but if they are not a composite supply, then that is called as mixed supply. Okay, when can we call it as not a composite supply? When they are not naturally bundled. Sir, it would be, in majority cases, it would be little tricky only for us to identify what is composite supply and what is mixed supply. For that, one second. See, composite supply and mixed supply. Composite supply is a supply made by a taxable person. Okay, comprises of two or more supply of goods, services, or both that are naturally bundled and supplied in conjunction with each other. One of them is a principal supply. Mixed supply, two or more individual supply of goods, services, or any combination thereof made by a taxable person for a single price where such supply does not constitute a composite supply. Here they are supplied as a bundle, single price only given, but they doesn't constitute as a composite supply, then it is called as what? Mixed supply. Sir, the indicators of naturally bundled, we already discussed. Perception of customer, how majority suppliers are dealing, the nature of those elements, how the price is given, how they are advertised, the applicability or availability of items separately, all this will decide. Next, composite supply has to be treated as supply of predominant supply. So in composite supply, even though there are multiple goods and services available, the whole bundle has to be treated as supply of predominant supply only. So in a mobile box, there may be mobile charger, earphones, a cable, as well as SIM ejector, but it has to be treated as well like what? Supply of principal supply only, which is nothing but mobile only. When it comes to mixed supply, it has to be treated as supply that attracts highest tax rate. So the one common example for mixed supply is Diwali gift hamper. In Diwali gift hamper, there may be chocolates, dry fruits, and sweets which were kept in a single packet and will be sold. So those are not integrated with each other and not majority will do in such a way. So it has to be treated as like what? Mixed supply only. In mixed supply, out of the individual elements, whichever has higher tax rate, that tax rate is only applicable on the total bundle. Okay. So now, sorry, if you could see here the points which were it are the most common composite and mixed supplies which we can come across in the CMA material. First one, printing of books. Sir, in printing, paper maina, printing maina. In book printing, let's say you are having that IDT book na, in that paper is important, printing is important. Okay, you can decide only one. Printing only important because printing gives the value addition. Otherwise, it's a normal paper only. Sir, okay, my material now you will not have much thing. Let's say the printing is related to national flag or related to a god or goddess pictures and all. So then it's a simple paper only. When you print a god picture on it, then you will change its value. So what is different there? Not the paper, the printing is different. So printing gives a new kind of existence to it. So printing and paper, which is more important? Printing only. So it has to be treated as what? Composite supply only, but the predominant nature is printing. Next, meal with transport. When you, okay, let's say you are traveling through Vande Bharat and you booked a meal as well along with the train ticket. Which is important? Transport is only important, not the meal. So predominant nature is what? Transport. But the problem with Vande Bharat is, in Vande Bharat you have two options. One is you can select the meal or you can deselect the meal. Based on that, the price will change. Okay, but when you go in a Rajdhani Express, even in Rajdhani or Shatabdi kind of trains, there you don't have an option to deselect the meal. You have only option like to prefer to select veg or non-veg. You don't have the option to deselect the meal itself. If it is such a case, then the supplier will provide the service only in such a way that you have no other option to take food as well. Then it is composite supply. In Vande Bharat, we are having it as an option to take food or to take meal or not. Then it has to be treated as what? Mixed supply only, not as composite supply. Okay, meal with transport, generally train ticket na, they'll ask about Rajdhani train ticket only. It is composite supply. Then laptop and bag. Okay, when you buy laptop, going to a store, sir, when you buy online, then obviously they are not giving bags. When you went to a store and buy laptop, even now also they are providing laptop bags. When bag is given along with laptop, it is a common thing, common perception of customer to expect a bag when he is buying laptop, and majority are doing the things. So it is treated as what? Composite supply only. Mobile plus charger, composite only. Electronics purchase, delivery and installation to be treated as what? Composite supply only. Credit sale, when you are selling goods on credit, let's say the cash price of good is only 1 lakh, but when you offer credit, you are selling it for 1 lakh 20,000. So 1 lakh is the good value. The other 20,000 you are charging is for extending the credit. So you are providing two things are here. One is sale of good and the second one is extending credit. In such case, so see here, sir, when you make a credit sale, cash price 1 lakh, credit price means credit price 1 lakh 20,000. Then the extra 20,000 you are charging is nothing but for extending credit interest only. But even after that also, credit sale is a quite common transaction in any kind of business. So extending credit is the most common thing which most of the suppliers will do. So that's why it has to be treated as what? Composite supply. But out of this, credit maina, good maina. Sir, when you purchased a car in installment, sir, does the car's showroom guy is selling car, his main activity is earning interest or selling cars, sir? Selling cars. So the main activity is what? Predominant supply is nothing but good only. Next, sale of goods along with transportation, insurance and delivery. Sir, when we order goods in Amazon, we'll expect the good transportation, insurance, everything. So it also treated as what? Composite supply only. Movie ticket and popcorn. When you book a movie ticket, it's okay, sometimes you'll buy along with the popcorn. Is it a composite supply na? Sir, when it has to be treated as a composite supply na, sir, when they are having peak season, multiplex theaters, so when it's a big movie, high anticipated or highly expected movie is getting released, that time to make more profit, how these multiplex theaters will do means, they'll sell a ticket for 500 rupees, but government will not allow them to sell for 500 rupees. For that, what they will do means, ticket along with popcorn only they'll sell, like premiere shows and all. So you don't have the option to deselect popcorn. In such cases, it has to be treated as what? Composite supply. Next, construction contract, where there is good and service, treated as what? Composite supply. Predominant is service. Hotel stay and breakfast, you are staying in a hotel, there they are providing hotel stay along with breakfast, again it has to be treated as what? Composite supply. Then treatment to patient, in a hospital, along with treatment to the patient, food has been provided to the patient from the canteen owned by hospital. If it is as per the recommendations of doctor, again it also has to be treated as composite supply. The food provided will also be treated as part of treatment only. Next, finance lease. In finance lease, there will be lease amount. I mean, for using the asset, you will be paying lease amount and you will be paying even interest. But that also has to be treated as what? Composite supply. So since composite supply is important, I have listed out all the points from across the problems from the material. So other than this, we will not get any new point from composite supply. Only these things. Okay, come to mixed supply, sir. Diwali gift hamper, mixed supply only. Okay, there is a packet of okay, there is a package which they are selling, which includes a shirt, a wallet, watch and book. Okay, unrelated only. When we buy a shirt, it is not mandatory we'll buy a wallet also. Even if you buy wallet, it's not mandatory you'll buy a watch. Okay, and nowhere connected will not buy book also. So all these are not interrelated, so it is a mixed supply. Free bucket with a detergent. You're buying a detergent or a sunflower oil 5 liters can, then you're getting a bucket. Nowhere connected there, so it is also a mixed supply. And a fancy store selling a hair oil, hair comb, and a soap as a packet, that also to be treated as what? Mixed supply. Toothpaste and toothbrush they are selling as a combo package. Dabur Red toothpaste and Dabur Red brush they are selling as a combo pack. Is it a composite supply? No, it is also a mixed supply. Why? Because whenever you buy toothpaste, is it necessary to buy toothbrush as well? They are available separately. Majority will sell them separately, and majority will buy them also separately only. So it is also a what? Mixed supply. So the last one, sir, this was tested in last exam, last attempt. 7 marks question, this only. Majority rated as composite supply only, but it was completely opposite. Sir, if you look at the inverter, sir, in home offices will use inverter na. So for inverter there is a battery and there is a separate UPS machine. Okay, so now whether this battery and UPS has to be treated as composite supply or mixed supply na, there is a ruling, advanced ruling given which said like the battery and UPS has to be treated as mixed supply only. Why? Because sir, let's say in our mobile will there be battery or not? In our mobile will there be battery or not? But can we use this battery for any other purpose? We cannot separate it out. But in UPS, in UPS or inverter, the battery was kept with a little bit of, with connections only. We can remove it at any time we want. So it was not connected and it is not became integral part of inverter. It was just connected with the wires. Even though everybody will buy battery along with the UPS device to act as inverter, but the battery can be detached any point of time. So they were not treated as composite supply. It has to be treated as what? Mixed supply only. This was the case. Okay. So generally definition wise composite and mixed supply is easy only. But when we give new kind of examples, it would be tricky for you to identify which is composite supply and which is mixed supply. Because why? Because we'll think from our point of view. We don't know that particular business knowledge. When we go into that business, then we'll really understand whether they are sold separately or integrated or not. From our point of view, we'll simply decide whether it is composite or mixed. So the question is, how we can decide for exam? That's why there is no other way. That's why I listed out all this. These are the maximum possible cases where they can test related to composite supply and mixed supply. Okay, I have read the total supply chapter CMA Inter and Final Institute book. From every question or else from every example they took, these are the maximum possibilities of asking composite supply and mixed supply. So there is no other way. So even if they test related to, even in your exam also, if they test related to composite and mixed supply, it should be one among them. So come to workbook once. Workbook. Sir, in workbook, first chapter, the questions to be read are like first question. Why there was a need for making constitutional amendment for introduction of GST? Why constitution has to be amended for introducing GST? Okay, this is the question. So look at this question. Levy of integrated goods and service tax and collected by central government and apportioned between union and the states manner in the. So the point is like they are explaining like why there is a need for amending constitution with the existing constitution provisions only. Why can't they implement GST na? GST is a unique kind of law where there will be concurrent powers. The tax would be collected by central government, but it should be distributed between center and state equally. Till that point of time, there is no such tax where the collection will be made by central and will be distribution will be between center and state. So since it is a new kind of provision, further there is a need for change in constitution. Next one, principles for determining place of supply, and when supply takes place in the course of interstate or commerce shall be formulated by the parliament by way of law. With respect to place of supply also, to decide whether it is interstate, where the destination is there, there also there is a need for determining a law. And even for petroleum products also, the petroleum products are currently not under the GST. So further, a council has to be appointed to decide regarding that. The council related powers or the council will be framed from the provisions of constitution only. So to frame GST council, constitution need to be amended. To distribute the IGST revenue, constitution need to be amended. Okay, all these they related to council only. Next, look at the other questions. Question number 6. Go to question number 6. Okay, discuss the leviability of GST or otherwise on the following. On alcoholic liquor for human consumption. On alcohol, there is no GST, sir. Alcohol, the exclusive rights to levy tax on alcohol remains with the state government. Whether it is state excise duty, sales tax, whatever it is, the power to levy taxes on them is with the state only. Alcoholic liquor for human consumption is outside GST, hence no duty payable on it. Next, opium, Indian hemp and other narcotic drugs and narcotics. Sir, on them, state government reserve the power to levy state excise duty and even GST will also be levied on them. So, opium, Indian hemp and other narcotic drugs and narcotics are within the purview of GST. GST is leviable on them. However, state government have also retained the power to levy excise duty. Resultantly, on this there is both GST as well as state excise duties. Next, what are the features of GSTIN? Sir, it's not GSTN, it is GSTIN. GSTIN na goods and service tax identification number, same as like PAN number. To every person who is registered under GST, they will be giving GSTIN, goods and service tax identification number. It is assigned to every GST registered person. Okay. Next, under the GST regime, all indirect taxes are consolidated under one single platform. Okay. Structure of GSTN. Sir, this GSTN is a 15 digits number. Out of them, first 10 digits is, first 2 digits represent the state code. 32, 33, 31. First 2 digits represent the state code. The other 10 digits represent the PAN number. First 2 digits state code. Next 10 digits represent the PAN number. Overall, how many numbers by this? 12 numbers. And the 13th digit will be assigned as the number of registrations in a state. That means, let's say in Tamil Nadu, I have 4 registrations. So my 13th digit will be 4. If I have 9 registrations, then my 13th number will be 9. Now the question is, what if you have 11 registrations? 13th digit, I said like it is about the number of registrations. But if I have 11 registrations, they cannot put 11 in one particular number. No. So in that case, they'll change the 14th digit. In generally, the 14th digit will be Z by default. If they want to, for first 10 digits, first 9 digits, it would be Z. If I have 10th registration, then this Z will come with another alphabet. And last one, 15th digit. This is also a check digit, which would be a random number. So 13th digit will denotes the number of branches in a particular state. But if my branches are more than or equal to 10, then the 14th digit alphabet will get changed. Again, this series will come again from 1. 1 to 9 it will go. The 14th digit will be Z. If I am having 10th number, then again the 13th digit will be once again starts with 1. Whereas the 14th digit from Z it will go to A, B or some other alphabet will come. Next, what are the mission of GSTN? Sir, we discussed in the morning class mission of GSTN, that one, advantages of GSTN. So these are only the questions which I marked here. 1, 6, 7, 8, 9. 1, 6, 7, 8, 9. So from first chapter in workbook, at least you should solve 1, 6, 7, 8, 9 from first chapter. I already shared this file in the Telegram group, sir. 1, 6, 7, 8, 9. At least if you don't have time to read all the questions, at least read these 5 questions. 1, 6, 7, 8, 9. Now going to supply. In supply, come to question number 5. A contract awarded by Bombay Municipal Corporation for repair of a particular road, that the entire work should complete within 30 days. However, there is a delay of 10 days. BMC has levied liquidated damages of 1,20,000 and the same recovered from B Limited. Applicable rate of CGST is 9% and 9%. So they are asking whether it is a supply or not. Sir, this is nothing but Bombay Municipal Corporation. It is nothing but what? Local authority. Local authority given a contract to lay road to a private person. That person has to finish the entire work within 30 days. If we didn't complete the work within 30 days, then they levy a penalty of some amount. Here the penalty they collected is how much? 1,20,000. Is it a supply? Yes, it is a supply. For if any, okay, it's not only performance of a contract. For non-performance of a contract, if any damages are collected, it amounts to supply only. But the point is, it is not taxable, it is exempt. In exemptions chapter, it is clearly mentioned, like where government collects any penalty, fine or liquidated damages, it is exempted. On two-wheeler or any, any fine damages collected by government is exempted. So that's why it is exempted. Okay, sir, it has to be explained in a different way, sir. Actually, it is a supply only. It is a supply of service. However, we need to write it as what? It is exempted. It is a supply only, but it is exempted. That is the correct answer. We cannot write it away straightly as not a taxable supply. It is a supply, but it was subsequently exempted because any government, either central government, state government, local authority, if they collect any fine, penalty or any liquidated damages, it is exempted. This is 5th question. Then the other question is 6th. Come to question number 6. What is the difference in tax consequences between intrastate and interstate stock transfers, which is a private limited company? GST will be leviable only when there is a supply made by an entity having GST number to another GST number, where a supplier has branch within the same state only. Sir, this is old answer, sir. Let me rectify it. For the purpose of rectification only I mentioned here. GST will be leviable only where there is a supply made by an entity having GST number to another GST number. Sir, no, this was previous point, sir. Previously, when GST is introduced, within a state, you cannot go for multiple registrations. If you are in one state, irrespective of your number of branches, you'll have only one registration. But now the law has changed. What the law now it is saying means, even within a state also, if you have multiple registrations, you have the option to go for multiple registration. If you are having multiple branches means, you have the option to go for multiple registrations. So now, where a supplier has branch within the same state, then he can go for multiple registration. Then he can go for multiple registrations. Then he can go for multiple registrations. Hence, transfer to branch within the same state will also treated as supply. Will also treated as supply. This is the correction you should make. Where a supplier has branch within the same state, then he can go for multiple registrations. Hence, transfer to a branch within the same state will also treated as supply. Whereas if they are in different states now, obviously they'll have multiple registrations. It amounts to supply. So the problem is only with the first point. Intrastate or interstate. When there is a stock transfer between two different persons or distinct persons, even though there is no consideration, it amounts to what? Supply. Next, seventh question, sir. Related persons and distinct persons definition. It was an exam question, sir. That's why included. I already explained what is called related persons. They are members of the family. Family means spouse, children, parents, grandparents, brothers and sisters. They are officers and directors of each other's business. They are legally recognized partners. They are employer and employee. And they are directly or indirectly holds more than 25% of the voting power. One of them directly or indirectly controls each other. Both of them are directly or indirectly controlled by a third person. Let's say A controls both B and C. Then not only A and B, A and C, even B and C are also called as related persons. Next, together they control a third person. Joint ventures. Joint ventures. Subsidiaries. Here it is holding and subsidiary. First one it is holding and associates. All are covered. Next, when they are an agent, when one of them is acting as a sole agent or distributor, then also they are called as related persons. Then they explained about distinct person. A person can have more than one registration in one state or more than one registration because he is having branches in different states. Because of any reason, if he is having more than one registration, then each of such registration has to be treated as a distinct person. This is question number 7. 7 also completed. 7. Now come to question number 8. Explain the provisions relating to tax liability on composite supply and mixed supply. Composite supply consists of two or more goods services which are naturally supplied with each other in the ordinary course of business, and one of them is a principal supply. They are naturally supplied and one of them is a principal supply. Principal supply means the supply of goods and services which constitute the following, which constitute the predominant element. Next, following two conditions are necessary. What are those? There are supply of more than two goods and they are naturally bundled, and one of them is a principal supply. They gave an example as well. Next, mixed supply. Mixed supply means when there are two or more individual supply of goods and services supplied for a single price, and each of these items can be sold separately and not dependent on each other. In such cases, it would be called as what? Mixed supply. Okay. Sir, for tax liability, composite supply will be taxable at the rate applicable to principal supply. Mixed supply will be taxed at the rate whichever is higher for the individual elements which were clubbed in a bundle. Next, question number 12. In the following cases, based on information given, give your comments on the taxability and the rate of GST applicable. There is a supermarket, sir, Space Bazaar. It offers a free bucket with detergent powder. Free bucket and detergent powder. Composite or mixed? Mixed supply. So which rate applicable? 28. Whichever is higher has to be applied. Next, Mr. A booked a Rajdhani train ticket which include meal. Composite. Rajdhani na no option. Vande Bharat, it has an option. So it is what? Composite only. Next, Ravi, being a dealer in laptops, sold a laptop bag along with laptop. Laptop and laptop bag. Composite. Next, renting a vacant land to a stud farm. Stud farm na for horses, sir. Sir, vacant land given renting for normal cattle grazing is exempted. Or for dairy farms is also exempted. For stud farm na it is taxable. Stud farm exemption is not available. We'll get this in exemptions chapter, sir. But they mixed it in the supply question only. It is a supply of service and it is taxable. Next one. a contract awarded by Kolkata Municipal Corporation for repair, and the contract should be completed within 30 days. However, the contract got delayed and they got liquidated damages of 1,20,000. Just now, the first question we discussed. It is a supply only, but it is exempted. Next, X Limited paid penalty of 2 lakhs at the department in the month of 2018. Is it taxable under GST law? So no, sir. The penalty which was paid under GST is not a supply. Next, a sole proprietor is in the business of selling furniture. Its owner took a set of furniture to his house permanently. Will this be treated as supply or not? In the previous example, sir, what she did in our example when I am explaining, out of 10 TVs she purchased, one she given as gift, one as donation, two were theft, and one TV she taken for house purpose. But the point is, they didn't mention whether ITC availed or not. So we need to assume that if ITC is already availed, then it amounts to permanent transfer or disposal of business assets on which ITC claimed. It amounts to supply as per Schedule 1. If ITC is not availed, then it is not a supply. See, so okay, they didn't assume it like ITC is availed. If you assume it as ITC availed, then it amounts to supply. 12 done. Question number 13, sir. The same kind of question. We could do it fastly only. Kala, a registered supplier of Jaipur, made the following supplies. Laptop bag along with laptop. Composite supply only. Next, second one, sir. Supply of 10,000 kits amounting to 5 lakhs in a fancy store. Each kit consists of hair oil, beauty soap and hair comb. Mixed supply. Next, 100 kits are given as free gift to Jaipur customer on the occasion of Kala's birthday. Sir, they are given as gift. Okay, these items we are given as gift. And each kit consists of hair oil, beauty soap. Cost of each kit is 35. Open market value of them is not available. ITC has not been taken on those goods. Is it amounts to supply or not? Sir, I have distributed certain items as free samples. I mean, there is no consideration. To call it as supply, we need to avail ITC. Sir, without consideration, we call it as supply when there is permanent transfer or disposal of business assets. When you give, when anyone given as gift, now it is permanent transfer only. To call it as supply, ITC might have availed. But in this question, they clearly said like input tax credit has not been taken on the goods. Since ITC is not availed, even though there is permanent transfer, it is not a supply. Next, event management services provided free of cost to her brother for his son's marriage. Cost of providing said service is 80,000, but the open market value is not available. Sir, event management services provided, sir, with cost or without cost? Without cost. Where any services provided to related persons, even though there is no consideration, it amounts to supply. Okay, but to call as related persons, they are part of family. What is the definition of family? Only dependent. Sir, here he is brother, but brother's son is also getting married. Can we call such brother as dependent? For brother's son's marriage. So that brother, even though in general terms brother will be considered as relative, but as per GST, in this case brother is not relative. So there is free of supply of service between two unrelated persons, which is not a supply. To call it as supply, it should be between related person. Since brother is an independent person, he need not be treated as related person, so it is not a supply between them. Sir, then sir, this fifth point, sir, there's nothing great here. He'll be giving chairs and coolers for a function which is being held in Ajmer, Rajasthan for rupees 3,30,000. So that is the rental charges for giving chairs and coolers to a function garden. That is supply only. Next, for transporting these chairs and coolers, they have paid cost of transportation charges. The transportation charges are rupees 20 for each item. How many items are there? 1400 chairs and 100 coolers. The transportation charges are 20 for each item. So 1500 into 20, it will come to 30,000. So this is a service provided by GTA to function hall. Okay, and this GTA is unregistered. So on the services provided by GTA, RCM is applicable. So the only point which is important here is the services of GTA are covered under RCM, that we need to identify. So if you look at here also, GTA services availed from unregistered person, RCM will be applicable. So on that we need to pay tax under RCM. So okay, with this question is also completed. Nothing great here. The last one, sir, question number 15. What is question number 15? Okay, question number 15 related, I not yet explained, sir. I'll explain maybe the clarifications for some 15-20 minutes in tomorrow's class. The other part we have completed, sir, in supply. Okay, sir, in supply we completed the whole section 7, and then we discussed about composite supply and mixed supply. But in in supply chapter, sir, there are other clarifications as well. So let me discuss those clarifications as well. First one, sir. Compensation to employee in the form of money, fringe benefits are supply. So the point here is, sir, with respect to employment, understand where employer is paying salary, for that employee is providing any services, that is not a supply covered by negative list. If employer is giving any gift which is not mentioned in the offer letter, then that would be considered as gift. If the aggregate value of gifts in a financial year exceeds 50,000, then it would be treated as supply. Here they are talking about fringe benefits, sir. Fringe benefits now, like if you remember something about your inter-level income tax salaries chapter, there are something called perquisites, providing motor car, providing rent-free accommodation, or providing domestic servant, a driver. So these kind of, if any perquisites are provided, those are called as fringe benefits. If those fringe benefits are already mentioned in the offer letter or in the contract of employment, then they are part of salary only. We need not to discuss anything about, they are covered under negative list. If let's say my employer is providing me a motor car, but regarding that there is no mention in the contract of employment, so I'm additionally, in addition to salary, which was not, salary is mentioned, in addition I'm getting a motor car benefit as well, which was not there in the contract of employment. Now the point is, such benefit, how it has to be treated. So such benefit will also be treated as gift, where the aggregate value of such amounts exceed 50,000, then it also has to be treated as supply. The service gift it is like. Then clarification of interstate movement of various modes of conveyance. Sir, understand this. In yesterday's class we said, like, when there are any transfer of goods between distinct persons or related persons without consideration, it amounts to supply. So now take the example of a travels. Let's say for example, okay, there is a travels called Orange Travels. Okay, so these Orange Travels buses will go from Hyderabad to Chennai. So every day a bus goes from Hyderabad to Chennai carrying passengers. The point is, they are having one branch in Hyderabad which is registered person. They are having another branch in Chennai which is also a registered person. Now every day this bus will go from Hyderabad to Chennai. So by definition, bus is also a good, since it is also a movable property. So every day from one distinct person to another distinct person, we are transferring a good called bus here. So technically, if you read the schedule one explanations, this bus value, this sending bus from one branch to another branch amounts to supply, because we are just sending the bus there. We are not getting any consideration. So you may say like consideration we are getting the passenger ticket. That is a altogether different service between passenger and the travels. The point to be understand here is from one of our branch we are sending to another branch this bus every day. Okay, so then what happens now if you take seriously schedule one? Let's say the bus value is 50 lakhs. Every day on bus value we need to levy GST if it goes from Hyderabad to Chennai. And again while it's coming back from Chennai to Hyderabad, again on 50 lakhs we need to levy GST. Okay, from travels perspective, let's say this person has 10 buses. It looks okay, maybe like not so much complicated. But if you think about Indian Railways, every day the trains will go from one branch to another branch. So every day there is interstate movement of goods. So on everyday basis, on every train, if they need to levy GST on train value, okay, it's not practically possible. That's why they given this clarification, which says like interstate movement of conveyances, not trains, buses, trucks, tankers, trailers, vessels, containers, aircrafts, etc. between distinct persons. If they are going from one branch to another branch, for carrying passengers or for carrying goods, then it is not a supply. Without for I mean, if it is sent for repairs, then to the extent of repair value, we need to treat it as supply. If it is sent for further sale, we are sending from Hyderabad to Chennai because the bus will get sold in Chennai. For that reason, if the bus is sent, then it is a supply only. If it is sent only for transportation of passengers or goods, then it is not a supply. Okay, you understood, sir? From every day from one of my branch, the buses or trucks will go from this branch to another branch. They're not simply going, they are carrying goods or passengers. If any conveyance is moving from one branch to another branch during the course of transporting passengers or goods, it is not a supply. Where the intention to send this conveyance to other branch is for repairs, then to the extent of repair value, when it is coming back to the extent of repair value, we need to treat it as supply. When it is sent for further supply, I mean it is sent to Chennai to sell there. So then it has to be treated as supply. Next, clarification on printing. This we already discussed in the composite and mixed supply part, but once again, sir, with respect to books, pamphlets, brochures, annual reports, where content is provided by me. Let's say like my book went for printing, sir, so I provide the content. The printing guy just take the content and he'll print it on the paper. Now the point is which is important, whether the paper is important or the printing is important. Printing. So printing is the principal supply. So printing is main, it has to be treated as supply of service. Whereas when it comes to printed envelopes or printed box or printed tissues and napkins, sir, when you go to restaurants, you'll see on the paper napkins they'll print their restaurant names on it. Okay, so just because they print the restaurant name on that particular tissue or napkin, will we use it for any other purpose? The napkin usage will not differ whether they print the name or not. The same way, if you see the card boxes printed like Amazon, Flipkart. So I'm a supplier of card boxes. So you came to me and asked like you want some 5,000 card boxes, and you asked like on those 5,000 card boxes you want your name as well. Okay, so I'm now providing you card boxes along with printing the name on it. Okay, so now which is important, sir? Even if I print the name or if I don't print the name also, the usage of card box will not differ. But when it comes to books, pamphlets, the usage will differ because of the printing. But whereas here the usage is not getting differed because of printing, so here predominant is supply of goods, so it has to be treated as supply of goods. So normal books, pamphlets, brochures, annual reports, now printing is necessary, so treat it as supply of service. When it comes to printed envelopes or printed boxes or paper napkins or tissues, on them printing is not the essential, good is the essential, so it has to be treated as supply of good. Next, servicing of cars. Sir, when we give car for servicing, that guy will, I mean, during the service, he'll provide goods as well as service. I mean, some spare parts may be replaced, and along with that, he'll be providing even service as well. So then, how it has to be treated? They simply says like it involves supply of goods and services. If they are shown separately, If they are shown separately, then GST also has to be levied separately based on the applicable rate. Simply saying like show goods separately, service separately. Don't consider it as a bundle. Show goods separately and levy the tax rate applicable on goods separately, and show service separately and levy the service GST rate applicable separately, instead of treating it as a same bundle. Next, retreading of tires. So the process of retreading is like, so that's a old tire. On that old tire, they'll again harden the surface. I mean, the surface. So once the tire becomes old, the layer becomes so soft now. I mean, that's why the bike or car will get skid. So then on the tire, they'll make it rough. The surface they'll make it as rough, and then they'll attach with this new rubber layer. And again, the life of the tire will get increased for another 3 months or 4 months. So the process of doing this is called as retreading. So now while doing this, the tire shop guy will do first on the old tire. They'll rough the surface of the old tire. Then they'll attach this new layer, and then they'll compress it. I mean, they'll put high pressure that it will get strict. Okay. So now, is it need to be treated as supply of good or supply of service? So point is, if the tire belongs to customer, the old tire belongs to customer, the tire shop guy will do just, he'll rough the surface and then he'll attach this new layer. Then it will be treated as supply of service. So let's say, sir, nearby the tire shop, your car existing tire got burst. When the tire gets burst, this type of activity also we cannot do, because it will get the cracks now. Only when it becomes old tire because of usage, then we can do this process and all. So you don't have a alternative tire there. So you went to the tire shop and you asked him, you want a retreaded tire. Then this guy did this retreading work also on his old tire, not the customer's old tire. The old tire also belongs to the tire shop only. In those situations, good is predominant. We need to treat it as supply of good. Next, free samples. Sir, free samples. So we are giving free samples. Free samples we are giving now will not take any consideration. So it amounts to permanent transfer or disposal. But the point is, when we are giving free samples, initially on the related goods, if we availed ITC, then it comes to permanent transfer or disposal of business assets on which ITC availed. It amounts to supply. Sir, I am giving free samples, but I know initially itself I am going to give these goods as free samples. So I didn't avail ITC initially itself. Then it is not a supply. If I availed ITC and then again if I am distributing it as free samples, then apply schedule 1, permanent transfer or disposal of business assets. Next, buy one get one. There will be buy one get one offer. So let's say, if you see lion dates and all, always it will have buy one get one offer. MTR gulab jamun, always it will have buy one get one offer. So let's say you bought for 100 rupees one packet. So even though you bought one packet, you got two packets, because buy one get one. So now when you got two packets, how it has to be seen? Like one is for 100, the other one is for 0, no consideration. Do we need to look at such a way now? So the clarification they given is like, the price which you collected has to be taken, has to be treated as for both the goods. That means the 100 is not for a single good, the 100 is for both the goods. That means each good is for 50 rupees. Like that you need to take. It's not like one is for full value and the other one is for no consideration. So the next one, this is about the Pagadi system. This Pagadi system is prevalent in Maharashtra only, sir. So what they'll do now, like let's say there's a property, sir. This property will have a landowner. I mean, the actual building owner will be there. Okay, the owner. So the owner will give this building on Pagadi, nothing but lease kind of only, to let's say a tenant named X. Okay, the owner given this property under Pagadi to this X. So what is new here than compared to the regular rented transactions means, sir, in general, when we took a property on rent or on lease, we'll pay advance. Here they don't call it as advance, they call it as Pagadi. Okay, how the Pagadi is fixed now? The Pagadi will not be fixed by the owner. Pagadi is fixed by the market. Okay, let's say, sir, in general, let's say if you took this property on rent, if you give advance as 5 lakhs, when you are vacating, the owner will return you the 5 lakhs, but it's not in the Pagadi. Let's say the prevailing market on the day I took it for tenancy is only 3 lakhs. But if I need to vacate the property, at that time the relevant Pagadi is 30 lakhs. Then the owner has to pay me 30 lakhs to vacate me. You understood? It's not like returning back the advance which I gave initially. It was based on the prevailing Pagadi rate which was there in the market. So when I took the property, it is only 3 lakhs. So I gave him only 3 lakhs. But after some 5 years or 6 years, if I need to vacate the property, if the Pagadi has gone up, like let's say it went to 10 lakhs or 15 lakhs, then they need to pay me 15 lakhs to vacate me. It's the different thing. One thing. The second thing is like in Pagadi, this tenant will have additional rights as well. What is the additional right? Now, he can sublet this property or he can give this property on renting to some other person. But when he gives sublet, whatever the rent he will get, out of that rent, he needs to share some amount to the owner. He need to share some amount to the owner. When he sublet the property, the additional rent which he is getting out of that, some rent he need to share with the owner. That is as per their terms. So the two different things in Pagadi are like, one is like the tenant will have a subletting option. Second one, it's not just like advance, they'll pay Pagadi. Pagadi is decided by the market. Whatever is the prevailing Pagadi, that needs to be paid by the tenant. If the tenant has to vacate the property, even the owner also has to pay the prevailing Pagadi to the tenant. Okay. Now the question is whether this Pagadi needs to be treated as supply or not. Sir, in general rental transactions, it was just kept as an advance. So if it is kept as an advance, it is not a supply. But here they are not calling it as advance, they are calling it as Pagadi. So owner, tenant. Sir, first tenant will pay Pagadi to owner. Initially when the property was taken on rent. When tenant is vacating, then owner will pay Pagadi to the tenant. And additional extra thing is like, one more thing, when they pay Pagadi, they'll register it. I mean, when building is sold or land is sold, we'll have this registrations and all, and we'll pay stamp duty. Na? Same way, for Pagadi also, they'll do registration and a stamp duty will also be paid. Even, okay. So, what the question is like, whether this Pagadi has to be treated as supply or not. The clarification given is like, see here, sir. Pagadi system is prevalent in some states. The activity of transfer of tenancy right against consideration is clearly covered under supply. Although stamp duty and registration charges have been levied on such transfer of tenancy right, it would not accept them from the scope of supply. So that means tenant paying Pagadi to owner is also supply, and afterwards owner paying Pagadi to tenant is also supply. Month on month if they get any rent, that is also supply only. So the Pagadi which owner gets or which owner repays to tenant, both are to be treated as supply only. Next, liquor license. So state government will issue licenses to the people who wants to start a liquor shop. So how this process goes now, they'll call for tenders. Okay, in tenders also they'll take lottery system and all they follow, and they'll allocate liquor licenses. So now the question is, if you look at the 7 subsection 1 clause A supply definition, supply includes sale, transfer, barter, exchange, license. So issue of liquor license is also supply. But the state governments have a concern about this. They are saying like liquor license is our one of the major revenue, and we initially itself said like whatever the revenue comes through liquor, we cannot give share to the central government. But this point somehow it was missed when they were framing the law. So then they put this issue also in front of the council. Then the council agreed with this and they said like whatever the money they generate by way of issuing liquor license, that need not to be treated as supply. This is applicable only for liquor licenses. If they issue parking license, mining license or any other license, for that the license fee they received has to be treated as supply only. But only for liquor license issue, if any fee or amount received by state government, it need not to be treated as supply. This is something like covered under Schedule 3 negative list. Sir, in supply we have 3 schedules: Schedule 1, Schedule 2, Schedule 3. Schedule 1 talks about deemed supplies, 4 points: principal and agent, interstate movement between distinct persons, interstate transfer between distinct persons, import of services without consideration from a related person in the course or furtherance of business, permanent transfer or disposal. Schedule 1. Schedule 2 is about deciding whether it is supply of good or service. Schedule 3 is about negative list, that funeral, burial, crematorium services, land and building, actionable claims, MPs and MLAs. That is the Schedule 3. Okay, this is also a point like Schedule 3. This need not to be treated as supply. Issue of liquor license. Then Shankar only, na? Okay. Sir, there is a temple getting constructed nearby Shankar's house. So they came for donation. Okay, so Shankar gave 30 lakh rupees as donation to the temple. 30 lakhs. So okay, so then, so they thought like he'll give some 3,000, 4,000, but he suddenly gave 30 lakh rupees to the temple. So the temple, I mean, the god ideal is only 6 feet, but Shankar's cutout they kept for 60 feet there. Okay, then GST people gave notice to the temple trust saying like, by taking 30 lakhs, you are promoting Shankar. Okay, Shankar, like he also given stills like new party like Vijay only, he gave stills and all. Okay, so then the GST people, I mean the department is saying like, you are promoting Shankar by taking 30 lakhs. It is something like promotional service only. So the question is whether it has to be treated as supply or not. The clarification from the temple side is like, we are expressing our gratitude by way of putting that cutout. We have no intention to promote Shankar or his business. We just want to promote his philanthropic act. Okay, his how great he is, that want he want, I mean the temple trust wants to promote, not him. They want to promote his uh, that kind gesture, that only they want to promote, not him. And why that promotion also, why that promotion are to inspire others, and they will also will promote. So that's the objective here, first objective. And the second thing is like, there is no quid pro quo here. Okay, Shankar is not getting something in return. You may say like, sir, Shankar is getting publicity, na free publicity is getting. His YouTube subscribers got increased, his business got increased, his Instagram followers got increased, he has become a mini celebrity. That are all you can say. But the point is, if temple, okay, the temple trust took 30 lakhs but not even gave him an invitation for the temple opening also, what he can do? Can he go to court? You gave 30 lakh rupees, but the temple people forget about 60 feet. They don't even call him for the temple opening. He has no other option. No, he just have to accept it. He cannot go to the temple and say like, why you can't even call me after giving 30 lakhs, that and all. He cannot do. So there is no quid pro quo. I mean, there is no contractual obligation with the temple or the charitable organization to do such. So we cannot call it as supply. 2 points. One is like, the objective of doing such things or putting names, or many places will see, sir, near the this function halls, they'll keep the donors names and all. Okay, temples, charitable organizations, they'll put the donors names. So if they put donor name, it's not like promoting them. They are not having any intention to promote them. They want to express their gratitude and they want to inspire others by promoting his philanthropic act. First one. The second one is like, there is no quid pro quo here. There is no consideration for the donor. Okay, even if they don't put any nameplate, or even if they don't put any photo also, the donor cannot do anything. So that's why it need not to be treated as a supply. Next, clarification on artworks sent to galleries. Sir, artworks, if you just simply send it to galleries, now it is not supply. If someone looks at that arts and if he buys that one. So did you watch this movie called Upiri? Okay, in Telugu it is Upiri. I don't know, like Karthi acted in it. Nagarjuna and Karthi will. Okay, in that Karthi will be doing this paintings and all. Okay, so one painting somehow they'll sell to Prakash Raj, and then he realized that he is a great artist and he'll do. Okay, he'll do so many paintings. So from the next, I mean, If all those other paintings were sent to gallery, it cannot be treated as supply because nobody will buy. Prakash Rajna somehow he bought, the other ones will not buy, no. So artwork, just because they sent to gallery, it is not supply. When after sending it to gallery, if someone buys them, then only we need to treat it as supply. So, okay, not only, I mean, to any exhibition and all, if artworks are sent, it need not to be treated as supply. Further, if they were sold there, then it has to be treated as supply. Next, sir, here there will be so many points coming here, sir. All these were like some 1.5 year back, they introduced so many clarifications. All these are with respect to, sir, where any amount received for non-performance of a contract, or else like for tolerating an act, the coming clarifications which we are going to discuss are related to tolerating an act or for a non-performance of a contract. Okay, regarding this, if any amounts are paid, then that also has to be treated as supply. So the example for this is like, let's say maybe some institutions from Chennai came to BCCA and said like, you don't take classes here, we'll pay you 1 crore if you don't come to Chennai. So like that, if any contract has been came and if they said like, for non-performing a contract here, for non-performance or for not starting any activity here, if someone is ready to pay 1 crore, then that also has to be treated as supply. I mean, let's say if someone come and says me like, you just take classes in Hyderabad or in Andhra Pradesh and Telangana only, don't go to other cities. If you go to don't go to other cities. For not going to other places, they are ready to pay me some 50 lakhs. If I accept, that means the 50 lakhs which I am getting also has to be treated as supply. First thing. Second one, tolerating an act na. So both sir, we can put it in a single example, all these 2 points also. Let's say, sir, here there is a plot of land, 3 plot of lands are there. All these 3 are bought by A, B and C. A has constructed a 12 floors building in his plot, 12 floors. But B doesn't want 12 floors, he want only 3 floors building, it's enough for him, 3 floors. But he is afraid of, even C, if he construct, even if C also construct 12 floor building, he'll not get proper sunlight. So he's worried of that. Okay, anyhow, one side it was blocked by A. If C also construct same 12 floor building, he'll not get proper sunlight. So what B did not, he went to C and entered into a contract with C. Like whenever C constructs a building, he will also construct only 3 floors or 2 floors, not more than 3 floors. For that, B paid 1 crore rupees to C. Then C agreed that he will not construct not more than 3 floors. So this is for non-performance. He will not do more than 3 floors. For that, C got 1 crore. It has to be treated as what? Supply only. Then subsequently, C expired. Junior C came. Okay, C expired and junior C came. And he read this contract also, but he is not agreeing. He want rental income. So who will agree all these conditions under? I'll construct 15 floors. Then I'll get more rent. But there is already contract na, which was executed by his father. So then junior C went to B and said like, that contract my father somehow entered, but now it is not practicable. It's not practical for me. So I'll pay you some amount for cancelling that contract. So now he pays 3 crores and he construct 15 floors. Now B initially has a contract that C cannot construct more than 3 floors. Now the contract is getting breaked. For that, B is getting 3 crores. So now the 3 crores which he is getting is for tolerating the contract violation. So for tolerating the act, he is getting 3 crores. So that is also called as what? Supply. Okay. The same way, sir, in front of big malls, there will be small pani puri stalls. Okay. Juice stalls will be kept now. So these juice stalls, why they are allowing them to keep in front of the big shopping malls now? Even this juice shop people or the pani puri people also will pay some amount to the owner. Okay. So but sir, if you keep bike in front of a shop also, they'll not allow generally. If you keep in front of a shop now, they'll say like, business time, so my business will go, so you'll just take away the bike and all, they'll say. Then why they'll allow these juice shops and pani puri shops also. So they'll allow by taking some money from them. Okay, that is also nothing but tolerating their act by accepting some consideration, which also has to be treated as supply. So now the clarifications which we are going to discuss are like the same kind of things, but whether we need to look at them as supply or not, it depends based on the type of situation and the intention of those suppliers and recipients. All those we need to understand here now. So liquidated damages. Let's say I have a contract that my building has to be constructed within 3 months by the contractor. He promised me like he'll construct within 3 months. So I have put a clause there. If you don't construct within 3 months, the contractor has to pay me 30 lakh rupees as damages. It was clearly agreed. I mean, whenever there is such kind of liquidated damages kind of clause, it should be either implied or explicit. It should be implied or explicit. But in the contract itself, we have written that one. So there is no implied one. It was explicit only. Whenever there is a delay beyond 3 months from the contractor side, he need to pay me 10 lakh rupees as damages. So he didn't constructed the building within 3 months. He paid 10 lakh rupees as damages to me. Since it was written in the contract, the damages he paid is for tolerating the act only. It need to be treated as supply. But somehow, sir, okay, this is a road, sir. Here there is a building actually. Okay, there is a truck came. The truck came and directly parked into this house. Actually, it has to take this turn. The truck driver missed the turn and he directly went into this house. Okay, next day morning, the truck owner and all came. They had some issues with them, and then the truck people agreed to pay 30 lakh rupees as compensation to this one. So this is also tolerating an act. Okay, in simple thing, you are going on a bike. Okay, Yogesh only. Okay, he's going. Suddenly he saw one girl. Okay, he turned like Robo. Robo movie you saw Rajnikant na. Just like that he turned. Okay, before the time he turned back his head, he has hit a old lady. Then he paid some 30,000 as compensation or damages. Can it be treated as tolerating an act? Why it cannot be treating as tolerating an act? Na? So that 30,000 they are accepting, but in no way they are saying like we are okay with getting 30,000. We are ready to get it hit once again if you pay 30,000. There is no such kind of thing, na. So there is no intention of tolerating that act. We are just paying some compensation or damages, but there is no intention of accepting such act. Even when it comes to government also, let's say someone is going over speed, the traffic constable has levied some 2,000 or 3,000 penalty. Again, the same thing, by levying penalty, the government is not ready to accept it. They want to discourage it. Okay, so in every situation when we are getting this kind of damages or penalties, we need to check what is the intention by taking that damages or penalty. If they pay penalty, are they okay? Okay, or else, did the counterparty really accepting that for that penalty money or for the damages money? If there is no such kind of intention there, then we cannot treat it as supply. So in a normal contract, construction contracts and all, if there is any delay, or else like I'm purchasing raw material from one of my vendor. So in my contract it was clearly said like I want only A grade materials. If there is any quality compromise which will affect my whole production process, so I clearly said like when the quality gets compromised, he need to pay me penalty of 30 lakh rupees. Okay, here it is express contract, sir, and I am okay if he sends less quality material also. I'm okay with accepting 30 lakhs because by using a low quality material, I'll have many damaged goods. So that would get compensated with the 30 lakhs he pays. The 30 lakh rupees he pays to me. So the point to be understand is like in every case when we get damages, we cannot simply say it as like supply. We should check for whether the contract has any implied or explicit condition. First thing. Second one, just because there is a condition also, we are the counterparties really accepting that damages as tolerance. Okay, that we should check. So in this case, if the building got hit by a truck, Even the truck guy pays any damages also, they are not ready for the second time. Okay, but it doesn't happens with the electricity bill or with the internet connection bill. So let's say, sir, I need to pay internet bill by 10th of every month. I paid on 15th, so they'll levy late payment charges on me. Are they ready for the second time also? Yes. The electric, I mean, it became usual thing, sir. Even in the second month also, I have the option to pay it delayedly only, and I have to pay late payment fee. So those kind of clarifications will be there. We'll read one by one. First one, sir, check dishonor, fine and penalty. Somebody issued me a check. I took that check to the bank. Check got dishonored. So I levied dishonored fees on the person who gave me the check. So whether that can be considered as tolerating an actor. So in that situation, what CBIC observed and decided, it means if any check dishonor charges are issued or levied, it's not tolerating an act. It's not tolerating an act. So we need not to consider it as a supply. The intention of levying those check dishonor charges are like not to repeat it second time. Okay, don't issue one more time those kind of fake checks or checks which cannot be honored. Okay, so that is the first thing here. Next, penalty, I already discussed. Whenever the government levy any penalty, the intention is not to tolerate such act. The intention is only to discourage such act. Next one, sir. Sir, these days, whenever you join any company, they are asking us to execute bond, because from last 5-6 years, the trend is like you'll work in an organization for 6 months, then you'll jump into another organization, then into another organization, your salary will get hiked. This has happened across the industry. Okay, now if you look at the industry, they are not taking who skips for every 6 months and 1 year. They're checking like a candidate who has worked at least 3 years in an organization. Okay, why? Because for all the companies, the first 6 months to 1 year will be spent on the employee only. He'll not earn to the company. Company will only spend on this employee because for training and all. Okay, so many companies have this kind of contracts, like executing bonds for 3 years or 5 years. Even public sector companies also, when you join newly into an organization, they'll ask you to execute a bond for 3 years or 5 years. That means you are saying like you'll work there for at least 3 years or 5 years based on the bond period. If at all in the meanwhile, before the expiry of the 3 years or 5 years, if you leave the organization, you need to pay the bond amount, maybe 5 lakhs or 10 lakhs or whatever the amount kept there. Now, if employee leaves an organization and he pays that 5 lakhs or 10 lakhs to the organization, will it has to be considered as tolerating an act? Okay, employer is getting that 5 lakhs and 10 lakhs amount. Does it can be treated as tolerating an act? Again, they explained it as like that employer has no intention to leave the employee by accepting that 5 lakhs. Since he has no other option, he is accepting that 5 lakhs. But in no case, employer is with an intention to leave the employee by accepting that 5 lakhs. So that's why they are saying like and even another thing, by leaving the organization, employee will not get anything. Sorry, to call it as supply, the consideration shall flow from both the sides. Employer getting 5 lakhs, but what employer is getting? Nothing he is getting now. So that's what they said, and it also need not to be treated as supply. Next one, late payment charges for electricity payment, internet payment, these kind of telecommunication related payments. So all these, does it need to be treated as supply? So they said it like it has become a quite common thing that for electricity connections and for internet connections, delayed payment has become a usual thing across the industry. So whatever the delayed payment charges they collect, okay, is normal and a common thing. So this is an exceptional case, sir, where they are saying like whenever late payment charges are received by the electricity boards or by the telecom service providers, since it has become usual to them, that can be treated as tolerating an act, and the late payment charges they collect has to be treated as supply only. Here the damages which they will get as penalty for late payment has to be treated as supply only, because considering their industry, it has become normal. So we can say like there is an implied contract of accepting the delay. Next, cancellation charges, sir. So this minimum power charge is not required. Come to cancellation charges. What they are telling in cancellation charges now? So let's say I reserved a bus to go from Chennai to Hyderabad. 10 days back I booked the ticket. I booked the ticket for 3000 rupees. Now I cancelled the ticket because I changed the plan and now I cancel the ticket. So they refunded me only 1500 rupees. The other 1500 they took it as cancellation fee. So whether that cancellation fee also has to be treated as tolerating an act, tolerating my cancellation of ticket, and does it has to be treated as supply? Here, sir, yes, the cancellation charges which they take is supply only, but the explanation they give is the explanation they given is in a complete different way. The bus provider is not just providing me mere transportation from Chennai to Hyderabad. Okay, if it is just mere transporting me from Chennai to Hyderabad, yes, you can call the cancellation charges as tolerating an act. But sir, transportation, he can ask me to sit on the top of the bus also. Then also I can be transported from Chennai to Hyderabad. It's not just transportation, it is comfortable transportation in the seat I want. Okay, so his service has started that day when he reserved a seat for me. The service of the transporter has started the day he reserved a seat from me. So from the past 10 days, he has reserved a seat for me. So he already provided a part of service to me. So that amount which he has retained is for the part of service which he already provided to me. So we cannot call it as tolerating an act. It is for the amount he retained is for the service which he already provided to me. You understood, sir? Okay, whenever we cancel a ticket, what we think now, generally that journey is not started now, he didn't provided us any service. But you shouldn't think in such a way. He already started his service by reserving a seat for us till that point of time. So for the part service he provided, he's charging the fee on the name of cancellation fee. Next, GST implications on interest and loan. Sir, when you give a person loan and you are earning interest on it, the interest part is a supply only. The interest you earn is a supply only. But there is an exemption given, sir. Interest is exempted. Interest and discount charged is exempted. Whether it is bank or any other person, interest and discount is exempted. Interest and discount is exempted. So now we need to understand here in a different way. HDFC Bank gave 10 lakh rupees to A. After 1 year, A paid 10 lakhs and plus 1 lakh rupees interest. Now this 10 lakhs is just principal repayment. To the extent of 10 lakhs, there is no activity, it's not a supply. But the 1 lakh interest he paid, this 1 lakh interest is a supply only. This service is nothing but financial service. On this supply, there is no GST because interest is exempted from GST. Clear here? HDFC gave 10 lakh rupees loan to A. A after 1 year he is repaying the total 10 lakhs along with 1 lakh rupees interest. The loan principal he repaid is not a supply because what he got is money and what he is giving back is also money. For conversion of money into one form to another, he is earning extra thing. I mean the HDFC bank earning extra here interest. To the extent of interest it is supply. But what exemptions said interest and discount if any earned either by bank or by any other person, interest and discount is exempted. Discount not the regular discount we see in shops. Bills discounting la discount will come no. Sir, if you have a bill with 1 lakh rupees and you want cash now itself, what you can do? You can go to a bank and you can discount the bill for 95,000 or 94,000. That discount is exempted, not the regular discount which we see in shops. Okay, the discount in bills discounting and the interest is exempted. Okay, now come to the point. There is a car showroom, sir. It sells car. There are two persons, A, B. A paid in cash and he took the car delivery. When he paid the car, when they pay in cash, the car was sold for 15 lakh rupees. B didn't ask cash, so he asked for a credit or EMI installment basis. Okay, then the car showroom given the car to him on credit basis for rupees 18 lakhs. So now the difference between this 15 lakhs and 18 lakhs is called as what? In a credit sale transaction, they sold the car for 18 lakhs. In a cash sale transaction, they sold the car for 15 lakhs. Now the difference between this cash price and 18 lakhs will be called as what? Interest only. This is nothing but higher purchase price. Higher purchase na buying in installments is nothing but what? Higher purchase only. So the difference between 18 lakhs and 3 lakhs is nothing but what? Interest. Will the interest will get, I mean, in the previous point I said like interest and discount is exempted. Now the question is, here also 3 lakhs is interest only na, will that 3 lakhs will get exempted? Sir, here the composite supply logic will come. This supplier providing a bundle of good and service. He is supplying car, along with that he is even providing a financial service by way of extending credit, which are naturally bundled, because credit sale, hire purchase transactions are quite common thing in every kind of business. Especially in automobile industry it was quite common, and the customer expectation is also same, and majority of suppliers will also do the same. So they are naturally bundled. So now from supplier perspective, I mean this car showroom perspective, selling car is predominant, earning interest is predominant. Selling car is predominant. So the predominant is car. Car has become principal supply. So the interest will also get taxed. Generally interest is exempted. But since it became a part of the bundle and the predominant supply is car, the tax rate applicable on car will be levied on the whole bundle. In such a way, interest will also get taxed. Even that it will happen with the purchase, credit purchase of any furniture, electronics, the same thing. The predominant thing is selling of furniture and electronics. Interest has become an incidental or auxiliary activity. So the tax rate applicable on principal supply will be applied on the whole bundle. That's what explained here, sir. Goods sold or supplied on credit basis, taxable supply. Interest charged by supplier on services on periodic payment, that also has to be treated as taxable supply. So in some cases interest will get exempted. When it is a standalone transaction where interest is the only consideration, then interest is exempted. Where giving loan is not a standalone transaction, along with sale of car, along with sale of bike or sale of electronics, they are even extending credit. In such cases, the principal supply is not credit extension. Principal supply is selling goods. So extension of credit has become an incidental or auxiliary activity. In such cases, interest will get taxed. Next, taxability of transactions in securities. In forward contracts and future contracts. Okay, this already you might have know if you have listened SFM classes and all. Forward contracts and future contracts. So in forward contracts and future contracts, there will be an option to settle the transaction by actual delivery or by margin settlement. So let's say after 1 year, I want 10 grams gold at 1 lakh rupee. After 1 year, 10 grams gold at 1 lakh rupee. So after 1 year, the gold price may be 90,000 or even 1 lakh 20,000. After 1 year, I have two options. Either I'll pay 1 lakh and I can take 10 grams gold. One option, which is nothing but actual delivery of the underlying commodity. The second option is like, if the actual gold price has become 1 lakh 10,000, then I got benefited. I have a contract to buy at 1 lakh, but the actual price is 1 lakh 10,000. So I have gained 10,000 rupees. Only the 10,000 rupees I'll take instead of taking the gold. If the gold price is 90,000 only that time, so I have a contract of buying at 1 lakh rupees, but the actual price is 90,000. So I am buying something for 1 lakh where the actual cost is 90,000. So I have a loss of 10,000. So I'll pay that 10,000 to him. Like that, the margin settlement can also be made, or there can be actual delivery. If there is actual delivery, then it is supply of good. If there is only marginal settlement, if there is only margin settlement, then there is no supply, no GST. In forward contracts and future contracts, there are both the options available. One is actual delivery of underlying commodity. If there is actual delivery of underlying commodity, then it has to be treated as supply of good. Otherwise, we need to treat it, otherwise it is not a supply. Next one, sale of debt. One bank sold its debts to another bank. Let's say, sir, HDFC bank has so many debts and it has very less liquidity. Let's say a bank has 10,000 crores, but all the 10,000 crores were given as a loan. Now, when a customer wants to withdraw money, bank has no money left with them because all the money got struck with the loan. Now, to improve their liquidity, what they can do? They can sell some of their debts to another bank and they can generate money. So that transfer of debt or sale of secured debt amounts to supply or no, it is also a nature of derivative, hence it is not a supply. Same with the interest rate swaps and foreign exchange swaps, they are also derivatives, hence there is no supply. So this is not required for us. Then sir, why I need to explain all these things na? In supply chapter I cannot take chance, sir, because in last June 2024 exam they asked the two questions from supply chapter, 7 into 7, two questions from supply chapter. All those two questions are from the areas which we don't expect generally, like from these clarifications. There are other points also, let me show you. See, these are some questions which were there in the institute material, some kind of advanced rulings. So from these only one question asked, one question we don't even know from where they asked. So that's why we cannot take such chance from supply chapter, because supply it's easy to understand and generally we'll expect like we could write them easily. That's why even though we take 1 hour extra, since it is easy for us to pick or to score marks from here, that's why I'm covering each and every point from supply, sir. You might think like for supply only I'm taking so much time, when I'll cover all the other chapters. Don't worry, that's my job to complete. Sir, here the next concept is JV, joint ventures. So joint ventures are most common in oil and gas industry only. JVs, joint ventures. Why they are most common in oil and gas industry means, so they spend lot of money on finding out a viable oil reserve. Like they'll do lot of research finding out where there will be oil reserves and gas reserves. Even when they found a reserve, even if they found a place where they can, where there will be so much of reserve, when they start actual digging there or drilling there the crude reserve may not be compatible for us to use, because beneath the, how to say it is like, in underground maybe the crude oil get mixed with other chemicals as well or with water as well. So okay, which was not easy for us to remove all those things and to separate those things and all. So it's not only finding out oil reserve, even after finding out an oil reserves also, when they dig there or when they drill there, that reserve may not turns out to be useful for them. Okay, so there are so many such kind of instances. So just to reduce their risk, these oil and gas companies will form as a joint ventures and then try to explore or find out these oil reserves. Once they find out a successful oil reserve, then even from the oil which they'll get also will be shared among the joint ventures, just to reduce their risk. So let's say I sent five teams. I sent five teams for finding out a oil reserve. There are chances of happening all these five teams may not find a oil reserve. Even if they find out a oil reserve also, it may not be useful for me. So then the total amount which is spent on these five teams will be lost only for me. So instead of that, what these oil companies will do now, they'll allocate this into some 20 teams, and this 20 will form as a joint ventures. Then not only my money, sir, there are four companies involved here and they become 20 teams. Now these 20 teams will be finding out for an oil reserve. Then the chances of me finding out a successful oil reserve will be high. Okay, so if even if one oil reserve if I found also, I can cover all the 20 related expenses as well. So that's why they'll form as joint ventures generally here. Now what is the concept regarding joint ventures to supply na? So see here, sir, joint ventures generally oil and gas companies only will form. There are A, B, C, D. 4 companies has formed as joint venture. 4 companies A, B, C, D. All the 4 companies formed as joint venture. Now the point is, out of these 4, A acts as an operating member. A acts as an operating member. Operating member na, he is the leader of all those 4. Okay. Now to do an activity, let's say joint venture need 100 rupees. Okay. This 100 rupees will be used for buying plant and machinery or any other goods which they need to find out an oil reserve. So A will bring his 25 rupees and he'll ask from B, C and D also. And B also give 25, C 25, D also 25. The money which was asked from other members is called as cash call. B giving this 25 rupees, na, this is called as what? Cash call. Now the question is, A collecting 25 from other 3 members, that cash calls amounts to supply or not is the question. When it will become supply, na? Sir, now they pooled 100 rupees, na? A brought 25 rupees. The other 3 venturers also paid 25 by each of them. So they pulled 100 rupees. With this 100 rupees, if they buy a new plant and machinery and if it is used for the JV operations, it is not a supply. When it would be a supply, na, A will not buy a new machine. A has already this kind of machines. So instead of buying new machines, A will collect money from all the other 3 venturers, but he'll not buy a new machine. He'll use his machine for the JV operations. Then it has to be treated as supply. So understand, simple thing only. Operating member, when he get cash calls from the other venturers, he has 2 options. The first option is like the money he pulled can be used for buying a new machine and the new machine will be used for JV operations. If new machine is used, if they buy a new machine, then there is no question. The cash calls asked is not a supply. When it has to be treated as supply, na, operating member will not buy a new machine because he already has such kind of machine. So the money he'll collected from cash, the money he collected as cash calls from the venturers will be treated as supply if he uses his own machine. Now you can understand by reading this point, sir. Read it once. Just situation 1 and situation 2. Just read them once, you'll understand. The same example will be given there. There are 4 members in the JV. Each one contributes 100. Total amount of 400 is collected. Operating member purchases 400. Operating member purchases machine for 400 for the JV to be used in oil production. In the above case, cash calls will not be subject to GST since operating member is not carrying out any activity for another for consideration. Whereas in situation 2, 400 is collected. The operating member thereafter uses its own machine and performs exploration and production activities on behalf of the JV. So in the above case, operating member uses its own machinery and therefore providing service within the scope of supply. Here operating member is recovering the cost towards machinery and services from the JV in their participating interest ratio. Hence it is a supply. Hence it is a supply. So next one, sir. This cost petroleum concept, na. Again, that also related to oil and gas companies only. So let's say from IOCL carried out many they have explored so many areas for oil. They did lot of exploration activities and finally they found a oil reserve. Whatever the budget they have, the total money they spend on finding out a oil reserve itself. Now, just because they found out an oil reserve, they cannot extract oil from there. They need license for extraction of oil. For exploration also, they need a permission from government. Exploration permission they got. Across the India, they did research and at one place they found like there is an oil reserve. Once they found oil reserve also, again they need to get license from the government. But the problem is, whatever the money or budget they have, they spent everything on exploring and finding out a oil site itself. Once they find a reserve, they don't have money to pay license fee to the government. So understanding those situations and circumstances, what government will do generally, na, they'll not ask them to pay money. They'll ask them to pay once they recovers the petrol. once they extract the petrol. So now from the oil and from this reserve, let's say in a year they extract some 1 lakh liters of crude oil. They extract 1 lakh liters of crude oil. Out of this 1 lakh liters, they'll first recover their cost. Out of this 1 lakh liters, whatever the company incurred as cost, first they'll recover that. Whatever is the profit petroleum, let's say out of this 1 lakh liters, 40,000 liters went for cost only. The other 60,000 liters is nothing but profit. Out of this profit petroleum, they'll give share to the government instead of paying it in the form of money. Sir, understand, sir? Very clear concept here, nothing tricky here. Oil and gas companies, when they found out a oil reserve, the license fee will not be paid upfront. The license fee will be paid once the oil is extracted. First point. Second one, even after extraction also, how they will pay na? The oil extracted will be first used to recover their expenses which they have made. So the oil used to recover their expenses is called as cost petroleum. After recovering their cost, whatever is the oil reserve available, that is called as profit petroleum. In that profit petroleum, they'll give share to the government. So the question is whether that needs to be treated as supply or not. Sir, government here giving license only. So giving license is a supply. There is no problem with that. But why they are raising a question now? Because the consideration they are getting is in the form of petrol, where petrol is not in the scope of GST. But even though it is not in the scope of GST, consideration can be paid in monetary or non-monetary form. Here there is no sale of petrol is happening. Here the contract which was is there for license only. So it has to be treated as supply. So government taking the license fee in the form of profit petroleum is a supply only. But whether it is taxable, no, it is not taxable, because government has issued a separate notification stating like recovering license fee in the form of profit petroleum is exempted. So it is a supply, but it is exempted. The cost petroleum is not considered. Okay, you can look at this last point. The government share of profit petroleum, which is consideration paid by the contractor for the service grant of license, lease and natural gas, is exempt from GST. Sir, we can call it as exempted only when it has become supply. Since it is supply, then they again separately issued a notification stating it as exempted. Next one, sir, clarification on no claim bonus. Sir, I had taken a medical insurance policy. Okay, for me and for me alone. Okay, and I paid medical insurance premium of 25,000 per annum. Let's say, and I'm in that particular year, nothing happened to me. I was all right. So I was never hospitalized in that particular year. So second year, the medical insurance company giving me a no claim bonus. Since I didn't claimed anything in the first year, second year they are giving me a no claim bonus of 5,000 rupees. So second year I need not to pay again 25,000. I'll pay only 20,000. So the question raised here is the 5,000 which they are paying is like for non-performance of contract. Okay, the 5,000 they are paying me in second year na. Why they are paying me 5,000 in second year? Because I didn't exercise my right in the first year. Sir, understand here. Did I wantedly didn't use that right, or else that situation itself not arranged? That situation itself not arranged. So there is no willful non-performance or tolerance of a contract. So the point here is there is no situation arranged. If situation has been arranged, then I might have used that one. Okay, so while paying insurance premium, if no claim is made by the insurance company provided no claim bonus which will be reduced from them. The question is, deduction on account of no claim bonus can be considered as consideration that insurance to the insurance company for agreeing the obligation to refrain from the act of lodging claim. Am I refraining to lodge the claim? There is no situation to claim. Okay, that's why I didn't made a claim. If there is a situation, maybe I might have made a claim. So understand here, there is no supply provided by the insured to the insurance company in the form of agreeing to the obligation to refrain from the act of lodging during the previous year. Hence, it cannot be considered as consideration. So you cannot take no claim bonus as a consideration received by the insurer for for the insured for not making a claim. You cannot treat it in such a way. Next, in restaurants, sir, in cinema halls, you'll see along with cinema ticket, you'll be getting this food and beverages as well. Whether it has to be treated as a composite supply or not is the question. Let's say if you cannot buy ticket without buying those extra activities in a particular, for a particular show in a particular theater, they will sell the ticket as a combo only. That means you can, sir, these things will happen only when if it is a star movie getting released for premiere shows on the first day shows, or there will be fan shows like midnight, 1 o'clock, 4 o'clock, they'll perform shows. For those shows, to generate extra money, what these multiplexes will do now, they'll sell the tickets as combo pack only. Like generally the ticket price is 300 rupees, but that time they'll sell it for 600, 700. They cannot increase price as per their wish and will. So how they'll recover extra money? By way of making it as a combo pack. So you need to buy popcorn, cool drink, everything along with the ticket. Then they'll sell it for 700 rupees. There is no other option for you except buying the ticket for 700 rupees. In such case, it will become as a composite supply. Otherwise, it will become mixed supply. Okay. So see here, sir, supply of food and beverages supplied as a part of service and independent of cinema exhibition. The supply of popcorn is separate from that of movie exhibition. Then the popcorn or the other things which they provide has to be treated as supply of restaurant related services only. If they are clubbed, then it has to be treated as a composite supply, and the principal supply will be treated as cinema only. Okay, sir, this clarification is simple, sir. For goods, there is HSN code. To find out the tax rates, for goods, there is HSN code. HSN, harmonized system of nomenclature. For every good, there will be 8 digits. Then for services, what codes are there? For service also, there is a 6-digit code called service accounting code. Out of the list of service accounting codes, there is one code given for holding company, holding shares in subsidiary company. A holding company just holds shares in subsidiary company. For that also there is a service accounting code. Now a question raised, just because there is a service accounting code for a company holding shares in subsidiary company. Sir, see here, this holding company just has shares in a subsidiary company. It holds shares in a subsidiary company. For this also there is a service accounting code. What the question raised is, since there is service accounting code, just the act of holding shares itself also will become supplier. That's the question. Okay, they clarified that just because there is a SAC entry, it cannot be called as supply. We can call it as supply only it meets the definition of section 7. Holding company holding shares in subsidiary company does not meet the supply definition given under section 7. So just because there is a service accounting code, we cannot call it as supply of service. Okay, these are the clarifications, sir. So the point which I discussed now, that only clear explanation, sir. They can ask these kind of questions for 7 marks as well. I'll share this one also in your Telegram group. Whether the activity of holding shares by a holding company of the subsidiary company will be treated as supply of service or not, and whether the same will attract GST or not. See here, as per CBIC circular number so and so, securities are considered as neither goods and services. Security is not goods and services, and the definition of services under clause 1 or 2 of the said section. Further, securities include shares as per definition of securities. That implies that securities held by a holding company in the subsidiary company are neither goods nor services. Further, purchase and sale of shares in itself is neither a supply nor supply of service. For a transaction or activity to be treated as supply, there must be a supply as defined under section 7 of CGST Act. It cannot be said that a service is being provided by the holding company to the subsidiary company solely just because there is a service accounting code entry of 9971 and 71 in the scheme of classification of services. So the point which they want to clarify here is, the question is, holding company just nothing it did, just it hold shares in subsidiary company. For this activity also there is a service accounting code. The question raised is whether just since there is a service accounting code for this, can we treat it also as a supply? The answer is very simple. To call it as a supply, that cannot be decided by way of service accounting code. It has to be decided by section 7. Whether this kind of act is covered under section 7 or not. No, it's not covered. Why? Because shares is not a good itself, first thing, nor even a service itself. That is the first point they explained. Subsequently, they explained like just by holding shares, there is no good or service being provided there, so it is not a supply. So even though there is a service accounting code, you need not to bother about it. It is not a supply. So this is one question. So these are institute questions only, which I taken separately and included here. Institute questions only. Next, look at here. Beers Limited. Beers India Private Limited supplies raw material to a job worker. So you know job worker. Who can be called as job worker? Job worker. So job worker na. So see, a treatment or process carried out on some other person's good is called as job work. Let's say I want to start a garment industry. I can appoint some 30-40 tailors as my job workers. So what I can do means I'll provide the machines what they want. I'll send the cloth, I'll send the buttons and whatever the materials needed to him. Now the job worker will do as per my requirements. Let's say I'll send the cloth and I'll give specifications and I'll ask him to stitch the shirts or pants in the way I want. So he'll do that particular act and he'll return to me. For that I'll be paying him job work charges. Nothing but will outsource certain activities to this kind of people. They'll do as per the requirements of principal. So the one who carries the job work is called as job worker. So now see here, sir. This company supplies raw material to job worker to manufacture alcoholic liquor. After completing the job work, 5,000 beer bottles are returned to this company and putting a retail price as 200 on each bottle. Now, for carrying out the job work, they charge rupees 100 for each bottle. Sir, I'll give the raw material to the job worker. He'll do the job work and he'll return the final finished goods to me. For carrying out job work, he'll charge rupees 100 rupees. Now the question is, for carrying out intermediate production process of alcoholic liquor, find the GST liability. So on what amount we need to levy GST? Sir, alcohol is there. Just because alcohol is there, the job work activity cannot be exempted. Job worker is not selling alcohol. He is just manufacturing alcohol. For that we are paying rupees 100, which has to be treated as supply only. Carrying out of intermediate production process of alcoholic liquor for human consumption on job work basis attract GST. So we need to levy how much? 5,000 bottles into 100 into 9% CGST. 5,000 bottles into 100 into 9% SGST. So the total GST liability is 90,000, which has to be paid by job worker. So this case, okay, here what happened now? There is a head office or a corporate office for a private limited company. There is a head office or corporate office for a private limited company. For this company, there is an employee. This employee is under the payroll of head office or corporate office. Now this employee will provide services to branch 1, branch 2, branch 3 as well. It's a simple question only. Understand. Let's say there is a corporate office in Chennai. I am under the payroll of corporate office which is there in Chennai. Now the branches which were located in different places of Tamil Nadu will interact on a day-to-day basis with me. Okay, I'll be guiding them, but I was under the payroll of branches or head office. Head office. So I'll be giving directions on a day-to-day basis to the branch offices. Now the question is, me being employee of head office providing services to branch na, is it need to be treated as supply? That is the question. So for that the explanation given is, sir, it's not me giving service to the branches, it's head office giving service to the branches. Me acting as a representative of head office. So me, if any consultation if I am giving to the branch officers, that's not in the employee capacity, I'm giving in the capacity of company. I mean, so the head office is giving services to the branch offices. For that, the head office can raise invoice to the branches. Okay, that's what explained here. Let me underline that. The service provided by such employee to other units would be treated as the transaction between the corporate office and its units located in the other states. So the corporate and if its units are distinct persons, the transaction would be covered under Schedule 1 of CGST Act. Supply of goods and services between related persons or distinct persons when made in the course or furtherance of business, and therefore they becomes taxable. So they are taxable. The valuation of the transaction includes all costs. So what has to be included in that particular value? Yes, it is a service between head office and branch office. For what cost we should take? The cost na, all the my salary cost has to be added and other overhead related expenses, all those has to be accounted, and that would be the value of such service. Additionally, corporate office raises an invoice for the allocation of expenses such as rent, travel expense. Everything will be included and will be billed to the branch office. That would be treated as supply only. So this case, whether GST is applicable on services or assistance rendered by the court receiver appointed by the court. Sir, there are two brothers, sir. They're fighting for one property. Okay. Finally, the court decided like the property should go to elder brother. Court decided. Now, court not just give the verdict, it will send a court receiver. He will go into the ground and will talk to the people and make arrangements that the property will actually passes on to the elder brother. Now understand, court observed that Schedule 3 provides that services provided by a court tribunal is neither supply of good nor supply of service. So in Schedule 3 we discussed like Supreme Court, High Court, tribunal services are not a supply. But here the service is not given by court, given by whom? Court receiver. So court receiver should implement orders of the court and functions under the supervision and directions of the court. Hence, office of the court receiver is an establishment of High Court through which the orders issued by the court. Therefore, the services of court receiver are also to be considered as service provided by the court. Okay, so let's say court ordered like I need to pay damages to some person 20 lakhs. What court receiver will do? He'll come to me after the court time. I mean, in the coming 10 days, he'll come to me and he'll collect 10 lakhs from me and will pay damages to the counterparty. For that, the court receiver also will get some consideration. Will be paying some fees to the court receiver as well. So the amount which are the fees which was paid to court receiver amounts to supplier. No, court receiver is also part of court only. So the service provided by court receiver is also to be treated as services provided by the court only. Next, this we discussed, sir, regarding external storage battery with UPS constitute as a mixed supply. This was asked for 7 marks in the last attempt. This is the answer we need to write. Okay. So this also we know. Tata Consultancy Services sells softwares. Whether the software is a good or service. Simply they said, if it was kept in a hard disk, CD, or any tangible form, if the software gets, then it needs to be treated as a good. If it can be downloaded from the internet, then it has to be treated as a service only. Next, Delhi Transport Corporation versus Commissioner of Service Tax. Previous service tax case law, sir, but still relevant in GST also. That's why it was included in the institute book. So simply, the contract is like, sir, within this case law, there is a second case law also linked. That's why it became important. First, we'll talk about the first case law. So the contract is like, sir, actually, I'm providing services. Okay, I'm providing services to a company. I'm doing audit for a company X Limited. Generally, audit services are under FCM. That means me being an auditor, I have to pay GST under FCM. But the contract which we entered is like, on these particular services, tax has to be paid by recipient only. Like that, we both entered into a contract. Okay. Now, who is responsible to pay tax? Recipient only responsible to pay tax. Now, there is a dispute arised between us, and me didn't pay taxes. Even the recipient also didn't pay taxes. Now, they went to both of us went to the court regarding the dispute. What the recipient is saying now means, RCM or this kind of contracts we cannot exercise. We cannot put such kind of contracts on our own. The liability given by the statute cannot be transferred from one person to another. Like that, a point has been raised. But Supreme Court said like, no, it's not like that. The liability, even though it was given by statute, if there is an explicit agreement between the parties, it could be transferred from one person to another person. So, the contract which we entered, like the liability to pay GST has been transferred from me to the other person, is valid contract only. We can do such a way till that one particular case study is over. Okay. Now the second thing is like, the same way Delhi Transport Corporation also agreed contract with certain advertising agencies. So on Delhi Transport Corporation, on their buses, some companies are advertising their products. So what Delhi Transport Corporation agreed na, on those advertisement services, whatever the service tax comes, that would be paid by the ad agencies only, not by the Delhi Transport Corporation. Like that, the liability of Delhi Transport Corporation has been shifted to ad agencies. Now, after so many notices also, ad agencies are not paying GST. Not paying service tax. Now, the service tax department people approached Delhi Transport Corporation and they started seizing Delhi Transport buses. Okay, now Delhi Transport Corporation went to the court stating the previous case law. Like in previous situations, if you observe, the court itself said like, there can be such kind of contracts where the liability of one person can be shifted to the other persons and it's a valid contract only. Now Supreme Court observed this and said like again, yes, there is a contract to shift liability from one person to another. That is a valid contract. We are not questioning about that. But if the other party fails, then obligation or the liability obviously will again fall on the original person only. Okay. If the terms are good, I can transfer my liability to you. No problem with that. But if you fails, obviously the original liability will again falls on me only. So Delhi Transport Corporation is only responsible for payment of service taxes. So it is responsible to pay taxes. That was only here. The decision, High Court held that undoubtedly tax burden could be transferred by the contractual arrangement to the other party. However, on account of such contractual arrangement, the SSC cannot ask the revenue to recover the dues from other third party or wait to discharge the liability till it has recovered the amount from contractors. Therefore, appellant was SSC and statutorily bound to not only get itself registered but also submit the required returns. It can enter into such kind of contracts, but it was bound to pay when the counterparty or the third party made any default. Okay, by this we have successfully completed the second chapter, sir. Okay, we're starting with this charge and composition. So section 9 is about charge, and whereas section 10 is about composition scheme. So if you look at the flow, the first thing we'll decide is good and services. Once we decide if it is a good and service, then we'll decide whether it fall under the definition of supply or not. Once we clarify that it is supply, then we'll think of charge. Charge na, who has to pay the tax, whether it is the supplier or recipient. Okay, the one who is liable to pay tax is decided in this chapter, charge. Additionally, composition scheme is about an alternative scheme that we'll discuss again afterwards. So first we'll discuss about definition, sir. Exempted supplies. Sir, in this chapter, I'll not much focus on charge. I'll focus only on composition scheme. So only which were important only will be going to cover in charge. So coming to exempted supply. So exempted supply means there are 3 points, sir. You should remember for all the first one. Supplies which are exempted by way of notification. I mean, generally the exemptions which will come in the exemptions chapter: charitable institutions, healthcare, education, artist related, government related services, agriculture related. Okay, all those are exempted supplies which were issued by way of notification. All these are grouped as a chapter for us. First one. Second one, nil rated supplies. Nil rated na, these are essentials, most essential for our day to day living. So those kind of supplies were rated as nil. Let's say for example, salt, edible oil, okay, salt, cooking oil. So these are most essential things now. So for them, the rate itself is given as nil. In the rate chart, along with HSN code, they'll give description and all. There itself, the rate was mentioned as nil. So if rate itself is given as nil, then they are called as nil rated supplies. Third one, non-taxable supplies. Non-taxable supplies, now the supplies of goods related to which there is no power to levy GST itself, such as like petroleum products and alcoholic liquor for human consumption. So exempted supply, the broader meaning is like it consists of three items: the supplies which are exempted by way of notification, nil rated supplies, and the third one is non taxable supplies. All these three together we call, I mean, all these three we call it as exempted supply. Nil rated, now you could see tax rate itself is nil. Nil rate na tax rate itself is nil. They are part of exempted supplies. Sir, generally we consider nil and zero rated are same, but under GST nil and zero are different. Nil rated supply na, the rate itself is nil. Zero rated supply is not nil rated. Zero rated supplies are not same. They will have a tax rate. Even though we call them as zero rate, actually they'll have a tax rate. Let's say if you take example of this mouse, if you go and check in the rate chart for this mouse, there will be a tax rate. So it's not nil rated. Then why, when we can call it as zero rated? If the same mouse sold in within India, then the tax rate which is mentioned in the chart is applicable. If it is exported, then on this mouse there will not be any GST, so we'll apply zero rate. Okay, even though it has an actual rate, since it is being exported, we'll apply a zero rate. It is called as zero rated supply. So when it is sold within the country domestically, taxable supply. Okay, if we export, instead of the actual rate we'll use zero rate. That's why we call them as zero rated supplies. They will have a tax rate, but no tax is levied on export or supplies made to SEZ. So these are part of, even though they are zero, they are part of taxable supplies. But nil rated na, they are not taxable supplies. They are part of what? Exempted supplies. So nil, zero are not same. Nil is different, zero rated is different. Next, UTGST Act. I discussed this already in the yesterday's class only. There are 8 union territories, sir. But of 8 union territories, 3 union territories, Puducherry, Delhi and Jammu and Kashmir are the union territories, are the 3 union territories which are having state legislature. For them, SGST Act only applicable. There are 5 union territories: Andaman, Lakshadweep, Chandigarh, Ladakh, Daman and Diu, Dadra and Nagar Haveli. These are union territories and they function like also union territories. For them, UTGST Act is applicable. Next, Section 7 of IGST Act defines interstate supply. What is Section 7 of not CGST Act, sir? Section 7 of CGST Act is supply. I am talking now about Section 7 of IGST Act, which defines interstate supply, where location of supplier and place of supply are in two different states, union territories, or one state and one union territory. It's not just seller and buyer. It's about location of supplier. Location of supplier na seller place. Place of supply na nothing but destination. Where location of supplier and place of supply are in two different states or two different union territories or one state and one union territory, then it is interstate. It's not only that interstate, the other points are like second one. If you see, imports are always interstate. That's why yesterday, we started even customs also. No? That time when I said like on customs we are levying IGST. Why not CGST, SGST? Na? Here if you look at the definition, they are treated as imports or straight away treated as like what? Interstate supplies. Third one, sir. Location of supplier is in India and place of supply is outside India. Supplier in India, destination outside India. Then what we call generally it as export. But if you look at the actual export definition, sir, there will be other points also, especially with respect to service. By satisfying only these two conditions, we cannot call it as export. The third condition is like the consideration should be realized in foreign currency. Then only we'll treat it as export. So that's why in some cases, location of supplier will be in India, place of supply will be outside India, but still they may not be an export. But in such cases also they should be treated as what? Interstate only. So they are not using the word export here. Export na they'll check even for consideration. Only when consideration is realized in foreign currency, they call it as export. Let's say, sir, me being a supplier in India, holding company is in India only. So holding company agreed to pay me the consideration, which was in India only. But the service I need to provide is to the subsidiary company, which was there in US. So service I am providing in US. So place of supply is in US. Whereas supplier being me is in India only. But whereas the consideration will be paid by the holding company, which is in India, which was not in foreign currency. So we will not call it as export, but we call it as what? Interstate only. So understand, it need not, just because it is mentioned here, it need not to be an export. It is just an interstate supply. Next, supplies to SEZ developer or SEZ units. So supplies to SEZ are also called as interstate. The last fifth one, any other supply which is not intra shall be classified as what? Interstate. So there are 5 points under interstate supply definitions. First one, location of supply and place of supply are in two different states, two different union territories, one state and one union territory. Second one, imports. Third one, you may think as export, but it need not to be export always. The supplier is in India, place of supply is in outside India. Fourth one, supplies to SEZs or supplies from SEZs. Fifth one, any other supply which is not intra, then it will be called as interstate only. When it is called as intra, where location of supplier and place of supply are in same state and same union territory, then it is called as intrastate. So it's not just seller and recipient, supplier and recipient. To decide intra and interstate, we should consider location of supplier and place of supply. Then this definition is important, sir. Aggregate turnover. Aggregate. Sir, understand the basic meaning. Turnover means what? Sales. So we'll take sales. Aggregate meaning total. So aggregate turnover is nothing but we'll calculate total sales. Okay. So while calculating this total sales or aggregate turnover, when a person is having multiple branches with multiple registrations, yes, they are treated as distinct persons, but they are linked with the same PAN. So aggregate turnover has to be computed PAN wise, not GSTN wise. So that means if I am having 6 branches, aggregate turnover is nothing but the total of all the 6 branches. It's not just one branch will be taking or state wise will be doing. Aggregate turnover has to be computed PAN wise. So all these branches turnover has to be included. Aggregate turnover has inclusions as well as exclusions. Sir, you need not to remember it much more, like you'll understand simply only. Sir, sales whether it is exempted, taxable or non-taxable, all these are for GST related only. We are considering them as taxable, exempted, non-taxable. But from pure accounting perspective, first all these three are sales only, no? Whether it is taxable, exempted or non-taxable or export, whatever the name you call, for accounting side these are just sales only. For tax purpose only, we are again further classifying them as taxable, non-taxable, exempted, zero rated, all these things. So you are calculating here what? Your total sales. When you are calculating total sales, you don't bother about whether it is taxable or exempted. Take all the total only. So that's why you'll include aggregate turnover includes taxable, exempted, exports, and even supplies made by agent on behalf of principal. If on behalf of me, if my agent supplies, that also will be included in my turnover. And the last one, sir, interstate supplies between distinct persons. If any supplies are made, any stock transfer, that also has to be treated as a sale only. So aggregate turnover has 5 inclusions. What are those? Taxable, exempted, exports, between principal and agent, and interstate supplies between distinct persons. All these has to be added. And there are exclusions as well, sir. What we need to exclude? Sir, first class only, yesterday only I said we wrote entry for normal GST, a sale entry including indirect taxes. There, what we wrote, sir? While recognizing sale, we didn't include a tax. We did separately created it as GST payable. Okay, that means in no case will include GST into the sale value. That's what they are saying. You cannot include GST related taxes into the turnover value, because the basic accounting entry itself says like you cannot include tax into the sale value. Next one, value of inward supplies on which tax is payable under RCM. So first look at here. We are calculating total sales or total purchases. Total sales. So see here, value of inward supply. Inward supply itself means it is a purchase. So why include your inward supply into your sales total? So you don't include your inward supplies. So first, why that confusion itself is arised? Why they need to tell it separately? Don't include purchase, because here the tax is payable under RCM. So generally sales na you'll consider like sales means on them you need to pay tax. But this is one transaction which is your purchase, but on that also you need to pay tax. Since you are paying taxes, you may mistakenly add it into your turnover. For that reason only they are clearly saying like, even though you only have to pay tax, I mean recipient only have to pay tax on them, but since it is your inward supply, that means your purchase, you cannot add it into your, you cannot add this into your aggregate turnover. So simple things are two things you shall not add. Once first one GST that I cleared in the first class itself with the accounting entry. Second one, sir, you need not to read the full line also. Half line if you see also you'll understand. Value of inward supply. That means it is nothing but your purchase. How can you add it into your aggregate turnover? You don't bother about who is paying tax. First of all, conceptually, whether it is your sale or purchase, don't add it into your aggregate turnover. Third one, sir, value of exempt supply. Okay, actually we said like exempted also we shall add, but here they are saying like you can add any exempted supply, but except where the service is by way of offering loans and advances and the consideration is in the form of interest and discount, such exempted supply alone need not to add. Sir, me being a chartered accountant running a consultancy service, tax consultancy service, from that I am generating revenue of 40 lakhs. Some are taxable, some are not taxable. Okay, along with that I have some surplus money which I gave it for interest, which I gave as loan. From there I got interest some 1 lakh rupee. From there I got interest as 1 lakh rupee. That 1 lakh rupee I need not to add it into my aggregate turnover. So while calculating aggregate turnover, interest or discount which is exempted need not to be included. All the others has to be added. Okay. So aggregate turnover has to be computed pan wise. It includes taxable, exempted, exports, okay, between distinct persons if anything happened, or supplies made by agent, all these outwards has to be added. What we shall not include? GST you shall not include, inward supplies on which tax payable under RCM you shall not include, and even an exempted supply of offering loans and advances where the consideration is in the form of interest or discount, that you shall not add. Next, special category states. Here there are certain special category states, sir. Uttarakhand, Assam, Sikkim, Kashmir. Sir, these special category states are the states which were mentioned in the constitution as special category states. There is nothing with GST here. I mean, council or government is not notifying here as special category states. They were mentioned as special category states in constitution itself. Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Himachal Pradesh. Nothing but the special category states are called as what? US Tamanna. Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Himachal Pradesh. Yogesh, some song playing in your mind, huh? From Jailer. Okay, section 9, sir. Sir, section 9. Sir, understand? 9.3, I mean, when you go to 9.3 and 9.4, they'll say like the transactions on which RCM is applicable. Okay, they'll talk about transactions on which RCM is applicable is mentioned under 9.3 and 9.4. Now, my question is, where they mentioned the goods and services on which FCM is applicable? They never talk about FCM specifically, but they talk about RCM specifically. Why? Because by default, the lawmaker thinks like tax has to be paid by supplier. So tax payment made by supplier is a default thing. When there is any exception to the default rule, that alone will be set specifically. That's why RCM transactions are set specifically. Nowhere they will mention FCM transactions specifically, because by default the law is based on FCM. So whenever there is a deviation from the normal rule, then they are mentioning those RCM transactions under 9.3 and 9.4. So what 9 subsection 1 says, a tax called CGST is levied on intrastate supply of goods, services, or both. When you go and refer IGST Act, then it is mentioned as like a tax called IGST is levied on interstate supply. Since it is intrastate, they are mentioning it as CGST, except alcoholic liquor for human consumption. Why? Because the GST definition itself is said like tax is levied, GST is a tax levied on supply of goods, services, or both, except alcoholic liquor for human consumption. So government has, the GST has no right to levy tax on alcohol. That's why it was excluded. And what tax will be levied? Okay, you said like tax will be levied on intrastate. On what tax will be levied? Whether on the weight of the good, dimensions of the good, quality of the good. What is the parameter for levying taxes? Value is the parameter. So tax is levied on value, which is computed as per section 15, and using the tax rates as notified by government. However, the maximum tax rate is 20% only. If it is IGST, the maximum tax rate is 40%. So the maximum rate which is applicable is currently practically applicable is only 28%, but they can increase up to 40% maximum. Okay. Next, 9 subsection 2, GST on petroleum products. HP man, high speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. On them, it will be levied only from the date council recommends. To levy tax on alcohol, to levy GST on alcohol, the constitution itself has to be amended. To levy GST on petroleum, constitution need not to be amended. Just council has to decide. Okay. Next, 9 subsection 3, RCM on notified goods and services. RCM is applicable. RCM applicable now. Who has to pay tax, sir? Recipient only has to pay tax. Same way 9.4 also, RCM where supplier is unregistered and they are notified suppliers, then also recipient only have to pay tax. So if you see, okay, before going into 9.3, sir, you should understand who is called e-commerce operator and who is called OIDR. OIDR and e-commerce operator are not the same. In our mobile, whatever the applications we see, majority, if you differentiate, half will go as OIDR and the other half will come as e-commerce operators. Amazon is an e-commerce operator. Flipkart, Amazon, Myntra, Swiggy, Zomato, all these will come under Ola, Uber, all these will come under the e-commerce operator. Abibus, Redbus, okay, these hotel booking apps, all will come under the e-commerce operator. E-commerce operator, they own, operate, or manages an electronic commerce platform. Either they own, they operate, or manage. It includes business that facilitate buying and selling of goods and services through their platform. They themselves will not buy anything, will not sell anything. They'll act as a mediator in many cases. Or else, even though they sell on their own, which requires physical delivery of good or physical delivery of service. But when it comes to OIDR, there is no physical delivery. Everything will be, the service will be completely provided only digitally. Okay, sir, let's say you are using Instagram. Whether from Instagram side, any service will be provided physically for us? No. What are the service they provide? Everything digitally only. All the social media apps, all the OTT platforms, all the content editing platforms, or the data storage platforms, all those services which they provide are only digitally. But when it comes to e-commerce operator, yes, they may initiate the good and service. Initiation may be through digitally, but ultimately there is a physical service as well. Physically will be involved. Let's say you book a ticket from Book My Show. Book My Show, okay, if you buy a ticket from Book My Show, then physically you need to go to theater, no? So that physical involvement for delivering the service is needed. Then they are called as e-commerce operators. Whereas OIDR, the service will be provided digitally only and it is highly automated. Such service cannot be provided in the absence of IT. Then that is called as OIDR service. Okay, goods on which RCM applicable. Sir, here there is a code for it. This is the code. BTS couple. This is for the goods on which RCM is applicable. B na BD leaves. BD leaves sold by an agriculturist to a registered person. On that BD leaves, not the supplier, recipient has to pay tax under RCM. B na BD leaves. T for tobacco leaves. Again, tobacco leaves sold by agriculturist to a registered person. On that tax has to be paid by recipient. I mean, the one who is buying the leaves has to pay instead of the supplier. Next, yes na silkian. Sir, in 7th, 8th class, it will come. Like there is a chapter from how silkworm will make cocoons, from that cocoon how silk will be extracted, all those things. It's there na. So if a agriculturist again, if he is selling silk yarn to a registered person, on that also the buyer only has to pay the taxes, recipient only has to pay the tax. Next, CO na cotton. Cotton, raw cotton. Again, the cotton produced by the agriculturist is sold to a registered person. On that also tax has to be paid under RCM. Next, cashew nuts. For C only, cashew nuts. Again, cashew nuts sold by, sir, all these crops are all even called as commercial crops. BD, tobacco, silk yarn, cotton, cashew nuts. There are, the crops can be divided into two types: commercial crops and normal crops. When someone is cultivating vegetables, fruits, or else like the nut um, pulses, then they are called as normal crops. When they cultivate this kind of tobacco, silk yarn, cotton, cashew nuts, they are called as commercial crops. So with respect to these one, cashew nuts and cotton, where the agriculture is selling these goods to a registered person, on that also RCM is applicable. Next, U for used vehicles or seized vehicles. Sir, in government offices, police stations and RTO offices will find these used and seized vehicles, where government is selling those used and seized vehicles through an auction. Then the buyer who is buying those goods will only have to pay tax under RCM. It's not the government. Government will seize so many vehicles. Even GST department will also seize vehicles when you are not, I mean, when the person is not carrying a e-way bill or proper documents. When those seized vehicles, when they were not taken over, when they were not claimed by any person, then after some time the government will auction them. In auction, whoever buys those goods only have to pay tax under the RCM. Used seized vehicles. Next, P for priority sector lending certificates. Priority sector na sir, RBI, in order to promote giving loans to farmers, education loans, sir, no bank thinks like farm loans and education loans are profitable. Think from banking business perspective, farm loans and education loans are not profitable, because education loans in India, if you look at education loans, why banks were not, I mean, not open to education loans as they are open to the commercial loans? Because education loans repayment is, or education loan turning out into NPA is very high. Let's say if someone took education loan and if he didn't clear, then obviously he will not repay the loan. They'll simply postpone that loan and all. But government cannot simply encourage banks in giving commercial loans and discouraging these education loans and farm loans. That's why RBI has introduced certain conditions, like every bank has to give certain percentage of their loans on priority sector. Priority sector na this whether this that kind of concept is there in Tamil Nadu or not. Women self-help groups. Women self-help groups. There are some 10 women will form as a group and government will be giving bank loans to them. In Andhra Telangana we call it as Dwakra. Okay, the group names are like, but generally they are called as self-help groups. So I mean, the government will give them some capital to start some kind of small scale industries on their own for creating self-employment to the women. Okay, so those women self-help groups and education loans, farm loans, these will fall under the priority sector. But in India, if you see, sir, SBI is one brand. SBI, or else like what are most popular banks in Tamil Nadu when you go to rural areas other than SBI? Indian Bank. Okay. So those public sector banks are only mostly rooted with the rural areas of any way. So like in Andhra, there used to be Andhra Bank also. Now it got merged into Indian Bank. Okay. So let's say same way SBI also. So in many rural areas we'll find this kind of banks. So majority of farm loans, majority of education loans and the self-help group loans are only with the PSUs. There are some other private banks also which will not have much more businesses in the rural areas. So if priority sector, if there is some percentage has to be met, which would be met easily by the SBI and other Indian banks kind of, but it would be so tough to meet for ICICI or HDFC. So then RBI has introduced one more option, like from this SBI and Indian bank, when they have more loans in priority sector, they can transfer the credit of such loans to the other banks by way of issuing it as a certificate. Okay, for priority sector loans which they given, they'll convert it into points. So for the additional points, after meeting their requirement, whatever the excess percentage of loans they are having, they'll convert into certificates and then sell it to the other banks. So other bank, even though it didn't give actually loans to the priority sector, but it can take the credit of other bank by paying some money to the selling bank. Okay, so now priority sector bank, if any priority sector certificates are being sold, on them also RCM applicable. It's not the selling bank, the buying bank has to pay tax under RCM on priority sector lending certificates. This is P. Then L is for lottery tickets, where if it is a lottery organized by state or approved by state, if lottery tickets are sold by government to agents. So government will not sell, even though it was a government organized lottery, government will not sell tickets directly to the public. Government will sell the tickets to agent, agent will sell it to the public. Agent to public FCM only. But when government selling tickets to agent, it's not the government who pays tax, it's the agent who has to pay tax under the RCM. Next, E for edible oil. Where any, sorry, essential oil, sir, nothing but edible oils only. Any unregistered person selling those oil to registered person, essential oil na cooking oils only. Okay, if they were sold by an unregistered person to a registered person, on them also RCM is applicable. So next one, sir, RCM for goods. M for first one, sir, music composer, photographer services, where a music composer or photographer providing services to, sir, in the book material also it will be in the same order, you can follow them. First one, music composer or photographer. Sir, do you watch 96 movie? Okay. So now my point is, like, there in that movie Vijay Sethupathi going across India, only problem with that movie for me is like how he could earn money. What is the source of money? The source of money is like he'll take those photographs now. So those photographs he'll give it to various magazines or to various websites. So the wallpapers which we use on our mobiles or desktops, okay, those companies will buy those images even for movies also. Let's say if there is a scene in a movie like a tiger chasing a deer, okay, if that scene is needed, if at all this photographer has that kind of shot, then the producers will pay to this person and take that particular footage. Or else, like, if in a movie if there is a scene which is needed like lava erupting from a mountain, so now will the producers will go till that mountain and will they wait till the lava erupts? That and all will not happen, no. So they'll buy already existing footages from the photographers. For that they'll be getting the royalty. Second one, same way, music composers. So music composers, the private music or album composers, they'll be selling their tunes or they will be selling their songs to the distributors. So in such a way, these music composers and photographers will either transfer or permit the usage of their copyrights. For that they'll be getting the royalty. On this service RCM is applicable. On this service RCM is applicable. Not the composer nor the photographer will pay tax under RCM. The one who buys them has to pay tax under RCM. This is about the music composer and photographer services. Okay. Next one, motor car. Renting of a motor vehicle, not motor car, renting of a motor vehicle. But this renting of motor vehicle has to be made by a person other than body corporate. Body corporate na whom? Company, LLP are called as body corporates. Other than company and LLP are called as are not called as body corporates. Let's say an individual owns a motor vehicle. he is giving this motor vehicle on rent to a body corporate. So understand here, the motor vehicle has to be given on rent or lease by a person other than body corporate to a body corporate. Understand? Other than body corporate to a body corporate. That means an individual, if he is renting his motor car to a company, covered here. Okay, an AOP giving it motor car and rent to a company, covered here. Okay, a motor vehicle has been given on rent by other than body corporate to a body corporate. First thing. Second one, the contract should be in such a way like that the contract cost should be inclusive of fuel cost. Okay, the contract can be agreed in two ways, sir. Like they are saying, like whatever is the fuel cost that will be paid by the recipient only, and in addition to that, they'll pay supplier monthly 30,000. If that is the case, the contract cost is not inclusive of fuel, so this clause is not applicable. So to apply this principle, I mean to cover under RCM, the contract should be inclusive of fuel cost. Whatever the amount they are agreed to pay, either 50 or 60 or 70,000, that amount includes fuel cost as well. Second one. Third one, the motor vehicle which we are discussing should be a passenger transport vehicle. Should be a passenger transport vehicle. So nothing but, sir, I have 6 cabs in my individual capacity. I am giving these 6 cabs on rent to a software company. Why? For what this company will use? To pick their employees from their home and to drop them at their residence. For that purpose, a software company is using. So I am giving motor vehicles on rent to a body corporate, passenger transport vehicles, and the contract I agreed should be inclusive of fuel cost. Then on this RCM is applicable. So whatever the rent or hire charges they agreed on them, GST will not be paid by me supplier, will be paid by the recipient software company. Okay, that is about the motor vehicles. Sir, for M we covered 2. One is music composer, photographer. Second one is motor vehicle. Next, A for arbitral tribunal. Arbitral tribunal, only one thing should pop into your mind. Do you have this program? I mean, I don't know the program name in Tamil. In Telugu, they are Batku Jetka Bandi. Like two wife and husband disputes will be there. So they'll come into the show. Uh, uh, Salvadala Mumbai. There are 3-4 shows in Telugu actually. Gemini TV, I mean Sun Network, there it is Gemini. There for them there is one show. For Ma TV, Star Network, there are another show. The same concept. Okay, now it was coming even in like online also. Every day, like at least one reel from that show will come. Did you get married? Na? Then she'll reply first, second, third. That was popular meme actually in Telugu. First, second, third. Oh no, like one female comes to the show actually. Okay, so the anchor asks like, "Did you got married?" Then she'll ask like first, second, third. Okay, so arbitral tribunal nothing but, so if you, I didn't watch many shows, are like to know maybe that also 10, 50, 10, 12 years back I watched one show. At last they try to sort out the issue. Okay, sorting out is nothing but here arbitral tribunal. Arbitral tribunal, their main focus is not to decide who is right, who is wrong, not to decide who is right and who is wrong. They try to sort out the issue. Whereas judiciary tries to decide who is right and who is wrong. Whereas arbitration, they'll not think about who is right, who is wrong. They'll try to sort out the issue. Arbitral tribunal means nothing but there is a lawyers, lawyers will be empaneled there, sir. The both disputed parties will select from the arbiter, I mean from the lawyers. I select one lawyer, the other party will also select one lawyer. Instead of we both discussing, both these lawyers will go and discuss, will sort out the thing for some particular amount or some particular damages. So that is called the arbitral tribunal services. I need to pay some amount to my lawyer. Here lawyer is not arguing for me. He is providing me arbitral tribunal services. On that service also RCM is applicable. Sir, supplier is lawyer. But on the service he provided, tax has to be paid by me being a business entity. Arbitral tribunal services. Next one, sir, other services. Other services, I wrote a book and the usage or copyrights of the book has been given to a publisher. So these days books are not much popular, but if you look at the, so Mm. The whole Avengers and the everything has been developed from the comics only. So think of the other perspective, how much royalty that they might have got. Okay, so understand, so an author wrote a book and the story has been given to the publisher for a royalty amount. It's not his responsibility to print the books and to sell them. Author just write a story or write a book and the content will be given to the publisher. Now publisher will pay some royalty to the author. So on this service also RCM is applicable. Not the other. Publisher has to pay tax under RCM. However, at this particular point only, I mean with respect to other service only, there is an option like if author wants to pay tax under FCM, he has the option to pay tax under FCM. But when we discussed about music composer, arbitral tribunal, motor vehicles, there is no option to pay tax under FCM. It is always RCM only. But when it comes to other services, author has both the options. Either he can go with the RCM option or he can pay tax on his only by FCM option. For that reason, if he wants to exercise the FCM option, author should be registered and he should separately file a declaration stating that I will only pay tax under FCM. Once an option has been filed, it cannot be withdrawn until the expiry of 1 year. This is about the other services. Okay, sir. For M, there are 2 points: music composer and motor vehicle. For A also there are 2 points: arbitral tribunal and other services. Then for D, director services. Director providing services to a company covered under RCM. It's not director, company has to pay tax under RCM. Okay, sir. Here there is an explanation needed, sir, where the amount paid to director may be even salary also. Certain cases, employee himself will act as a director of the company. So the amount he received from company may be salary also, but salary is covered under negative list in Schedule 3, supply chapter. Salary is covered under negative list. Then how you treat? Then they linked it with income tax. If TDS is deducted under section 192, then it is salary, not a supply. If TDS is deducted under 194J, then it is director services. That amount you should treat it as supply, on that RCM is applicable. But director service, the link is given to what? Income tax TDS. If TDS is deducted under 192, then it is salary, not a supply. If TDS is deducted under 194J, then it is professional services, I mean director service only. It is taxable under RCM, director service. Then, sir, you go to direct selling agent service. Sir, these direct selling agents, nothing but for banks, they'll be acting as agent. They'll call like, so every day I'll get 3-4 calls like we are calling from HDFC Bank, we are calling from Bajaj Finserv, we are calling from Tata Finance. Like we'll give special offers or special loans to chartered accountants, professionals like that. They'll be calling. Why they have so much love? So if I am having need of money, okay, no friend will come, relatives will not come generally, but these people will be calling every day. Okay, and even like they call like whenever we have a big transaction in credit card, they'll call. Sir, please convert into EMI. Okay, the questions if you see, no, I don't need. If I say, they'll ask again, sir, why you are not converting into EMI, sir? Low interest only, That's what they'll talk. So why they are doing? Whenever they convert or whenever they bring business to the bank, they'll get some commission. Those people are called as what? Direct selling agents. Even you could find in railway stations the people applying for credit cards and all. They'll ask your phone numbers and all. They'll try whether you are eligible for credit cards and all. In shopping malls, in railway stations also, you'll find these executives and all. All those are direct selling agents only. Whenever they sell a bank product, they'll get some commission. So it's not low on us. They're working for bank to get their commission. So when direct selling agent, individual direct selling agents are here, that is important. That agent should work individually, not as a company, not as a firm. If individual direct selling agent providing services to bank, financial institutions, NBFCs, then RCM is applicable. Next, so D also covered, sir. For D also we got 2 points: directors and direct selling agent. Next, government, where government providing services to business entity, central government, state government, court, tribunals, assembly of parliament. If these people are providing services to any business entity, on them RCM is applicable. However, there are exceptions, sir. 3 exceptions. First one is renting of immovable property. If there is renting of immovable property, on that RCM is not applicable. Why means it is covered as a separate point. Renting of immobile property is covered as a separate point. That's why it is excluded here. Second, coming to transportation, sir. The people are thinking twice to buy ticket itself. If the payment of tax option also given to public only, they don't even buy ticket properly. At least in south they'll buy tickets properly. If you go Bihar and all, they'll not buy tickets also properly. So if ticket itself they'll not buy properly, if the option to pay tax also has been given to public only, they'll never pay tax. So that's why there is no RCM with respect to that. With respect to transportation, FCM only. The same way with respect to postal services also, post office services, RCM is not applicable, transportation RCM is not applicable. Whereas renting of immobile property excluded here but covered separately in some other entry. Okay, next GTA services. G na G for GTA services. GTA na goods transport agency, which can be called as goods transport agency, where the goods are being transported using a motor vehicle, transport goods using a motor vehicle, and issues a consignment note. Consignment note na the transporter has to issue as a letter stating like, I have taken the possession of these goods and I'll safely deliver at your place. Like that, he has to issue a consignment note. Only if these two things are happened, then only it is called as GTA. So let's say you want to transport goods from one place to another. Randomly, you asked an auto guy and you agreed to pay some 1000 or 2000, and then he loaded your goods and taken to your house. That is not GTA because he didn't issue any consignment note. Only when he issues a consignment note is called as GTA. So GTA providing services to any of these people, factory, society, cooperative society, company, firm, or any other person registered under GST, RCM only applicable. It's not the GTA, the factory, the cooperative society, or the company, or the person registered under GST has to pay tax under RCM. However, here there is an option, sir. Just like as other, here also GTA has an option to pay tax under FCM. If GTA registered and files declaration, then GTA has option to pay tax under FCM. If option once filed, it cannot be withdrawn until the expiry of 1 year. If they provide service to unregistered person, if he is individual, actually it is exempted. Individual it is exempted itself. If he is unregistered company, if let's say GTA provided services to an unregistered company, then RCM only applicable. You're saying like RCM, he's unregistered now, how he can pay tax under RCM? When you go to registration chapter, there it said like when RCM is applicable to you, you need to register compulsorily. Understand? I'm a GTA, you're an unregistered company, I provided services to you. That means you need to pay tax under RCM. But you are saying like I'm an unregistered now, how I can pay? Go and check registration chapter. It clearly said like since RCM applicable to you, you have the liability to register. You should go and register and pay tax under RCM. Renting of immobile property services. Sir, here the immobile property is given on rent by government or by any other person. It's not only by government, even government or by any other private person also. If immovable property has been given on rent by government or any other person to a registered person, then the obligation to pay tax is on recipient only. However, here there is an exemption also, sir. If renting of immobile property is given to a registered person, let's say I have taken a property on rent in Chennai. Okay, I'm a registered person. I have taken a property on rent in Chennai. That means actually what? I need to pay tax under RCM. But the property which I taken on rent is a residential property. Just because residential property, it's not exempted. It should be a residential property and I should use it as residence. Sir, in some cases, residential property may also be used as a commercial place. Okay, majority of the CA officers, lawyer officers, they'll turn their residence itself as a office. So that's why the property taken on rent should be a residential property and should be used as a residence by such registered person or his family. Being individual, then only it is exempted. Otherwise, it is taxable only. When it is taxable under RCM. So we came till GTA government. Now we are into I. I also one thing we covered, immovable property. Now the other I is now insurance agent. Insurance agent providing services to insurance company. Sir, insurance agent, what he'll do? He'll solicit the customers, he'll convince the customer, and will bring business to the insurance company. For that, he'll get commission from the insurance company. Whenever you talk to an insurance agent, nobody shows that much care. Even your boyfriend or girlfriend also will not show that much care on you. He will only talk about you, he'll talk about your family, future, everything he'll talk. Okay, what happens to you? You should look after your family. No, what happens? Something happened to you suddenly. You should have a medical insurance. You should have a health insurance. You should have a term insurance. Everything he'll say. Okay, even though you don't have any fear about life, he'll make you. Okay, so why that much care? All that is for earning commission. So insurance agent providing services to insurance company covered under RCM. I also done. Then R, recovery agent. Bank will have loan recovery agents. Okay, these loan recovery agents, sir. So generally, so sir, these days like these loan recovery agents, like they'll be so harsh. Generally, bank, if they cannot recover the loan, then they'll transfer it to recovery agents. Recently in this movie, Bharati 2 also, Indian 2. The first part they will show. First Indian 2 చూసారండి? Did you watch Indian 2 movie? You don't watch movies? Watched? Huh? She? Okay, Indian 2 na? Okay. Okay, first 15-20 minutes only this scene will come. First 15-20 minutes will be interesting only in that movie. Afterwards, when Kamal Hassan enters only, the movie will sleep. Hmm? I didn't understand. Oh. So, at least for me, first 20 minutes is little engaging. Maybe the story, something they are going to tell. And only when Tata comes, then only. Same song in Tamil also. Tata came. Or, uh, so, see here. So, recovery agent providing services to bank to recover the loan from the public. So on those services also RCM applicable. Bank only has to pay tax under RCM, not the recovery agent. Next, sir, we are near R. G completed, I completed, R lo one part completed. The second R is for RBI overseeing committee members. RBI overseeing committee, na sir, RBI has so many functions like repo rate, reverse repo rate, CRR, cash reserve ratio, interest rate. So okay, fiscal deficit, how much is there, everything will be calculated by RBI. Who will do all those things? Randomly some number RBI governor will announce. No, there will be some background study. So they'll have a panel of experts. So those experts need not to be RBI employees. There may be some research scholars or professors in various universities. So they'll be in the committee of RBI. They'll meet maybe like monthly once or 2 months once, like that they'll meet and they'll discuss. So for these overseeing committee members, RBI will pay some amount for the services they provided. On those services also RCM applicable. Let's say I'm an expert who has been empaneled in the RBI, empaneled with the RBI. So for my service, RBI will be paying me. On that RCM is applicable. That means I need not to pay tax under. I need not to pay tax. RBI will be paying tax under RCM. Next, GIR completed, sir. Next, L. L for long-term lease of land. Long-term lease, na, when the land is taken on lease for more than 30 years, then that is called as long-term lease. So the landowner given the land on lease to a promoter or developer. Promoter or developer, na, nothing but, sir, nowadays the land rates are so high. So when you want to start a business or when you want to construct any building and all, you need not to buy land. How the agreements will happen, na? You can take the land for 40 years lease, 50 years lease, and on that you can just construct a building, and from the rental income you earn, you can pay to the owner as well, and you also can earn some profit. Like that the contracts are going now. So where the owner gives the land on rent to a promoter or developer, on that RCM is applicable, not the landowner. The one who is promoting has to pay tax under RCM. Lawyer service. Lawyer, na, there are different kinds of advocates, sir. such as like ACA, FCA, ACMA, FCMA, Associate Fellow. Here also Senior Advocate, Junior Advocate, Firm of Advocate. Sir, in CA and CMA, we'll get that FCA or FCMA once we have that 5 years of practice. Here to become Senior Advocate, it's not based on how long you are into the profession. It's based on winning ratio. How many cases you win decides whether you are a junior advocate or a senior advocate. Okay, so senior advocate, junior advocate, and firm of advocate, if they are providing services to any business entity, on them RCM is applicable. So wherever you see, if there is lawyer, either they are exempted or their services are covered under RCM. Okay, why they are kept under RCM? Na, the lawyers doesn't want this kind of obligations on them. Okay, even we also don't want. Na, then chartered accountants, cost accountants also can be kept under RCM. No, we don't have that option because they are the lawmakers. Generally, the law will be drafted by them only. So they will draft the law. No, so that's why they drafted in a way convenient to them. Okay, when it service tax introduced, na, they were actually framed it as exempted. Then we started arguing like those kind of services we can also provide. Then make even chartered accountant, cost accountant services also exempted. Then okay, so these people are coming as competition to us. So then they changed and at least they made it as RCM. We cannot ask for RCM because lawyer can say like I don't want that compliances. Our job itself is to look after compliances. Chartered accountant, cost accountant. If we ourselves will ask for no compliances, na, then where is the work for us? So that's why lawyers, wherever lawyer related services come, either they'll be exempted or they'll be covered under RCM. Next, sponsorship services. Sir, L also covered. Now we are into S. Sponsorship services. Sponsorship na, sir, in Indian on Indian team cricket cricket team jersey, there'll be Byju's or some other brand name will be there. Na? Now which name? Adidas or whatever the brand which will be written on them on their jersey. Indian team, BCCA is promoting that particular brand. So to make it much more simple, so if you look at Rohit Sharma bat, on his bat C8 will be there. If you look at Virat Kohli bat, MRF. So Virat Kohli is promoting MRF brand. Rohit Sharma is promoting C8 brand. So they are sponsoring that particular brand. Since Virat Kohli promoting or sponsoring MRF company will pay some amount to the Virat Kohli. On the service of promoting the brand MRF by Virat Kohli, RCM is applicable. That means tax will not be paid by Virat Kohli, it would be paid by MRF company only under RCM. Okay, sir, here there is one point, sir. If such sponsorship service is provided by any person to a body, corporate or firm, then only RCM. Otherwise, no RCM. Let's say, not even under the name of BCCA, sir. Let's say, on Virat Kohli bat, I asked him to put my name, Manideep IDT classes. Okay. Instead of MRF, he has put that particular name and promoting me individually, not as like BCCA. If it is BCCA, then again it will fall under body, corporate or firm. Individually, he is promoting me and my IDT classes. Then he is providing sponsorship service only, but it is provided to an individual. So RCM is not applicable. FCM only applicable. Next, security service. Normal security services, sir. Okay. Security service na you'll understand by this movie. Beast only. That movie only. Name I am searching. Before name I got in my mind Arabic Kuttu. That movie, in that movie the song will be there now with Pooja Hegde. Okay, security service. So security service, any person other than body corporate. Okay, so any person other than body corporate. So these security agencies will be there, sir. So these security agencies will hire staff. So this agency, let's say a hospital or an educational institution or a jewelry shop or a shopping mall, if they want security people, they'll not directly recruit security staff. They'll give a contract to the security agency, and the security agency will send the security people to them. Okay, so the security agents will also be under the payroll of security agency only, not under the payroll of that particular software company or hospital or educational institution. Okay, they'll enter into like contracts only. So this security agency, which is not a body corporate, providing services to a registered person, then RCM is applicable. Sir, if that security agency is a company, then no RCM. If security agency is a firm or individual, the business is, I mean, the business person is like an individual or firm, then RCM is applicable. So with this, we completed this code, sir. Once you come back here, M for what? Music composer, and the second one is motor car. A for arbitral tribunal, and the second one is other services. D for director services and even direct selling agent. Next for G, we are having government services as well as GDA. I for immovable property and even insurance agent. R for recovery agent and RBI overseeing committee. L for lease lawyer. S for sponsorship as well as security services. Then import of services. Import of services provided by a supplier located in non-taxable territory. So it's quite obvious, sir. You need not to read here also. Sir, in import transaction, supplier will be outside India. Okay, the government cannot ask him to pay tax. That's why the responsibility to pay tax is on whom? Recipient only. So on import of services, RCM is applicable. So the other one, sir, okay, this one, it will come in, these 2 points will come in exemption chapter, sir. That's why I need to discuss. Business facilitator. Sir, we discussed about direct selling agent, recovery agent. Now, a new word called business facilitator. He will also work for bank only. What he will do? Sir, whenever a new bank comes, the actual public will not know about that bank. So they feel like some bogus or scam they are going to do. That's why they kept the bank name. Okay, so to make it familiar with the public, this business facilitator will try to make it familiar. Maybe in some small towns and mid-sized towns, when a new bank is coming, the public will not be opening accounts directly. So this facilitator is one person who might have so many contacts in that particular place. So this facilitator will take the bank representatives along with him and will convince them, like, this is a good bank. I also opened bank accounts here. It was there from past 50-60 years. So like that, he'll make the bank familiar among that area. So okay, so those are the services provided by business facilitator. The services of business facilitator are also covered under RCM. Next one, business correspondent. So this business correspondent now, this is to make level play. I mean, this is to give equal opportunities to the private banks also. Sir, SBI was started so, I mean, long back, but now HDFC wants to compete with SBI. The problem is like SBI has branches even in the rural areas. If HDFC also go and start branches in that particular rural areas also, their business itself very little. If that business got shared by HDFC and SBI, for HDFC at least, the income which they generate will not be even enough for them to maintain their fixed costs also. So that's why it's not viable for them to start branches there. If they don't start branches, they are losing business from there. So how to grab business from rural areas without incurring so much fixed cost? For that only they have an option of this business correspondent. So bank will tie up with a business correspondent. What this business correspondent, this business correspondent will have agent across that particular state or across the country. Let's say for example, HDFC has tied up with post office or LIC. Now if you look at post office or LIC, they have agent across the country. Now HDFC need not to open bank branch at every place. They'll use these LIC agents or post office postmen. Okay, so let's say to make it much more easy, they are tied up with LIC. Now to LIC, HDFC bank will pay some lump sum amount for providing or for extending HDFC services to the rural areas also. Now now LIC what will do? It will ask services from their LIC agent. Let's say there is a remote place, sir. The nearest HDFC branch from that place is 30 kilometers. Now the public there, even though they want to open a branch in HDFC bank, since it is 30 kilometers far, they will not open in HDFC. Now what they can do, in that village also there is a LIC agent. Instead of going till the branch, they can go to that LIC agent and submit the bank application form, which would be as submitted in the branch. So the bank account will be opened by that LIC agent. So now LIC agent is the agent of business correspondent. He is working for LIC. LIC is the business correspondent. Business correspondent again providing services to banks. See here. First to bank, sir. Look at bank. To bank, who is providing service? Business correspondent. Business correspondent na LIC. To LIC, who is providing service? LIC agent. LIC agent na here we are referring as what? Agent of business correspondent. Sir, that means here there are two services. First one is like LIC agreeing for a lump sum value with the bank, and then these small LIC agents will again providing services to the LIC. So even though we are calling them as LIC agent, that actual word for them we should use is like agent of business correspondent providing service to business correspondent. Business correspondent again providing services to bank. Here there are two services, sir. Business correspondent to bank, it is FCM only, but only between business agent of business correspondent and business correspondent RCM is applicable. Between agent of business correspondent and business correspondent only RCM is applicable. Okay, so with this we completed the RCM part. We might have a question like, why government should introduce RCM? It will be fine no if they continue with FCM also. Sir, first of all understand why the obligation is on seller instead of buyer means, in majority cases seller is more stronger and more capable than that of buyer. There are so many buyers, but there will be very few sellers. So let's say BCCA providing services to you. It would be better for government to administer and to collect taxes from one person rather than asking you all. If the obligation is on recipient, then the government has to ask all of us, all of you or all the students as well. But if the obligation is on BCCA, there are some 500, 600 students now related to all those taxes. BCCA is only answerable. Even with respect to shops or everything also, supplier is generally a bigger person than compared to the buyer. That's why obligations are kept on supplier. But in the instances which we discussed till now, in those cases, compared to the buyer, seller is only stronger. Compared to the seller, buyer is only stronger. Compared to the supplier, recipient only stronger. Look at the insurance agent. Insurance agent is the supplier, but it is he cannot comply with the, or he cannot follow the compliances. Whereas insurance company is a bigger person. That's why the compliances shifted from insurance agent to the insurance company. The same way with the direct selling agent to the bank. Shifted from author to the publisher. Shifted from music composer to the distribution company. Shifted from so many places, sir. At all the places. Compared to the recipient here, compared to the supplier here, recipient is only a bigger person. That's why the compliances has been shifted from supplier to recipient. That's why RCM has been introduced. So this is 9.3. 9.3, we have certain goods as well as certain services on which RCM is applicable. Coming to 9.4. Sir, 9.4 na simple point, sir. Where supplier is unregistered. Where supplier is unregistered and providing services. Where supplier is unregistered and providing supplies to supply of goods and services to a registered person, then on them RCM is applicable. Currently only two services are notified, sir, here. First one, if unregistered person supplying cement to a registered person, unregistered person supplying cement to a registered person, on that RCM applicable, tax rate 14 and 14. Next one, if any capital goods are supplied by unregistered person to a registered person being a contractor, then also GST applicable under RCM. Only this is notified under 9.4. There are not many sections or not many provisions notified here. Only this construction related only notified under 9 subsection 4. Then 9 subsection 5. What 9 subsection 5 says na? The liability to pay tax is neither on supplier nor on recipient. In between there is one guy called e-commerce operator. Now the liability to pay tax is on e-commerce operator. So there is a small, so the point is very simple, sir. In general transactions, only two parties are involved, supplier and recipient. When e-commerce operator is there, then three parties involved, supplier, recipient, e-commerce operator. Out of these three, who is bigger? E-commerce operator is bigger. So it is much more better if they shift the compliance burden on the e-commerce operator. So that's why the government is asking to pay taxes by the e-commerce operator. So let's say I have booked an auto in Rapido. Supplier is auto person. Recipient is me. Supplier is also a smaller person. Me being a individual transaction 80 rupees or 90 rupees auto charges now, on that me paying GST or collecting GST from me is a hectic task for the government. So that's why what government is saying, neither me will pay tax nor the auto person will pay tax. Who will pay tax? Rapido or the Ola Uber person will be paying the taxes. So that's why the tax payment obligation has been shifted from supplier and recipient to the e-commerce operator. Those transactions are covered under 9 subsection 5. First one, transportation related. Radio taxi, cab, maxi cab, motor cab, omnibus, any other. Sir, the example of these apps are Ola, Uber, Rapido, Redbus, Abibus. All these related applications. Who is the service provider? The driver or owner of that vehicle. Recipient is whom? The passenger. The tax has to be paid by whom? Tax has to be paid by e-commerce operator only. Sir, here there is an option also. Sir, here omnibus na, these travels buses will see na, high tech buses, kind of deluxe buses or high tech buses. Volvo, deluxe. So those are called as all the travels buses. Sir, it need not to be a Volvo. Volvo na will call. I mean, it's a premium bus. It need not to be a premium bus. Generally, the buses are called as what? Omnibuses here. Okay. So if the transportation is being through a omnibus, sir, I have booked a ticket through Redbus, sir. You know Redbus application? Okay. Who comes for advertisements in Redbus for Redbus here? Allu Arjun only. Okay. Habibus. In Telugu here also same na. Abibus ad will not come to you. Only Redbus. Transportation of passengers. Omnibus. Let's say if the supplier is a company, the travel buses are owned by a company. Sorry, understand? Let's say there is a travels company called Orange Travels. This Orange Travels is a company. Okay, their buses are listed in Redbus. So now I am booking a bus ticket through through Redbus only. But the bus is owned by whom? Orange Travels, which is a company. Since the original supplier is a company, e-commerce operator need not to pay tax. Supplier will only pay the tax. If the supplier is other than a company, if the travels guy is other than company, then e-commerce operator will only pay the taxes. This applicable only for omnibuses. This not applicable for motor cabs or motorcycles. So let's say what I thought means this Rapido bike business and all, it's fine, no, or else cab business and all is good, no. So what I thought, I myself bought 10 cars, 10 cars, and 10 cars I listed in Ola, and I appointed 10 drivers also. So these 10 drivers will be working for me, but they'll go whenever a Ola or Uber trip comes, then they'll be going for it. So understand now, if these cars are also owned by me and I'm running it as a company, okay, so the same kind of service, transportation of passengers, providing through this e-commerce platforms only, and I'm a company, but still their e-commerce operator only is responsible to pay tax because they are cars. If it is a omnibus alone, then there is this option given. Okay, sir, first of all, remember this, with respect to transportation of passengers, irrespective of the mode of transport, if it is through road, irrespective of car, bike, auto or bus, e-commerce operator is primarily responsible to pay the taxes. But there is a latest amendment came, latest, not for this attempt, previous attempt only it came. What does it said means, if the transportation is through omnibus na, these deluxe buses and all, if transportation is through omnibus and the buses are owned by a company, then company will only pay tax, not the e-commerce operator. If they are owned by other than company, then e-commerce operator has to pay the taxes. First one. Second ones are accommodation services. Accommodation services now, OYO, IBBO. So they'll be providing this accommodation services. So here, when e-commerce operator has to pay tax na, let's say there's a hotel, sir. This hotel is random hotel original owner is unregistered, then e-commerce operator has to pay tax. If hotel owner is registered, then hotel person will only pay tax under FCM, not RCM, FCM only. Hotel is the supplier, no? So hotel person will only pay tax if hotel person is registered. If the hotel owner is unregistered, then e-commerce operator will pay tax. Second one. Third one, household services, urban company. Okay, so now urban companies they are providing so many services like pest control services, a plumber, carpenter, electrician. If you want any kind of such services, we can book an appointment from this urban company. So the original service provider is that carpenter and plumber, whereas recipient is the client who have booked an appointment. E-commerce operator is urban company. Now what they are saying means, if the electrician or carpenter or plumber is registered, then he will only pay GST. If he is unregistered, then the platform e-commerce operator will pay GST. Third one. Fourth one, supply of services by restaurants and eating joints. I ordered food through Zomato. Then who has to pay tax, sir? Neither the restaurant nor me. Zomato has to pay tax. That's what mentioned under 9 subsection 5. But here there is an exception. If the food is ordered from Taj, sir, here Taj hotels are there, na? Which Taj? This Taj or else any? Taj Coromandel. Okay, sir, let's say if I ordered food from Taj Coromandel. Sir, in Taj, per day, the room charges will be minimum of more than 7,500 only. If there is a place or if there is a hotel where there is not only restaurant, there is even accommodation provided, and not just accommodation provided, there per day the accommodation cost is more than 7,500. If from such place I order food, then Zomato or Swiggy is not responsible to pay tax. That hotel person will only pay tax. Understood, na? Sir, if I order food from a normal hotel, sir, there also accommodation is there, restaurant is also there. In ground floor restaurant, the other 4 or 5 floors, it is hotel only. But there the room charges are per day 3,000 only. So it is not a specified premises. From such place, even I order food also, neither me will not pay tax, nor the hotel guy will not pay tax. Zomato or Swiggy will only pay the taxes. But if I ordered food from a place, either from ITC hotels or from Taj hotels, where there is restaurant as well as accommodation, and for accommodation they will charge per day minimum of 7,500. If the food is ordered from such specified premises, then the e-commerce operator is not responsible to pay tax. The hotel people are only responsible to pay the taxes. Composition scheme, sir. So even though we spent 1 hour on chart chapter, sir, there may not be a 7 marks question directly asking on this RCM and all. On RCM, there will be either MCQ or else it might be linked to some ITC question or something. When you are calculating ITC and liabilities, that time you need to identify whether it is RCM or not. So in such way only it will get linked. At least 9.5 will be linked to TDS TCS chapter. 9.5 is linked to TDS and TCS chapter. But the other 9.3 and 9.4, they are not linked to other chapter. I mean, there is no chance of asking a 7 marks question. Maximum they could be asked for MCQs only. But it's not with the composition scheme. Composition scheme has chances of asking as a straight 7 marks question. Okay, before going into that, GSTR1. In GSTR1 will report outward supplies which has to be filed by 11th of the succeeding month. Then we'll have GSTR2A and 2B. In GSTR2A and 2B will be reporting inward supplies which will get auto populated. We need not to file it based on our suppliers GSTR1, or 2A 2B will get auto populated. So that's why there is no due date for GSTR2A 2B. Then GSTR3B. Every month we'll need to file GSTR3B. It's the monthly summarized return where we'll have the summary of both inwards and outwards, and we'll make the tax payment by 20th of the succeeding month. And there is GSTR9 which we need to file annually by 31st December of the succeeding financial year. GSTR1 outward supplies by 11th. 2A 2B will get auto populated. 3B is the monthly return. Through 3B only we'll make the tax payment. And next GSTR9 which we need to file annually by 31st December of the succeeding financial year. So now the point here is, Why composition scheme? Why composition scheme na? Sir, a normal registered person has to file this many returns. To file this many returns, he may not have so much knowledge regarding the GST. So he need to go to a consultant. So consultant na every month the consultant has to file GSTR 1 and 3B on behalf of him. So if consultant takes at least 2000 per month also for filing these two returns, it will become 24,000 for him. Okay, the cost of filing the returns, not the tax. The cost of compliance itself is 24,000. One thing. Next, for filing GSTR 1 and 3B, he need inward details, outward details, ITC details, everything. For that, the business person has to appoint a part-time accountant at least, not full-time accountant, at least part-time accountant, because those records has to be maintained. So the accountant, at least even if you work for 2 hours or 3 hours in a day also, he'll charge monthly 6,000 to 7,000 part time also. So then again it is coming some 70,000 cost, and for filing another 20,000 cost. So a total approximately 1 lakh rupees is spending just to fulfill his compliances. So which is burden on small and medium sized business people. So to reduce this compliance cost, they have come up with a alternative scheme where it is not required to maintain so much data. Okay, even if roughly they maintain data also, it would be fine for them. It is nothing but simple, sir. In income tax also, if we cannot follow or maintain all the records, we have presumptive scheme, 44 AD, 44 ADA, 44 AE. We don't know them. 8%, 6% will calculate, no. So those presumptive options are there even in income tax, that also to reduce compliance burden only. Even here also, to reduce that compliance cost, they have introduced this composition levy. So in composition levy, if you just remember your sales, sir, every business people will have a note of their sales. You ask even a small tea shop guy also, you go and ask him how much sales you made today, he'll sell. I made 2,500 today, I made 3,000 today. So there will be a track of sales. That alone is enough even to follow composition levy. But if at all, if you want to be under the regular scheme, then you want so many details, invoice required, everything is required, and you need to issue invoice on that. His number has to be captured. So everything, there is a big task here. That's why they can go for composition scheme to reduce the compliance cost. Okay. Under composition scheme, sir, there are two separate schemes here. It's not one single scheme. There are two separate schemes available. One is under 10 subsection 1. The other one is under 10 subsection 2A. 10 subsection 1 scheme is specifically for goods. 10 subsection 1 composition scheme is specifically for goods. Whereas the 10 2A1 majorly for service providers, but they didn't mention it is exclusively for service providers. That's why we are calling it for others. Whereas goods one, it is predominantly designed considering goods people only. This scheme, they didn't mention in it for service providers, others. Others now, if for goods there is one scheme, others now obviously who will come? Service providers only will come, but they didn't call it as specifically for service providers. Okay. Now, before going deeper into the scheme, we need to understand what is called state turnover. So aggregate turnover already we discussed. Aggregate turnover now what? Aggregate means total, turnover means sales, total sales, which has to be computed state wise, GSTN wise, PAN wise. PAN wise. So aggregate turnover has to be computed PAN wise. It has inclusions and exclusions. Inclusions are taxable supplies, exempted supplies, exports, supplies made by agent on behalf of principal, interstate supplies between distinct person. Whereas exclusions, the GST related GST need not to be included. Inward supplies on which tax payable under RCM need not to be included. Third one, where any exempted supply made by way of offering loans and advances and the consideration is in the form of interest or discount, such transaction also shall not be included. That is aggregate turnover. State turnover also compute in the same way. Just aggregate means you will calculate PAN wise, state means you will calculate state wise. That's the only difference. There is no other changes in the calculation part. Aggregate na you will calculate PAN wise, state turnover na you will calculate state wise. So here, when we'll use aggregate turnover, when you use state turnover. Aggregate turnover primarily, here the aggregate turnover role is only to check eligibility, whether you are eligible for composition scheme or not. Whereas state turnover, sir, state turnover is used to check eligibility and even used to check tax computation also. So we'll be calculating tax based on state turnover only, because in GST you need to pay tax state wise. You cannot pay tax centrally. So that's why state turnover is used for checking eligibility as well as for computation of tax, whereas aggregate turnover role is only for checking eligibility. So now see 10-1 composition scheme for goods. Who are eligible? Three different persons are there, sir. Only these are eligible. Manufacturer of goods eligible. Next, supply of food for human consumption. If he is a supplier of food and beverages, sir, supply of food and beverages is a service only, but still they are covered here. Supplier of food and beverages, nothing but restaurants people are eligible for this scheme. Third one, any other person who is engaged in supply of goods. Manufacturer, sir. Other than manufacturer, who are the others supplying goods? Wholesalers, retailers. So those traders are also eligible for composition scheme. So three persons are, first one manufacturer, second one restaurants, third one traders. All these three are eligible for composition scheme under 10 subsection 1. If he is a manufacturer of notified goods na tobacco, pan masala, ice cream, aerated water, bricks and tiles. If these are getting manufactured, then he is not eligible for, if the person is manufacturing those items, then he is not eligible for composition scheme. Next. Sir, first we identified which business related people can come under composition scheme. First one. Second one, what is the limit? Because composition scheme is framed for small and medium sized people. Small and medium sized business person, now how they will be classified? Based on their aggregate turnover. If they are in special category states, what are called special category states? Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Yastamana, there is a code there. If they are in special category states, then the turnover limit is only 75 lakhs. If they are in normal states, then the turnover limit is 150 lakhs. That means if you are in Assam, you will be considered a small and medium sized business person only when your turnover is within 75 lakhs. But whereas when you are in Tamil Nadu, you will be considered a small and medium sized person only when your turnover is within 150 lakhs. Sir, why sir like this? Sir, the level of economic transactions or the level of commercial transactions that will happen in Tamil Nadu and Assam are not comparable. Okay, so the spending capacity, the number of transactions that will happen will not be same in normal states and in the special category states. That's why to have such differentiation, they have given separate limits for special category states and separate limit for normal states. But out of special category states, Jammu and Kashmir, Himachal Pradesh, Assam said like, no, we don't want these lower limits. We want the higher limits only. Even some of our people escape from tax payment also. It's fine for us. We will opt for higher limits only. So that's why normal states and Jammu and Kashmir, Himachal Pradesh, Assam, for them the turnover limit is 150 lakhs. For the other states, the turnover limit is 75 lakhs in the preceding financial year. If your turnover in preceding financial year is within these limits, then for current financial year, you are eligible for composition scheme under 10 subsection 1. No. Here it is theme means Tripura. Northeastern states only all. Okay, Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Manipur, Mizoram, Meghalaya, Nagaland, Himachal Pradesh. No south state is involved here. All the Himalayan range related and the northeastern states. Registration chapter. PT Suma, Pondicherry, Telangana, their registration it will come. Okay, so now look at this example, sir. There's a guy called Pramod. He has one branch in West Bengal, one branch in Sikkim. He has turnover in West Bengal 60 lakhs, whereas in turnover in Sikkim is 50 lakhs. What is his aggregate turnover? 110 lakhs. So now for Sikkim, the threshold is only 75 lakhs, whereas threshold for West Bengal is 150 lakhs. So for one state he is satisfying conditions, in one state he is not satisfying the threshold condition. So what is his option? I mean, what is thinking like? For West Bengal, he wants to be under composition scheme, whereas for Sikkim, he wants to be under regular scheme. Can he have such option? No. Composition scheme exercising option is pan wise. So if any one of your branch under a pan becomes ineligible, then all the other branches will also become ineligible for composition scheme. So can be one option no, where one registration under a PAN becomes ineligible, then all the registration linked with the same PAN becomes ineligible for composition scheme. So we said three category of persons are eligible: manufacturer, restaurants, traders. Their turnover should be 150 or 75 lakhs. Till this we discuss. If one branch becomes ineligible, all the branches linked with the same PAN also becomes ineligible. So now here if you see, only goods related persons except restaurants, the other two should be only in supply of goods to become eligible under composition scheme. But considering the present era, it has become necessary for all the goods suppliers also to provide at least to a limited extent also services. Let's say sir, there is a mobile shop, and to that mobile shop a customer went who doesn't have much education. So he went and asked for some touch phone. Okay, some smartphone he asked, and the seller said like it's for 15,000. Then the second question he asked is like, if any problem come to this mobile, will you repair it? Repairing na service. If the mobile shop guy says like, no, will not provide service, only will sell goods only na, then he'll not buy mobile there because he want even service as well. So it has become a compulsion on the goods suppliers also to provide service at least to a limited extent. But as per the eligibility, if you saw, goods providers are only eligible if good along with service they are providing na, they are not covered here. That's why they relaxed little bit the composition scheme conditions and even said like, you are eligible for composition scheme even if you provide service along with goods also. But for service they introduced a sub threshold. Overall threshold should be within 150 or 75 lakhs, but for service there is a sub threshold. I mean the service should be within the sub threshold which they mention here. The sub threshold is where the registered person supplies both goods and services, then the turnover of services should be within 10% of state turnover. So look at here, not aggregate turnover. 10% of state turnover or 5 lakhs, whichever is higher. I mean the service should be along with goods, they can provide service also, but the service should be within 10% of state turnover or 5 lakhs, whichever is higher. Look at this example, sir. There is Shivani Mobiles. From sale of mobiles, she got 60 lakhs. From repair service, she got 67 lakhs. What is her aggregate turnover? 67 lakhs. And she is doing business in Kolkata, West Bengal. So West Bengal, normal state only, the threshold is within 150 lakhs. So considering these two, her turnover is within 150 lakhs. But since she is having service also, we need to check sub threshold as well. The sub threshold is service threshold, 10% of state turnover. Sir, in this case, she is having only one branch. When she is having only one branch, aggregate turnover and state turnover will be the same. So that's why state turnover is 67 lakhs. So 10% of 67 lakhs, which is 6.7 or 5 lakhs, which is higher? 6.7. So here the point is her service should be within 6.7 lakhs to become eligible for composition scheme, whereas service she provided is how much? 7 lakhs, which is beyond the threshold. So she became ineligible for composition scheme. So under 10 subsection 1, three kind of persons are eligible: manufacturer, traders, restaurants. Their threshold should be 150 lakhs normal states, including Jammu and Kashmir, Himachal Pradesh, Assam. For other cities, 75 lakhs. Okay. Next, one branch becomes ineligible, all the others will also become ineligible. Along with goods, if they are providing services also, then there is a sublimit for service. The sublimit or sub threshold for service is 10% of state turnover or 5 lakhs, whichever is higher. So the service they provide should be within such limit to become eligible. This is under 10 subsection 1. Now we are going to 10 subsection 2A eligibility. This is another composition scheme. This scheme says like, if he is a supplier of service other than restaurant, he can come here. Because for restaurants, they are covered under 10.1, no. So other than restaurants, they can come under this scheme if he is a service provider. Next, look at the second point. He need not to be a service provider. Any other person, he need not to be a service provider. If he is ineligible for 10.1, then he can come under 10 subsection 2A. So let's say, there will be example also here. Aggregate turnover. So look at the eligibility. Any service provider except restaurant people can come here. Second one, even though he is not a service provider, if he becomes ineligible for composition scheme under 10 subsection 1, he can come to 10 subsection 2A. Third one, his aggregate turnover should be within 50 lakhs only in the preceding financial year. Now look at this example. Surya Electronics. He has sale of goods 40 lakhs, sale of service 7 lakhs. What is his aggregate turnover, sir? 47 lakhs. Sir, he is a principal supplier of good or service? Goods only. Okay, he is a principal supplier of goods only, but his aggregate turnover is how much? 47. He is a main supplier of goods, no? So we'll first check under 10 subsection 1. So 10 subsection 1, aggregate turnover within 1.5 crores only, no problem. Second one, we need to check service sub-threshold. Service sub-threshold na aggregate turnover 47 lakhs. Next, 10 percentage of 47 lakh 4.7 or 5 lakhs. Whichever is higher na 5 lakhs. Whereas service he provided is 7 lakhs, which is beyond 5 lakhs. So he is ineligible for a 10 subsection 1. He is a majorly supplier of goods. But since he became ineligible for 10 subsection 1, now he can come under 10 subsection 2A. Now Surya Electronics ineligible for 10 subsection 1. Whereas since his aggregate turnover is within 47 lakhs, he can come under 10 subsection 2A. Sir, either a chartered accountant or cost accountant. He cannot go to 10.1 itself. Because 10.1 manufacturer. We are not manufacturers. Restaurant. We are not restaurants. Next, third one. Traders. We are not even traders. So 10.1 no entry at all for us. We can directly go to what? 10.2A. Okay. Even this mobile shop person, actually he is supplier of goods. But since he became ineligible for 10.1, he can come to 10.2A. Okay. So now tax rates. If he is a manufacturer of goods, then the tax rate is 0.5% CGST and 0.5% SGST on the turnover of the state. Tax has to be levied on what? Turnover. And composition scheme person will pay tax quarterly. So on every quarter, on the state turnover, we need to calculate tax 0.5% and 0.5%. If it is for restaurants, it is 2.5% on the turnover in the state. Whereas for other persons, any other person eligible, nothing but traders, it is 0.5% of turnover on taxable supplies in state. So look at the difference. For the first two points, it is just turnover. Here they mentioned it as taxable supplies. That means for manufacturers and restaurants, if they are under a composition scheme, even their normally exempted supplies will also get taxed if they are under composition scheme. If he is a trader, then only taxable supplies will get taxed even he is under composition scheme. If you are a manufacturer registered under composition scheme, even though actually those goods are exempted, but since you are under composition scheme, those goods will also get taxed at a rate of 0.5 plus 0.5. That's why here they mentioned it as turnover and turnover, whereas here they mentioned it as taxable supplies. Next, whereas a person opted for 10.2A, then the tax rate is 3% plus 3%. 3% CGST and 3% SGST. Next, procedures and conditions. If you want to opt for a composition scheme, if you are a newly registered person, you just now started business and you are going for fresh registration, and during that fresh registration also, fresh registration only you want to opt for composition scheme, then simple, in REG01, when you are applying for registration, in part B, there is one checkbox that whether you will opt for composition scheme or not. In the checkbox, if you sign like yes, then you will be registered under composition scheme. But initially you registered under regular scheme. Now you want to shift to composition, then already registered, then file an intimation separately that you want to convert into composition scheme within 60 days from commencement of financial year. So today if you want to file an intimation, you cannot do because 60 days expired long back only. 1st April financial year commences, sir. From there 60 days na, by May 30, you need to file an intimation if you want to convert into composition scheme for that financial year. Afterwards, you don't have such option. Next, after filing intimation, you need to file another intimation which consists of details of all the stock. Why details of stock, sir? When you are under regular scheme, details of closing stock. When you are under regular scheme, you have availed ITC. But once you shifted to composition scheme, you cannot avail ITC. But since you already availed ITC, that ITC has to be reversed. For that reason, they are asking you to provide the details of closing stock which were there on the day preceding to the day you opted for composition scheme. Let's say from first day you are opting composition scheme. On 31st March, whatever is the closing stock you are having, finished good, raw material, work in progress, all those details you need to provide. Why you need to provide? Because those stock relevant ITC, whatever you claim, that needs to be reversed now. Because previously you are under the regular tax scheme. On purchase you have tax, and on sale also you have tax. Double taxation is there. So ITC given. But now you are under composition scheme. Here there is no double tax, only concessional tax is being collected. So that's why the ITC which you took initially has to be reversed. That's why you need to provide stock details. Next, applicability of 9.3 and 9.4. Yogesh is a composition scheme registered person. I am a lawyer. I provided service to Yogesh. Okay. Generally on lawyer services, 18% tax rate is applicable. Now Yogesh is saying like, even though he took lawyer service, RCM is applicable. He is saying like, since he is registered under composition scheme, he will pay only 0.5% and 0.5% as tax. What the provisions here saying are like, no, even though you are registered under composition scheme, only on your outwards concessional rates are applicable. If RCM is applicable, then you cannot use concessional rates. The original rates only you should apply. If you need to pay discharge RCM liability, pay it through the original rates only. Only for your outwards you can use the concessional rates. Next, composition scheme person will file returns in GSTR 4 annually by 30th April of succeeding financial year. Return annually GSTR 4 by 30th April of succeeding financial year. Whereas tax payment has to be made quarterly. There will not be any returns or quarterly even though they pay taxes. Just through filing CMP 08 statement, they will pay taxes, and the tax has to be paid quarterly by 18th of the succeeding month. Let's say the quarter ends by April, May, June 30 quarter ends. Then by July 18th they have to pay tax. July, August, September quarter. By October 18th they have to pay the taxes. Next, ITC. Composition scheme person cannot avail ITC. He cannot avail ITC, or if we purchase goods from composition scheme person also, we also cannot avail ITC. That for 0.5 plus 0.5% is living tax, no, or 2.5, 2.5. That also we cannot avail as ITC, nor he can also avail ITC. So he is a speed breaker for the ITC chain. Okay, from the point till composition scheme person, whatever the credit flow is getting, that will get struck when there is a composition scheme person in the middle of the chain, because he cannot avail ITC. Once we buy from him, we also cannot avail ITC. Next, since he cannot avail ITC, or he can on purchase of goods from him, we cannot avail ITC. He need to put a name board stating like he is registered under composition scheme. By looking at that, we'll understand like, okay, he's a composition scheme guy. On purchase of goods from him, will not avail ITC. So to know that, he need to put a name board stating like he is a composition scheme person. So even the recipient also has to mention composition taxable person on every notice and signboard. These following people are ineligible for composition scheme. Who? Person who has stock purchased from unregistered person. On the day you opting for composition scheme, you are having stock. Having stock is not the problem. On the stock which you are having is purchased from unregistered person, then you are not eligible for composition scheme person. First one. Next, supplier of interstate outward supplies. When you are making interstate outward supplies, interstate purchases na fine, interstate sales na, you are ineligible for composition scheme. Next, if he is manufacturing notified goods na, tobacco, ice cream, pan masala, aerated water. So once again repeating, notified goods na, tobacco, ice cream, pan masala, aerated water na, this cool drinks. Okay, soda, cool drinks and all. The next one is bricks and tiles. Okay, they are ineligible. And person manufacturing person making non-taxable supplies. Non-taxable supplies na, petroleum products, alcoholic liquor for human consumption. Then NRTP. NRTP na, who supplies goods and services occasionally, and he has no residence or business in India. Let's say a foreign singer comes to India just to perform in a concert, in 2 or 3 concerts. Once the program is completed, she'll go back to her country. So only for the 2-3 shows if she comes to India, and for that she has been paid some 1 crore or 2 crores, then in India she will be called as NRTP, because she came to India to provide service occasionally and she has no fixed place of business nor residence. NRTP. Then CTP. CTP also same one. So let's say BCCA came to Chennai to provide services occasionally. not permanently, occasionally. Here we don't have a fixed place of business. We don't have a fixed place of business here. So BCCA can be called as CTP for Chennai. But in Andhra and Telangana, we are not CTP. We are called as regular registered persons only. So examples like exhibitions, circus. Okay, those people will come and provide services occasionally only for a temporary period. So since for temporary period only they'll provide services, they are called as CTP, where they'll not have a fixed place of business in such state. Next, person supplying goods and services through e-commerce operator through. If you want to sell goods through Amazon or Flipkart or any other e-commerce operator, then you cannot be as a composition scheme person. Next, validity of composition scheme. Once you exercise composition scheme, it continues unless until you meet any ineligible criteria. Okay, ineligible criteria, this one. Okay, so till now you didn't made any interstate sales, sir. But after 6 months or 7 months, you got some customer from different state. Okay, so once you make the transaction, you will become ineligible for composition scheme. First one. Second one, sir, previous year my turnover is within the limit only, that's why I'm in composition scheme for current year. But in current year, let's say on 2nd January my turnover exceeded 150 lakhs. From 2nd January I'll become ineligible for composition scheme. The day my turnover exceeds the threshold in the current financial year, that day I'll become ineligible for composition scheme. Option get lapsed when the aggregate turnover in the current financial year exceeds threshold. From the day option lapsed, I need to pay tax at the normal rates only. Okay. So there is one last concept, sir, in composition only. This one, what it says means, sir, look at this example, then you'll understand clearly. There are two newly registered persons, sir. Newly registered persons. One is Rohit, the other one is Virat. Both completed CMA recently and both started their practices. What Rohit did na, on 1st April itself, he registered under GST as a composition scheme person. Assume 10 subsection 2A. Rohit. Whereas Virat, he didn't register itself, because to register, only when your turnover exceeds 20 lakhs or 40 lakhs, you are required to register. But Rohit na, on first day itself, just he didn't even started sales also, he registered. But Virat didn't register, he waited till his turnover get exceeded the threshold limit. Now understand, in April, May, June, Rohit has a turnover of 20 lakhs. So on that he need to pay 1,20,000 as tax, because 6%, 3 plus 3. Whereas Virat, he didn't register, no, only on incurring to, only on only after attaining 20 lakhs turnover, he need to get registered. So on first 20 lakhs, Virat didn't pay any tax, but Rohit paid 1,20,000 as tax. Let's say in the second quarter, Rohit at 10 lakhs turnover, Rohit paid 60,000 as tax. Whereas in the second quarter, Virat has only 10 lakhs turnover, na, he paid only 60,000. If you look at their tally, Rohit ended up paying 1,80,000 as tax, whereas Virat paid only 60,000 tax. So who is paying more tax, sir? Rohit. But you have one question, sir. Indirect taxes, na, seller will not pay from his pocket, anyhow he'll recover from buyer only, na. What's the problem? Sir, the problem is composition scheme person cannot collect taxes from buyer. That means whatever the tax they pay, they are paying from their pocket only. So who is in disadvantageous position? Rohit. What is the mistake Rohit did? Registering earlier. So no tax system can be in such a way. For early registration, at least you should encourage. If you don't encourage, at least it should be remain like the same. But here Rohit is in a disadvantageous position. So that's why they want to keep Rohit and Virat in the same equal grounds. For that, they introduced a provision saying like, for Rohit, whatever is the turnover he'll make till he make until the threshold limit for registration, the turnover till the threshold limit for registration will not be taxed. Even for Rohit also, the first 20 lakhs will not be taxed. That is the provision. See here. For determining taxable turnover of a state for payment of tax under composition scheme, the value of supplies from first day of April up to the date the person becomes liable for registration, the first 20 lakhs will be excluded for tax computation. That means even for Rohit also, there will not be 1,20,000 tax. He will also have 60,000. Even Virat will also have 60. So both will be made equal. So they cannot penalize for early registration. This is about what? Composition scheme. So we'll look at the problems in composition scheme, sir. Then we'll go to value of supply chapter. So in charge only 4 problems we have. I mean, which we need to solve now. Question number 7, 6, 8 and 13. In charge. Question number 7. Six, 7, 8, 13. So start from question number 6, sir. This one. Page number 3.6. Love is running a consulting firm and also a fancy store in the state of Karnataka and registered under the same PAN number. Turnover of the fancy store is 65 lakhs and consultancy firm is 10 lakhs in the preceding financial year. Okay, the turnover from fancy store is 65 lakhs and from consultancy firm it is 10 lakhs. You are required to provide answers with supporting explanatory note for each answer to the following questions. Is Love eligible for composition scheme? Tell. Fancy store 65 lakhs turnover, consultancy firm 10 lakhs turnover. So they are asking whether that firm is eligible for composition scheme. So what is the eligibility criteria? First, they should be either manufacturer, here it is not manufacturer, or restaurant, not restaurant, or trader of goods. Fancy store, not trader of goods only. But they're not simply traders. Along with trader, they are even providing some kind of service as well. When they're providing service also, then service threshold also we should check. Overall threshold also we should check. Overall turnover, if you check, it is how much? 75 lakhs only, which is within the 1.5 crores or 150 lakhs. When you check the service threshold, what is the service threshold, sir? 10% of state turnover, that is nothing but 10% of 75 lakhs, 7.5 lakhs or 5 lakhs, whichever is higher. How much it is? 7.5 lakhs. Whereas they are having service turnover of 10 lakhs. So they are not eligible for composition scheme. They are ineligible for composition scheme. Therefore, Love is not eligible for composition scheme. Next, whether it is possible for to opt composition scheme only for fancy store. No, if one branch becomes ineligible, all the others also will become ineligible. So composition scheme has to be opted PAN wise, not registration wise. Next, if Love is running a restaurant with a turnover of rupees 65 lakhs instead of consultancy firm as well as a fancy store, if they are running a restaurant and the turnover is 65 lakhs only, then they can opt for composition scheme if at all they don't have a consultancy firm. Okay, provided the turnover is within the 1.5 crores. Since the turnover is 65 lakhs only, they are eligible for composition scheme. Now look at the 7th question. X and Co being a supplier of taxable and exempted services registered under GST in the state of Maharashtra furnished the following information pertaining to the preceding financial year. In preceding financial year, he has outward service of 22 lakhs, he has exempted service of 25 lakhs, and he has interest which was earned on loans and advances 5 lakhs. What would be his aggregate turnover in the last year? 50 or 55? We cannot add this 5 lakhs. Interest and discount we cannot add. So only these two will add, means it is 50 lakhs. 50 lakhs is the aggregate turnover. And he has majorly service. I mean 22 lakhs service. Now turnover during first quarter of the current financial year is as follows. Intrastate outward service 2 lakhs. Exempted supplies 8 lakhs. And interest on loans and advances 5 lakhs. Okay. Now they are asking us to check whether he is eligible for composition scheme or not. Sir, if you go and check first 10 subsection 1, he is not eligible for 10 subsection 1 because he is a majorly a service provider. He is not eligible for 10.1. So he'll go to 10 to A. Under 10 subsection 2A, to opt under composition scheme, his aggregate turnover should be within 50 lakhs. His turnover is within 50 lakhs only. So for the current quarter, he need to pay tax under 10 subsection 2A. What is the tax rate? 3 plus 3. Sir, 3 plus 3 has to be levied on all the 3 na, or only on taxable outward services. So now on what value, I mean out of these 3, on what value we need to apply 6 percentage? Either only on 2 na, or both 2 and 8 together, or on the total. Sir, interest loan, I mean interest earned on deposit and loans cannot be included. This anyhow will be excluding. Now the other two are like, sir, I said tax has to be calculated on what? State turnover. So state turnover, while we are calculating now, we need to add this 2 on 10 lakhs only. We need to levy 3 plus 3. Only for traders will exclude exempted turnover and will levy tax only on taxable turnover. Other than traders, for every other person will be levying tax on the total turnover only, excluding interest and discount. So here it would be 10 lakhs on 10 lakhs, 30,000 CGST and 30,000 SGST. Shankar, the next question is on you only. Shankar is running a fancy store and also having a consultancy firm. Same kind of question, sir. The turnover is 150 lakhs in the grocery store and receipts in the consultancy firm are 9 lakhs. In the light of this fact, answer the following. Can he be eligible for composition scheme? The turnover was 150 in grocery and consultancy firm 9 lakhs. Overall, it became 159 lakhs. So straight away, he is ineligible. Can he opt composition scheme only for grocery store? Not possible. Either he can opt composition scheme for all the branches, otherwise he can leave. Though he has the consultancy firm in addition to the score. Okay, that is not possible. Already discussed. Come to question number 6, 7 or 8, then come to 13. Hotbreads is the supplier of bakery products registered in the current financial year. In the month of October 2022, total taxable supplies are 88 lakhs. Hotbreads is a supplier of what? Bakery products, and their turnover is how much? 88 lakhs. Does the company is eligible for composition scheme? Sir, you understand the point? Hotbreads is supplier of bakery products and their turnover registered in the current financial year from 1st October only. And in 1st October, their supplies are 88 lakhs. So, first time they are registering. So, there is no other restriction. They can opt for composition scheme. But the moment their turnover exceeds 1.5 crores, they should register under, I mean, they will automatically get converted into the regular scheme. If so, company wants to pay tax 1% being a trader. However, so this is the important point here. They want to pay tax at 1%, assuming them as trader. But the deputy commissioner says, stating like they need to pay tax at 5%, considering them as restaurant. So now the question is whether bakery is a restaurant or a simple trader. Okay, so they are treated as a simple trader only, sir. See here, the supply of food and restaurant services is the only service included under a composition scheme. For a business to be categorized as restaurant, there needs to be an element of service involved. I mean, catering, ambience, such kind of things should be there. In the given case, bakery products, there is only supply of good, of food items, but there is no element of supply of service. Hence, supply of bakery products is eligible to pay GST at 1% under traders category and not as restaurant services category. So, bakery, we need not to treat it as restaurant, we'll treat it as a trader of goods only. So, they'll pay tax at what rate? 1% only. Sir, there's one more sum, sir, which was not there in final material. I'll show you from intermaterial. This question only. Sir, Chanchal started providing, so this question is not there with you. Look at this question, simple one only. this was not, I mean, this model question is not asked in the new syllabus, but 2 attempts back in the old syllabus only they asked this kind of question. Chenchal started providing beauty and grooming services and inaugurated Care and Care Beauty Center in Janakpuri. She opted to pay tax under 10 subsection 2A in the said financial year. 10 subsection 2A na like 3% plus 3% fund. The aggregate turnover of Care and Care Beauty Center for the quarter ending 30th June was 20 lakhs. For the half year ending 30th September was 50 lakhs and has a rapid growth. By the end of October, the turnover, total accumulated turnover went up, I mean aggregate turnover went up to 70 lakhs. So they are asking us to decide the tax liability. Okay, and it has opted to composition scheme in the initial year, so they are asking us for the advice. So if you look at here, the business is started on 1st April. Business started by 30th June. By 30th June, the turnover went to, here it is 0, the turnover went to how much? 20 lakhs. So 20 lakhs is nothing but the threshold for registration. 20 lakhs is the threshold for registration since they are service providers. So in this quarter, 1st April, May, June, they have turnover of 20 lakhs. Then by 30th September, they achieved a turnover of 50 lakhs. That means in between July, August, September, in this quarter, they have a turnover of 30 lakhs. And then after October, they gave 31st October. Then in October month, by October end, they have achieved turnover of 70 lakhs. So here they have a turnover of 20 lakhs. Sir, here they have commenced the business newly. And when they started business, they have registered themselves under the composition scheme. While discussing composition scheme, I have discussed the last provision stating like from the 1st April of the financial year till the turnover exceeds the threshold limit, whatever the turnover they made, that has to be excluded while calculating the tax. Okay, so that means on first 20 lakhs we need not to calculate tax because only after 30th June they have achieved the they have exceeded the threshold limit. Until the point they exceed the threshold limit, the turnover whichever they make on the tax calculation need not to be made. So on 20 lakhs there is no tax, whereas on the other 30 lakhs they are under composition scheme under 10 subsection 2A. So on this 30 lakhs CGST 3%, 30 lakhs into 3% na 90,000 and another 90,000 SGST. This is the amount they have to pay. But after 30th September, they have exceeded the turnover 50 lakhs. That means in October, they will not be under composition scheme. Automatically, they will get shifted to the regular scheme. So, regular scheme na 20 lakhs into 9% and 9%, 18%. Sir, where it is given, you can see here. Actual rate is 18%. So, 9% and 9% na 1,80,000 and 1,80,000. So, the tax they have to pay is on first quarter, no tax. Why no tax on first quarter? Because the turnover didn't exceed at the threshold limit. Whereas in second quarter, the tax is 90,000 and 90,000 concessional tax rate, 30,000 into 3% and 3%. After September, they have exceeded the threshold limit under composition scheme as well. So they need to pay tax at 9% and 9%, 1,80,000 and 1,80,000. So you could see 1,80,000. Sorry, this is, sir, this they has given it as a total, sir, but it is 90,000 CGST and 90,000 SGST. Here also 1,80,000 CGST and 1,80,000 SGST. Okay. Here they explain why it is not included. It is clarified that notification that first supplies of goods and services are both shall for the purpose of determining eligibility to pay tax under this notification. Okay, to the date from which he become liable for registration. Sir, this first 20 lakhs is there, na? To calculate aggregate turnover, this 50 lakhs, whether he is eligible to be under composition scheme or not, it would be included. But for tax purpose only, this 20 lakhs will not be included. That's what I explained. For eligibility determination, first 20 lakhs will also be considered. But for tax computation, so see, for determining eligibility, it is included. But whereas for determination of tax payable under this notification shall not include the supplies from first day of April of a financial year to the date from which he become liable for registration. Okay, so these are the problems in composition scheme. Customs and so every day like 2 hours we'll be discussing customs. Today we don't have much time now, so we're closing with 1 hour, 1 hour 15 minutes only. Okay, we'll start with customs. Page number 24.1. Okay, so entry, sir, again article 240, if you go to basic, in article 246 there will be 3 lists. Article 246 7th schedule, there will be 3 lists: union list, state list, concurrent list. If something some activity mentioned in union list, the power to levy tax is with central government. If the same, if the items are mentioned in state list, then the power to levy tax is with state government. If such kind of activity is mentioned in concurrent list, with respect to those matters, central also can frame law, state can also frame law if they are mentioned in concurrent list. The same way, customs is mentioned under entry 83 of union list of 7th schedule of article 246. So this entry number is important, sir. They may ask as MCQ. Entry 83 of the 7th schedule of article 246 of constitution is empowered the central government to frame laws with respect to customs. Customs Act was enacted in the year 1962. Customs is not a single law, sir. It consists of 2 acts. Customs. One is Customs Act 1962 and the second one is Customs Tariff Act 1975. Tariff means nothing but rate. Tariff is nothing but rate. So Customs Tariff Act consists of customs rates. Okay, this Tariff Act will consist of 2 schedules: first schedule and second schedule. This Tariff Act consists of 2 schedules, sir. First schedule and second schedule. First schedule will consist of import duties, whereas second schedule will consist of export duties. So if you want to know the customs duty applicable rate, then you need to go and refer the Customs Tariff Act. Other than rates, the other provisions related to customs are covered by Customs Act. Rates alone are given in the Tariff Act. So not only customs, sir, every act can be categorized. I mean, every act, every taxes related act can be break down into these 3 parts: charge, collection, assessment. Charge, when tax is leviable. Okay, all those situations explaining when charge is leviable and how to when tax is leviable and how to calculate tax, all those provisions together we call it as charge. In GST, if you need to categorize, starting from supply chapter till the payment of taxes chapter, all those chapters will fit into the part of charge. Once there is tax charge, then the second part is about how it is going to be collected, either through payment by way of cash or adjustment of ITC, or through TDS or TCS, all those provisions, how the tax would be collected, the modes of collection of taxes or will be the part of collection. And the third part, sir, we computed tax, tax has been paid. The third one is assessment of tax. How it could be verified is related to assessment. It would be the same in income tax or GST or even customs. So any act will be framed considering these 3 kind of parts. So Customs Act consists of provisions related to charge. Charge, finding out when tax is leviable, on what value tax is leviable, and what is the amount of tax. This collection, how the tax will be collected. And the assessment means how the department people will re-verify it or recompute it, whether the everything is calculated as per the rules or not. So Customs Act consists of all the provisions related to charge collection and assessment. Next, Customs Act extends to whole of India. Extends to whole of India, and even to a person who is residing outside India also Customs Act is applicable if it is an offense as per Customs Act. Sir, if you watch this movie Singham 2, Surya's. Okay, okay, in Surya Singham 2, Surya will go even to catch daddy. Okay, he'll go outside India also. For him, government will give helicopter and all. Okay, after taking helicopters and all, if he went to outside India, and let's say if that government does not allow him to arrest him, then it's of no use now. So for that reason, the Customs Act also has given power stating like, if it is an offense as per Indian Customs Act and such person is residing even outside India, then Customs Act is applicable even outside India also for such person. So even applicable outside India for an offense committed as per Indian Customs Act. So Surya can go and arrest him. Customs Act is applicable even outside India. Why she is laughing? Fan of Surya, na? Okay. Definitions. Adjudicating authority. So this will come in GST also. That's why I'm explaining little further. Adjudicating authority. I think already you might have heard this in income tax as well. Again, I'm saying adjudicating authority. So the authority who generally carries the assessment, who carries the first assessment and passes the order is called as adjudicating authority. Let's say my case has been taken for scrutiny. Once my other case has been taken for scrutiny, after verification, the officer, whoever passes the assessment order, is called as adjudicating authority. Adjudicating authority means an authority who is competent to pass an order or to take a decision under this act is called as adjudicating authority. But CBIC, Commissioner of Customs, and Tribunal, these three are not called as adjudicating authority. These three also can take any order or decision as per customs, but these three cannot be called as adjudicating authority. Adjudicating authority means an authority which is competent to pass an order or to take a decision under this act, but does not include CBIC, Tribunal, and Commissioner of Customs. Tribunal na Customs, Excise and Service Tax Appellate Tribunal only. The tribunal which was constituted before GST. That is only still looking after, even now looking after the customs related issues. Next, assessment. Sir, what is called assessment? General sense. What is called assessment? Assessment means nothing but computation of tax is only called as assessment. So see here. Assessment means determination of dutability. Sir, here we are referring the word customs duty. That's why they are using the word dutability. Duty and tax are something like synonyms only. Duty and tax are like synonyms only. Duty is an ancient word. Okay, tax is a modern word. That's what the difference. Okay, assessment means determination of taxability. First of all, we'll find out whether a good is taxable or not. Once it is taxable, and then we'll find out the amount of duty, taxes, or any other amount payable as per customs tariff act. As per customs tariff act. So assessment is nothing but the process of determining whether a good is taxable or not. If it is taxable, finding out the duty, taxes, or if any other amount payable considering the tariff act. Okay, while doing this we need to consider certain items. First one is tariff classification. Tariff classification. What is this tariff classification? Na? For every good in tariff act there will be HSN code. You know what is called HSN? HSN is an 8-digit code. Harmonized system of nomenclature. Sir, nomenclature na, the process of giving a name is called as nomenclature. The process of naming something is called as nomenclature. Harmonized. I mean, in a systematic way, if you are naming something, then that is called as harmonized system of nomenclature. HSN, it will have how many digits? 8 digits. And so in tariff act also, there will be a HSN code. Then there will be description of this good. That is mobile, which type of mobile. So all those description will be there here. Then the next column will be units of measurement. How such good will be measured? Some goods will be measured in units, such as like laptops, computers, and mobiles. Now they'll measured in units. If it is something like paddy, sugar, wheat, they'll measure in kgs. Petrol, crude oil, na, they'll measure in liters. If it is garments, na, they'll measure in meters. So the units of measurement will be mentioned here. Then there will be a BCD rate. I mean the basic customs duty rate applicable will be given, which we call it as standard rate. On this good, whatever is the customs duty rate applicable, that would be mentioned here. And there will be even a preferential rate as well. Preferential rate, na, for India there will be certain preferential countries. If the goods are being imported from such preferential countries, then instead of standard rate, we will apply preferential rate. Preferential rate is a discounted rate than compared to the standard rate. If the goods are originating from preferential area, then instead of standard rate, we'll apply preferential rate. Otherwise, we'll apply what? Standard rate only, which is the BCD rate. So like this, the tariff act will be there. HSN code 8 digits. Then for the description of such good and how the that particular good has to be measured, and then a BCD rate and the standard rate. So while doing assessment of any good, you need to consider this tariff classification, because under this tariff classification only we'll find out the tax rate, first one. So assessment means not only just finding out the duty payable, we need to even consider the tax rate applicable. Kanchana came there. So we need to consider what? Tariff classification. Then while doing assessment, we need to consider even the value of such goods. Why value is relevant? Because the tax rate is levied only on the value. Let's say value is 10 lakhs, on that only we'll apply 10% or 12%. So for that we need to even consider value. Third one, if any exemption or concession is given, we need to take care of that exemption and as well as concession. Fourth one, the quantity, weight, volume or measurement. Sir, why the quantity, weight or volume is also relevant? Now, sir, in customs, the duty levy is of two types. One is based on value, whereas the other type of levy is based on the quantity, based on the dimensions. For example, on crude oil, the customs duty is not levied as a percentage. Why? Because the government wants a steady revenue from import of crude oil. If we levy it as a percentage, whenever the crude oil prices drop, the government revenue will also get drops. Okay, when the crude oil price increases, already we feel like the petrol rate is high. Then the percentage if they levy, even the prices will go much more higher, and we feel the prices of petrol and diesel are much more higher. So that's why the government will not levy the tax rates on crude oil as a percentage basis. They levy on a standard amount, per liter 20 rupees or per liter 30 rupees, like that they'll fix. How many ever liters they'll import, that many 20 rupees or 30 rupees they need to pay as custom duty. So there it's not value, it's about the quantity. Even on cigarettes, Yogesh, you know now. Okay, BD, you know. Okay, on cigarettes the tax is levied based on length. Okay, I know about tax. Okay. Okay, on cigarette the tax is levied based on length. So even on certain textiles also they may be levied on the based on dimensions of them. So that's why in certain cases value based tax will be levied. In certain scenarios, based on quantity measurements only tax is levied. So we need to consider even quantity, weight, value, measurements also, and even origin. Why origin? Just now I said, If the goods are originating from preferential area, then the tax would be levied at a preferential rate. So that's why assessment means levying taxes. I mean, finding out whether it is taxable or not, and finally calculating the tax amount only. But in this process, we need to consider tariff classification, value of such goods, origin of such goods, their quantity, volume and measurements. If any exemption or concession is given, that also has to be considered. Next, bill of export. What is called bill of export now? It's an application which we present to the customs officer. Bill of export is an application form which we submit to the customs officer to let our goods export. The permission which we'll get. Okay, for getting the permission from customs office to let our goods export, the form we present is called as bill of export. You could see. Form presented to proper officer to let the good export is called as bill of export. Then coastal goods. Coastal goods na goods other than imported goods transported in a vessel from one port in India to another port. So see here. Okay. So tell me, where is Chennai now? Here only, no? Somewhere. Here only Chennai. Okay. Tell me, where is Goa? Okay, here somewhere, here it is Goa. Okay. So now the goods are going from Chennai to Goa in a vessel. Okay. But the origin of the goods is in India, and even the destination of such goods is also in India. So now, maybe in the course of transit, the good, sir, you need to understand this, the ship cannot come directly within this. Like if let's say here there is Sri Lanka, na, the ship should cover Sri Lanka and then only it can go to Goa. So then in this process, it went to Colombo airport, seaport, and then it went to Goa. If that is the case, can we consider these goods which were loaded in Chennai and which were being unloaded in Goa as imported goods? No, we cannot treat them because they are not part of imported goods, because for them the origin is also in India, destination is also in India. Maybe in the course of transit they may go beyond territorial waters and again they come back into territorial waters, but even then we need not to treat them as imported goods. So coastal goods are other than imported goods transported in a vessel from one port in India to another. So Chennai to Goa. Then customs station. The customs port which are appointed as customs station are called as, airport, seaports which were appointed as customs station are only called as customs station. Now India. India definition, India includes the territorial waters of India. Indian territorial waters extends up to how many nautical miles? Okay, Indian territorial waters. No, sorry, it's better to use India map only. Okay, this is India. So Indian territorial waters extends up to 12 nautical miles. So let's say the dotted line is 12 nautical miles. And then India even includes its customs waters. Customs waters extends up to 200 nautical miles. Even that that we can call it as even exclusive economic zones as well. So Indian territorial waters extends up to 12 nautical miles, whereas customs waters extends up to 200 nautical miles. Sir, what is the difference between territorial waters and customs waters? Na? Sir, territorial water, sir, a person from outside India cannot enter into customs waters or not, or even he cannot enter into territorial waters. But which is bigger crime or which is bigger offense? Na? When he enters into customs water, it is considered as a comparatively lesser offense. Maybe in sea we cannot find out these signboards and all, na? So sometimes the fishermen and all, they may enter into Indian customs waters which may not be considered as a bigger offense. Maybe with a minimal penalties they might be leaved. But when it comes to territorial waters, it is a threat to security of India as well, which is a bigger offense. Okay, for that reason only there is territorial waters and exclusive economic zones. So In another way, exclusive economic zones na till 12 nautical miles it is Indian territory. Whatever India want it can do. Up to 200 nautical miles, from 12 nautical miles to 200 nautical miles, whatever is the business activities, okay, India has the right to do business activities till exclusive economic zone. That means Indian fishermen can go up to 200 nautical miles. They can extract oil and natural gas up to 200 nautical miles. Beyond 200 nautical miles they cannot extract. Did you watch KGF movie? KGF part 2. Okay, at last climax, in climax, like Rocky, he'll take all the gold now to give it to his mother. Why he has taken all the gold to sea? Because he took the gold beyond 200 nautical miles, and then the ship got sunk there. The point is, once we cross the exclusive economic zone, it will become high seas, and the waters are called as international waters. There, every country has equal rights. There, every country has equal rights. Now, India will say like it's my gold. Other countries also will claim it as like it belongs to their governments. Since there will be a bigger fight, nobody will claim that. Okay, in part 3 again Ash will only come and he'll take the gold. Okay, that's why it was kept beyond 200 nautical miles. Once we cross 200 nautical miles, it is nothing but international waters only. Everybody will, every government will have the equal rights. So high seas, an area beyond 200 nautical miles from the baseline is called as high seas. Next, we need to understand about SEZ. What is called SEZ, sir? Special economic zones. Okay. Here also there may be so many SEZs. DLF is in SEZ only, na? Okay. Sir, SEZs are a separately notified areas by central government. Okay, SEZ zones are notified by central government. For approval, state government will initiate the application. So state government will go and ask like this area designated to us as SEZ. Then central government will approve it as a SEZ. Why they will designate separately as SEZ? Na? Majorly, sir, in SEZ, they'll do exports. They'll do majorly. It's not 100% they'll do export. Majorly, they'll do exports. Sir, what exports they'll do in DLF? Na, sir, whatever the software companies they are, majorly they are providing services to the foreign clients. So, nothing but they are doing exports. So, SEZs majorly they'll do exports. So, since they are doing exports, they have to be encouraged in a such a way. How they will be encouraged? By way of allocating lands freely here. Uninterrupted power supply will be given. Roads and roads, metros, everything will be, connectivity will be provided here, and even at a lower cost. Even electricity may also be provided at a lower cost. They may be having some tax waivers, such as like there will not be any property tax and all. So all these benefits will be given within the SEZ areas. In some case laws or in some in some scenarios, they said like SEZ has to be treated as a separate island within India. Okay, so it has to be treated as a separate island. So you cannot call DLF is in Chennai. Okay, in the context of customs, even if you send goods from here to SEZ, which is within Chennai only, we call it as export. And from SEZ, if you bring goods to outside India, within to DTA, the other parts other than SEZ, the other parts are called as DTA, domestic tariff area. Domestic, within the country, domestic tariff rates. The normal rates applicable area is called as DTA. Whereas into SEZ, normal rates are not applicable. That's why it is called as special economic zones. Okay, so let's say there is a catering guy. He is supplying food to Hinduja company, which is not in SEZ, in a non-SEZ place. And even the same guy is supplying food to a software company, which is in an SEZ. So the same kind of food he is sending to two different places within the Chennai only. One is in SEZ, the other one is not in SEZ. So the food which is sent here is called as export because it is within SEZ. Whereas the food he sent here is not an export because the goods which we send to SEZ will has to be treated as export only. And if any goods we are bringing from SEZ, it also has to be treated as import. Technically, they are within India, but for the context of customs, they are treated as outside India only. They are treated as separate islands, even though they are within India. Even for GST purpose also, if you take any goods to SEZ, it has to be treated as interstate only. Sir, it is also in Chennai. This catering person is also in Chennai only. But even though, since it is a separately designated area, we need to consider it as what? Interstate only. SEZ. The rest of India, other than SEZ, the rest of India is called as DTA, Domestic Tariff Area. So conveyance. Conveyance is the mode of transport we use. Vessel, aircraft, vehicle. Person in charge, the one who is responsible for that vehicle. Vessel, master. Aircraft na commander or pilot in charge. Train, conductor or guard. Vehicle na driver. Next, dutiable goods. Dutiable goods, the word dutiable means future tense. Past, present, future tense la. Dutiable means future tense. So nothing but goods which are chargeable to duty and duty is not yet paid. On them you can levy tax, but the tax is not yet paid. Then they are called as dutiable goods. Then by applying English principles, what we call the goods on which already duty is paid. If the duty is not yet paid, we are calling as dutiable goods. What we call if the duty is already paid? By applying English principles. So future tense na we are calling dutiable goods. Past tense na generally we will add ed na dutied goods will call, but that is not correct here. We need to call it as duty paid goods. If duty is yet to pay, dutiable goods. If already paid, duty paid. If no duty applicable, then they are duty free goods. Duty free, duty paid, dutiable goods. Export. Export means taking out of India to a place outside India. Import means bringing into India from a place outside India. Next, the definition of goods. Sir, in GST, we have discussed the definition of goods as like good means every kind of mobile property. But here they didn't start it as like a mobile property. They started as like good includes. But if you look at the last sentence, they here also they included any other kind of mobile property. So here also mobile property, there also it is mobile property only. But they want to specifically say these are also treated as goods only. Vessels, aircrafts and vehicles. Sir, we'll buy vessels from other countries, aircrafts from other countries, vehicles also. We'll import cars, we'll import bikes, the flights, vessels, everything will be importing. Sir, not for passenger transportation. The one which we buy newly are also called as what? Goods. Stores na, the petrol, the spare parts which they'll use in the ships are called as stores. Baggage means the luggage which will be carried by the passenger along with him. Currency and negotiable instruments. Sir, in GST, currency we didn't include it as good. But in customs, they included currency also as good. So my question is, if you are carrying some 1 lakh rupee with you when you are going to some other country, or else when you are coming from Dubai and you are carrying 1 lakh along with you, will there be customs duty on that currency also? No, there will not be any customs duty. Then why it is included? To have a track of how much currency you are carrying with you. For that reason only they included currency in the definition of goods. They'll not levy any customs duty on the currency. If there is no track of currency, then you will do hawala directly only. Generally in movies you will see like let's say I'm having some 10,000 crores. I want to convert this black into white. So what I'll do? So I'll go to some pawn shop guy will be there. So we need to find him. I'll hand over this 10,000 crores to him. He'll take 100 rupees note. He'll tear it and he'll give other one half to me. Now I need to go to Shivaji movie. If you watch now, that only will happen. Okay, now I'll take the other few. I mean the half 100 rupees note and I'll go to US. Once I'll submit this half 100 rupees note there, then they'll give me the 10,000 crores in dollars. Now I'll give the 10,000 crores to my friends. My friends will send to me as charity, donation, something. Then I'll convert the black into white. Why I need all this process if I can carry how much our currency I want? In my bag only I'll pack the currency. If they don't consider it as good, then they'll not have a track. So then along with me only I'll carry the currency. I'll convert the black into Why that much story also needed? So for that reason, so understand here, they wanted to have a track of currency. That's why they included in the definition of goods currency as well as the negotiable instruments. So good include vessel, aircraft, vehicles, stores, baggage, currency and negotiable instruments. Other than this, any other kind of movable property is also called as goods. Next, this case laws are Associated Cement Company Limited. In this case law, simple thing only. This guy is starting a cement factory. For cement factory, he needs certain designs. Okay, so from foreign country, he asked the engineer to give design for his cement factory. So the engineer made a sketch on a paper, everything detailedly. He made a sketch on paper, and the chart has been sent to India. Now customs authority is saying like on this chart also they levy customs duty. But what the cement company is arguing is like the designs are intangible in nature, so you cannot levy customs duty on them because they are intangible. The matter went to Supreme Court, and Supreme Court said like yes, they are intangibles, but once they kept into a physical media such as paper form, or into a hard disk, or into a CD, or into a diskette, okay, then they have physical substance, they will be treated as tangible items only, and on them customs duty can be levied. Apex Court observed that though technical advice, IT, are intangible asset, but the moment they put on media, they became mobile, and thus they are goods. Prohibited goods. Prohibited goods now goods which are prohibited under Customs Act or any other act. The goods which are prohibited under Customs Act or under any other act, those are called as prohibited goods. Prohibited for import and export. For example, pornographic content, narcotic drugs and psychotropic substance drugs, wildlife products na, uh, this tiger nails, elephant tusk, all these things. Next, specified birds, animals, wild animals, god idols. In some movies, like Jailer movie, if you watched, they'll be sending Indian god idols to other countries now. So those kind of things will be treated as prohibited goods. Their import and export will be prohibited, either considering the Indian heritage or Indian security, okay, or Indian country citizens health. Considering this, and even explosives will also come under the prohibited goods. Explosives, domestic tariff area. Okay, so before coming here, come to page number 24.11, you will find out the procedure of import, the process of import. So look at the process here. There is a person in charge. Person in charge of what? Conveyance. Conveyance na vessel, aircraft, train, or even a vehicle. Before the arrival of the vessel into India, he need to file IGM. What is called IGM na? Import General Manifest. In this import general manifest, there will be the record of goods which they are carrying in that particular vessel. Okay, the goods details will be mentioned in the import general manifest. Along with this, there will be even a passenger manifest also. In that, there will be details of passengers who are there in the plane or who are there in the vessel, along with the crew members details as well. Okay, this has to be filed before the arrival of the vessel or aircraft electronically. I mean, online only they'll file this. Once it is filed, the proper officer will verify it with the data available him. Are there any prohibited goods in the conveyance, or are there any persons who are secure, I mean, who are threat to the country? Those kind of people, if they are in the vessel or conveyance, so that would be verified. After verification, if proper officer is satisfied like there is no, I mean, there are no such instances, then proper officer will grant entry inwards. Once the entry inward is granted, then the ship will arrive at the port. Unless until entry inward is granted from the ship, no good can be unloaded. Only when entry inward is granted, then the goods can be unloaded. Okay, that also under the supervision of proper officer on a working day, on a working hour. Okay, sir, this was the previous one, sir, but now on payment of merchant overtime charges, our goods can be unloaded during a during the non-working day or else during the non-working hours also, but we need to pay overtime charges. Okay, once we pay overtime charges, our goods can be unloaded even after working hours as well. That also in the major custom stations only, not in all the custom stations. Major custom stations we can unload the goods even after working hours, but we need to pay merchant overtime charges. Okay, so now understand, sir, the person in charge of a conveyance has to file IGM before the vessel or the aircraft arrives the port electronically. The proper officer, once he receives the IGM, he'll verify. Once he satisfies, he'll grant the entry inwards. Only when entry inward is granted, the vessel can enter into the port and the goods can be unloaded. Generally, unloading will happen with the supervision of proper officer on a working day during the working hours. However, on payment of merchant overtime charges, the goods can be unloaded even after working hours. Okay, next. So you know Adani company, Adani Ports, Adani Infra. What is their business? Adani Ports now. So Reliance now, I know what is Reliance business. They have telecommunications. They have Reliance Industries now, Reliance gas and oil exploration and all they do. What Adani will do? Adani Ports na, in port what business they'll do? Import and export, maintenance. Sir, what government is doing now? Let us understand in the way which we'll understand. So generally the bus stations are maintained by whom? Bus stations, bus stands, government only na. Railway stations, government. So by looking at these assumptions, we'll think like even the airports and seaports are also maintained by government. But generally airports and seaports require more infrastructure, more hygiene and more maintenance cost, which government cannot do. So that's why they have privatized them. That means some ports will be given to private people. So now private people have ownership of those ports. They will maintain. So okay, they'll maintain. What money will they get? Sir, if you maintain a bus station, what amount you'll get? Or how the money will be generated? Na? Let's say Coimbatore bus stand has been given to a private person. Now he'll completely the infrastructure will get changed. They'll make it as like a completely somewhat like a metro station they'll make. Okay, the whole infrastructure will get changed, everything, ambience, everything got changed. Now the incurred cost fine, how will they generate revenue now? Every passenger who will book a ticket from Coimbatore bus stand, let's say the 500 rupees is the usual ticket. Now they'll make the bus ticket as 600. Now if you book ticket from that particular bus station or from that particular place, 500 rupees will go to the transporter, the 100 rupees will go to the bus station. Okay, same way if you book an 8 ticket, out of out of the amount you pay to the airlines company, a part of amount will go to the airport authority. Like that the port authorities will generate the money. Even for goods also, let's say from Chennai port some 100 tons of goods are being loaded. For every ton, let's say some 50,000 is the freight. Out of 50,000, some amount will go to the port authority, the other amount will go to the logistics company. Like that port authorities will generate money. These port authorities are responsible. Understood? Once the goods are unloaded, the goods will remain in the custody of these port authorities. These port authorities are called as custodians. These port authorities are called as custodians. Let's say if Chennai port is maintained by Adani ports, then Adani ports is called as the custodian. Once my goods are unloaded in the port authority, till I get the clearance, the goods responsibility is with the custodian. Sir, you need not to write. In the above chart, there is a detailed chart that also we'll discuss, then we'll understand everything clearly. Once the goods are unloaded, they'll remain under the custody of whom? Custodian. Next, importer simultaneously will file bill of entry. Bill of entry is nothing but the document which will file to get our goods. I mean, to bill of entry is a document which we file to the customs authority to take our goods from the customs premises. Files bill of entry and pays the duty on self-assessment. On satisfaction, proper officer issues clearance for goods. So you can either warehouse the goods without payment of duty, or you can pay duty and can take the goods to your place, which is called as home consumption. Once the goods are imported, you have two options. You can postpone the payment of duty and keep the goods in warehouse, one option. Second one, you can you can pay the duty and take the goods to your place, either factory or to your home, which is called as home consumption. So the same process. Come to the 24.10 page, you will get in much more detailed way procedure for imports in much more detailed way. Sir, when the vessel or aircraft coming from outside India, it shall not get landed or called except in the customs port or customs airport. Just like as a car or bike, you cannot call or land at any place you want. Okay, it can be vessel or aircraft carrying imported goods. Okay, vessel or aircraft carrying goods can arrive into India or can be landed or called only at the customs port or customs airport. First point. Second point, the person in charge shall deliver IGM electronically before the arrival of the vessel. If the goods are coming through land route, sir, goods may be coming from Nepal and Bhutan. From Nepal and Bhutan, if goods are coming now, then they will be coming in trucks. Okay, with respect to trucks, I mean vehicles, the IGM need not to be filed before the arrival of the vehicle. It can be filed even after the arrival of the vehicle within 12 hours. For aircraft and vessel, mandatorily it has to be filed before arrival. But when it comes to truck, when it is related to trucks, it can be filed even after arrival of the truck or vehicle. Next, on receipt of IGM, proper officer will grant the entry inwards. Only after entry inwards is granted, the goods can be unloaded. Goods shall be unloaded only if those goods are mentioned in IGM. Those goods which are not mentioned in IGM cannot be unloaded, and they should be unloaded at a approved place under the supervision of customs officer during the working hours and working day. Once the imported goods have entered in the customs area, I mean once they are unloaded, they'll be in the custody of custodian. Okay, if any theft is happened in the when they are in the control of custodian, then that is called as pilferage. Pilferage na small quantity theft is called as pilferage. Let's say there are 1,000 goods, sir. Out of this 1,000 goods, if one or two items are missing, then that is called as pilferage. If the whole container is missing, then it cannot be called as pilferage. From the container, if one or two goods, small quantity thefts if any happening, then that is called as pilferage. Since the goods are under the custody of custodian, if any pilferage is happened, then for that pilferage custodian is only responsible. Next, bill of entry. Sir, goods unloaded and they are in the custody of custodian. Goods unloaded and they are in the custody of whom? Custodian. We have two options, sir. First one, file bill of entry, pay duty, then you can take the goods for home consumption. The other one is file bill of entry but don't pay customs duty. Files bill of entry, no duty paid, but you can take the goods for warehousing. But in this route, you need to execute a bond as well. Since you are not paying duty, you just filing a bill of entry, you are taking your goods to a warehouse by executing a bond and by filing a bill of entry. Once the goods are warehoused, from warehouse, again you need to file bill of entry, pay duty, then subsequently you can remove the goods for home consumption. So if you see bill of entry, here there is one bill of entry, direct home consumption. For warehousing there is another bill of entry, and from warehouse to home consumption there is another bill of entry. So there are total 3 types of bill of entries. Bill of entry for direct home consumption, bill of entry for warehousing, bill of entry for warehousing to home consumption. Overall, there are 3 types of bill of entry. So this first bill of entry will be in form 1, whereas this one in the format of form 2, whereas the third one will be in form 3. So now it has become online, but before it used to be manual. That time color has played a significant role. The bill of entry which is in form 1 used to be in white color, whereas form 2 used to be in yellow color, whereas the third one used to be in green color. White, yellow, green. So there are 3 types of bill of entries: form 1, form 2, form 3. 3 colors: white, yellow, green. For direct home consumption, white. For warehousing, yellow. Warehouse to home consumption, green. Okay, like this there used to be 3 different types of bill of entries. Okay, importer shall file bill of entry electronically for clearance of goods, which is of 3 times. Bill of entry can be filed prior to arrival of the vessel. Prior to arrival, that shouldn't be so early, like it should be within 30 days to the estimated arrival of the vessel. And even after arrival also within 2 days. Sir, simply they can write it as 2 days now. Why it was kept as 1 plus 1 na? In the explanation, actually it was given as bill of entry has to be filed by next day to the following day. Next day to the following day of date of arrival. So next day to the following day na, next day 1 day, following day another day. So overall we got 2 days. Actually it was given as the bill of entry has to be filed by next day to the following day of date of arrival. Next day to the following day. Following day is 1 day, next day is another day. So overall we got 2 days from date of arrival to file bill of entry. It can be filed prior to arrival also, but within 30 days. After arrival within 2 days. Next, importer will self-assess the duty considering the applicable rate of exchange and rate of duty. While you file bill of entry, you'll assess your duty as well and submit to the customs office. Customs office will verify whether you calculated the duty properly or not. If they are satisfied and if they are convinced, then you'll submit 4 copies of bill of entry. 4 copies. 1 copy they'll retain with them. Other 3 copies they'll return to you. Okay. On returning, you need to pay customs duty immediately. While submitting bill of entry, you need not to pay customs duty, because in bill of entry you'll do your calculation of customs duty. That would be verified by a proper officer. If proper officer verifies or corrects it, he'll return the bill of entry. Once bill of entry is returned, you need to pay customs duty immediately. On payment of customs duty, out of the bill of entry 3 copies which you are having, 1 copy you'll go and submit to the custodian. Then the custodian will hand over the goods to you. You understood the process, sir? Once the goods are unloaded, they'll remain in the custody of custodian. Importer has to file bill of entry. Customs office will verify. Out of the 4 copies you submitted, 1 copy they'll retain, other 3 copies they'll return to you. Once they return that, you need to pay the customs duty immediately. Once the customs duty is also paid, out of the 3 copies you have, you'll go and submit 1 copy to the custodian. Then he'll hand over the goods to you. Sorry, after submitting 1 copy to custodian also, you are having 2 copies. Now the other copy you will submit at the customs barrier. When you are crossing the goods from customs barrier, the another copy you will submit to the customs barrier. 1 copy will be retained by the importer. Out of 4 copies, 1 copy will be taken by the customs office only. Second copy will be given to custodian. Third copy will be given at the customs barrier. The 4th copy will be retained by the importer. Okay. Based on this, he can avail ITC. Okay. That and all it will get in the next classes, sir. Next, for warehousing. If it is warehousing, then the payment will be deferred till clearance. We have 2 options. One is warehousing, other one is home consumption. If you are warehousing, you will not pay duty now. You will just execute a bond. payment of duty is postponed to the date of removal of goods from warehouse. Next, once the goods are unloaded, they'll remain in the custody of custodian. From custodian, you need to remove the goods for home consumption or warehousing within 30 days. Within 30 days, you need to clear your goods from port. Either you should take them for warehousing or you should take them for home consumption. This is the process of import, sir. The simple process, sir, import. A vessel, a conveyance cannot be landed or called for except in a customs station or customs port. First point. Before arrival, proper officer has to file an IGM. If it is a vehicle, it can be filed even after arrival, but within 12 hours. The proper officer has to verify the IGM. If he satisfies, he grants entry inwards. Unless until entry inwards is granted, no goods can be unloaded from a conveyance. Once the goods are unloaded, the goods can be unloaded only under the supervision of proper officer during the working hours on a working day. However, currently it is possible even after working hours also, but we need to pay overtime charges. Next one. Once the goods are unloaded, they'll remain in the custody of custodian. Simultaneously, when this is happening, importer can file bill of entry before the arrival of conveyance, even after arrival of conveyance. Before na within 30 days, after na within 2 days. Okay. Bill of entry is of 3 types. One is for direct home consumption, one is for warehousing, the third one is for warehousing to home consumption. One in bill of entry, you will assess your duty and file the bill of entry to the customs authorities. Customs authorities will recheck whether you computed the customs duty properly or not. If they are satisfied with the calculation, they'll return 3 copies to you. You need to pay the customs duty immediately. If you want to warehouse the goods, then the customs duty payment will be postponed till the date of clearance from warehouse. Okay. Now the bill of entries which were returned to you, out of them, 1 copy you will provide it to the custodian. Then custodian will hand over the goods to you. Okay. Then you can take the goods to your place, or else you can take the goods to the warehouse. This is the process of import. Sir, export process will not be heavy. It is very simple. Let's say I want to export goods. Before the process of export begins, I need to file a bill of export. Me being an exporter, I need to file a bill of export or shipping bill, whatever it is. Bill of, okay, these are 2 names, sir. Shipping bill, the name of shipping bill will be used when the goods are being exported through aircraft or vessel. When they are exported through land route, then we'll use the name bill of export. So shipping bill or bill of export has to be presented to the proper officer before the goods were loaded. Once I provide the bill of export, then from customs office I'll get a let export order. Sir, me being an exporter, if I want to export the goods, I need to file bill of entry. Then the proper officer will come and verify all those goods and he'll grant me let export order. So my job is done. Now I'll take my goods near the vessel. The vessel person in charge has to get a entry outwards prior to loading. So only when there is let export order from my side and an entry outwards from the conveyance side, then the goods can be loaded into the conveyance. Before the goods are loaded into conveyance, the person in charge should get entry outwards and the exporter shall get let export order. If those 2 things are obtained, then the goods can be loaded into the vessel. Understand, sir? The exporter is required to present electronically to a proper officer of customs a shipping bill or bill of export. Where proper officer is satisfied that they are not prohibited and duty is paid, he'll issue let export order. A vessel intending to start loading must first granted an entry outward by the proper officer. Export goods shall be loaded with the permission of person in charge. However, person in charge shall not permit loading when when bill of shipping bill or bill of export passed by the proper officer has not been handed over. Okay, when we file bill of export, again the same process like bill of entry. We'll submit in 4 copies, then he'll return 3 copies. 1 copy we need to go and submit to the person in charge. Then only he'll allow the goods to be loading. So loading also done, sir. Before the conveyance leaves India, again it needs to file the person in charge needs to file an EGM. Import na IGM, export na EGM, export general manifest. What are the goods loaded into the vessel, who are the passengers list, crew list, everything again they'll submit to the customs office. On verification, then they'll give a written order stating like the vessel or the conveyance can leave India. Only after obtaining the written order, the conveyance can leave India. Simple process only, sir. Exporter shall get let export order, the conveyance shall get entry outwards. If these two are obtained, goods can be loaded into the conveyance. Once the loading is done, again the person in charge of conveyance has to file EGM, export general manifest. On due verification, a written order will be given by the customs office. After obtaining the written order for clearance or for leaving, then the ship or the vessel or the conveyance can leave India. This is the process of export. Sir, under customs, the duties are of two types. Duties are of two types. Revenue duties. The second one is protective duty. The objective of levying revenue duty is to generate revenue only. The objective of levying revenue duty is to generate revenue only. Whereas the objective of levying protective duty is not to generate revenue but to protect local industries. The objective of levying protective duty is not to generate revenue but to protect the local industries. The local industries na nothing but we call them as indigenous industries. Indigenous na the local Indian industries, to protect indigenous industries. But by way of levying protective duties also government will get revenue. Through protective duties also government will get revenue. But intention is not revenue. Sir, let's say government will levy penalties and fines. By levying penalty and fines also government will get revenue. But the intention of levying penalty and fine is not to generate revenue. It's to discourage us from doing such kind of act. Let's say you are not wearing a helmet and going on bike. Government levied some 500 rupees, 1000 rupees. Okay, 1000 rupees fine. Why 1000 rupees fine they levied? Is it to generate revenue? No, it is to discourage you from going without a helmet. Okay, you need to identify the objective. The same way, by levying protective duties also government will get revenue, but the intention is not to generate revenue. Intention is to protect indigenous industry. So the process is simple, sir. Now let's say if there is accessible value 10 lakh rupees, on this first will be levying BCD. BCD now what? Basic customs duty. So which rate we should take BCD? Okay, for BCD, if it is home consumption, direct home consumption, we should take the BCD rate as on bill of entry. The BCD rate as on bill of entry, sir, it will be there in, come to page number 24.5. There you will find out the table. Imports, home consumption. The rate of duty you should take na. That rate at the time of submission of bill of entry or rate of duty at the time of entry inward. Latter is missing, sir. Write down whichever is latter. Latter. The time of submission of bill of entry or entry inward, whichever is latter. So the BCD rate you should take is bill of entry date or entry inward date. Out of these two dates, the rate whichever is prevailing on the latter date has to be taken. If bill of entry is latter, the rate as on bill of entry has to be taken. If entry inward is latter, the rate as on entry inward has to be taken. So BCD, sir, very important, sir. Many times you will do mistake here. The BCD rate we should take is entry inward or bill of entry, whichever is later. Okay. So let's say assessable value is given as $10,000. We will do we calculate tax also in dollars? Can we calculate tax also in dollars? In question they gave assessable value in dollars. Can we calculate tax also in dollars? No, we cannot do that. First we need to convert this assessable value into Indian rupees. The question is, by using which rate you will convert? By using which exchange rate you will convert it into rupees? For that we need to take the exchange rate given by CBIC only. The exchange rate given by CBIC shall only be taken. Exchange rate given by CBIC. Sir, in question to confuse us, he may give RBI rate, FEMA rate. All those rates will ignore. Will take only CBIC exchange rate, and the exchange rate also on the CBIC exchange rate as on the date of bill of entry. CBIC rate as on bill of entry. We need to convert the foreign currency into Indian currency using the exchange rate given by CBIC as on the date of bill of entry. Whereas BCD rate, which dates BCD rate we should take? Bill of entry or entry inward, whichever is later. Exchange rate na CBIC as on the date of bill of entry. Sir, many times, I mean 90% of the chances, the question which they ask will consist of, will have this provision regarding identifying the exchange rate and identifying the correct BCD rate. So don't, please be careful here. For BCD rate, bill of entry or entry inwards, whichever is later. For exchange rate, it is only bill of entry. Okay, the CBIC rate as on the date of bill of entry. So we take assessable value $10,000 that will convert using the exchange rate of CBIC as on the date of bill of entry. Then we should take what? BCD. BCD is what? Bill of entry or entry inward, whichever is later. Let's say it is 12%. And this $10,000 after converting into Indian currency, it came to 8 lakhs. 8 lakhs. On this 8 lakhs, we need to levy BCD at a rate of 12%. How much, sir? 12%. 96,000. Then after BCD, we need to levy SWS, Social Welfare Surcharge. Sir, understand? With respect to social welfare surcharge, there may not be a clue in question. They didn't even mention about calculate SWS, or they don't even give a rate regarding SWS. But SWS is always 10%, except on gold, silver, and other precious metals. The rate is 4%, not 4, I think 3%. 3% only. Sorry, 4% only. Okay, except on precious metals, the rate is 10% only, whereas on precious metals it is 4%. So that 4% point, even if it comes, it will be asked as an MCQ. Otherwise, social welfare surcharge rate is how much? By default, 10%. Even though they didn't mention in question also, you should calculate SWS at a rate of 10% on BCD, not on assessable value. SWS 10% we need to levy on what? BCD. Sir, second thing, this SWS is applicable only when you are calculating import duty. When you are calculating export duty, SWS is not applicable. That is second mistake which we do. On export duty calculation, there will not be SWS. Only on import duties, there will be SWS. See here, it is given here, sir. Aggregate duties of customs levied at the time of import. Only on import SWS is there. On export there is no SWS. So you need to levy 10% on BCD. That is how much? 9,600. First BCD, then SWS. Then any safeguard duty or if any anti-dumping duty are given in the question, that you need to levy. Sir, for safeguard duty and anti-dumping duty, either it is percentage or in any alternative approach that will be given in the question only. That rate will apply and will calculate here. Then we'll do the subtotal. We'll get the subtotal. On this subtotal, then we'll levy IGST. So point you should understand is IGST we cannot levy at the beginning. So for this the connection is there with the value of supply chapter in GST, which says like if the value of supply under GST includes all the other taxes except GST. If any other taxes are leviable on such product or such item, all those has to be added. After adding those items, whatever is the total you arrive, that total is called as value of supply. On that you need to levy GST. So for levying GST, IGST, for the assessable value, you need to add BCD, social welfare surcharge, which are most common things. But anti-dumping duty, safeguard duty may come in certain cases only. If they are given in the problem, add that also. After adding all these things, whatever is the subtotal, on that subtotal we need to levy IGST. Assume 12%. Here safeguard duty is 40,000. How much it is, sir? Subtotal 8 lakh 96,000, 9,600 and 40,000. How much? 8 lakh 96, 9 lakh 600, 9 lakh 45 600. On this again we need to levy IGST at a rate of 12%. Then there will be compensation cess. Sir, by considering income tax logics and all, generally we levy cess in income tax on tax value. But compensation cess is not like that. Compensation cess we need to levy on the same amount on which IGST is levied. It's not like income tax cess. In income tax cess will levy on the tax amount. But under GST, compensation cess is not calculated on the tax amount. Compensation cess has to be calculated on the same total on which IGST is levied. So if IGST 12% is levied on 9,45,600, cess if it is 10%, that also has to be levied on what? 9,45,600 only. Okay. After doing this, we'll find out, we arrive the total customs duty payable. The question asks for us to calculate total customs duty payable. Then we need to add what? This 96,000, this 9,600, this 40,000, this IGST and this cess. By adding all these 5 items, we'll get the total customs duty payable. Sir, I'm telling the format here. Take assessable value. On assessable value, first we'll levy what? BCD. For calculating BCD, they'll give 2 rates in question. If they gave only single rate, no problem, we'll take that rate. If they give 2 rates, then bill of entry or entry inwards, whichever is latter, we'll apply that one. On that again we'll levy social welfare surcharge. If any anti-dumping duty, safeguard duty is applicable, that also we'll levy. We'll do subtotal. On that subtotal we'll levy IGST. On the same subtotal we even levy compensation cess. Now we need to find out the total customs duty payable. Total customs duty payable is nothing but the total of BCD, SWS, SGD or anti-dumping duty if any is there, IGST and compensation cess. The common mistake which again student will do now, for 9,45,600, here IGST will be there, cess will be there, and they'll do a total of all these here and they'll write it as total customs duty payable. That is not the total customs duty payable, because these 8 lakhs you will not pay to government. This 8 lakhs is what? Good value. That good value, why you will pay to the government? You will pay to your seller. Only to government you will pay BCD, those taxes only. So you need to be careful, sir. Generally we'll have this common perception of totaling. Whenever we see a list of items there, the grand total will do. That you cannot do here. You should do only the total of BCD, SWS, SGD, IGST and compensation cess. Then you will arrive the total customs duty payable. Yeah. And out of these items, sir, this IGST and compensation cess we can avail as ITC also. Why? Because when you are importing goods, it is nothing but your purchase only. It is your inward supply. So on your inward supply, the GST component, it is, if any GST component is there, that you can avail as what? ITC. So here the IGST and cess component you can avail as ITC. Okay. So okay, I'm closing for today. Okay. So if you remember, yesterday we discussed like entry 83 of the union list of 7th schedule of article 246 gives the central government the power to frame law with respect to customs. Customs consists of two acts. One is Customs Act 1962 and the other one is Customs Tariff Act 1975. Tariff na nothing but rates. In Customs Tariff Act there are two schedules. First schedule, second schedule. First schedule consists of import duties. Second schedule will consist of export duties. Coming to Customs Act 1962, it consists of provisions related to charge, collection, assessment. Okay, it applicable to whole of India. Even outside India also it is applicable for an offence which is for an act which is an offence as per Indian Customs Act. Even though the one who committed is outside India, also act is applicable. Then we discussed the adjudicating authority. The one who passes an order or who take a decision under customs is called as adjudicating authority, except CBIC, Commissioner of Customs Appeals, and the tribunal. Next, assessment. Assessment means the process of determining dutiability. First, we'll find out whether a good is taxable or not. Once we find out it is taxable, then we'll arrive the tax, duty, cess, or fee payable. But while doing that, we need to consider the tariff classification. I mean the rates which were mentioned, tariff classification has to be considered. Second one, their value has to be considered. Third one, if any exemption concessions are provided, that has to be considered. Four, in certain cases, instead of the duty levied on value, it is levied based on the quantity or volume or based on dimension. So that's why quantity, weight, volume measurements are also important. And the last fifth one is origin is also important, because there is preferential rate as well on certain goods which are originating from preferential countries. Instead of the standard basic custom duty, will apply preferential rate. So that's why origin is also necessary. So these 5 points we need to consider while doing assessment. Bill of export is nothing but the document we'll submit to the customs officer as an application. It's an application which we provide to the customs office to let our goods export. Okay, it's something like with bill of export we'll take permission to export our goods. Next, coastal goods. Coastal goods na, the goods origin is also in India, destination is also in India. These are not imported goods. Even though they were loaded into conveyance, the conveyance may leave India and again enter into India, but their origin and destination is both in India, so they are not imported goods. Then we discussed about India. India includes territorial waters which extends up to 12 nautical miles, whereas customs waters extends up to 200 nautical miles. Beyond 200 nautical miles, it is called as high seas. Then export means taking out of India to a place outside India. Import means bringing into India from a place outside India. Conveyance na, the mode of transport, vessel, aircraft, vehicle. Person in charge na, the one who is responsible for such conveyance. Vessel, master. Aircraft, commander or pilot in charge. Train, conductor or guard. Vehicle na, driver. Next, the definition of goods. Goods means even in GST it is movable property, even in customs also it is movable property. But here in customs they say like goods includes vessels, aircraft, vehicles, stores, baggage, currency and negotiable instruments also, and any other kind of movable property are called as goods. Sir, here they included currency and negotiable instruments not to levy duty on them, just to have a track of how much currency is being carried by a person going outside India or coming to India. For that reason only they included currency and negotiable instruments. Then we discussed this case law where it said like where any designs or drawings are kept on a physical media and sent. Generally designs, drawings or softwares, all these are intangibles only, but once they kept into a media, so here designs are intangible, but when they were kept on a paper it has some tangibility, so it would be treated as good only. That was the decision of Supreme Court. Next, prohibited goods. Prohibited goods na, the goods which were prohibited for import or export under Customs Act or under any other act. So prohibition need not to be under Customs Act only. Even under any other act also, if there is any prohibition, they are called as prohibited goods only. Example, obscene content. Third one, narcotic drugs and psychotropic substances, wildlife products, specified live birds and animals. Then, okay, these two case laws we didn't discuss, sir. We'll come back to them. Then we discussed about the process of import and process of export. Okay, remember or not? Okay, what is the process of import? The person in charge of the vessel or aircraft can land or call the vessel or aircraft only in the customs port. First one. Second one, before the arrival of vessel and aircraft only, the person in charge has to file a IGM na import general manifest. If it is related to a vehicle, I mean through land route, if the goods are being imported, then the vehicle person in charge can file import general manifest even after the arrival of the vehicle within 12 hours. Next, once the IGM is filed, the customs officer will verify the IGM file and then he'll grant entry inwards. Only when entry inward is granted, the goods from a conveyance can be unloaded. And such unloading can be made only during the supervision of a proper officer on a working day, on a working hour. However, considering the present situations, unloading can be made even after working hours on a holiday also, but for that we need to pay extra merchant overtime charges. Once the goods are unloaded, they'll remain in the custody of custodian na nothing but the port authority, who will look after the whole management control of the port. So once the goods are unloaded, they'll remain in the custody of custodian. Till this one point. Now the importer, okay, he can do after this step or before itself, simultaneously also he can do. Importer can file bill of entry. Here bill of entry is of three types. Bill of entry for home consumption, bill of entry for warehousing, bill of entry for warehousing to home consumption. Okay, so that means what is called home consumption? The imported goods, on imported goods, you pay the applicable duties and take the goods to your premises, either factory or house. That is called home consumption. The second option is like, you can postpone the payment of duty to a later date. For the meanwhile, you can keep these goods in a warehouse. You need to pay duty on those goods only when you clear those goods from the warehouse. So this is called as warehousing. So on subsequently, when you are removing goods from warehousing, that is called as home consumption from warehousing, or warehousing to home consumption. So there are three different kinds of bill of entry. One is bill of entry is for direct home consumption. One bill of entry is for warehousing. Whereas the third one is for warehousing to home consumption. And there are different numbers also. Form 1, Form 2, Form 3. Colors also, white, yellow, green. White for direct to home consumption. Yellow color for warehousing. Green color for warehousing to home consumption. Bill of entry can be filed even before the arrival of the conveyance also within 30 days. Even after arrival also you can file, but within 2 days. Next, importer shall self-assess the duty. Okay, you'll submit the bill of entry in 4 copies, sir. Once you submit 4 copies, the customs officer will verify, and if he satisfies like the duty computation and all is properly calculated, then he'll sign it, he'll approve it and return 3 copies to you. Once they returns the bill of entry, you need to immediately pay the customs duty, and out of the 3 copies which you have, you need to provide 1 copy to the custodian. Then custodian will hand over the goods to importer, and out of the other 2 copies, 1 copy will submit at the customs barrier. So then they'll allow the goods to cross the customs office. The last other 1 copy which you have will be with the record of importer. This is the process of import. Then we discuss the process of export. Once you want to export the goods, you need to file bill of export or shipping bill. Again, the customs officer will verify whether the goods are prohibited or not. If they are not prohibited, then he'll check if any duty is applicable and the duty is paid or not, or assessed properly or not. After all his verification, he'll give you a let export order. After getting let export order, you can take your goods to the conveyance. Before these goods get loaded into the conveyance, the proper officer, or sorry, the person in charge of a conveyance has to get entry outwards. So before the goods unload into conveyance, exporter shall get a entry outward, sorry, exporter shall get a let export order, and the conveyance person should get a entry outwards. Only when these two are available, goods can be loaded into the conveyance. Once the goods are loaded into the conveyance, the person in charge, after completion of all the loading and after all the passengers have been arrived, then he will be filing a export general manifest with the customs office. Then the customs people will again verify that export general manifest, and in written order and they'll give a written order stating that everything is clear. Then the vessel or the conveyance can leave the India. This is the process of export. Now coming back, yesterday, okay. So now here, sir, charging section under customs is 12, whereas charging section of GST is 9. Section 9 is the charging section of GST, which we discussed in the morning session. Okay, whereas charging section of customs is section 12, which says like customs duty is leviable on import or export of goods only. Customs duty is applicable only for goods, not for services. Customs is applicable only for goods. So see here, import or export of goods into or out of India. Now what is called import? Sir, import we already discussed. Import means the process of bringing goods from outside India to India. So now the question is, India means I brought till territorial waters. That also called as import only, na. Or else does the goods need to be brought till the land of India, na. So when we can call it as import? India, na sir, we have so many definitions for India. India now only Indian land, Indian territorial waters, Indian customs waters, that and all nowhere mentioned. So it has become a disputable area and matter went till Supreme Court. So Supreme Court said like import is not a single step thing. Import is a process which starts when the good cross territorial waters and continues till the goods will form part of mass goods of India. And nothing but until the goods touch the land of India, import is not complete. Import starts when the good cross territorial waters of India. So it's a process from the point it crosses territorial waters till it touches the land of India. It's a process. Import is not a single step thing. Okay, fine. But in a there is an alternative judgment also, sir. What is the alternative judgment? Now, sir, this is general situation, sir. In general situation, import is a process which starts when the goods cross territorial waters and ends when the goods touch the land of India. Whereas in alternative judgment now, sir, in exclusive economic zone extends up to 200 nautical miles. Let's say this is India. Okay, the dotted line which I kept is the exclusive economic zone. Sir, here, okay, this circle is there na. Here oil extraction is being happened. They are extracting oil. Now, for doing this oil extraction and all, they need so many machinery, consumables and stores, which were being imported from Australia. So from Australia, the goods directly went to the oil rig. Okay, whereas territorial waters is here. The green dotted line is the territorial waters. That means the goods not even entered into territorial waters. They came from outside India and got consumed within the exclusive economic zone only near the oil rigs. Now the question is it import or not? In this particular case, in this particular situation, the court observed that this is an exceptional case. So this exclusive economic zone will also be treated as territory of India only. Since the goods were consumed within the exclusive economic zone, this also has to be treated as import only. Sir, this is not a general definition. This is a specific case. Okay. In this particular situation, courts decided in that way. Whereas in general, import starts when the goods crosses the territorial waters. So on combined reading, we can say like import starts when the goods crosses exclusive economic zones and it continues and ends when the goods touch the land of India. Now the question is, what is the time of supply here? In GST, we have time of supply, na? So what is the time of supply here? Goods crossing territorial waters, or goods unloading, or bill of entry, or goods crossing customs barrier. There are four situations, sir. Whether goods crossing territorial waters, goods unloading, bill of entry, or goods crossing customs barrier. Out of all the four, goods crossing customs barrier is only the taxable event. Only when you are taking your goods from the customs place, when you want to go cross the goods or take the goods from customs barrier, then only you have the obligation or responsibility to pay the customs duty. Why? Even after filing bill of entry also, if my goods got damaged, I'll not pay customs duty, I'll leave there itself, or else I'll ask for abatement, I'll ask for relief. Those kind of alternative things are available. So that's why only when you remove the goods from, or when you are crossing customs barrier, you need to pay the tax. Okay, sir, import done once the goods touches land of India, but just because it is imported, you are not responsible to pay tax. Okay, why? Because now, so let's say I ordered some quality of raw, some raw material I ordered, it was unloaded in the port area. I went and verified the quality which I asked and the quality which they sent are not matching. So okay, so I simply said like, I don't want this kind of material. If I use this material, my machines will get spoiled, or even if machine didn't get spoiled also, my customer base will get affected. So I simply said like, I don't want this raw material. I got, I mean, that is nothing but called as relinquishment of title. I left the title there itself. So I don't have any responsibility to pay the customs duty in such case. You could relinquish your title in the customs port also by looking at the goods. Okay, you thought like these goods are not useful to you, so then you could relinquish your title. You can simply give away your title, like saying like, I'm not the owner of these goods, I'm giving away the title of these goods. Then you are not responsible to pay customs duty. So just because it is import, you are not responsible to pay customs duty. Only when you are taking the goods out from the customs place to your premises, nothing but you are crossing the goods from customs barrier, then you are responsible to pay the customs duty. So which is mentioned here. So see here, sir, in the next case, taxable event in case of import goods is unloading, not a taxable event. Indian territorial waters is not a taxable event. Bill of entry is not a taxable event. But goods crossing the customs barrier is the taxable event. So there is one more case law here, sir. Ambalal and Co. Sir, this Ambalal, what he did na? After watching all the movies, he thought of doing smuggling. Many movies, sir, heroes will do generally smuggling. So many examples. One movie, Dhanush will be there. He'll be doing. Vada Chennai. You didn't watch Vada Chennai? Okay, watch then. Then Nayagan Kamal Hassan. There he'll do smuggling only. In Telugu, I can give so many other references also. Chhatrapati he'll do. Prabhas Chhatrapati. He'll fight with shark also. If recent Devara you watched also, he'll do smuggling only. There is one movie, Sarapattu Parampara. In that movie also they'll do. One side they'll be showing boxing and the other side they'll be doing smuggling only. There's so many movies here also, even Dhanush related also. They'll be doing so many movies. Heroes generally, Pushpa, he'll do smuggling only. Okay, so coming to the point, sir. This movie, Surya's movie is there. Surya, Tamanna will be there. Prabhu will be there. Ayan. Okay. The same way, let's say Yogesh did smuggling and all. The same way how Surya has kept diamonds on his head. Same way he also kept diamonds and he came to India. But Shankar didn't like it. He called customs office and said like, this fellow doing smuggling and all, only he is becoming rich. I'm not becoming. So he called and said to the customs office. The customs office people came and asked Yogesh, okay, they verified all his warehouse and all. Then they found out like he has kept somewhere those goods. Then they observed the goods and they said like, why you are smuggling these goods? These goods are already duty free. Why we do? Generally, why smuggling will be carried out? Because on goods, customs duty will be very high. Let's say 52, considering the BCD, social welfare surcharge, IGST, compensation cess, if any safeguard duty, anti-dumping duty, all those things together, it will be somewhere around 60 to 70%. To save that 60 to 70%, generally they'll do smuggling to avoid the taxes only. Okay, smuggling means already, every time we'll think like it has drugs and all. It need not to be drugs always. Even the normal goods also, just to escape the taxes, they'll do smuggling. Smuggling na unauthorized entry into India is called as smuggling. So he brought smuggling and all. In the meanwhile, he went into the sea, he had a fight with shark, everything he did. But still, the goods which he brought are duty free. Okay, now what Yogesh is saying, la, sir, leave me, sir. Anyhow, these are duty free goods only, na. Leave me. But the customs officer is not leaving. He said, like, on these goods also, you need to pay custom duty. So Yogesh is not accepting with that. He went till Supreme Court. Sir, I did smuggling. Okay, I didn't listen to the customs class properly. I paid customs. I thought they were duty paid goods and I smuggled. But anyhow, those are exempted goods only, na. Why again you are levying duty on them? Leave, no. That's what is contention. But the point which Supreme Court said is like, these are smuggled goods. We cannot treat them in the same way we treat as imported goods. So on these goods, they can levy customs duty. Even though normally there is exemption benefit available, on these goods, we cannot apply that exemption benefit. Okay. So decision, the apex court held that smuggled goods could not be considered as imported goods for the purpose of benefit of the exemption notification. Okay, now we are entering into the duties. Duties are of two types. Duties can be classified into two types. This already I said in the yesterday's class also. Revenue duties, protective duties. When they levy duties, one is of revenue duty, other one is of protective duties. Groups are, these are not. Revenue duties na, by way of levying revenue duties, the intention of government itself is to generate revenue. Whereas protective duties, the intention is not to generate revenue. Intention is to protect local indigenous industry. Yes, by way of protective duties also they'll generate revenue. But intention is not revenue. Intention is to protect indigenous industry. Then someone will say like, sir, then to protect indigenous industry, they might levy protective duties on all those China products. No, then we'll not be using China products. Indian goods only will use. No, then the problem is like, will not meet demand and supply. Let's say in the coming rainy season, if you levy so much protective duties on umbrellas, we'll not find umbrellas in our shops, because 70 to 80% of the umbrellas which we use are importing from China only. So we'll meet the demand and supply. There will be a mismatch of demand and supply. Then what our local indigenous people will do? If there is such kind of mismatch, they'll sell 100 rupees umbrella for 500 then. Okay, then again we will only be get exploited. So further meeting the demand and supply reasons, they cannot impose protective duties also so highly. So there should be a balance between them. So protective duties, just because they have a chance of levying, it shouldn't be so stiff also. They should maintain a balance of trade regarding that. Okay. So now coming to the duties, first one is basic customs duty. The basic custom duty is levied on import of goods into India, which is a standard rate. However, if the goods are coming from a preferential country, then we could apply preferential rate. So see here, sir, BCD is levied at standard rate of duty. However, if importer can avail the benefit of preferential rate, when can we avail preferential rate? For that, there are 4 conditions, sir. Sir, let's say one person filed bill of entry. The goods, assume Russia is our preferential country. Russia has been notified as a preferential area. The goods actually came from Russia, but importer doesn't know that there is an option of this preferential claim and all. So he filed bill of entry normally. He didn't made any preferential claim and all. So customs officer will not look after it, and he will not tell like there is preferential claim, you can make and all. That and all is not customs officer job. It is the job of importer only. If preferential rate is applicable, importer only has to make such claim that preferential rate is applicable to me. First point is the same thing. The claim for preferential rate must be made by the importer. It's not the job of customs office to find out and tell preferential rate is applicable. Only importer has to make a claim. First one. Second one, the goods should be coming from the preferential area notified. Okay, so again, taking back to the Yogesh Korean example, Yogesh has friends in Korea. So just because Yogesh like Korea, we cannot call Korea as our preferential country. So how can we tell it as a preferential country? When Government of India notifies it as preferential country, then only it can be called as preferential country. So the goods should be coming from a preferential area which is notified by government. Third one. Okay, so Yogesh has, okay, somehow Yogesh wants to claim this preferential benefit. So what he did now? He purchased goods from Korea. Then he sent the goods to Russia. And from Russia, he is again importing the goods into India and saying like, goods are coming from Russia, I'll apply preferential rate. That's why the third point, what they said, the goods should be produced or manufactured in preferential area, not just coming from preferential area. They should be manufactured and produced in preferential area to get the preferential rate. Fourth one, Yogesh should have, or any importer should have, the documents to prove the origin of those goods from preferential area. I mean, we should prove the Indian Customs Office that those goods are really produced and manufactured in the preferential area. For that proof, you should have that valid documents. Only if these four conditions are satisfied, you can have or avail the benefit of preferential rate. The other part and all is not necessary for us, sir. This part from here to here, it's not necessary. Even for exams also, you need not to study. Then we discussed this yesterday. The tax rates we should take. When there is home consumption, we are directly home consumption, then the exchange rate we should take is exchange rate as notified by CBSE as on the date of bill of entry. This para I explained yesterday itself. Exchange rate we should take is exchange rate as on the date of bill of entry notified by CBSE. BCD rate, bill of entry or entry inwards, whichever is later. Rate as on the date of bill of entry or as on the date of entry inwards. Entry inwards, whichever is later. It is for direct home consumption. Then for warehousing, goods imported, sir. Then you're keeping the goods in the warehouse. This is warehouse. Then while warehousing, you'll file one bill of entry. And then from removal of warehouse, you'll file another bill of entry. This bill of entry will be in yellow color. Whereas this bill of entry will be in green color. Okay, you will file two bill of entry. This is for warehousing and this is for warehousing to home consumption. Now the point is, for direct home consumption, we know which exchange rate has to be used and which BCD rate we have to use. Now for warehoused goods, which exchange rate we have to take and which customs duty rate we need to take. This is the question. Okay, understand, sir? For warehoused goods also, exchange rate given by CBSE only we need to take. Exchange rate given by whom? CBSE. As on the date of bill of entry only. Sir, here bill of entry, there are two bill of entries. One is for taking the goods into warehouse and one is for removing the goods from warehouse. So which bill of entry we should take now? The bill of entry inbound. Okay. Yes, inbound bill of entry. Inbound. What is called inbound? Inbound, na sir. When you are warehousing the goods, along with bill of entry, you should execute a bond. In this bond, you will state that whatever is the duty accessible or duty applicable will be paid by me. Like that, you will give a declaration on this bond paper. So, when you file bill of entry for warehousing, along with bill of entry, you need to execute a bond. Your goods are going into warehouse now in. So this is in bond. When your goods are being removing, exit. So ex bond. Here the bill of entry is ex bond. Here you are submitting the bill of entry now, so it's in bond. Goods are going into the warehouse, in bond. Goods coming out of the warehouse, exit, ex bond. Okay, this is an ex bond bill of entry and in bond bill of entry, and this is a ex bond bill of entry. So for warehoused goods, if you need to calculate duty, then the exchange rate you should take is exchange rate as on the date of in bond bill of entry. Whereas BCD rate BCD rate also as on the bill of entry only, but this is ex bond bill of entry exchange rate. BCD rate. Customs duty rate as on the date of ex bond bill of entry. Whereas exchange rate as on the date of in bond bill of entry. This is for what? Warehoused goods. Whereas for direct home consumption, exchange rate as on bill of entry given by CBIC, whereas BCD rate na bill of entry or entry inwards whichever is later. So this table, I mean 99% of the times this table will be there in one particular sum. Without using this table, generally there will not be a problem. So you need to understand this table. Very simple only, but many times people will get confused here. Okay. Make note. I have to scroll up or down. Okay, there is nothing else. Okay, okay, you'll understand this also. Okay, fine. In other cases, okay, in any other cases mentioned above, rate of duty is the rate prevailing on the date of payment of duty. No, 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 no. For warehousing to home consumption, this only. Okay, at the time of warehousing, you will not pay any duty, no. Only when you are removing from warehouse, you will pay duty. That time you should use the exchange rate as on the inbound bill of entry and customs duty rate as on the date of export bill of entry. Then your question is like when this case is applicable. Let's say if it is in the case of smuggling kind of, there is no direct home consumption or even the warehousing and removal. Afterwards, when you kept in your place, then the customs people came for verification and they found out. Then they'll use the rate as on the date of payment of duty. Because in the case of smuggling, you will not file bill of entry and you will not get an entry inwards also. Then on which date's rate they'll take? They'll take the rate which is prevailing on the date of payment of duty. You got it, na? That's a very remote case. Next, this additional duty to compensate excess duty, sir. This will not come usually, sir. Understand? Countervailing duty it is. It's got subsumed into GST now. So in this place now there will be IGST. But excess duty is not completely subsumed into GST. Excess duty which is leviable on petroleum products is still continuing. The same way, when petrol is being imported into India, you cannot levy IGST because on petrol we are not levying GST even now. So that's why on petroleum products, tobacco, alcoholic liquor, when we are importing on them in the place of IGST, there will be countervailing duty only. Next, same way, this is special CVD. special countervailing duty. This is with respect to VAT and sales tax. When you import alcohol or when you import petroleum products, on them there will be again VAT and VAT and sales tax. Since on petrol and alcohol there is no GST, on them there will be special CVD. Before GST comes now, there used to be CVD and special CVD only. But now CVD and special CVD scope got restricted because majority of the goods on which CVD and special CVD applicable were subsumed into GST. So it has only very limited role. Exam purpose na completely we can ignore also. Okay. Next, social welfare surcharge. Social welfare surcharge has to be levied at what percentage, sir? 10% only, and it is applicable only at the time of import. If you export, there will not be any social welfare surcharge. And remember, even though question doesn't give any clue about social welfare surcharge also, you should remember and levy 10% as the social welfare surcharge. And 3% is applicable on goods like gold, silver, platinum and petrol. Okay. Next, agricultural infrastructure development cess. There is another cess called AIDC. It is levied on only specified goods. What are specified goods na? Apples, gold, silver, alcohol, petrol. Okay. Usually you will get a doubt like gold, silver na precious metals, alcohol, petrol na okay non-taxable. What apples did? Okay. What apples did na? Actually, we have so many. I mean, even within India also we are having apple crop uh, in so many acres now. Previously, the cultivation of apple is less, so we used to import apples as well. But now within India also we are having lot of apple farms available. So that's why we need to discourage the apple imports, so that our domestic farmers will only get. I mean, our domestic farmers will only get benefited. That's why on this also they may levy AIDC, and AIDC rate na, which will be given in the question only as per the notification. But understand, sir, where AIDC has to be levied, AIDC is leviable on the assessable value on which BCD is levied. So we'll arrive the assessable value. As assessable value, on assessable value first we'll levy. Let me write it here. On assessable value, first we'll levy BCD. BCD at a percentage on assessable value will levy. Then we'll levy social welfare surcharge. Social welfare surcharge will levy on what? BCD. Okay. Then if there is AIDC, on what AIDC has to be levied? AIDC also has to be levied on what? Assessable value only. Okay. Then it comes to IGST. So there is nothing great to discuss IGST, because if you remember the section 7 of IGST Act, which we discussed in the morning session, imports are interstate supplies. Imports are interstate supply. That's why they are levying IGST. Sir, why IGST has to be levied? They are already levying BCD na. Why again GST and all? Sir, if it is a domestically manufactured goods, on them there is GST na. Just because you import from other country, there is no GST means the local goods are getting taxed heavierly than compared to that of imported goods. Just to have equal grounds, even on imported goods also they levy IGST, okay, or GST. Previously they used to levy excise duty and sales tax. Now in the place of excise duty and sales tax, they are levying IGST. Okay, IGST will be levied on imports, and the rate of IGST shall not exceed 40%. Sir, on what IGST has to be levied? That is the next question. On what value we need to levy IGST? Sir, till now we got till AIDC na. If at all there is safeguard duty, levy safeguard duty as well. If at all there is anti-dumping duty, levy that also. If any other duty also is there, levy that also. After levying all these duties, do a subtotal. Okay, on this subtotal value only we should levy IGST. You will get this connection even in value of supply also. Value of supply provision says clearly like all the duties and taxes has to be added to the value. On such value only you need to levy GST. So all these duties and taxes has to be added to this transaction value. Then you will arrive the total. On this total you need to levy IGST. Then there will be compensation cess. Why compensation cess is levied? Certain states losing revenue due to introduction of GST. To compensate the loss of revenue to such states, the government started levying compensation cess. Okay, so the compensation cess is not levied on IGST, it is also levied on the same subtotal only. On the subtotal only IGST will be levied, on the subtotal only compensation cess also will be levied. Why I need to stress so many times? Because by doing income tax from years, we are used to levy cess on tax amount. But here cess will not be levied on tax, cess will also be levied on the total value only. Okay, let's say IGST 18%. Here we got subtotal as 13 lakhs. On this 13 lakhs, we need to levy IGST as 18%. If compensation cess is 12%, this 12% also has to be levied on 13 lakhs only. Got it? Then we'll discuss about safeguard duty, sir. We'll discuss about what? Safeguard duty. What is called safeguard duty? Na? When there are increased imports, of a product into India. Let's say there are so many mobiles getting imported into India. Just because there are increased imports, it's not a problem. There are increased imports, and such increased imports causing or threatening to cause serious damage or injury to the domestic industry. Because of that increased imports, our domestic industry is getting to affect, or it not yet affected, but it is in a threatening situation. If we continue in such a way, then it will affect the domestic industry. Either it already affected or it is going to affect the domestic industry. Then the government may think of levying safeguard duty. So read here. Imported goods are cleared into DTA, then safeguard duty will be payable on conducting inquiry if it is satisfied that those goods are imported to India in increased quantities, and such increased importation is causing or threatening to cause serious injury or damage to the domestic injury. Increased imports are causing or threatening to cause serious damage or injury to the domestic industry. So safeguard duties are, if it is levied, it's not levied on a country wide, it's levied on a product. Let's say on mobiles they want to levy safeguard duty, so then safeguard duty will be on mobiles. Mobile may be coming from China, USA, or from any other country. Safeguard duty is levied on product specific, from whatever the country they are coming. They, if on that particular product safeguard duty is applicable, then safeguard duty will be levied. It's not country wise, it's product wise. Then safeguard duty, once it is made applicable, it remain in force for a period of 4 years, and the levy of safeguard duty can be extended till for a maximum period of 10 years. Next, if for determining the rate of safeguard duty, if it takes time to determine the safeguard duty, then for the time being they can go with preliminary determination. So provisional safeguard duty can also be levied, because so let's say from industry, indigenous industry, the government got some complaints saying like there are increased imports which will affect our businesses. Then the government scrutinized on a preliminary investigation has been carried out and thought there is some damage which is going to cause. So now for to carry out a detailed study and to arrive how much impact it is going to make, it may take 6-7 months. Till that point of time, if government simply waiting now, then the whole damage will happen within the 6 months only. So that's why the government initially we may go with the provisional safeguard duty. After final determination, if they paid excess now, they'll refund. If there is short payment now, then they'll ask them to pay the excess amount as well. Okay. So when on final determination, if central government is of opinion that there is no serious injury, then it will refund the duty collected. Provisional safeguard duty will be in force for only for a period of 200 days. Next, this point not required, sir. I mean, which I am striking off. The next point is again important. Safeguard duty is not applicable when the goods are imported by a EOU or SEZ. The goods are imported into India, but the import is into a SEZ area or to a export oriented undertaking. Then there will not be any safeguard duty. The next thing, sir, when the goods are originating from developing countries, goods are originating from where? Developing countries. India developing, na developed? Developing on, like India, there are so many other developing countries now. So if goods are originating from developing countries, we cannot impose safeguard duties in such a way which will impact their develop. Okay, sir, already developed country now, even if we impose safeguard duty, no problem, they are already developed. But we cannot discourage developing countries which got the production phases, the education, technology in the recent times only. So we cannot discourage them by imposing this kind of safeguard duties and all. So just to have a fair chance for them also. So what they are saying means safeguard duties cannot be levied on developing countries unless they reach this specific percentages. Understand now? There are 5 countries, sir. A, B, C, D, okay, and others. Okay, A, B, C, D are also countries only. From A country, there are imports of 100 crores. From B, there is 150 crores. From C, there is 200 crores. From D, there is another 180 crores. Okay, what is the total of all this? Calculators, you don't have a 380, 430, 530, 630. 630, 4,370 is the balance. So what is the total here, sir? 5,000. Clear? Huh? So now let us calculate the percentage of imports compared to the total. This is the other countries related imports, sir. The total is how much? 5,000. Let us calculate the percentage. Now you need calculator anyhow. Depreciate it. Okay, 5 out of 5,000, 100 crores na 2%. 100 crores na 3%. 180 crores na 3 point. Okay, 200 na 4 percentage. 180 na 3.6 percentage. Okay, so balance it is. Sir, what they are saying now, all these ABCD are assuming developing countries. When the imports are being made from a developing countries and the share of imports from such developing countries within 3 percentage, then safeguard duty is not applicable. So here from A, B, it's not exceeding 3%. So from C, it exceeded 3%. From D, it exceeded 3 percentage. So here you can levy safeguard duty. Here you can levy safeguard duty. These are developed only. So on these also you can levy safeguard duty. But on A and B, you cannot levy safeguard duty. This is the first point you could see here. Articles originating from developing countries, share of imports of that article from that country does not exceed 3% of total imports into India, then you cannot levy safeguard duty. Where the goods which are originating from developing country, the total share of imports from such country with respect to such product is within 3 percentage, then safeguard duty is not required to be levied. This first point. But there is a second point, sir, which also we need to check. The second point says like, sir, I'm changing numbers here. I make this as 180, which comes to 3.6 percentage. I'll make this as 100 only. So 80 plus 20, 100. So I'll make this as 4,470. Now it will get tallied. 250, 350. Tallied. So total correct only. Check once. 250, 350, 530. Yeah, correct only. Correct only. Yeah. So now see. Now only one country we are having more than 3 percentage. So we are clear that on this there is safeguard duty applicable. Fine. The second point which they are asking us is like, check cumulatively from all the developing countries whether it is within 9% or not. Cumulatively from developing countries whether it is 9 percentage or not. Check cumulatively and tell whether it is within 9 percentage or not from developing countries. So if you add all the 4, 5, 7 or 10.6, it is becoming. So it is exceeding 9 percentage. But the important point here is, while doing cumulatively, you should exclude the developing countries whose individual share is more than 3%. That means you shall not consider C, because individually its share is more than 3%. No. So you should not include C while doing the cumulative calculation. So only these 3 you need to add. 1, 2, 3, which is 7 percentage, which is within 9 percentage only. So safeguard duty is not applicable. Okay, the first round will check individually whether it is more than 3% or not. Within 3%, na, first round no safeguard duty. Second round will go and check cumulatively, considering only the countries whose individual share is within 3%. If cumulatively also their share is within 9%, then safeguard duty is not applicable. Then countervailing duty not required. That's why I strike now. Come to anti-dumping duty. Sir, a person in China is producing, I mean, he manufactures mobiles. Okay, he produces 1 lakh, he manufactures 1 lakh mobiles, sir, and he sells each at 20,000, whereas his cost for each mobile is 12,000. So for every unit is generating 8,000 as profit for 1 lakh mobiles. This is what he is doing. Now a manager came to, I mean, joined in this office newly, and he said like, if you double the production, our profit will also get doubled now. That's the idea he gave. If you double the production, then the profit will also will get double now. That's the idea he gave. Will the company implement that? If they double the production, their profit will also will get double now. The price will also get reduced now. Okay, will reduce for some extent. The point is not about price reduction. First thing is about demand. Will we produce double that of items? Who will buy? Okay, simple thing. See, even the bhaji local street vendors also will know, if they sell 1,000 bhajis on a single day, they'll become so much rich. Okay, but the point is, will the customers will buy that many? No, there is no demand. The problem here also, they could double the production, but the problem is, where is the demand? So for that, the idea he gave is like, okay, we'll produce 2 lakh units. By producing 2 lakh units, their cost from 12,000, their cost came down to 8,000 per unit only, in from 12,000, because the production got double, no. But in China they can sell only maximum 1 lakh units. But if you look at China, in 1 lakh, in China 1 lakh units they are selling at the same price, 20,000 only. But now their margin got increased from 8,000 to 20,000. They got 12,000 margin. Previously it used to be only 8,000. Now the point is, what about the other 1 lakh units? The manager given an idea like, the other 1 lakh units, they can be sold or imported to India. So the question again to the China one is, who will buy 1 lakh units suddenly even in India also? For that, the option he gave is like, we don't sell for 20,000, we'll sell them for only 8,000. That is the break even amount, na. So in India they'll sell for only 8,000, but whereas in China they'll sell for 20,000. If this thing is happened, then Indian domestic industry cannot survive with this kind of situation, because Indian domestic industry, for them the manufacturing cost itself will be somewhere this 12,000, 13,000. If this fellow comes with 8,000, na, they cannot survive with this type of imports and all. This is called dumping. Okay, they are dumping goods into India for a price which is less than the price in their country. In their country they are selling for 20,000, but in India they are dumping for a lower prices just to recover their break even. Even in certain cases maybe less than break even also. So just to dump in India for creating market, or for just to dispose their excess production into India. So which is causing threat to Indian manufacturers and Indian industry. So to prevent this, Indian government will levy anti-dumping duty. What is the anti-dumping duty? Sir, the local manufacturers, I mean indigenous manufacturers, can sell this mobile at 18,000 in India. So now the anti-dumping duty is, at what price they dumped into India? 8,000. What is the price they are selling in their country? 20,000. The difference between them, the price at which they are dumping into India and the price which they are selling in their country, 12,000. Na? This is one point. This is called as dumping margin. This 12,000 is called as dumping margin. Dumping margin is the difference between the price in their country and the price at which they are imported into India. Dumping margin. Then we'll find injury margin. At least if Indian market should not impact, na, at what price it should get sold. Let's say in India the sellers are, the local manufacturers are selling at a what price? 18,000. So at least if this good is sold at 18,000, then there is no damage. So 18,000 and 8,000, what is the difference? 10,000. This is called as injury margin. Injury margin, the amount which is enough to reduce the damage or injury in India. That is nothing but just 10,000. Whereas this is 12,000. Out of these two, whichever is lower will be considered as anti-dumping duty. So you could see here, anti-dumping duty is nothing but margin of dumping or injury margin, whichever is lower. So the problem with anti-dumping duty is theory will be in one way. When you're solving the question, it will be altogether in a different way. Okay, we'll solve anti-dumping duty questions in the next classes. So I'm moving now to the valuation, but before going into that, a disclaimer, sir. Types of duty, actually it is not there in the CMA final syllabus. When you open institute book, there is no types of duty chapter in the syllabus. But then why we spent in EVO batch also 1.5 hours for this chapter na? Without knowing types of duty, you cannot do valuation chapter. Valuation chapter as a compulsory 7 marks question. Valuation chapter you cannot do without knowing types of duty. So all the discussion which we did, even though it's related to types of duty, it will get added to valuation chapter. So for valuation chapter, we discuss types of duty. Okay, even though technically there is no types of duty chapter, all the terms which we discussed now will get linked with the valuation chapter. So now in valuation, sir, simple thing only, the basic format, 7 marks question related format alone I'll discuss and I'll leave. In valuation chapter, they'll simply say like, there are rules for valuation, sir. Rule 1 na title it will give. Rule 2 they'll give definitions only. We are straight away going to rule 3 valuation. Rule 1 title only. Rule 2 definitions. Rule 3 what does it says na? You can take transaction value itself as assessable value. You can take transaction value itself as the assessable value. What is called transaction value? So let's say there's a fruit vendor. I went to this shop and I asked for 10 apples. They said 10 apples as 500. Since I don't know how to bargain, I paid 500 rupees and they gave me 10 apples. Just I took the 10 apples and just taking my bike. One auntie came and she asked like, what is the cost of 10 apples? This fellow said like it is 500. She'll say like I'll pay 200 and that fellow gave the apples also. Okay, for me I paid 500 rupees, whereas that person, she paid only 200 rupees. Understand the problem here, sir. The 500 rupees I paid is also transaction value. The 200 rupees she paid also is the transaction value. So transaction value is the price which is traded among two unrelated parties where there is no other situations other than where there are no other like they are not unrelated. Other than price, there is no other consideration also. So in such cases, if any transaction is happened, that is called as transaction value. Me and that vendor is also not related, whereas that she and the fruit vendor also not related. Other than price, there is no other consideration also. Then the 500 I pay is also transaction value. The 200 she paid is also transaction value. Okay, so what we are saying is like transaction value itself can be taken as assessable value. It need not to be the same value in all the cases. There may be changes from one person to another person. One person has bargaining skills, so he can bargain it for a lower price. That itself would be the transaction value. Whereas in any other case, the different amount can be the transaction value. So customs officer cannot involve and say like why here 200, why here 500. He can just check whether price is not the sole consideration or any other factors getting affected. That alone he can check. He cannot simply say like here 200, here 500. So this 200 also will make it as 500. That and all he cannot say. He has to establish are there any other factors which could affect the transaction value. Okay. So you can take transaction value as what? Assessable value. But for that there are 4 conditions. Supplier na here exporter, and recipient na importer. both of them should be unrelated. Why? If they are related, then the price might get compromised. Sir, let's say the foreign supplier is my brother, sir. Then he will sell me at a lower price. Okay. If you take lower price as the accessible value, then the government will get less duty or less taxes. That's why they cannot take transaction value as accessible value when the both exporter and importer are related persons. Next, second one. Price. Okay. Consideration is in non-monetary form, and for that non-monetary thing we cannot find out monetary value. So the problem is not non-monetary consideration. The problem is the consideration we paid is in non-monetary form, and for that we cannot find out a monetary value. Let's say, sir, I imported goods and for that I am paying gold. I'm paying, instead of giving money, I'm giving gold. For gold, even though it is non-monetary consideration, we can find out monetary value easily. So then there is no problem to the customs officer. The problem is when we are paying non-monetary consideration, and for that non-monetary consideration we cannot find out the exact monetary value. Let's say, for example, okay, they are sending me goods. For that I am saying like I'll provide a service to them. So now for the service which I provide, we cannot find out a monetary value exactly. So in those cases we cannot take transaction value as accessible value. Third one, exporter cannot put control or exercise control over the imported goods. Sir, I already imported a car. Okay, from Tesla I purchased a car. I imported a car into India. Now that car I'll take it to China, Delhi, or I'll take it to Chennai or Delhi or wherever I want. But what Elon Musk is saying, he's calling me and saying like only you should go in that car. Nobody else can come in that car. Today, what is your problem? I'll go alone or else I'll take someone else. What is your problem? That's what only will tell. Understand the point. If he put such kind of control also, I'm accepting. Elon Musk said me like, you take, okay, I imported Tesla car from him and I'm using this car as per the conditions which he said. When we are accepting such conditions, then customs officer has a doubt. Why this fellow accepting these conditions? Maybe price got compromised. So generally, sir, assume the Tesla car value 1 crore. He gave it to me for only 1 lakh. Then I listen. Okay, anyhow he gave it for me 1 lakh only. I listen whatever he say. If I paid 1 crore, then I'll not listen to him. I paid 1 crore for you. I'll go whatever the way I want. Who are you to put conditions to me? So if seller is exercising or putting such kind of conditions on an imported good, then the price might got compromised. We cannot take transaction value as the accessible value. If there are no such controls, no problem. If we put such controls, then there is a question regarding the price compromise. That's why we cannot take transaction value as accessible value. Fourth one, the importer shall not share sale proceeds with the exporter. Sir, exporter sent goods to me, X. Now X sell those goods in India. Okay, he is also in India only. He'll sell goods in the domestic market. Let's say he imported it for each good for 5,000 rupees and he sells in India for again 10,000 rupees. Now the point is, initially you paid 5,000 rupees to the exporter. This 5,000 is called as the transaction value. But the contract has a condition like not only this 5,000, even in your resale proceeds also, in this 10,000 also, you should give some amount to your exporter. Then in such case, the exporter is not just getting 5,000, he is getting extra amount also. So you cannot take simply transaction value as accessible value, because he is not only just getting 5,000, he is getting some amount in the 10,000 also. What we need to do? We need to add that amount from 10,000 also to arrive the accessible value. So let's say from this 10,000, if you are paying 2,000, then this 2,000 also add to 5,000, then the 7,000 will be taken as the accessible value. So there are 4 conditions, sir. What are those 4 conditions? Generally, you can take transaction value as accessible value. Only in 4 situations you cannot take transaction value as assessable value when both of them are related. Second one, they are not related, but the consideration is to be paid in non-monetary form. Non-monetary form also not a problem. It is non-monetary form, and for that you cannot find out the monetary value. Third one, the consideration, sorry, the third one is like exporter is putting some conditions on the importer, and importer is using the, I mean, importer is following those conditions. Then there are unreasonable conditions or certain conditions he is inserting on importer. Then the price might got compromised. Fourth one, importer is sharing the sale proceeds of his resale with the exporter. Then the exporter is getting multiple amounts, not the original amount. He is getting even extra amount also. So not the transaction value. You take transaction value and add this extra amount also, then you'll arrive the assessable value. These are the four conditions to be followed when you take transaction value as assessable value. So now, so let's say this is Australia. Here the factory is there. Okay. Then in Australia the factory is here. So let's say the exporter said like, I will give the goods at, I mean, he's saying like he'll give the goods at his factory gate only. From there, it's our responsibility to bring the goods into India. So where a contract is in such a way that the exporter will deliver the goods at his factory gate only. From his factory gate in Australia, it's our obligation to bring the goods into India. If the contract in such a way, then the price we agreed at this factory gate is called as X factory price. X factory price na, it is the price at the factory gate of supplier in export country. Then there is a port here. In another way, I mean, in another contract, he said like, okay, not till factory gate, I'll bring the goods till the port gate. If he agreed to bring the port gate, then the price we agreed is called as FAS, free alongside. If he agreed to give the goods only at his factory gate, then that is called as X factory price. If he agreed to bring the goods till port premises, till the port gate in exporting country, then that is called as free alongside. From there, there is a ship here. If the goods are loaded into the ship, then the price when the goods are loaded into ship, then that is called as FOB. Then there is India. If the goods are unloaded into India, till that point of time, if the price is agreed, then that is called as CAF value, and the CAF value itself will take it as assessable value. So the transaction value which we are referring now, the value when it is unloaded at Indian port, not the value at factory gate. So there are quite different terms. X factory price. X factory price na price at the factory gate of exporter. At the price at the factory gate of exporter. Whereas FAS na price at the port gate in exporting country. FOB na price when the goods are loaded into the ship in exporting country. Whereas CAF value na the value of the goods or the price of the goods agreed when the goods are unloaded into Indian port. Okay. So the points are, understand, X factory price means it is nothing but the total of cost plus margin. So see here, sir. This is only very important. The format we are discussing now. X factory price. How will arrive? First we'll take the cost of the goods. For that there will be margin of exporter. Margin of exporter. Then we'll arrive what? X factory price. So now tell me, from factory to port gate, to bring the goods from factory gate to port, what cost will be incurred? So this is the factory in Australia. From here we need to bring them to port. What cost will be incurring? Transport. Transport which is incurred in Australia. So we call it as local freight. Local freight. Local insurance. Local taxes. Taxes like GST, if anything is there, those local taxes. If you add all these three, then you'll arrive FAS. FAS na free alongside. Free alongside na where the goods are now. Port gate. Okay. Now the goods has to be brought into ship. To bring the goods into ship will incur clearing and handling charges, sorry, loading and handling charges, not clearing, loading and handling charges if any, plus if any export duties applicable there, export duties in customs port, if you add them, then you'll arrive the FOB. Free alongside, free alongside, it's not important, you don't, free alongside is not important for solving problems, only theoretically we'll use FAS. While doing problems we'll skip FAS, directly from ex factory price we'll calculate FOB while adding these things. Okay, ex factory price na cost plus is profit. From ex factory price to FOB we should arrive now, we need to add local freight, local taxes, local insurance, local na not in India, exporting country Australia, local freight, local insurance, local taxes, and loading and handling charges if any export duty applicable. All these things if you add, then you'll arrive FOB, free on board. The problem is customs will not accept this FOB. This is the FOB we arrived na. Customs people say like this FOB will not accept. What's the problem for them na? In this FOB there may not be incidental expenses added. Incidental expenses na packing cost of these goods, designing charges of these goods. So let's say if you see now in India, when if you look at a little like not the budget cars, if you go to SUV segment in cars these days, if the car should look fancy na, it should have a sunroof in India. But in foreign, like this sunroof na, it is necessary for them because they want to get that D vitamin, so that's why they are having that sunroof. But in India na, sunroof is a fancy thing, just like as in Raja Rani movie, Naintara will stand and shout na intro scene. For that purpose only here majorly sunroof. Even if you have sunroof also will not use for the sunlight, we'll use only for show off, we'll stand there and we'll shout. Okay, for that reason. So let's say sir, I'm buying a car from outside India, but that car doesn't have sunroof. If I buy a car for 50 lakhs and I import into India, here the local people will say like it doesn't have even sunroof also, it's a mokke car, they'll say. So for that reason what I need to do, I should have a sunroof. So I ask that person to change the design and put sunroof. For that there is a separate designing cost and there may be a packing cost, and that car which I am importing is a self-drive car, auto drive. Okay, you have seen in other countries also there are auto drive cars, even the cabs also, some cab services also they are using these auto drive cars, they'll not be driver also. So that kind of car, so in that car there will be a software which will be installed again just to control the whole system and all. So for that there might be a royalty and license fee for that software which is being installed in the car. So there is designing cost additional, there is packing cost additional, there is royalty and license fee in additional, there may be inspection charges, or there may be something like for that car if any materials needed na, I have supplied free of cost some materials which are with me, those cost also I need to add. Okay, after adding all these items only we need to arrive FOB, that is as per customs requirement. The FOB which we agreed will not be accepted by the customs. So customs people are saying like if any incidental expenses are there, add all of them also, then we'll arrive the FOB customs. So to FOB we should add designing cost if it is not included already. If it is included, no problem. If it is not included, then we should add what? Designing cost. Designing cost which is incurred outside India only we shall add, not which is incurred in India. Designing cost incurred outside India we shall add. Then packing cost we shall add. Packing cost we shall add. Then we shall add even commission and brokerage. Commission and brokerage. Sir, I'll explain tomorrow what is called buying commission. If in question there is something like buying commission, we shall not include it. Other than buying commission, whatever is the other commission and brokerage, we can add here. In question, if you find out something like buying commission, ignore that one. Other than buying commission, if any commission and brokerage is there, that you will add. You will add designing cost incurred outside India. You will add packing cost. You will add commission and brokerage. Then you will add inspection. Then you will add free of cost material if any given to the supplier, free of cost material, and even you will add if any sale proceeds shared with him. Sale proceeds which is shared with him. Sir, let's say that initially you paid 10,000, sir. Afterwards, from your sale part, you are going to share some amount with him. That amount also you need to add. Sale proceeds which you are going to share subsequently with the exporter. After adding all this, the amount which you arrive is called as FOB customs. Sir, arriving FOB customs itself is the task. If you arrive FOB customs, to that you will add freight and insurance, you will arrive CAF value. Okay. Ex factory price na price at the factory gate of exporter. From there to FOB, if you need to arrive, you need to add local insurance, local freight, local taxes, loading and handling charges, export duty. You'll arrive FOB. But FOB will not be accepted by the customs. They want what? FOB as per customs we should calculate. FOB as per customs na, if these kind of incidental expenses, if anything are there, if they are not included, then you need to include them. So other than these 7 items, there will not be any additional item in our problems also. Designing cost, when it is incurred outside India, you should add. Packing cost, you should add. Commission and brokerage, except buying commission, you should add. Inspection charges, you should add. Then free of cost, if any material given by me, importer to the exporter, the value of that material which I given also has to be added. Then if I am, other than the money which I initially paid, if I am going to share subsequently any resale proceeds, the amount of such resale proceeds also has to be added. By adding that, you will arrive FOB customs. To FOB customs, if you add freight and if you add insurance, then it will be nothing but CAF value. CAF value is the accessible value. On that accessible value, we need to levy BCD, SWS and all. Okay. So now we are in a position, I mean in tomorrow's class, once we start the class, customs class, then we can solve directly the problem. Sir, yesterday, like we discussed about the types of valuation in that chapter, we discussed about safeguard duty, anti-dumping duty, all that. Then we entered into valuation chapter also. Problems we not yet started, but in valuation chapter I said about there will be ex factory price. Ex factory price na price of the goods at the factory gate. It includes cost of production and manufacturer's margin of profit without cost of freight. I mean at the factory gate of exporter, the price decided is called as ex factory price. Then free alongside na the price at the port gate. Okay, to bring the goods till port gate, for ex factory price we need to add the freight from the factory to port gate, and even if any local insurance and local taxes, that we need to add. Then we have free on board. Free on board means the stage at which the goods are loaded or boarded into the ship or aircraft. So for that we need to add FOB means the stage at which the goods are placed on board the conveyance carrying the vessel. It can be said that to include FAS plus loading charges plus export duty. So here it would be much more better for you to understand. So see, if you follow this one, first we are starting with the value of material at ex factory price. For ex factory price we are adding carriage, freight, insurance up to the port. Nothing but we are calling it as local freight and local insurance. And then charges for loading onto the ship at the shipping port in the exporter country, loading and handling charges. I have said other 2 extra points also. Local taxes or export duty, if any, that also has to be added. Then we'll arrive at FOB. But this FOB customs will not accept. From FOB we need to arrive FOB customs. FOB na free on board. Okay, to FOB we should add the following if not included, if are not already included. So you could find some similarities between value of supply and here also. First you need to add commission and brokerage except buying commission. Sir, buying commission na, sir, generally if there is seller and buyer, in between them there is a broker or mediator who tries to make a contract, I mean who tries to fix a deal between these two persons. Generally the broker means. For that this broker will be getting commission or brokerage. But buying commission na, there is already a contract between seller and buyer. Okay, but there is this agent who will just act on behalf of buyer to enter into any already the contract is fixed and all. If any formalities has to be followed, such as like if any buyer signature or else if any places buyer is required, na, on behalf of buyer, this agent will be acting on behalf of buyer. So this agent actually he is not doing any mediation between seller and buyer. He is just representing buyer. So that commission we call it as called as buying commission. So that buying commission we shall not add. Next, packing cost. Except if it is returnable packing cost, we should add. Then cost of engineering, designing, development we should add if they were incurred outside India. Then royalty and license fee we should add. Then value of resale proceeds if any are there. Subsequent sale. Importer from his resale proceeds, if any amount is going to share with the exporter, that amount we need to add here. Free of cost material if any supplied, that also has to be added. Then inspection charges if any, that also has to be added. Then we'll be arrive the FOB value as per the customs. Then from FOB, sir, FOB means what? The goods were loaded into the ship. So now I need to tell one thing, sir. Let's say this is India. So here the ship is there. Titanic. This is Yogesh. Jack and Rose will be there, na? Okay. Okay. So the problem is like when a big vessel or ship is coming into India, the problem is like the sea depth will not remain same every time. It might be changing based on the tides, based on the cyclone and all. The sea depth will be changing. So now considering the sea depth and all, this big ship cannot enter into the port of India because the sea depth might have got reduced because of the high waves and all. So now the ship will not come near the port. So now the goods will be unloaded using the small boats. Now the small boats will come, by using them the goods will be unloaded. Sir, now the freight, na, not only for this big ship the freight is incurred, even for the small boats also freight will be incurred. The freight incurred for these small boats will be called as lighterage charges or boat charges. Lighterage or boat charges. Now from FOB, if we need to arrive CAF, CAF is the value when the goods are unloaded in India. To unload the goods into India, not only the freight for the big ship, even for the small boats also they are incurring freight. That freight also has to be added, which we call it as boat or lighterage charges. Okay. Next, the ship came till the port, sir. The ship has arrived at the port, but once when there is a delay in unloading the goods from the ship, then the shipping company will be levying ship demurrage charges. They levy ship demurrage when there is a delay in unloading the goods from ship. So, sir, ship demurrage was incurred before the goods were unloaded. So, the goods were still in the water only when the ship demurrage has been incurred. So, that's why ship demurrage also has to be added. There is another thing, sir, called port demurrage. Port demurrage, na, once the goods are unloaded into the port, the goods has to be cleared from port premises within 30 days. If they were not cleared within 30 days, then there will be port demurrage. So port demurrage is happened after unloading. So that shall not be added to the FOB value, whereas ship demurrage has to be added. So I said, sir, first freight has to be added. Freight from exporting country to India. Nothing but this big ship freight. Ship or aircraft, whatever it is, that conveyance freight. Next, if any small ships are used, for them the boat charges or light rate charges paid has to be used. Third, insurance has to be added. I mean, this has to be added. Insurance also has to be added. And the fourth one is like, if any ship demurrage is there, that also has to be added. Then we'll arrive the CAF value. For FOB customs, to CAF value, for arriving from FOB customs to CAF value, we should add, first one is like 1, 2, 3, 4 things we should add. First one is like freight we should add. Second one is like boat or light rate charges, if anything is there, that we need to add. Then afterwards, third one is ship demurrage we need to add. And the fourth one, insurance also we should add. Then we'll arrive the CAF value. CAF value is the assessable value on which we'll be levying the customs duty. Okay, now to take it further, what if the freight is not given in the question? What if the freight is not given in the question? Okay, freight from Australia to India, the goods were imported, either it may be through ship or aircraft. That freight is not given in the question, so then we could simply ignore or no. When freight is not given in the question, then there are two possibilities: freight given in the question, not given. If it is given, if it is not given, na, simple sir, take 20 percentage of FOB customs as the freight. If freight is not given in the question, then simply take 20 percentage of FOB customs itself as the freight. If the freight is given in the question, if it is already given in the question, then again check whether it is sea freight or air freight. Okay, sea freight or air freight. Sea freight na take actual. Since freight is given in the question and it is the sea freight, na take actual. If it is not, if it is air freight, and if even though it is given in the question, compare actual or 20 percentage of FOB customs. Whichever is lower can only be taken. Whichever is lower can only be taken. If freight is not at all given in the question, then no problem. Take what? 20 percentage of FOB customs. If it is given in the question, sea freight, take actual. Air freight means then take actual or 20 percentage of FOB customs, whichever is lower. Understanding, sir? Air freight, even though given in the question, straight away we cannot take actual. We should take actual or 20 percentage, whichever is lower only. Whereas sea freight, take directly the actual. Air freight only, even though given in the question, we should compare what? Take actual or 20 percentage of FOB, whichever is lower. Okay. So there is other important point also which I need to tell here. For that I need to take again an example. So let's say in question they given ex factory price as $10,000. In question they gave ex factory prices $10,000. Now there is loading and handling charges. Sorry, nothing but freight in export country. Freight in export country is $500. Freight in export country is $500. Then we have loading and handling charges. We have loading and handling charges, which is $300. By adding this, we'll arrive what? FOB. How much is the FOB, sir? $10,800. From FOB, we need to arrive what? FOB customs. So let me take some random items. Designing $1,000. Packing $500. Then we have commission and brokerage. Randomly I'm taking $300. Okay, only these three are there. So then we'll arrive at FOB customs. FOB customs. Now how much it would be, sir? $11,800, $12,300, $12,600. Now assume freight is not given in the question. If freight is not given in the question, what we'll do generally? Freight is how much? 20 percentage of FOB customs. 20 percentage of FOB customs. So how much it is? 12,600 into 20 percentage. How much, sir, it is? 2,520. So the general thing which we do is like we'll take this 2,520 here. But the problem is we cannot do such a way if there is already given in the question the freight, local freight and the loading and handling charges. There is a clarification giver stating like this 20% is not just the freight from exporting country to India. This 20% is the total freight and loading charges. It's the collective freight starting from the factory till India. It's not just from Australian port to India. This 20% is from the ex-factory price. I mean from the factory gate of the exporter to Indian port. Whatever is the freight and loading handling charges incurred, that total is called this 20%. But out of this 20%, we already taken here how much? $800. So the balance only we should take here. If you take $2,520, now it's wrong. Okay, but in our, sir, this question standardly it's there in CFNL, sir. CFNL questions, this type of model questions are also there, but in our material there are no such type of questions, but there are chances of asking if the question starts with ex factory price. So remember, if the question starts with ex factory price and they have given separately freight from export country and loading and handling charges, and here there is a need to calculate 20% on FOB customs. If they give actual, now we'll directly take actual. If they didn't give actual, then we need to calculate what? 20% of FOB customs. So 20% of FOB customs is 2520. This 2520 is nothing but the total of 500 plus 300 plus nothing but the freight from Australia or any other country to India. So we don't, sir, the only thing which we need to add is this particular value only. So already 500 and 300 is added. So that's why we cannot take directly 2520 here. We should subtract the 800 and the balance only we should take here. How much, sir? Then it will be 1,720. So we should take here only how much? $1,720 only. Okay. I'll put one more example also. The same kind of example with respect to air freight. With respect to air freight, or else let me change here only. The same sums are till here it is same, but in the question they has given air freight as, they are given air freight as $2,000. Air freight as $2,000. What we have to do, sir? Air freight, even though it is given in the question, we should do what? 20% of FOB customs. So here we'll be calculating freight. Freight is how much? $2,000 or $12,600 into 20%. How much, sir? 2,520. If you compare both of them, then it will be $2,000 only. But we cannot compare directly. From 2,520, we need to subtract this 2 as well. Because this 20% is the total of the freight which was incurred in Australia, the loading and handling charges in Australia, and even the freight from the Australian port to Indian port. So we should, this 2,520 is not just the freight from the port to India. So that's why we need to exclude them. So we need to subtract 500 and 300. How much it would be then? 1760, 1720. So now which is lower na? 1720 only. So we'll take how much? $1720 only. The usual mistake which we do now, we'll do only this and we'll forget about this subtraction. So then we'll take here $2,000 as the freight, which will be a mistake here, sir. Remember. Okay. So the freight, if it is not given in the question, yes, 20% of FOB customs we should take. But the question decides, sir, but at final level, na, generally in CMA, these 2 points will not be missing, will not be there in the question. If these 2 are not there, na, then you need not to do anything, directly you will take 20%. Only if these 2 are clearly given in the question, then you need to adjust them and the balance only you should take. So where it is there in the material? See this chart, this one, where freight is not given, 20% of FOB customs is the freight. Such freight 20% is includes of transportation cost from factory to port in exporting country, loading and handling charges in the exporting country, transportation from exporting country to port of importation. So the 20% is total of 3. We should only want this one. So from the total, if you subtract this and this, then you'll get the balance one. Okay, if you take it as A, B, C, we want only C and we know total. So from total, what you need to subtract? If you subtract A and B, then you'll get the C. That's what we are doing. Okay, so now we can go and solve the problem, sir. Come to workbook. Yeah. Yes, the working is same. Whoever pays the freight, it needs to be added mandatorily. So first come to page number 24.1. Is regarding the anti-dumping duty, sir. So question number 1, if you see, X an importer imported certain goods whose CAF value, CAF value na directly accessible value $20,000 and quantity is 1000 kgs. Exchange rate was 50. Customs duty rates are 12%, SWS 10%. There is no excise duty payable. If there is no excise duty payable, na, there is nothing but there is no IGST on it. Sir, excise duty equivalent only. Now we are leaving it as IGST. So if there is no excise duty, na, the meaning is nothing but there is no IGST on these goods if manufactured in India. As per the notification issued by Government of India, anti-dumping duty has been imposed. The anti-dumping duty will be equal to the difference between amount calculated at 30 per kg and landed value of goods. So in this question, there is anti-dumping duty applicable. So our job is to calculate anti-dumping duty. First to take the CAF value. How much, sir, it is? $20,000 into CAF value converting into Indian currency 10 lakhs. On that we will be levying basic custom duty. How much basic custom duty? 12%, 1 lakh 20. Then we'll levy even social welfare surcharge also 12,000. Then we'll be getting the value. How much, sir, it is? Okay, so 10 lakhs, 1 lakh 20 on this 12,000 we'll get 11 lakh 32,000 after levying BCD and social welfare surcharge. Let me calculate separately for you. 10 lakhs. Sir, what is the accessible value or CAF value? 10 lakhs. How we got 10 lakhs? 20,000 into 50. Then on this we need to levy BCD. BCD at a rate of how much? 12%. 12 percentage na 1 lakh 20,000. Then on this we need to levy social welfare surcharge at a rate of 10%, which is how much? 12,000. So now we got the value as 11 lakh 32,000. For this, still anti-dumping duty has to be levied. Anti-dumping duty is not yet levied. So but this is the landed value, sir. This value we call it as now here landed value. On landing into India, the value it has become 11 lakh 32,000. So now read the question. They said how much anti-dumping duty has to be levied. Anti-dumping duty has been imposed on these goods. The anti-dumping duty will be equal to the difference between amount calculated at 30 per kg and landed value. That means you calculate the amount at 30 per kg and the difference between 11 lakh 32,000 and calculation of 30 per kg, the difference whatever it is called as the anti-dumping duty. First we will calculate the 30 per kg. How many kgs they imported, sir? 1000 kgs. And what is the price they are saying? US dollar 30. So then anti-dumping duty equals to 1000 kgs into $30 into 50 minus landed value how much, sir? 11 lakh 32,000. So this itself is the anti-dumping duty. Why 1000 into 30 into 50 we did? That was there in the question itself. Anti-dumping duty has been imposed. The anti-dumping will be the difference between amount calculated at 30 per kg. Per kg 30. How many kgs? 30. So and this is given in dollars. So 1000 kgs into $30 into conversion into Indian rupees. Rupees 50. So 1000 into $30 into 50. And the difference between landed value. So that's why we are subtracting landed value. What is the amount, sir, here? 3 lakh 3,68,000 anti-dumping duty. If you add, then you will be getting the subtotal. If there is GST, then you will be getting 15 lakhs. If there is IGST, then on this 15 lakhs we levy IGST. But in the question they said like excise duty is not leviable. That's why there is no excise duty also. But we need to calculate the total customs duty payable. If you need to calculate total customs duty, you should add BCD, social welfare surcharge, and even the anti-dumping duty. If you add 1,20,000, 12,000 and 3,68,000, how much, sir, it is? 3,80,000, 5 lakhs. 5 lakhs only, na? Assessable value 10 lakhs. Here it is 5 lakhs. The difference is tax only. So the total anti-dumping duty payable is 3,68,000. It's the calculation. Then come to question next page, sir. 24.3. We'll find questions again. First question. So this is December 23 exam question only. Read the question. Question number 1. 13679. Read question number 1. Sir, XYZ Industries has imported certain equipment from Japan at an FOB cost of 2 lakh yen. FOB values are here they given, not ex-factory price. Okay. The other expenses in the connection are freight from Japan to India, insurance, designing charges, 1 lakh for certain development activities, road transport from Mumbai to factory, CBAC exchange rate they given, bank exchange rate they get given. The commission payable to agent in India was 5%. FOB cost of the equipment in Indian rupees, arrive the assessable value. Sir, what are the steps? Since they already given FOB, first we need to arrive what? FOB customs. To arrive FOB customs, we should add commission and brokerage. Is there commission given? Yes. The commission payable to agent in India. Sir, don't think of definition and you yourself don't think like it as buying commission. They will tell clearly it as buying commission if it is a buying commission. Only then you ignore. If they didn't mention anything, na, you don't assume it as like buying commission. So here there is commission given. How much, sir? 5% which is paid in Indian rupees. Since it is being paid in Indian rupees, now first we need to convert. So first FOB value. FOB value, how much is given in the question, sir? 2 lakh yen. So this 2 lakh yen will convert into Indian rupees. To convert into Indian rupees, which exchange rate we should take? Given by CBIC, given by bank rate, or the actual payment rate? CBIC. CBIC, how much it has given? 0.3948. So 2 lakhs into 0.3948, if you find out how much it is, 78,000 is the FOB value. 960 is the FOB value. For this we need to add what? Commission. So commission, now how much they given, sir? They said like commission as 5% of FOB cost. So nothing but do 5% on it. 5% man on 78,960. Straight away we can do 3,009.8 is the commission. So we'll add commission. Then after adding commission, are there anything to add? Freight after FOB will add. Insurance also after FOB. Then this is designing charges are there. Designing charges paid in Japan. We should add 30,000. So now add designing charges as well. Designing charges na 30,000. We need to convert into Indian rupees. 0.3948. How much, sir? 11,844. 11,844 is the designing charges. So out of this, we have used commission, designing charges also done. Then XYZ has expended 1 lakh in India for development activities. So designing charges and development charges only incurred outside India we should add. If they are incurred in India, we shall not add. So this is incurred where? India. So we shall not add. Next, XYZ has incurred road transport cost from port to their factory. This is before unloading or after unloading? After unloading, because within India this is incurred. This also need not to be added. Exchange rate we already took. This also irrelevant. So now there is nothing else. So we'll be arriving what? FOB from FOB customs. FOB customs how much, sir? This 3 we need to add. 78,960, 3,948, 11,844. 94,752. Then for this FOB customs we need to add now freight. Freight given in the question. Freight from Japan to India port. So they didn't mention which freight it is. We'll assume like sea freight only. If you assume like air freight, now again 20% or actual, whichever is lower you should do. Why? We'll assume it as sea freight. So you don't complicate your life by doing the complicated thing. Okay, it is easy for us to assume it as sea freight. Sea freight na simple, will not take 20% and all, directly will take the actual. How much is the actual? 20,000. So 20,000 into how much? 0.3948. How much is the freight, sir? 7,896. Then insurance. Insurance given in the question. Yes, they given in the question. How much is the insurance, sir? 10,000. So straight away take the 10,000 also insurance. Then if you add all this, you'll get what? CAF value. How much, sir? 94,752. For that you added 7,896 and 10,000. 1 lakh. 1,12,648 is the CAF value. On this, if they give customs duty rates and all, now you will be calculating customs duty and all. But they don't give. How much they got? 1,12,648. How much you got? We got same now. Okay. Commission is an incidental expense, no? Commission is an incidental expense that should be part of the cost of goods. Okay, which they didn't add it. That's why we are adding that one. Okay, here to arrive FOB to FOB na, whatever we are adding here now, all these are like incidental expenses only. Incidental expenses, since they didn't incur, that's why we are adding them. Commission, designing, all these are inspection. If there is no sale, there is no commission itself. Na? Only because there is a sale of good, that's why they are incurring commission. That's why it's an incidental expense. They are adding that also into the cost of goods. So question number 1 we did, sir, here. Question number 3. Question number 3. So 3 will be little different for us. That's why I included. Okay, this theory also we didn't discuss. But since it is a past exam question, I want you to know this. QW Limited is in an export promotion zone. Imported machinery from Netherlands after payment of all duties for rupees 300 lakhs. It imported a machine on payment of duties only for 300 lakhs. Okay. Afterward, the machine need repairs. So it was sent back to Netherlands in February. They imported the machine and they paid duties also. But afterwards, the machine has some problem, so they sent it back to Netherlands for repairs. The machinery was sent back to India after repairs. After repairs, again the machine was returned. The supplier did not charge any amount. That means he did the service freely. Since this has happened during the warranty period, since it is in warranty period, whereas the fair cost of the repairs may be taken as 10.78 lakhs. The repair fair cost is 10.78 lakhs. But actually the supplier didn't charge anything because it is in the warranty period. Now the question is, and even QW Limited bond the insurance and ocean freight which comes to 22,000. BCD and IGST is 10% and 12%. Now the question is, QW is saying like there is no customs duty payable because even though goods were sent for repairs and they were returned after repairs, since the the supplier didn't charge anything, there will not be any customs duty is the contention of QW Limited. Whereas the department is saying like no, there is custom duty payable. This is the contention. So we need to answer them. Does custom duty applicable or not? If applicable, how much it is? Sir, the provision is like when you are re-importing the machine which was originally imported after repairs, then customs duty has to be paid to the extent of repair cost. On repair cost, customs duty has to be paid. But the point here is like they asked another twist here. Actual supplier didn't charge anything for repairs. So we are not bothered about whether actually there is repair charge or not. If there is no actual charge, then we'll take the fair value of repair cost only. Okay, so look at the answer. If the imported goods are exported for repair, then import duty and re-importation of such repaired goods is restricted to the fair cost of repairs done abroad. Fair cost of repairs, insurance and freight. So these three we need to take, and on that we need to levy the customs duty. However, to avail this benefit, the time limit for re-importation is 3 years. I mean the machine we sent should be returned back to India within 3 years for, sir, initially we got the machine and again we sent outside India. That should be re-imported within 3 years. Then the export and import must be in the same form. The machine which we sent and the machine which we are receiving should be same form. This concept is not applicable if the repair amount to manufacture and exports are from EOIO and EOIZ. So the customs duty payable after repairs is directly they gave the answer, sir. How it was arrived? Simply we should take what 10.78 lakhs. Let me calculate here. What is the fair value of repair, sir? 10,78,000. For that we need to add what? Insurance and freight. Insurance and freight, how much we are having? 22,000. Then how much the total is? Total is 11 lakhs. On this we need to levy BCD. BCD given in the question. Yes, it is given in the question 10%. How much 10% means? 1,10,000. Even though they didn't give in the question, we should apply what? Social welfare surcharge, which is 11,000. We should do subtotal 12,21,000. Then on this we should levy IGST. IGST given in the question, yes, 12%. Apply 12%. How much? 12,28,000 into 12%. 1,47,360. So we should find out the total customs duty payable. 1, 2, 3. If you add all these three, how much? 1,21 plus 1,47,360. 2 lakh. So calculate this until 1 lakh 10, 11,000. Sorry, here how much it is? 12 lakh 28,000 into 12 percentage. 1 lakh 46,520. Now you do. Will get the correct answer. 1 lakh 46. Sir, 1 lakh 12 lakh 28,000 into 12%. 1 lakh 46,520 only na. This correct only or not? This is okay. 12 lakh 21. Okay, I wrote wrongly. This is correct only na. So this is correct. Then if you add all these three, then we'll get how much? 2,67,520 only. Okay, now we got the answer. So simple thing, sir. When you initially import the machine, you already paid customs duty. If the machine got repairs, you again exported the machine. After the repair, you are re-importing the same machine. So the question is, do we need to once again levy the customs duty on the total value or only on repair value? Only on repair value plus the freight and insurance. If you levy customs duty, it is enough, provided there are conditions. What are the conditions? The time limit for re-importation is 3 years. I mean, from the day you sent, the machine should be returned within 3 years. And next, they should be in the same form. If these two conditions are, there is another concept also. This is not applicable for EPZ and EOUs. So in the question they clearly said like they are not in EPZ and EOU. If they are in EPZ and EOU, then this will not be there. This customs duty is not applicable. The customs duty will be 0. So these are the three conditions we should remember when the machine is sent for machine is being re-imported. How the customs duty will be calculated? Only on the repair cost plus insurance and freight we need to levy the customs duty for the three conditions. 3 years. Next one, same condition. Third one, not in EPU or EOU. EPZ or EOU. Okay. 3 done. Now come to question number 6. SSC M Limited entered into a JV with foreign collaborator for promotion and selling of their antennas, accessories and other communication equipment. The agreement between them indicates that N owned majority of equity shares in M Limited. Okay. Technical services were provided by N to M Limited for various functions that were carried out in respect of manufacture. Sir, SSC is M, sir. For M, the technical services were provided by N. So N provides technical services and N has majority shareholding in M Limited also, for which technical service fee also will be paid to N by M Limited. So, okay, N will give technical service, for that fee is also paid. And one more thing which we need to understand here is they both are related persons also. Okay, then based on the above facts, the department opinion that M and N are related. Yes, fine, they are related only. That the technical fee paid by M Limited was includable in the accessible value of the important component. Okay, so the point is, sir, let's say here, actually the price of good which is imported is 20,000, and then carriage freight insurance is 400, loading is 100, freight charges of the ship for transport up to Indian port is 1200. The only problem here is like everything is clear. Here M is paying some technical fee or technical services fee. Does it need to be added or not is the question. So see here, technical fee cannot be added simply because the importer and exporter are related person. It can be only if it is related to imported goods. In question they gave a big para here explaining till here, but nowhere they said like the technical service fee which they are paying is related to the goods which they are being imported in the second point. Nowhere they mention. So that's why they are saying like it can be added only if they're related to imported goods. Here import was for components while technical fee was for manufacturing of antenna systems. The fee is not connected to imported goods, hence it is not includable. Only if it is related to the goods which they are being imported, then it should be added. The technical fee which they paid is related to some other thing. So the some other thing related technical fee we cannot add into the goods which we have been imported. So technical fee is not required to be added. So if it is not added now, then otherwise it is simple sum only, sir. Mm. Yeah, I'll tell you why it was did like that also. I'll tell. Okay, first tell me ex factory price. Okay, then what we need to add? The local freight. How much it is? 400, na? Then loading and handling charges 100. So we'll get FOB 20,500. We should find out now FOB customs, but there is no other items given in the question, so it is nothing but FOB itself is the FOB customs. So did they mention in the question whether it is sea freight or air freight? Nothing mentioned. So we'll assume it as what? Sea freight. So sea freight, when it is given in the question, will take what? Actual. So we are not doing the 20% one, na? Only when we are doing the 20% one, we should think of that one. So freight, how much it is there? 1200. Then insurance. Insurance given in the question, huh? No given, not given. So simple 1.125 percentage of 20,500. That will add here. How much, sir? That is 1.125 percentage of 20,500. It is 230.625. That you add also, you'll be arriving this CAF value or accessible value. They didn't give customs duty rates and all. So here the only point important is this first point. By reading this first point and all, you will understand like this question is a altogether different question, and then you leave this question. But the point is like the actual question is the second one only. The first one they can tell it in even in 2 lines also, but they should create a scene there, na, that this is some question which came from space, like that. To give the build up and all only they'll add such kind of points. Otherwise if they give it as a simple point, now you'll do this sum, you'll not leave this sum as choice, because designing charges, you'll how you think means okay, it is only about designing charges, na, will leave also will be having 2 marks and only. But since if he given it as a 7 lines or 8 lines point, you will read this point only. By reading here only, you lose hope. There's something new is being asked, like that only generally students will think. So the point is, once you read the question for 2 times, there will not be anything new. Okay, the points which we know only, they'll twist and they'll ask. Okay, if any new points are there also, we are covering them. Okay, in theory if you don't cover, and if there is in problems, those problems only I'm selecting and those problems only we are solving. Customs, question number 7 also done. 1, 3, 6, 7. Come to question number 9. Oh, 7 not at solved. Okay, solve question number 7, sir. Now fast, simple sum, sir. 2 minutes you could solve. X Limited imported 500 units of minerals from high seas for sale in India. Selling price exclusive of duties and taxes. Freight from port to depot in India is 10,150 and insurance is 1250. Sir, in direct to value method also, what if there are multiple identical good prices available or multiple similar goods prices available you should take the price at which highest number of units has been sold. Greatest aggregate quantity highest number of units sold. That price you should take. Sir, in rule 4 and rule 5 we said like lowest. Here we are not telling lowest. We are asking to take the price at which highest number of units have been sold. So come to the question and see. X Limited imported how many? 500 units from high seas. Selling price is exclusive of duties and taxes. Freight from port to depot in India is 10,150. Insurance is 12,150. BCD 12% and SWS as applicable. They are asking us to calculate custom duty payable as per Rule 7 of customs valuation. Rule 7 direct to value method only. So Rule 7 direct to value method first we need to find out the assessable value. So out of them, at what price highest number of units sold? At what price highest number of units are sold? 90. At what price highest number of units sold? 95. Okay. We should take aggregately, sir. That means price 100, 90, 95, 105 we are having. At 100, how many, sir? 400, 150, 50. So it is how many units? 600 units. At 90, we are having how many units? 300 plus 350, 650 units. At 95, we are having how many units? 500 units. At 105, how many units we are having? 250 units. So at what price we are having highest number of quantity? 90. So the price we should take is how much? 90. Okay. So how many goods or how many units we imported actually? 500. So 500 into 90 if you do know how much? 45. Sorry, 4 lakh. 4 lakh. Sorry. 500 into 90 45,000 only. Okay. 45,000. So this 45,000 is the selling price. From selling price it includes all the other costs also. So we need to reduce what? Insurance, transportation cost also. But that it doesn't include it, sir. See, selling price is exclusive of duties and taxes. So no problem with that. But freight and insurance is included. So we need to subtract them. 45,000 minus 10,150 and 1,250 insurance. If you subtract them, you will get the assessable value 33,600. On that you will be levying the customs duty. Sir, why 13.2% they taken us straight away BCD plus SWS they did. Okay, look at question number 12 as well. Question number 12. A limited sell in India from a price list which grants favorable unit price for purchases made in larger quantities. 1 to 10 units, sir, they'll charge 100 rupees. 11 to 25 units, they'll charge, if the order size is 1 to 10 units, then the unit price is 100. Then if the quantity is between 11 to 25, then the price is 95. Oh, 25 na, then the price charge is 90. So now tell me at what price there are highest number of units sold. 90, yeah? At what price highest number of units are sold? 90 only. Here 10 into 5 na 50, 5 into 3 na 15. So total 65 here. 5 into 11 na 55. Here 130 units one and 150. Total how much? 80. So 90 is only the price at which highest number of units sold. How many units actually we imported, sir? Okay, let me tell. A limited sell in India from prices made in the larger quantities. The selling price includes the following: freight, insurance, and number of units imported is 5,000. So if you do 5,000 into 90, now it will be 4,50,000. From 4,50,000, you should subtract freight 24,000 and this insurance 6,000, 30,000. If you subtract now, it will come to 4,20,000. What? 4,20,000. So from there 4,20,000 you should levy the total custom. You will be levying the customs duty. Okay. Sir, in the concept only there is rule 8, sir. Rule 8 na computed value method, nothing but cost plus profit. Rule 8 is nothing but cost plus profit, similar to rule 30. There in GST, rule 30, what we are saying, cost into 110%. But here they will not say it as like 10% something. They'll just ask us to calculate cost. On that cost, add the margin which they are having. They'll not ask us to find out the margin. So as per the industry, whatever is the margin they are having, that we need to add. Value of materials cost plus an amount for profit and general expenses equal to the usually reflected in sales. Generally, what would be their profit margin, that will be added into that, then we'll be arriving the computed value method. If this is also not available, or if computed value method also doesn't work, then you will go to residual value method. Residual value method na any other alternative method you can go. Then whenever importer files bill of entry, he will only do the all this valuation and will submit bill of entry. There he should file a declaration stating that the valuation which I did and the computations which I did are correct only, and the details and statements which he provided are correct only. So like that he need to give a declaration. Importer or his agent shall furnish full and accurate details of value, invoice, statement and document, and it should be signed stating like they are truth and accurate. Okay. Next, rejection. Even the value we filed can be rejected by proper officer. Let's say we have valued considering some identical good. That value can be rejected by proper officer. He always has the right to reject the proper officer. If he has reason to doubt the truth and accuracy, then he will request an importer and shall intimate the importer the grounds for doubting also, and will give a reasonable opportunity of being heard before rejecting it. Then declared value can be accepted on inquiry if proper officer is satisfied. Sir, you declared some value, proper officer has doubt. He can state you, he'll tell you on what basis he is getting doubt. Okay, then he will give you an opportunity to explain. After the explanation, if he is convinced, then he'll accept the value. Otherwise, he may reject the value. While rejecting, he'll give it in writing. Then valuation of export, sir. Export valuation not required. Even if it is required also, the same kind of rules only they'll be following only. Okay. One question which I want to tell here. Question number 9. Come to question number 9, sir. SP Limited has exported some goods to Mexico. FOB price is $1 lakh. They are asking us to calculate the export duty, sir. Till now we calculated only import duties, but this question is regarding calculation of export duty. For import duty, we are taking the exchange rate as on the date of bill of entry, whereas customs duty rate as on the date of bill of entry or entry inwards, whichever is later. Now the question is, what about exports? So for exports, see here, the rate of duty prevalent as on the let export order. Sir, when we'll get let export order? First, the exporter shall file the shipping bill. Once the shipping bill will be verified by the proper officer. Once he satisfies like everything is proper, then he'll return the let export order. Nothing but the same shipping bill. If it is signed, approved and returned, then that is called as let export order. So the rate of duty prevalent as on the date of let export order is considered. Rate of duty as on the let export order. Then what about exchange rate? Exchange rate as on the date of shipping bill, sir. Where it is? Okay, here. Assessable value has to be calculated with reference to the rate of exchange notified by CBSE on the date of presentation of shipping bill or bill of export. Okay. So see here, there is presentation of shipping bill and as well as let export order. Shipping bill exchange rate, let export order tax rate. So on the date of presentation of shipping bill, BCD 12%, exchange rate 75 and 74, but we should take what? 75. Whereas on let export order, we should take BCD rate, which is 10%. So if you calculate, sir, therefore, how we need to calculate? What is the export value, sir, here? They gave FOB. If they gave FOB, we need not to calculate again. FOB customs CAF value and all we need not to find out. We are sending goods. So FOB itself is the accessible value. When we are getting goods, then CAF value is the accessible value. Okay. Once we load the goods into ship, till that point of time, whatever are the costs incurred, that is called FOB value. That FOB value itself is the accessible value in case of export. Whereas in case of in case of import, CAF value is the accessible value. So what is the FOB here, sir? $1 lakh. So FOB $1 lakh, we need to convert into Indian rupees. What is the exchange rate? 75, na? So 75 lakhs. On this first we need to levy what? BCD. What rate? 10%. 7,50,000. On this we need to levy what? Social welfare surcharge at a rate of 10%. How much? Only for imports we need to calculate social welfare surcharge. For export we will not be calculating social welfare surcharge. That also I said 2-3 times. But out of flow will be doing. Only you are saying. Okay. SWS not applicable. So the export duty to be paid is 7,50,000. Okay. So take break now itself. Afterwards we'll continue.